Now, this professional ethics is broadly divided into 4 parts. Mainly, this ethics we have in our syllabus into 4 parts. Part 1, where we discuss about fundamental principles and code of ethics, like general principles of ethics is what we discuss. Whereas part 2, we will be discussing about some CA Act provisions, some sections we will be discussing in the part 2. Then in the part 3, we will be discussing schedules to the CA Act. So that is what exactly schedules and council guidelines is what comes under part 3. Getting it? Like where you have first schedule, second schedule, all that, misconduct, professional and other misconduct, all that is what part 3 actually covers. And even council guidelines also, because these two has to be read together. In the sense, they are not different. Though the council guidelines is not part of the schedules, most of the clarifications that were given in the schedules related information, that is taken from council guidelines. So council guidelines is an additional document for the schedules. Then finally we have something called self-regulatory measures. And finally we have something called self-regulatory measures, which is recommendatory for the members. Whether they follow it or not, that's their choice. But whatever they have recommended in self-regulatory measures, in audit quality maturity model, there is a score for that as well. Even for self-regulatory measures, if you implement and follow, in audit quality maturity model, you are having that scores as well for that. Anyhow, so this is what the brief overview about the ethics. Now in the previous exam, November 22, the first question is what asked in the exam. What are the fundamental principles that are discussed in Code of Ethics? Like these are the fundamental principles which you have studied from CA Inter, in fact. Okay. So I'm not looking into it because very easy. Integrity, confidentiality, objectivity, independence, and professional competence and due care. Now, like this is one possible question. What if a conflict arises for the professional accountant, okay, in compliance with what fundamental principles? If a professional accountant, if at all he is facing a situation in complying with one of the fundamental principle or conflicting with one or more of the principles, in such a situation, he consult others in the employing company or the client, top management and the institute and the legal counsel, and he try to resolve the conflict. If at all he is unable to resolve the conflict, he shall withdraw from the engagement. If at all any of the fundamental principles you are unable to comply in an engagement, if at all that deteriorates the quality of work, getting it? If at all that does not bring a best optimum output in the quality of work, then you have to withdraw. Maximum first we don't withdraw, we have to resolve the conflict. Whatever is creating conflict, we need to resolve it. Example, my relative is having shares for more than 1 lakh after I became the auditor in one entity, and law also provided some 60 days time. Getting it? Company law has also provided some 60 days time. Within that time I need to withdraw. Within that 60 days I need to ensure that my relative has sold the securities, so that I can continue. Next. Now the Code of Ethics as per IFAC, they have identified, see, one of the core principle of audit is independence. So independence of mind, independence of appearance is very, very important. Now generally, how the independence of an accountant is affected by, what are the factors that affect independence of an accountant? So the factors are called as threats here. The factors are called as threats. There are various threats to independence, like 5 types of threats they classified it as. It may be because of self-interest threat, because the accountant has interest in the company. It may be business interest, or it may be financial interest, or it may be relatives in the company, whatever. So he is having some interest in the company. So that's called self-interest threat. Now this can be asked as an MCQ. Which of the following? They'll give you one issue. Now, is that issue falls under which category of the threat? Sometimes it is debatable. One kind of threat is debatable. Suppose if I'm having a relative in the top management of the company, it might, some may argue that it's a self-interest threat. Some argue that it's a familiarity threat. Because my relative is a top management, they're familiar to me. So I may not work, work independently, completely, thoroughly. Getting it? Or some people say, since your relative is in the company's top management, you are having indirectly interest in the company. So it's a debatable. See, there is no hard and fast rule here. You just have to understand. Generally, when a question is drafted, they generally frame it based on the examples given in the book itself. They don't generally frame an example, bringing it from outside. Okay. So this is a financial or other interest that will influence a professional accountant's judgment or behavior, like having a direct financial interest in a client, undue dependence on total fee from a client. A chartered accountant has to file a form with an institute. How much, do you have any client from whom you are charging fees which is exceeding some 10 to 15% of your total firm fee, total firm turnover? If so, give list of those clients, because they are key clients for you. You are depending upon them. Undue dependency will be there. Generally, one of the factors for peer reviewer, quality reviewer, technical reviewer for selecting is one of the factor is fees. Who is your major client paying major fee? Now, where in that particular client, how far you are applying all the auditing standards correctly? So they will check that. Having close business relationship, possibility of losing a client, potential employment, contingent fee, all this creates a sort of interest. Self-interest means I'll get some benefit directly. So that's called self-interest threat. The other one is self-review threat. What is self-review threat? Where you are the one who prepared that thing. You are the one who involved in execution of a particular task, which is subjected to audit again. The same thing you are auditing, which you executed that earlier. You are the one who executed. You are the one who set up the entire accounting system manual for the company. And you are only checking whether the manual is effective or not. Maker and checker should be different. So if maker and checker are same, it's a self-review threat. When I made certain things, and if you ask me to verify in my own things, obviously I don't find any mistake. Next. Advocacy threat. Advocacy threat means what? It's a threat that you are promoting client's opinion. You are promoting client's opinion to an extent that it indicates you compromised on independence. Simply speaking, without any logical reasoning, if you support your client's opinion for everything, then there is something called advocacy threat. For this, suitable example is when I'm doing an audit, in respect of my audit client, it is always advisable not to accept representational services. For an audit client, it is better not to accept representational services unless you are just a transmitter of the information. You should not defend the client in the court of law. Getting the point? You should not try for defending your client. You are an auditor there already, remember. Familiarity threat. It is a threat that arises because of the long outstanding relationship, or employing, he's too sympathetic to the interest of the client. Okay, so if these words are used, you have to select it as what? Familiarity threat. In CA internal, they asked for one question in one exam. Familiarity threats and advocacy threats are closely related. They just made a statement that they are very close. So they are completely different, obviously. Each threat is different. None of these threats is close to each other. Getting it? They are different. Self-interest threat is created because I'm having interest in the organization. Familiarity threat is created because I am working with the company from certain long period of time, because of which I developed certain bonding. Getting the point? Then intimidation. Intimidation threat is the threat which we see in reality, in popularity. Intimidation means it's either bribing or blackmailing, both. Okay, first they bribe you so that you listen, else they blackmail you. Getting it? This is something like intimidation threat. Getting it? So intimidation threat, like in 2019 and 20, Anil Ambani group companies auditors have resigned, citing intimidation threat. Getting it? They mentioned to the SEBI. They mentioned to the SEBI very clearly that we were receiving intimidation threats continuously from Reliance Capital and Reliance Infra. These two companies of Anil Ambani, the auditors have resigned. And the auditors were KPMG. That's why they resigned and filed a complaint with SEBI. So any legal consequences, they have the ability to bear and win the case. So that's why they resign. But if a normal auditor cannot resign, Because if a case has been filed against a normal auditor, he has to go and defend, no? For which the cost of justice is so costly, which a normal person cannot bear. So only big auditors, they can only have this kind of, privilege to resign, all that. So they resign from these companies citing intimidation threats. Are you getting the point? Threat of replacement. So threat of replacement means when the auditor feel it as threat, when you are unduly dependent on the client. When you are depending so much on that fees provided by the client, he's a major client, and suddenly he started threatening you that I'll replace you. Obviously, you will feel like intimidated. Getting it? Next. So now, obviously, in every professional engagement, in every audit engagement, we generally face these kinds of threats. What auditor has to check? Definitely these threats will be there. To some extent, these threats, any of these or all of this will be there. But how auditor has to check? What auditor has to check? If at all any of these threats were there, are they within acceptable level? That is what you need to check. Acceptable level means what? Though there is a threat, it doesn't affect my independence. It doesn't affect my integrity. Then if that is the case, then we call it as acceptable level. Provided it is not against law again. It should not be against law. Threat is there, but not against the law. In the sense, though there is a self-interest threat, suppose my relative is having share capital in the company, 50,000 face value only, which is permitted under Companies Act. So there is no delay. Now, in Companies Act, with respect to ownership for a relative, there is an acceptable level. What is acceptable level there? 1 lakh. There they quantified. Able to understand? Now, business relationship you are having. What is acceptable level in business relationship? They didn't quantify. Companies Act directly says you should not have business relationship. There the quantifiable level is what? 0. Able to understand? So acceptable level means check if there is an indication in the law. If there is an indication, then follow that indication. If there is no indication in law, you check whether your independence is affecting or not. Because say there is a threat which is created, is your independence. Suppose example, I am an auditor for a private limited company, for which rotation of auditors do not apply. Rotation do not apply. I am the auditor from past 25 years for the same company. In fact, I am the one who incorporated the company, assisted in incorporating the company, and I became the auditor of the same company. And from past 25 years, I am the auditor. Now there is a familiarity threat. Now, can you continue the client engagement? Companies Act is silent. It is saying your wish. Are you getting the point? You need to check. Next. So now whether the threat is an acceptable level or not, you need to test. That test is called as reasonable informed third party test. What is it called as? Reasonable informed third party test. Getting it? If at all a third party comes, informed means what? Knowledgeable person. If a third party having this knowledge of the field, knowledge of the implication, tell him the situation, and I hope he understood in what context you are asking this question, and in spite of it, he gives a reply that yes, you can proceed. Then you can proceed. Are you getting the point? You should not go and ask your kid this question. Hey, what should I do? So knowledgeable informed party means what? He understands that what is an audit. He understands auditing principles. He understands that something is called threats to independence is there. He understands the impact. So reasonable informed third party test means third party must be informed third party. Informed, he must understand all these consequences. And he also says, finally, yes, you can continue, nothing wrong. Then you continue. Are you clear? Next. Now, how to address these threats? One way is first we do a reasonable informed third party test. After the third party test, we found that there is a severe significant threat to your independence. What you have to do? Eliminate. What are the factors that causing the threat? Try to eliminate. If you are unable to eliminate, withdraw. Are you getting it? There are some cases where you can eliminate the threat only by withdrawing. Only by resignation. In that case, you have to compulsorily withdraw. Are you getting it? You cannot put safeguards. That's it. So how to eliminate threat? Or by keeping safeguards. Safeguards means what? There are various safeguards. Earlier, we classify the safeguards into firm-wide safeguards and engagement-wise safeguards. Earlier, we classified the safeguards into 2 types, firm-wide and engagement-wide. Later, Institute also removed that bifurcation and merged. Getting the point? So now, any of these points, 4 points you can write. So they may ask you a direct question on this. write about safeguards to reduce or eliminate threats. What are the safeguards that can be implemented? Write any 4 or 5 safeguards. 4 to 5 marks question. They may ask you. Getting it? So safeguards are nothing but, you know, remedial action, corrective action, nothing but. Getting it? Which individually or in combination that accountant takes so that he will effectively reduce the threat to an acceptable level. There are various safeguards. Example, leadership qualities of the firm with respect to fundamental principles, policies and procedures for monitoring quality control, using different partners and engagements with separate reporting lines, involving another firm to perform or reperform the engagement or to perform quality control, and rotating senior assurance team personnel. With respect to a particular client, if at all one of the partner visiting the client or one of the engagement team visiting the client is facing the threat, what we need to do? Change the partner, change the team. That's what they're saying here. Are you getting it? Make your leadership qualities in such a way that the partners will accept the assignment only absolutely they are threat free. Getting it? Then we have a regulation called non-compliance with laws and regulations. I have a video. I'll upload amendments video very soon, within 1 or 2 days on the YouTube also. Getting it? Where I'll give detailed explanation about NOCLAR. 1.5 hours, one hour will be there. Getting it? What exactly this NOCLAR? Very simple. We have a standard called SA 250. We have a standard called SA 250. Responsibilities of auditor relating to laws and regulations in an audit of financial statements. Getting it? We have that SA 250. Responsibilities of auditor in relation to laws and regulations in an audit of financials. This earlier, people also read it as consideration of laws and regulations in an audit of financial statements. Now you see, I'll give you a brief overview here as like a revision I'll give you. Now this SA 250 apply for whom? Those who are doing audit, independent audit of an entity. So as part of the audit, he should also consider how far laws and regulations were complied. Now the standard divides the laws and regulations into 2 categories. Okay, type 1, they divide the laws and regulations into those that are having direct effect on determination of material amounts and disclosures in the financial statements. Type 2, other laws that do not have direct effect on financials, but compliance with them is important to continue the business. If you fail to comply with them, they attract material penalties, material fines. Getting it? See, in many big companies, there will be something called compliance audit. There is something called compliance audit. In risk assessment chapter, I don't know how many of you have read it or not. The controls are categorized into 3 categories. Operating control, financial control, compliance control. Compliance controls means what? Controls, nothing but processes. Processes implemented for timely compliance with laws and regulations. Processes that are implemented by the company for timely compliance with laws and regulations. So there will be having a compliance team. Legal team will be there for the company. They are the one who will continuously identify all the laws and regulations applicable. I think I have a document here. Just a minute. I'll show you. I think I showed in my class. There is something called ligatrix. Like very recently, one of my friend has performed a compliance audit where they have verified compliances with 5,000 regulations, more than 5,000 regulations under more than 70 statutes. You understand NOCLAR importance, but if you look at that, you understand how that NOCLAR exactly affects. Yeah, it's there, found. Yeah, fine. So this is one particular, compliance audit which they did for one of the company in Mumbai. So you see, for that company, these many acts apply, and many of this we don't even see. Getting it? There is something called Indian Boilers Act. Okay, Indian Boilers, Maharashtra Boilers Rules, Indian Standard Code of Practice for Selection, Installation, Mission, Maintenance of Portable First Aid Fire. These are all laws and regulations that apply to a factory. See, in SA 250, you read no type 1, type 2. Type 1 laws are those which have direct impact on financials. Those which are having direct impact on financials. Like if you fail to comply with them, it results in either understatement of liability or overstatement of liability or asset. There's a direct, suppose very simple. I wrongly paid GST department a lesser rate. You are not exempted from paying, right? Tomorrow if the department discover, they'll raise a demand notice. Yes or no? So if you wrongly interpret rate of GST applicability for your product, and if you pay lesser tax, you are understating the liability. Whether you collect from customer or not doesn't matter. GST will do a backward calculation. Yes or no? So if you fail to comply with GST law, it has a direct result, direct effect in financials. Now there is a law like example, you see, Maharashtra Fire Prevention and Life Safety Measures Act 2006 and Maharashtra Fire Prevention and Life Safety. So under that there are some 72 compliances. Now, if any non-compliance happened relating to these items, what is the impact on financial statements exactly? Can be determined. First of all, do we have that expertise to identify these laws and regulations? Oh, we are not competent to even understand these laws and regulations. These laws and regulations, we are not competent. Respective field persons will be there. They are only competent to read this. And you see how many compliances they have verified. You see, this is the compliance list. What they did. So exactly what they found. So what is the due date, reviewer, who performed, who is the functional head in that. So they have done this review completely. So many compliances. You see here itself there is a total compliance list. Total compliance list of approx 4,935. So many compliances, 4,935 list of things that you need to verify. Pure compliance audit this is. This is part of internal audit. This is one type of internal audit. Are you getting the point? So this is how they do in reality the works. Getting it? Now NOCLAR is something relating to this. Getting it? See, if you ask me what is this non-compliance with laws and regulations? What is this NOCLAR concept, non-compliance with laws and regulations? Very simple. In a company, there are internal auditors, there are stat auditors, there are some various other auditors who are working in this company. It says that if any of these, whether you are an employee or otherwise, doesn't matter. If you are associated with this company, if you have a responsibility to report legal regulatory authority, if you find any non-compliance with any law and regulation, if you find any non-compliance with law and regulation, you have a responsibility to report to any authority. Getting the point? You must report. That is what NOCLAR says. It doesn't say anything. Getting it? People unnecessarily interpret so much. It's very simple. Whether you are an employee, whether you are an independent auditor, doesn't matter. Do you have a responsibility to report to regulatory authority or legal authority? If you find a suspected non-compliance or actual non-compliance in a company, if yes, report it. That's it. So NOCLAR is like a clarification. Are you getting the point? It is applicable for employees working in a company who are chartered accountants, who are members of the institute. It is applicable for CS who are in practice. Simply speaking, if at all you are a member of the institute, it is applicable for you. So whatever the portion of NOCLAR is applicable, you just have to check. What SA 250 says? 250 is saying regarding it's in the context of giving opinion on the financial statements. SA 250 is in the context of giving opinion on the financial statements. Whether financial statements are true and fair. One of the item is what in the financials going concern basis. One of the fundamental principle for going concern is what? Compliance with laws and regulations. If you do not comply with the law of the land, you cannot run the business. Are you getting the point? There are so many. Suppose you want to establish a chemical factory in one of the locality. First, the environmental casualties, environmental rules and regulations will come into play first thing. They don't look at your project cost, who is funding party, they don't look at all that. First they look at the environmental cost. Only if environmentally, socially, only if it is acceptable there, only then they'll give you a permit. Yes or no? You might have seen this in many movies also. That's it. So that's about NOCLAR briefly speaking, logically speaking. It says a member of the institute, whether in practice or otherwise, has a responsibility to report the non-compliance to any legal and regulatory authority, must report it. Failure to do so will be deemed to be guilty of misconduct. This is what the NOCLAR concept actually says. It's like a clarification. Are you getting the point? This is there across the world in multiple code of ethics in various countries. In India, it was brought from 2021 onwards. That's it. I hope you're fine until now. Clear? Next. Membership of the institute. So from now we will be discussing part 2 of the CA Act, where we discuss certain provisions of CA Act. Membership. So we always, once you have a student card, right, in SSP, like that, once you qualify, you are eligible to receive a member card. In the self-service portal, you can download member card. What member card will contain? So my name will be there, my date of birth will be there, the date of enrolling into the membership of the icai will be there, whether I am in practice or not will be there. If so, from date on which I am in practice, okay, what is the effective date until from how many years I am in practice, what are the breaks in my COP, if at all in between I surrendered COP or I did not pay annual fee, getting it. So all that information, in which forums I have been associated, from which date to which date, right now who are working under me as an articles or paid assistants, all that information will be there. That is what member card. As a student card, what you will have? You will have some foundation cleared or not, inter cleared or not, what is the score and what is the hall ticket number, all that. That's information will be there in a student card. That's it. Now you see, membership is not an automatic process which is followed. Right now, in India, institute is having around 3 lakh members. That's it. The active members in the institute are not even 3 lakh, I think very recently I've seen annual report of ICI, 21-22 annual report, which is released somewhere in October, November. ICI will release annual report every year. Getting it? You look at that annual report, you understand how many students are writing in every attempt, how many are qualifying in every attempt, everything, number of students, number of qualifieds enrolling into membership, number of people taking up COP. You will get complete profile of the institute in the annual report. If you read the annual report, you understand what ICI is exactly doing. You will understand complete picture of ICI, what they are doing and all. So we are having somewhere around 2.5 lakh members, 2.5 lakh number, I think. And the people who are in practice are around 1.8 lakh. People who are in practice are 1.8 lakh around. Across India, put together all members having COP. But the problem with practice is, most of the works are concentrated. Most of the works are concentrated with big firms, above medium-sized firms or medium-sized firms. There is an association in India, Small and Medium Practitioners Association. For CA firms have an association, union, trade unions we call now. One of the trade union is what? Small and Medium Practitioners Association. What is their primary agenda, to boycott Big Four from India. Getting it? Instead of working on their competences and capabilities and standardizing the policies and procedures, they continuously throw stones on Big Four. How long you throw stones on Big Four? It's impossible to move them, because see, people are running behind Big Four, big companies, not because it's Big Four, because of the quality that they give. Understand, there are so many lapses in their work methodologies, but look at the structure how they created. Look at the quality control practices how they created. Whether you are a small firm or medium firm, everything starts from small, always remember. So you need to work, you need to be willing to change. You cannot say, my bread is taken away by somebody. You cannot argue that. Getting it? You don't know how to protect it. That's the only logic. Next. So membership, in order to, so once you qualify, you have to manually make an application to ICI. Manual in the sense SSP portal. It's not automatic. That's what I mean. So you will not get membership number automatically. So you have to make an application for membership from ICI. Some members know they look for fancy numbers. Yes. So I applied. Later I got to know. One of my friend told me, before applying you should have told me, I would have brought you a fancy number. Membership number, fancy number. Like how? Some members would have been died, no. Are you getting it? Some members who are not in active, no, their membership has been terminated. So you find your number, we will call institute. Okay, we will ask what are the fancy numbers available. Fancy numbers means where number, suppose my membership number is 239714. Not a fancy number. Okay, suppose I want to, suppose there is a number like this, vacant. Example. This number is vacant. So I'll call institute. I'll ask you, some admin people will be there. No, they tell me what are the members, what are the numbers, membership numbers which are inactive. So he'll give a number. Okay, fine. This number I want. So what is the procedure? So he'll give one procedure. You must have contact for that within the institute. It's not a big deal. If you just work with any regional member, no, here local management committee member, it will be very easy to contact. Okay, so they may be charging some 10,000 rupees like that, maybe the mediation fee. Okay, you call it as. Okay, so some of my friends have got this. They told me this. I don't know how far it is true, but they told me this. Okay, so but this is nothing wrong, right? Getting it, because the member is free now. The number is free now because the person who has been died long back. So this number is free, so you can get that. Okay, because this doubt I got, because if anybody applied after me membership, they get a number greater than this. Logical, but he got a number which is lesser than mine. How come you got? I got this doubt. Getting it? So he told me that there is a process like this. Anyhow, so now in order to get eligibility for membership, you should not be having the following disqualifications. You should not be having following disqualification. Not attained the age of 21 years. You must complete 21 years. Getting it? In India, age means completed age. Remember. Across the world, age means what? Completed age always. So not attained the age of 21 years means not completed 21 years. Which means you must complete 21 years in order to become the member of the institute. You should not be unsound mind. You should not be an undischarged insolvent. Means some proceedings are still pending, or you are discharged. You are discharged insolvent, but you did not get innocence certificate from the court. What is that certificate? Innocence certificate. Your insolvency was caused by misfortune. The court will give you a certificate. Example, I opened a big business and suddenly the lockdown has come. I brought so much loan, invested my own capital and started this business. So much I did, printing everything. Suddenly lockdown came and I couldn't do anything and entire my business went into loss. Now tell me, here other people will file insolvency proceeding against me to recover, but the court also will declare me as insolvent and they'll discharge me from all my liabilities and they'll give a certificate that this fellow has not become insolvent with intentional act. It's misfortune. Are you getting the point? Getting it? So insolvency was caused by misfortune without any misconduct on his part. Getting it? So if at all you did not obtain that misfortune certificate, then you are disqualified. Suppose you are discharged insolvent and you got a certificate from the court that your insolvency was caused not because of your misconduct, but because of the various other factors which are out of your control, then you are still eligible for getting into membership. Are you getting the point? Next. He has been convicted by any court for an offense involving moral turpitude, and if he has been removed from the membership of the institute because he is found guilty of professional or other misconduct. So professional or other misconduct means schedule 1, schedule 2, all that will be discussing all these points. Are you getting it? So these are the disqualifications or disabilities to enter into membership of the institute. See, the answer for disqualifications is different. There is another question. What are the points, what are the factors when a membership can be removed? What are the circumstances in which the institute will remove a name of member? So that answer is different. Removal of name from the register, this answer is different. This can be asked as a 4 marks question. Disqualifications can be asked as a 4 marks question. When the word is section 8, it's a disqualifications of becoming a member, institute. When it is section 20, it's about removal. When a member will be removed, if a member is dead, or a request has been made for removal from the member himself, or a member who has not paid the required fee, annual fee we need to pay, entrance fee will be there, annual fee will be there. Yes or no? One of the great source of revenue to the institute, annual fee. You know, right now I think it is 5,000 approx. Annual membership fee for FCA is again higher than compared to ACA. Getting it? So there will be COP fee. There is something called COP fee, and there is something called membership fee. I don't know why the institute is collecting in two different names. They just have to merge it both and give me some amount. No, members who are not in practice, why? Yes or no? But then you are using membership number, no. That's why you have to pay. Are you getting the point? Since you are a member of the institute, see, clubs also, no, they collect fees from members. Because you are a member, whether you avail the facilities of the club or not, that doesn't matter. You have to pay the membership fee. So, membership fee will be there, and COP. Again, for ACA, the membership fee COP is different. For FCA, the membership and COP is different. For FCA, again, it is higher. Even in CP hours, no. CP hours, no. For FCA, the fees is different. For coaching, seminars, coaching and all will be attending. Compulsory, there is something called CP hours, certified professional, training, all that. Getting it? We need to attend periodically certain coaching classes conducted by the institute. After you, once you are in practice, only if you comply with CPE norms, all that, only certain audits you are eligible. Otherwise, you will not get eligibility. Next. So a member who is dead, a member who has applied for the removal of membership, a member who has not paid the required fee, getting it, and who affected with disabilities. If at all you are affected after entering into membership, now you are affected with disabilities. Like you are treated as guilty of professional misconduct. You are affected with disability. Your name will be removed for that period in the order. Whatever the period mentioned in the order, for that period you will be removed. Are you getting it? Suppose my membership is removed, because I have not paid annual fee. I have not paid annual fee. Here there is a crux. See, generally for every financial year, the membership fee has to be paid within the same financial year by 30th September. What is the due date for paying membership? 30th September. Right now, tomorrow onwards, 23-24 financial year starts. Correct? 23-24 financial year starts. 1st April 2023 to 31st March 2024. Now for this particular financial year, by when I should pay membership fee? 30 September. If I pay within 30 September, nothing happens. Like you will be continuing as a member with COP, all that. Once 1st October enters, still you did not pay. From 1st October, automatically system terminates your membership and COP fee. Your COP, your certificate of practice. By the way, COP fee is different, membership fee is different. Whatever you have not paid, only that will be removed. Suppose you paid membership fee but not COP, then COP will be removed. If you paid COP but you did not pay membership, membership is removed, which will have an effect on COP also. Are you getting the point? So, with effect from 1st October, your membership and COP will be removed. Getting it? 1st October it will be removed. Now, if you realize this fact that I didn't pay and come back and pay to the institute within the same year, in the same year, before completion of the financial year, 31st March, before itself you came back and paid with the penalty and additional fee, all that, your membership and COP will be restored. What is it? Your membership and COP will be restored. From when? From the removal itself, from the original removal date. 1st October it was removed, right? Because you didn't pay the fee. From 1st October itself they will restore. This is beneficial for the member. Why? Because if at all I restore it with certain gap, if I restore it with certain gap, naturally you are disqualified for many audits because there is a break in service. There is a break in service. One example, one of the point eligibility for getting a bank audit, the senior partner of the firm must be associated with the firm continuously for 15 years and must be in continuous practice of 15 years and more. What do you mean by continuous practice? There should not be any break in between. Suppose if at all you did not pay membership fee on time, due to which there is a break in service, your membership is removed by the institute, no. Your COP is removed by the institute, no, for certain number of months. That's a break, no. And what happened? Restoration is later date. Removal date and restoration date is different. So 3 months there is a gap, or 6 months there is a gap, 1 year there is a gap in membership on COP. So you are not continuously in practice. Why to that extent? Who is an FCA? A member of the institute who is in continuous practice of 5 years and more. Only then he is eligible for FCA. Suppose I qualified as a CA and immediately applied for COP. Getting it 3 years I did, and 1 year I took break. I did not pay COP. 1 year I went for job. Again I came back. Again I need to work 5 years for getting FCA status. Again I need to work for how many? 5 years freshly to get FCA status. Only a member who is in continuous practice of 5 years and above, only then he is eligible for FCA. Continuous practice means what? Break should not be there. Sir, is there any explanation for continuous practice? Restoration concept itself is best example of evidence, because when you pay the fees within the same due date, they are restoring it from the date of removal, right? Why they have to restore from the date of removal? Because continuous practice is what important for so many incidents. Are you getting the point? So restoration of membership, what is it? Restoration of membership, restoration of COP. In both the cases, you are having two cases. Getting it? Suppose you did not pay membership fee COP on due date, but you paid within same financial year, nothing but by 31st March you paid. So restoration will be with effect from date of removal. What is it? Date of removal. So whatever the date on which your name was removed, from the same date effective restoration will take place. Suppose you paid after financial year, after 31st March you paid. In such a case, restoration will be date of payment. What happens? Suppose I did not pay on October 1st, I paid on 2nd May next year. Then my membership will be restored from 2nd May. Now I am active member until 30th September. And again I became member of the institute from 2nd May. In between what happened? You are not a member, you are not having COP. Break is there. Suppose if the restoration is made with effect from 30 September or 1st October, what would be the consequence? There is no break in service. While counting, there is no break in service. That's the logic. Suppose if a member was removed in a disciplinary action, from when restoration will take place? It depends upon the disciplinary order. Judgment copy will be there. Inside that, what is the date of restoration will be there. Inside that you can identify, able to understand. All of you. Now, first of all, you can make there is a company called Disciplinary Directorate, DISC.ICI. So there is a disciplinary directorate. Yes, if you look at this disciplinary ICI direct, there is a website for disciplinary directorate. Okay, this is a separate dedicated website for disciplinary complaints, where you can file a complaint here. So there is an option here on the top itself, file a complaint. Okay, so there is a form which is electronic form. This is manual, and there is electronic form also. Yeah, this is the electronic form. Not this. Actually, there's an electronic form also here. Physical filing, it is there, e-filing. So this is electronic form. So who is the name of the complaint? Membership number of the person on whom you want to complain. If you know, you mention that. Otherwise, name at least mention. Where he will reside, mention. What is the complaint you attach? Pay 3,000 rupees, some amount will be there. Once you win the case, 2,950 plus, it is including GST. This is the complaint fees. Once you win the case, you will get the refund along with the damages, whatever you suffer. So this is how generally we file a case against the member of the institute. So there is a separate website for that. Okay. So once you file a case against, you might have seen in the ethics, it will go to the the disciplinary directorate at first. Okay. He will have to evaluate whether it is a Schedule 1 offense or Schedule 2 offense. Prima facie, is it guilty or not? He will first check. The prima facie appears member did wrong. Then forward it to Board of Disciplines if it is Schedule 1 offense. If it is Schedule 2 offense, disciplinary directorate for Schedule 2 offense. He'll just forward. Disciplinary committee or something will be there. Okay, Schedule 2 offense. Then they will investigate and finally take a call. Able to understand. Many clients, some especially who are clients at Bangalore, Chennai, almost entire one cities, they know all this. They just file. If at all they are not satisfied with the service, how to file a complaint on this fellow, they'll immediately think about this. Getting it. And they'll Google it and they'll find this. And they'll file a complaint. 3,000 word, it's okay, let it be. Okay, the institute will call me. Institute will call that fellow in the forum and they'll question and everything. Then finally, whoever is guilty, they'll punish them. That's it. Next. And there are so many cases that are there in this disciplinary directorate. In this website, you can find what are the cases that were taken against member. Okay, you can see the orders, Board of Discipline orders, disciplinary committee orders, getting it. And disciplinary committee orders under section 21D, you can see so many. You can see here, what are the various orders that are filed against, various members. See here, almost so many cases for their latest were also there. Okay, if you want, you can just read that. Next. So this point I have explained already. Restoration of membership also I explained. Getting it? Suppose if you falsely claim that you are a member of the institute when you are not. If you falsely claim that you are a member of the institute but you are not. A person who, not being a member of the institute, represents that he is a member. All those who are keeping CA word in social media. Getting it? They all come under this clause. Don't worry, fine is only 1,000 rupees on first conviction. And multiple times second and subsequent conviction, 5,000 rupees or imprisonment up to 6 months or both. But it is not possible to punish, no? So many CA students were there, almost lakhs of CA students were there. Yes or no? India, man, you can't punish people. Yes or no? So penalty for falsely claiming. See, it's not because it's, what I mean is because of the population is so high. You don't have enough jails to punish everybody. That's the main reason. Government has to invest on constructing jails. The jails are not sufficient. The infrastructure is not at all good at, in many developed countries, jails are having air conditioning facilities. Getting it? So the people are very much okay, even if they want to go to the jail, because they have TV, air conditioning, all that. In India, people are not okay. Next, being a member of the institute, but not having COP, but you are representing to the public that you are having COP. You are guilty. And there is another one. You are an ACA representing to the public as FCA. Okay, that is again guilty under the schedule. Are you getting the point? There I will come back and discuss. I think council guideline says that. Okay, a member who is an ACA but representing himself as full-time fellow CA, fellow chartered accountant, then he is punishable. Getting it? Then what is COP? Now we understood membership concept. Now practice. Same. A member of the institute cannot practice unless he obtained from the council a certificate of practice. Now what do you mean by practice? Practice includes deemed to be in practice. What is it? Practice includes a deemed to be in practice. By the way, a member whoever is deemed to be in practice, he must obtain COP, pay annual fee, all that. Getting it? So this member shall pay annual fee, all that. And a member of the institute, no, he cannot have other capacity in which he can take up as a practice separable from member of the institute. Suppose if somebody asks, no, are you in practice? I said yes. Oh, you're a member of ICI? No, ICI, I don't have any relation. I'm practicing in my individual capacity. You cannot say like that. You are given that statutory status only by ICI. If you are practicing, only on behalf of ICA. That's it. You don't have some other capacity differentiated from the institute. Are you getting it? Next. If COP is cancelled or terminated, that person cannot undertake any assignment, which he generally undertakes only as a member of the institute. Suppose you are taking representational services for various clients and you got those kinds of service opportunities only because you are a CA and having COP. Now suddenly your COP is removed, you cannot do representational services because all these days you are doing it as a chartered accountant, as a member. Getting the point? Now this is creating so much confusion. That's why institute came up and defined what do you mean by deemed to be in practice. When a member is deemed to be in practice, so that these people must have COP. If at all you are deemed to be in practice, you cannot practice without COP because you are deemed to be in practice. You are practicing. Deemed to be in practice means what? We assume that you are in practice because you fall under this category. And when we assume that you are in practice, you must practice only with the COP. Obtain COP, pay annual fee and fall under the regulation. Some people know, now CS know, many are surrendering COPs because of Schedule 1 Part 1, Schedule 2 Part 2. If I have COP, what's the problem? I cannot advertise. Getting it? And what max I lose? I lose attestation services. Okay. But predominant income for CS is not attestation income. Predominant income is consultancy income. For consultancy, I don't require COP. Are you getting it? In fact, I don't require this qualification also for consultancy. So now many CS, what they are doing? I know personally some 4 or 5 who have surrendered COP. Getting it? In fact, maybe I'm also thinking to surrender. Why? It's not required, no? Getting it? When I focus mainly on consultancy or maybe a business or whatever, education or whatever, so obviously I don't require any COP. In fact, by having COP, I need to obey certain guidelines. Able to understand. So, when a member is deemed to be in practice, by the way, restoration of COP also I told. Restoration of membership I told. Restoration of COP also I told. And by the way, when your COP will be cancelled, when your COP will be cancelled or removed, if the person is removed from register of members, then COP will be removed because the membership itself is removed. So naturally, COP is also removed. Or you have got the COP by giving false information to the institute. Or you are ceased to practice. You are not practicing. Getting it? You have not paid annual fee by 30th September of the relevant year. Getting it? And restoration I already told. Now, when a member is deemed to be in practice, this is one definition where many confuse. Okay. When a member is deemed to be in practice, whether you may be individually or in partnership with another chartered accountant in practice, or in partnership with some other recognized professionals, and you are receiving consideration. You are receiving consideration for engaging in practice of accountancy. Then, when engaged in practice of accountancy, what do you mean by practice of accountancy? Practice of accountancy involves writing books of accounts, providing accountancy advisors, doing audit, everything. That all comes under accountancy practice. That all comes under accountancy practice. So they defined in the second point even more clear. Or you are performing services like audit, verification of books, accounts, records, preparation, verification, certification of financials, and you are holding yourself to the public as an accountant. What? As an accountant means what? Chartered accountant. Chartered accountant. I mentioned in my previous marathons also, the word chartered accountant means, who can use the word chartered accountant in public? Only a person who is having COP. Because if you are holding yourself to the public, no. If you are holding yourself to the public that you are an accountant, chartered accountant, you are describing yourself to the public as a chartered accountant, means you are COP. You are deemed to be in practice, you must have COP. Are you getting the point? See, there is a difference between chartered accountancy and CA. CA is a qualification. Chartered accountancy is a designation. Are you getting it? Suppose you are working in a company as an employee. There on the table you have a name board. Below that you have used the word chartered accountancy. You are not exhibiting to public. You are internally using. That is permitted. Getting the point? An employee can use the word chartered accountancy, chartered accountant designation only within the office premises. He cannot use outside public. I cannot put a name board outside of this premises. Suppose if I own this premises, I just put a name board, Harsha chartered accountant. Getting the point? It is giving to the public an indication that I am having COP. They are coming and asking me, sir, prepare audit, prepare do that service, this service. Now tell me, am I indirectly mentioning to the public that I am in practice now by using this designation? Understand the intention of the law. Are you getting it? And deemed to be in practice clearly says you are holding out to the public as an accountant, you are deemed to be in practice, whether you really render the service or not. Are you actually rendering the service or not is not the question. Are you holding to the public? Are you exhibiting to the public that you are in practice or not? If you are exhibiting to the public that you are accountant, you are deemed to be in practice. So one student asked me, sir, you said in one of the point also they say, a member of the institute who is whether in practice or not can use the designation chartered accountant. There is a word. Yes, of course they can use, but in the public they cannot use. To the public they should not mention that. Suppose I'm not having COB. Can I put a visiting card, Ram Harsha chartered accountant, give it to public, whoever meets me? Then what are you trying to say? You are indirectly implying you are doing something which COB people do. And you are not having COB. How come you do like what they do exactly? Are you getting the point? So outside you should not use. Internally within my organization, getting the point. I'm taking class, I'm not having COB. Here I can put my name below chartered accountant. Nothing wrong. Because it's a closed circle at the end of the day. I'm not exhibiting to the public outside. Able to understand. In public conferences, public meetings, seminars, in all these cases, if you use the word chartered accountant, it indicates that you are in practice. So many CS are coming, they're very simple, like in AP and Telangana and in there are many YouTube channels which are famous. There are many YouTube channels which are, having some lakhs of subscribers. They're interviewing doctors, they're interviewing lawyers, they're interviewing CS. What interviewing? You pay 10,000, they'll interview you also. Getting it depends on the anchor whom you select. Yeah, if at all you want a popular anchor, no. So then you have to pay 50,000. You have to pay, if you want like any who is very lead anchor, no, you have to pay 5 lakhs. They'll come and interview you and put it on their social media channel. Getting it? Now what many of CS are doing, they are just giving their interviews, like how to file IT return, when income tax department will give notice, all this bullshit concepts. But public they're not aware of it, right? So they see all that. So when they're giving interview, every 2 minutes something flashes. So it's a person, chartered accountant, contact number, guilty of professional misconduct. Getting it? If at all a complaint is filed against him on the institute, no. What institute people also do, when they receive a complaint, they don't take action first. They call people, they come here first. Because that so happens even in the court of the law. This is accepted practice. First they try to arbitrate the situation and resolve the issue without any punishment. If the issue is not being resolved, even in courts also there is something called Lok Adalat, where they try to settle the issue. Getting the point? Without going for the punishment and section and jail, all that. Same way in institute also they do, which is accepted practice across the world. That is nothing wrong. They bring first, hey, they file complaint. So you are doing something like this, don't do this. Getting, they first try to warn you. Getting it? And ensure that you delete all those videos across all the platforms, so that it will not be going further viral. If at all this fellow took action, initiated, and an institute will reprimand. Reprimand means nothing but shouting against him, nothing but giving warning. Reprimand means what? Giving warning to the member. So then institute will not take any permission. Suppose if at all this person is not listening, then formal case will be started, hearing, and then judgment, evidence gathering, punishment, everything will be made. Getting it? And you are rendering professional services, okay, accounting procedure and presentation of financial facts and so, or you are rendering some other services in the opinion of the council that only a CA in practice can render. So if you're doing any of these services, you are deemed to be in practice, and a member shall be deemed to be in practice in his professional capacity, neither in personal capacity nor in the capacity as an employee. You will be deemed to be in practice only if you are acting in principal capacity. If at all you are working as an employee in an organization, or you are working in personal capacity as a liquidator, trustee, executor, administrator, all these, no. See, if at all you are acting as liquidator, trustee, executor, administrator, all this, no, in professional capacity, because you are a CA, court appointed you as a liquidator, you are still deemed to be in practice. Getting the point? Suppose the liquidator is a CA firm. Inside that firm there is an employee who is also a CA. He is not deemed to be in practice. That's what? Not an employee, neither in personal capacity nor as an employee. If at all you are as an employee of a liquidator firm, you are doing liquidation process, you are not deemed to be in practice. Generally, even if you are doing liquidation services, if you are taking up appointment made by central government or state government, whatever, unless the employment is on a salary come full-time employment basis, unless you are employed in a government enterprise on a salary basis, you are an employee. Otherwise, if at all you are not employed in a government as a salary basis, Government employed you because you are a chartered accountant. Getting the point? You are deemed to be in practice. Because of the professional qualification you are having, you are appointed. Professional capacity you are appointed. You are deemed to be in practice. Not in your personal thing. The government gave you a position not because of your personal thing. Suppose along with CA you are also very good in sports and somehow you got a medal for the country and government gave you a designation to you because of the medal you got in a one government job. That's in personal capacity they gave. Getting it nowhere related to your profession, you are not able to be in practice. Suppose if a government gave a role for you in any particular government enterprises in your professional capacity, you are deemed to be in practice. Suppose if that role was on a full-time salary basis, then you are not again deemed to be in practice. Once in full-time salary basis means employee of a government. Employee of a government means you will surrender COP if at all you have. That's deemed to be in practice. Are you clear? All of you? Now there is another thing. Now, a member is deemed to be in practice. A member of the institute is also deemed to be in practice for the limited purpose of training articles. Example, in my firm, me and my partner were the two partners, let us assume. And we both can train 7 articles, let us assume. Right now the permitted limit is 7. Example. See, it depends on have you completed 5 years of COP or have you completed 7 years of COP, have you completed 10 years of COP. Only a partner who has completed 10 years of COP can train 10 articles. Getting the point? If at all you have completed 7 years or 5 years of COP, you can train 7 articles. Are you getting the point? If at all you are just ACA, only 1 article. After completing 3 years of COP, 3 articles you can train. So for each partner there is a limit depending upon the COP experience. So if I am having 2 partners, getting it, we have hired some 10 people, but we want more articles. So I hired one CA employee. Under him I can register articles. For 1 article I can register under him. But he is not in practice, no. For the limited purpose of training articles in a CA firm, I can treat him as CA having COP. I can treat him as deemed to be in practice and register articles under his name. Are you getting it? See, industrial training we go right in companies. In a company there will be one CA employee. Under that employee only register. And many confused with industrial training. What industrial training is? Nothing but a job. There is no use of industrial training. Articles only will give you good exposure, not industrial training. People don't have the knowledge of industrial training at all. They think industrial training means they're working in a big industry manufacturing plant. They assume like that. No. Industrial training means it's a job, nothing but a job. Whatever you do after acquiring job in a company, that you do before completing articleship. That's it. Industrial training means exactly that. It's a job. You go there, you become an accounts manager there. That's it. Are you getting it? But in industrial training, under one CA supervision, you will be doing. Even otherwise, even if you join as a fresher in a company, there will be one senior person under whose supervision you will do this work. Exactly. So there is no point of industrial training. People continuously ask me this question. What is the use of it? What use? It's a job only. Anyhow, you are going to do in the rest of your life that only. Most of you. Are you getting it? Why to do? Enjoy articleship period. The exposure in articles is substantially good unless you are working in a very small firm. Getting it? Next. Now, can a chartered accountant render management consultancy services? Yes, very much. You can render management consultancy and other services. As a chartered accountant, even otherwise, anybody can render consultancy services. That's a fundamental right to everybody. Whether you are having CA with a COP or not, doesn't matter. You can render management consultancy and other services. The question is, to the client for whom I am the auditor, can I render management consultancy other services to my own client where I am an auditor? The answer is yes, provided it do not fall under 144. It do not fall under 144. Suppose a company is there where I am acting as a stat auditor. Getting the point? The same company is asking me to provide some consultancy services. They are asking me to file IT returns. They are asking me to file GST returns. They are asking me to file ROC returns. Can I do? Yes, these are all administrative services. Getting it? Which fall under consultancy category, which is not prohibited by Companies Act section 144. Some of you might immediately say, sir, under 144, management service is prohibited. No. Remember, what is prohibited is management services, but not management consultancy and other services. Management consultancy and other services is different from management services. Management service means a service provided to a company which involves decision making. Example of one management service is acting as an independent director. Independent director is a management service where I am taking up a position and involved in decision making for the company direction. Company direction is in my hands. Getting the point? I am involved in active decision making of the company. That's a management service. What is management consultancy service? I don't provide any decision. I don't involve in decision making. You did some you paid GST, you collected GST, you paid GST on purchases. You want me to compile the return and then file with the GST department? What decision making involved in this? You ask me to process the payroll. You are asking me to train your staff. You are calling me to interviews. What decision I'm involving in this? What overall decision making for the company? Where am I involved? So that is not management service. Management consultancy and other service is a very broader term. Management service is a very narrow term. What is prohibited under section 144 Companies Act is management service, not consultancy and other service. Are you clear? Hey, what happened? Fine, right? Yes. Okay. So what MCOS excludes and includes, I'll cover with this. This basic discussion will be completed. One more thing is opening of branches point also we'll have to discuss. That's it. Okay. So once this is completed, remaining part of the ethics is 1.5 to 2 hours. That's it. Okay. Yeah. We'll take break and get back. Yes. So let's continue with the management consultancy and other services discussion. So a CA in practice can render management consultancy and other services, and management consultancy do not include these services. They just clarified stat audit, tax audit, representational services, tax matters related advisory services, liquidator trustee. These are not treated as MCOs. Why? Because if at all you're doing this, you are deemed to be in practice. Are you getting it? So management consultancy do not include these items. Why they clarified is, if you are a CA without COP, you can also render them. CA with the COP only can render them. Are you getting the point? Audit services, advisory services, liquidator, trustee, all these services only a CA with the COP can render. Getting it? In professional capacity. Are you getting the point? So MCOs do not include them. Management consultancy means other than attestation, other than opinion, other than assurance. Are you getting the point? They are just consulting activities where somebody can consult you and you just work upon their requirement. That's it. So what MCOs includes? Key points are included. So in examination they may ask you. So as per Chartered Accountants Act, a CS who are in practice or who are deemed to be in practice can render wide range of management consultancy and other services. Give few examples of management consultancy and other services. They may ask you to write 6 points, any of this. Out of this 6 points you may have to write. Are you getting it? So administrative services is also a part of management service. Now you see, we discussed deemed to be in practice, right? Practicing in the profession of accountancy, like that we have seen. If you describe yourself as a CA, that's enough. Whether you actually rendered service or not doesn't matter. Invitation to offer is also offer, yes or no? In CA foundation you might have learned. Exactly. So if you are inviting to offer to these services, you are deemed to be in practice. That's enough. That's it. Now, the period for which you are rendering with armed forces, it is also treated as deemed to be in practice. Generally, people serving in army, for them, the number of years that they served in army, for calculating age in all government sector jobs, the number of years they served in army to actual age minus number of years they served in armed forces, they calculate revised age. That's why people after retiring in army, they come and join in bank job. Why? Because generally bank job you cannot get once you cross 30-35 some age, but they are coming after 45. How come? Because their actual age is 45 minus 20 years they served in army is equal to 25 only their effective age for the purpose of government calculation. Exactly here also. CS who are working in armed forces, whatever the number of years you worked in armed forces, that is counted as deemed to be in practice for the purpose of practice definition. Getting the point? If you at all you work for 7 years in army and right now you want to come back and apply for COP, they may give you straight away FCA. Are you getting the point? And I have given a clarification regarding management services also. Now what is the implication of deemed to be in practice? You shall obtain COP, pay annual fee and obey the council regulations. And members know they are prohibited to use any other designation other than CA. Once you are using below your name chartered accountant, do not use any other designation. Only 2 designations are permitted: insolvency professional, registered valuer. Only these 2 designations you can use along with chartered accountancy. Suppose if I want to put Harsha below some name, getting it like a faculty, income tax expert, law expert, something like that I want to keep. You can keep any. Don't use chartered accountant word there. If you use chartered accountant word there, don't use anything else. Either use this or that. Mutually exclusive. Are you getting the point? So a member cannot use any designation other than that of a chartered accountant, cannot use any other description in addition thereto. In addition to the chartered accountant word, don't use any other description. Are you getting it? Also, a member may indicate letters and description of other accounting bodies, like I have given here. You see, this is permitted. This is permitted. What is not permitted? This is not permitted. Full forms is not permitted because full form indicates designation. Abbreviated forms indicates qualifications. There is a difference between a qualification and designation. Chartered accountant is a designation. Though we call it a qualification, it's actually a designation. Getting it? For example, a member cannot designate himself as a cost accountant. However, he can use the word CMA after his name. If at all he is a member of that institute. So I can use like this, no problem. Are you getting it? And I cannot use certain phrases like income tax consultant, okay, advocate, tax expert. Are you getting the point? So a member who is not in practice and does not use designation of chartered accountant, he can use any description of your choice. If you are not in practice and not using chartered accountant designation, use any phrases you want. If at all you are in practice, you can only use one designation, that is chartered accountant. You cannot use some other designation. Are you getting the point? And moreover, if at all you are using chartered accountancy designation, being a member not in practice, you are not in practice but using chartered accountancy designation within the closed sources, don't use any other designation. Are you getting it? Suppose you are invited for a conference, they wrote your name, big letters, below chartered accountant they used, comma, they can't use any other designation. That's it, one designation, chartered accountant. Are you getting it? Next. Then provisions related to maintenance of branches. See, very simple here. Why this restriction has been put? Whenever you are opening branch, that branch must have a head who must be a chartered accountant, who must be associated with your firm either as a partner or as an employee. Getting it? Suppose mine is, I am having Harsha and Co chartered accountants. This is my firm name. Getting it? And I am having head office at, say, let us assume Guntur. I want to open a branch at Chennai. I opened a branch, just attached my name board outside. I want to open a branch at another city. I want to open a branch at 100 cities. I can open simply. I'll go there, just to meet with one tax consultant. I'll ask him to use my name board. No need to pay anything. If at all any client comes, forward me. So I can misuse like this, no? So what institute is saying, if at all you want to put name board anywhere else, if at all you are putting name board, you can only put it outside your branch. Remember, a CA cannot use name board anywhere else. Can I use name board in Bradipet everywhere? I cannot use, right? Can I stick my pamphlet or whatever big big brochures? Getting it? Can I attach it on all the walls where you find a septic tank kind of thing? Yes or no? So those kinds of size posters. So can I put my firm name and stick everywhere? It's unwarranted publicity. Yes or no? So it will attract guilty. So if I want to use my name board, there is a clear-cut indication that name board can only be used outside your premises only. Outside your premises, which is registered with the ICI as office. Now if you want to use at any other place, that must be your office only. Office means what? Branch. Branch means what? There is a rule that branch should be having exclusive CA dedicated. The moment I use name board, institute will ask me, where is CA dedicated for that branch? I need to show. Yeah, there is a CA. Is he associated with your firm? Yes. What is the proof? He is my partner. Look at the partnership deed. He is my employee. Look at the filed with your institute and look at his bank statement. Every month I am paying salary. You need to show the proof to the institute. Are you getting it? Because of this condition, CAs cannot open branches anywhere, wherever they want. Because if they want to open a branches, separate in charge should be there. We call him as what? Separate in charge. That branch must have a separate in charge who shall be a member of the firm, and not only member, he must be associated with the firm. How he must be associated? Partner or employee. However, a separate branch, a branch of your firm need not have a separate in charge if the following cases, if at all it fall under the following cases. Suppose if I have another premises in the same building, getting the point, I'm having so many staff, it's not sufficient, premises is not sufficient, I just took another premises in the above floor. Though you call it as two portions, two separate offices, they're one and same. It does not require any separate in charge. If the second office, nothing but another branch, is situated in the same city, no need of having a separate in charge. Or if it is within the distance where I can regularly can travel easily, getting the point, no need to have a separate in charge. That's why 50 kilometers norm they put. If from the municipal limits of the city, within 50 kilometers, if you are having another office, you can open it without any separate in charge. You can open 10 offices in the same city. I can open 15 offices in Hyderabad, in 15 locations. No need to have separate in charge. Are you getting the point? If you want to open in somewhere outside the city beyond 50 kilometers, that's actually a branch. Because you can't regularly go there. It's difficult for you to travel everywhere. You can't manage. So it's a branch, logically, substance over form. Must have separate member. It must have a separate in charge who is a member of the institute. Are you clear? Next. Suppose no, I am actually practicing in a hill area. Earlier, no, I told this provision ulta. In the class also I told ulta. Member is practicing in plain, opening temporary office in hill area. No, that's not the correct provision. The correct provision is what? Member is actually practicing in the hill area. Getting it? Suppose I born in Ooty and I grown up in Ooty. I studied online, or I came outside here physically, then again I came back to Ooty and opened up a practice. Ooty is a hill area. Okay, but I'm having clients at, plain areas, normal areas. I am practicing in hill station. I want to open, especially in the IT filing season, June, July, August, September, 4 months or 3 months, maybe 3 months, that is what permitted here. I want to open a separate branch. For 3 months, how can I hire separate in charge? Tell me. Yes or no? CS will they come for 3 months work and all? Nobody is coming. Now I want to open separate branch at particular plain area which is temporary in nature. Institute recognized this and gave exemption. If a member is practicing in hill area and want to open a branch in a non-hill area, means plains, he can do so provided maximum how many months he can open? 3 months. Are you getting the point? Without a separate in charge, he can open, and only during that 3 months only name board should be visible. Once the 3 months over, name board should not be there. Nothing. Your identity should not be there at that branch. Only for the 3 months for which you are opening temporary office, only for that period you can open. This exemption is available for those members whose main office is registered in hill area, as per the records of the institute. Are you getting the point? All of you. So, and you have to, there is a procedure which is given here, there is a procedure which is given before opening temporary office. You have to intimate to the institute. Once you close the temporary office, you have to intimate to the institute. Getting it? So in the temporary office, name board can be, firm name board can be there only during the 3 months period, not before that and after that. That's it. Are you confident? So regarding the name board, main office, member, paid assistant, all that I spoke. Next. Meaning of chartered accountant in service, very simple. You are working in either in employment. Getting it? Even for you also, guilty of professional misconduct will apply. You have to maintain confidentiality not only with respect to your client. You have to maintain confidentiality with respect to your employer as well. Are you getting the point? Guilty of professional misconduct. Schedule 1, part 3. Getting it? Sorry. Schedule 2, part 2. Getting it? If an employee, who has not maintained confidentiality, getting it, in the employment, he is treated as guilty of professional misconduct and punishable from ICA because he is a member of the institute at the end of the day. Are you getting it? Obviously, when you do something wrong, the client will tell, are you a CA? Bringing a shame to the profession. They obviously blame you with your profession name only, no? Getting it? Next. Now, there are misconducts which a members can do. These misconducts were classified into 2 types, professional and other. Other misconduct means not related to your profession at all, but still ICA consider that seriously. Hey, it's nowhere connected with your profession, but in the newspaper, they didn't mention Harsha drank alcohol and drove the car. They mentioned chartered accountant drank alcohol and drove the car. Are you getting the point? Newspaper, they use your profession. Who revealed them that you are a chartered accountant? Why are you revealing? On your car, sticker is there. That's why I don't have sticker on my car. No, I don't drink. Okay, I'm just telling you. Okay, so obviously, naturally, many of them see institute only giving the sticker. First point, it's not somebody buying the sticker and then sticking. Institute membership kit they'll send you. Once you get for membership, they'll send a pen, they'll send a book, diary, they'll send 3-4 stickers. They'll send, here you can attach some badge, button, shoe, coat related button, all that membership kit that's called as ICA. They'll be sending it. Stickers were there. These people know CS, no, they'll stick on all the vehicles. So one of my friend, he sticked on his son's bike also. Getting it? He's a senior person, sticked on son's bike also. Why is that required there? No, everyone should know he is my son. What? Okay, so, and this fellow, that son has an alcoholic. Getting it? So that's why. See, actually, as per Motor Vehicle Act, you should not put any designations on vehicles. You cannot use the word police tag, you cannot use the word judge tag, you cannot use any word. That is prohibited. Very recently, there is a law which is implemented also. But again, entire industry filed a case against the lawmaker. Who are you to deny our qualifications? Our qualifications, our pride. Not just CS, doctors, everybody have filed a case against that. Okay. Now that is in Supreme Court. That case is pending in the Supreme Court. Next. So, understood professional misconduct means the misconducts that are arising in the professional context. In profession, in rendering the service to the client or employer, you did certain misconduct. You breached certain thing. Other misconduct means not related to your profession, in your social life also. Getting it? Institute wants you to be perfect socially. Apart from profession, they are looking at your personal things also. Getting it? Next. So they have given various misconducts. So the misconducts are broadly divided again into two schedules. They define two schedules for misconduct. Schedule 2 offenses severely punishable. Schedule 1 offenses slightly punishable. What is more difference? What is the actual difference between Schedule 1 and Schedule 2? Schedule 1, here you are doing misconduct related to the way you do business. Related to the way you do practice. Suppose I should not advertise. Getting it? I should not form partnership with so and so people. I should not allow somebody to sign on my behalf. I should communicate with my previous person when I'm getting a new client. So like this, these are all practice related. Whereas Schedule 2, you see, breach of work, breach of contract related. Example, you leaked client information to third party. Are you getting the point? Now here, third party is affected. Client is affected. In Schedule 1, no. If you do any misconduct, no, nobody is affected. Only you. Only institute and you are only affected. A client is not affected. The third party is not affected. Suppose example, I am advertising. Who will affect? Nobody will affect. If I advertise, is there anything wrong? Nothing wrong. But institute is saying you should command work by respect. Are you getting it? If you advertise, people take it granted. Are you getting the point? So don't advertise. That is what institute guidelines is. Now here, in Schedule 1, all offenses are practice management related. Whereas Schedule 2, you rendered a service to the client and you did the work negligently. You are punishable. Here, in Schedule 2 misconduct, if you check, no, somebody is affected because of that act. Because of that misconduct, a third party is affected. Are you getting it? So that's Schedule 2 offense. That's why severe punishment is much severe. Whereas in Schedule 1, nobody is affected. You are going against institute rules. That's why you are punishable. That's the basic difference between first schedule and second schedule. Got clarity? Next. Now in the Schedule 1, we have again four parts. Getting it? Part 1 in both the schedules, no? In part 1 in both the schedules, no? It is related to members who are in practice. Okay. Only in first schedule, for members who are in service exclusively, there is a provision. Whereas in Schedule 2, generally for members, what are the misconducts and the other misconduct. And here, generally what are the misconducts, all the members will do, and other misconducts, what they will do. Are you getting the point? That's it. So now we have certain clauses which are important. So part number 1, if you allow a non-member, or an outsider to practice in the name of you. See, if I want to allow somebody to practice in my name, he can practice provided he is a separate in charge of my branch. Only then I can allow him to practice. Suppose he is not associated with my firm, but I'm letting him to use my firm name. Getting it? Another CA residing in another city is using my firm name, my FRN number, but he is not my partner, not my employee, that's not my branch. Disqualify. It is treated as guilty of professional misconduct. Or I'm letting a tax consultant use my firm name. Getting the point? Treated as guilty of professional misconduct. This is related to that separate in charge branch concept straight away. This concept is related straight away related to separate in charge. Got clarity? That's it. No interpretation in this clause. Clause number 2. If you are sharing profits to a non-member, the clause gist is what? The glimpse of the clause is sharing profit to a non-member. You cannot share profit to a non-member. Why are you sharing profit to non-member? What is it doing for you? Are you getting the point? So are you bringing any clients through unwarranted means? Are you bringing any clients through unorganized, unrecognized methods? Getting it? Are you bringing clients to unauthorized ways? So why are you paying profits to non-member? So regarding that, now here, however, you can pay your profit, your fees, whatever you are getting from client. No, you can share to another member of the institute or your partner of a firm, a retired partner, because it's a goodwill. Getting the point? Legal representative of a deceased partner, it's a goodwill again. A member of any other professional body, a person having recognized qualification. What are the professional bodies recognized? What are the qualifications recognized? I have given here. Are you getting the point? Now here there is a question. Treatment of goodwill. How that goodwill has to be treated. Can a firm, partnership firm, pay share of profits to deceased partner's legal representative? Yes. Every year he can share, provided there is a clause existing in the partnership deed. Getting it? If at all institute prohibits, no, that's against the partnership act. If institute prohibit this point, they are going against the partnership act, which is a fundamental right of every partner, legal representative. Okay, partnership firm, we understood. What about sole proprietor? Sole proprietor is also having a firm. Now you see, I told right how an individual should practice. Okay, just a minute. Yes, how a sole proprietor has to run. See, if I became a CA, I mean, like once I qualified as a chartered accountant, I did one mistake personally. I directly applied COP in my name. I did not open firm name. See, what option is having is, if you are applying for COP, institute will ask, do you also want firm name? If I apply for firm name, what happens, firm will have experience. Firm name will have experience. Firm means, don't think partnership firm. Again, please remember, dictionary meaning of the word firm means what? Enterprise, entity, establishment, concern, organization. Firm. Firm means organization. Are you getting it? Only in income tax, firm means partnership firm, LLP. But outside in general context, firm means what? Enterprise. If that enterprise basis is partnership, then it is called partnership firm. If the enterprise basis is sole proprietary, then it is sole proprietary firm. Able to understand? So what happens if when you're tomorrow, if at all you're having any, you're having thought of COP, after as soon as you get the result, immediately apply for membership, COP plus FRN. Are you getting the point? Suppose right now, famous example, GP Kapadia & Co. Chartered Accountants is there. He is the first founder of the institute. He died, but his firm is still existing. His name is still existing because GP Kapadia & Co. he did not practice in his name. He took a firm name separately. Business name he took. GP Kapadia & Co. Chartered Accountants. He took a name, firm name. Inside that firm, he is a proprietor. And if you join another partner, it becomes a partnership firm. But firm name remains the same. Only if you are having a firm name, that name can be used even after your, that person's death. Getting it? Okay. Even if the member died. Getting it? The firm name can be continued. Are you getting the point? So that is the advantage of having firm name. Only when the firm name is there, goodwill will accumulate. Because the name can be used, no. Are you getting the point? I did articleship in R. Bhupati & Co. Chartered Accountants. It's a firm name. The head of the partner is Bhupati. See, obviously humans are limited life. Getting the point? So, the firm will continue even after the incorporated, the person who promoted this firm, even if the person dies, the firm will continue. That is only when sole proprietary firm will get a goodwill. Getting the point? And moreover, in insurance sector, all that in insurance audits, government audits, bank audits, they look at firm experience. If you do not have a firm, you will not get a bank audit also. You know that? A branch audit of a bank will not be allocated to other than firms. Only to the firms it will be allocated. Firm having 3 years experience. I don't have firm. I am practicing in my individual name. No, not given. Able to understand. So, proprietorship firm. Proprietorship firm means what? It's a firm having firm name, firm registration number. Inside that only one owner is there. That's why it's called proprietorship firm. Suppose if the proprietor dies. Now the firm is having goodwill. Can that goodwill be sold to another firm, another person? Yes, you can sell. Another person can use this name continuation. The another person can use happily this name and continue. Now for that, for using, suppose I'm a legal heir of the proprietor, the proprietor died, but our firm name is still there. It has a validity. Institute gave 1 year time limit. Okay, take 1 year. The proprietor died, no? Take 1 year from the date of death. Within 1 year, find a buyer, another CA who is in practice. If at all he want to use this firm is having 10 years experience. Okay, straight away if at all he get that name, no. If at all he merges his firm with this firm name and using this firm name, no. He is straight away eligible for big audits, category 1, category 2 audits. Getting it? So if at all you find a buyer, sell him. Sell the entire sale process must be completed within 1 year from the date of the proprietor. Make application to the institute, complete the sale, receive the consideration, everything. Within 1 year you have to close. This 1 year, institute will remove only member name. The institute will remove name of the member from register of members, but firm name will not be removed. Here, firm registration number is there, no? Firm name is there, no? Who will maintain record for firm name and firm registration? Institute will maintain. FRN is there, no? Who is giving that? Is it Partnership Act giving? Institute is giving FRN for us. It's institute specific. Able to understand. So that's what regarding sale of goodwill. Now here, proprietor died after 30 August 1998. Before 29th August, this and all not required. Only this is required. This is the latest provision. Are you getting the point? Write about conditions attached to sale of goodwill by a proprietary firm. Are you getting it? On death of the proprietor by legal representative. What are the procedural formalities or conditions attached to it? A 4 marks question you'll get. Got clarity on this or not? This is one confusing point where many confuse. What is the sale of goodwill? They don't understand. That's why I told firm name, individual practice, that logic. Clear? What happened? Fine. Next. Third clause, the second point is what? Don't share profits to anybody. Third point, don't accept the profits from anybody. However, you can accept from member, a CA in practice, or from a person having recognized qualification, or a member of recognized professional body. Referral fee is accepted. Referral fee is permitted amongst members. See, once I qualify, if I want to get a work, no client, no. I open COP. I have COP. I open practice. Let's assume. I can call another CA and ask him, can you give me some clients of yours? No. Or you'll get new clients. No. Where you think you cannot do work, right? Please hand over it to me. At least I will take care so that I can survive in the initial days. So I can ask another CA about the work I want. I can ask members of recognized professional body for the work. I can ask persons having recognized qualification. Are you getting the point? I cannot ask from outsiders public. I cannot distribute pamphlets. I cannot put social media posts. Able to understand. Next. Same way, you cannot share profits to somebody. You cannot accept profits from somebody. You cannot form partnership with somebody. Getting it? Don't form partnerships with the non-members, non-CAs. However, you can form partnership with a member of another professional body. You can have partnership with a person having recognized qualification. Are you getting it? So here, indirectly, institute has permitted multidisciplinary form. Institute has permitted multidisciplinary. You can form a partnership firm where multiple qualified people can be there. A few CAs, few company secretaries, few cost accountants, few lawyers, few engineers, few architects, few actuaries. All of you put together form a partnership firm. But right now, forming multidisciplinary firm procedure is still pending. Notifying. That procedure is not yet notified because in other professional bodies also similar provisions has to be made. Getting it? Like other professional bodies also should permit multidisciplinary firm. Suppose I want to form a multidisciplinary firm with a lawyer. Bar Council of India also should design rules for this. Then only I can form. So as of now, I say permits multidisciplinary firm. But procedure is not initiated. Procedure is not given. Since the procedure is not given, form is not notified. It is not possible technically and practically. Are you getting the point? Logically, legally permitted. Practically, right now procedure is not notified, so not possible. Are you getting the point? So that's why we find always all CA firms are unidisciplinary firms. Uni means only all the partners are CAs. Next. Clause number 5, 6, 7. I'll come back to it later. I'll come to clause number 12. Now, can you allow? Now you see, first 4 clauses you see, you don't allow somebody to practice in your name. Second class, don't share profits to somebody. Don't tax a profit from somebody. Don't start partnership with somebody. Don't tell us somebody to sign on your behalf. Clause number 12. You have to read in the same order for better understanding. Getting it? Clause number 12, you say, first 4 clauses on this very much related. It is saying, don't tell us somebody to do on your behalf. Yes or no? Clause number 12, don't tell a non-member, don't tell a non-partner to sign on your behalf. Getting it? Your firm is appointed for some particular certification work. On behalf of firm, who can sign? Only a partner of the firm can sign, who is a CA having certificate of practice. Suppose if a firm is having a partner who is not a CA, he cannot sign. Or if a firm is having an employee who is a CA, but he is not a partner, he cannot sign. That's it. What about routine documents? Yes, this can be signed. This can be asked as an MCQ, case-based MCQ. Routine documents like issuing audit queries, getting information from the client in the form of questionnaire, forwarding letters, acknowledging and carrying out correspondence, issuing acknowledgement for the records taken by the staff. Routine correspondence, routine questionnaires, discussions can be signed by your article also, no problem. But a report that contains opinion, that contains assurance, it's a kind of attestation, it's a kind of certification. This can be done only by a CA having COP and as a partner of a firm. Are you clear? That's what clause number 12. Hey, understood? All of you. Next, clause number 11. A CA is prohibited to engage in any other occupation or business other than chartered accountants. Once you have COP, you must involve only in practice. You cannot do any other profession. Immediately you're down. You're doing faculty job, sir. That is permitted, automatic route. For which no permission is required. For which no permission is required. If I want to do an activity, getting it, a tuition for CA students, getting the point, only to CA students teaching, that is private tutorship. You call it as what? Private tutorship. That is permitted. Getting it? Now you see. So a CA is treated as guilty of professional misconduct if he engages in any occupation or business in addition to CA. Even trading in derivatives comes under additional occupation which requires special permission of the institute. You are prohibited by default. You cannot trade in derivatives. But if the institute exercises this clause, no, all of its members, including the president, will be disqualified. Because everyone will be doing derivatives, no? More or less. Somehow they will be doing, their relative or their, some of them will be doing in their name, definitely. Okay. So, by the way, when it is, what is an exception to this? If at all you got a permission from the Council of ICA, no problem. Getting it? Now you see, there are certain activities where there is no permission which is required. Permission is not at all required for these activities. What are the activities? You want to go and join as an employee in a CA firm. You are having COP. You want to join as an employee also in a CA firm. No problem. You can have both. Are you getting it? Private tutorship permitted. Provided teaching hours not exceeding 25 hours in a week. Authorship of a book and article. You cannot authorship a book or article. By the way, retail reports is again disqualified. For publishing retail reports, you need to have a special permission of the, I say example, Dalal Street Journal asked my service, sir, please write one article every week, sir, we will pay you compensation. Getting it? Write one article on tax related issues every week. Dalal Street Journal. It's a retail journal. And I'm giving one article to them every week for which I'm getting a consideration. It becomes editorialship service. It becomes a business. It becomes a separate occupation. Disqualified. Are you getting the point? I mean, guilty. If at all I want to do that, get permission of the institute and do it. By the way, can I intimate the institute after I start rendering the service or prior to? Exactly. Prior to rendering service, I need to get the permission. And if at all you're holding LIC agency, life insurance company or any insurance company agency, disqualified. You cannot, I mean, see, here what are they saying? You can hold a life insurance agency just for getting renewal commission. That is permitted. But if at all you want to act as an insurance agent along with CA profession, that's a special permission. You require special permission. However, suppose I'm holding agency, I'm not doing any new insurance business. Whatever existing clients are having, I need to get renewal commission. I can get the commission only when I hold the license. What is the point? Only for getting renewal commission I'm holding this license. No permission is required. Still, every client whoever is approaching you, you are explaining them insurance policies also. That means new business you are doing, which require permission. So right now what am I discussing is what are the activities that do not require permission. And you can compete as a MP, MLA, MLC. No permission is required because these are constitutional powers. Getting it? Acting as notary public, honorary leadership in a charitable and non-commercial organization, part-time tutorship under any coaching organization of the institute. ICI, if I want to teach in ICI chapter offices, I can teach. No permission is required from the ICI. ICI is only recruiting me. What permission again? Yes or no? Valuation of papers, paper setter, head examiner, moderator, everything is permitted. Editorship of a professional journal, permitted. Professional journal, not retail journal. Professional journal means in CA they'll give you student journals, member journals. For this also they'll pay honorarium. That is permitted. Professional journal it is. Professional journal means in your profession, if the professional body is publishing any journal, that's called as professional journals. Or we see there are some societies, Hyderabad Chartered Accountancy Society, Bombay Chartered Accountancy Society, which is very famous. Getting it? So these are the bodies which are constituted by the members of the institute parallel to the ICA. Getting the point? So they of course work within the guidelines and principles set up by the ICA. So they publish journals, that is professional journal again. Suppose if Bombay Chartered Accountancy Society is asking me, sir, please give a journal on this topic, please give a one journal for this month, entire month journal. What are the updates happened in this particular month? So if I gave a journal, professional journal, it is not a retail journal. Retail journal means what? Based on my journal, somebody is going to take decision and invest and gain profit or loss. Whereas a professional journal is what? It's about profession coverage. That's it. Having an agricultural land and carrying out agriculture activity. Agriculture is by default fundamental right in the constitution. Everybody can having land or can purchase land and then do agriculture activity. Agriculture is primary occupation in the Indian economy. Yes or no? Then there are certain cases where special permission is required. You know, this I feel very bullshit. Why? Because you told me what are the cases where you don't require permission. Means remaining cases you require permission only, no? Yes or no? There are two routes. I mentioned don't go in this route. That's enough. You can go in this route. Yes or no? Don't go in this route. Go in this route. What? Too expressive institute and making students confused because of this. Okay? They will tell you all this list, and below somewhere they'll give clarification. Any other activity, get permission of the institute. Are you getting it? Like what they gave here is, see, these are all cases where prior permission is required. These are all various case laws happened earlier. So institute has summed up various case laws and given a list like this. Now in this one confusing point is what, especially interest in business concern. What is it? Interest in business concern. I'll come back to it. Yeah, this one. Member in practice having interest in family business. Member in practice having interest in family business. Especially this point apply for sole proprietors, partnership and HUFs also. Not for companies. See, in a company, you can have shares happily, no problem, because shareholder is not doing business. If you're just a mere shareholder, you're not doing business. Can I see a purchase shares in any company? Yes, happily. Can I see a trade in company shares? Permission is required. Trading becomes occupation. You're doing, BTST transaction, buy today, sell tomorrow. Are you getting it? You're doing these kinds of transactions. Nothing but intradays you're doing. Speculation you're doing. That requires permission. You're just investing. You opened a demat account. Every month you're saving some money and investing in various companies as an investor. Getting the point? That is permitted. Automatic route. No permission is required because in investment, who can control your investment? Are you getting the point? If you want to trade, it's an additional occupation which requires permission. Now here my question is, okay, in a company I can invest. What about partnership form, sole proprietary and HUF? They are not open for public. They are family related or close privately related. And generally in partnership form, proprietorship concern, HUF, members and family. Members and the business are one and same in all these three cases. Partners and partnership form one and same. One and same. Principle of mutual agency. Yes or no? Have you remember? So in a proprietary concern, partnership form and a HUF, you are having ownership means you are participating in the business. You are also having unlimited liability there. So here there is a discussion. Now what institute says is entire here it came, and it also came in first point. It also there in the first point. What it says is, the point is very simple. Can I have ownership in a HUF? Can I have ownership in a partnership form? Can I have a ownership in a proprietary concern? Proprietary concern ownership means 100% only. In a proprietor concern, my father is 50% or I am 50, then it's not proprietor concern, man. It's a partnership form. Proprietary means what? Sole proprietor means single owner. Single owner means what? Ownership means what? 100%. If at all you are entering into proprietorship, if at all that is by reason of inheritance, by reason of will, getting the point, by reason of succession, inheritance or will, because of these three reasons you inherited your father's business, take permission of the institute and make sure you are not doing active business in that. Can I buy a proprietary concern involved in a restaurant business? Can I buy that? Don't buy. If you inherit, that's a different issue. Your father business you inherited. Who am I to reject that? But even for inheriting, take special permission. Provided, give a declaration that you are not actively involved in that business. Your family members or somebody is taking care of that business. Give a declaration for that. Institute is asking member to take special permission if a member inherited any proprietary concern, if a member inherited any ownership share in a partnership firm, if a member inherited any ownership share in HGF, any business concern interest you acquired, not by paying money and acquire. You are acquiring it how? Inheritance, will, all that. Take special permission. Suppose no, I want to buy. I want to invest in a proprietary concern, but I won't want to do business. For this also take special permission. For this also what? Take special permission. Anything which is not there in general route, automatic route, which requires special permission. If council permits you, happy, well and good. If council do not permit, council must permit in one situation. Inheritance. If I inherit any family business, my father's business I inherited, or my father's share in a partnership firm I inherited, my father's share in a HF I inherited, and I am not actively involved in that, and this is not covered in automatic route, I need to apply for special permission. Institute must give permission here. They cannot deny. Suppose I gave a permission, I gave an application to the institute in SSB portal that, sir, I want to buy a restaurant, but I don't want to actively involve, but it is in my name. Can you give me permission? Institute can reject. Are you getting the difference between this and that? That's why inheritance, succession, will point is only covered. You see, it is necessary for the member to provide evidence that the interest in the family business concern devolved to him as a result of inheritance, succession, or partition, or will, whatever. Able to understand. Even for inheritance also you require permission. But in this case, institute also must give permission. Because you are inheriting business, man, who am I to deny that? It's a fundamental right in the constitution, inheritance. Correct? That's it. So with this clause number 11, the key point I have covered. And then what are the cases where special permission is required? If you want to publish retail journals, if you want to start your own education institution, getting the point? In all these cases, you require special permission. Are you getting the point? Then clause number 10. It is saying don't accept fees. Don't charge fees from the client on contingency basis. Don't charge fees from the client based on percentage of profit. Getting it? Charge the fees which is predetermined. Enter into the client while entering into the agreement itself, predetermined, fix the fees. However, for certain works, you can charge fees as a percentage of something. Example, acting as a liquidator, percentage of realization you can charge. Getting the point? Acting as insolvency professional, you can charge based on the amount settled. Getting it? You are acting as an auditor of a corporate society, there it is permitted. You are doing valuation services, there it is permitted. You are doing management consultancy services. For all management consultancy services that you are providing, you can charge fees based on percentage of some value addition. Suppose you can go and bargain with a company. You are a fresher CA, you started COP practice, you went to a company and asked for internal audit. Okay, you asked for internal audit. Maybe you met in a conference, you told them that you are in practice, and somehow the conversation started. So you told who are acting as internal auditor, you just made a proposal. If you give me an opportunity, I'll do internal audit. Don't pay me any fee. If I come and do internal audit and do valuation, then only pay me the fee. If this is a kind of arrangement you entered and the client provided opportunity, you go and find loopholes and explain the client, if you rectify these loopholes, this much profit can be saved. This much revenue can be saved. This much revenue can be increased. If you show the client and client also impressed and is paying you percentage of whatever you showed value addition, that is permitted. Able to understand? funding activities you are doing. Obviously, a CA can also act as an underwriter. But of course, remember, entering into underwriting itself becomes an additional occupation. Underwriting services you cannot do in your firm name. Remember, you have to open a big company for that. Getting the point? Underwriting in I think SEBI regulations you might have understood who can act as an underwriter, how to form merchant bankers and all will be appointed as underwriters. That's it. That's clause number 10. Then clause number 9. You are prohibited to accept. Just a minute. Not permitted. It's not consultancy service. Again, see, the doubt is can I charge fee based on percentage of loan amount sanctioned to a particular client who approached me for funding? That is your question. Suppose if a client approached you for funding, sir, I want a loan, I'm starting this project. You please put all the projections, financials, everything, and talk to a banker, and then somehow arrange me a loan. I will pay you 10%. This is fraud. Yeah, Kolkata High Court. There is a case. There's an action taken on one CA in 2020 or 2019, somewhere in one of the year. A CA is prohibited to sign projected financial statements. And I think we have that rule also here. Clause number 3, some clause, I think schedule 2. Getting it? You cannot sign about the future prospects provided you mentioned assumptions clearly there. If you mention clearly the assumptions, all that, then that's a different. Most of the CAs are not mentioning this. When they are signing projected, they are signing as if they are guaranteeing the client. Getting it? That's it. Normally, if at all you mention all this and assist the client in getting the loan legally, permitted routes, and you are charging some percentage of fees, permitted. Legality is what we need to see. You should not adopt any illegal means. Getting the point? Some CAs are exclusively doing this project finance works. They surrender COP and they do this. They don't take COP because project finance people, for them, they catch one big client. Some they want 500 crore loan. They'll somehow arrange for it. 1% they'll take 5 crores. One entire 1 year they'll just invest time on that. They'll get 5 crores easily. Next. So again, if you are accepting any audit under Companies Act, it is your responsibility to check whether the provisions of Companies Act are satisfied at the time of your appointment or not. When your appointment is going to be taken place in, when your appointment is going to take place, it is your responsibility before giving acceptance. You have to check all the provisions of Companies Act have been satisfied or not. You have to check. If you do not check the provisions of Companies Act and directly accepted appointment, and later it is discovered that there is a non-compliance with the Companies Act, and you did not discover that, you are treated as guilty under clause number 9. You clear? Now, when you're appointed as a first auditor of a company, when you're appointed as a subsequent auditor of a company, if you're appointed under a casual vacancy, if previous auditor was removed and you're appointed, if previous auditor was resigned and you were appointed, there is some procedure rules given under Companies Act which company has to follow and which you have to follow. You need to check whether company has complied with all the provisions. Whether company board of directors have complied with all the provisions before they make you as an auditor, you should check. For that, in institute book, they have given very clearly all the cases. 3 pages discussion is there in the institute book. Please refer that. Any of that can be asked as a question. Suppose a previous auditor has been resigned under companies, for the company, and you are appointed in an extraordinary general meeting. Before accepting the appointment, what are the points that you will ascertain with regard to compliance with Companies Act provision? This is not company audit question. This is ethics question. If at all they are asking you what points you will check before accepting the audit, this is an ethics question, clause number 9, schedule number 1. Getting it? Part number 1. Many of us by accidentally write as per company audit or as per so and so. We will write company audit question, company audit provision only you write. They are not asking the provision. They are asking you what points you will check before accepting. So here there is a big discussion given in the institute book. Getting it? Like here they gave cases. If at all you are appointed as a first auditor of a garment company, what points you check before accepting appointment? If you are appointed as a subsequent auditor for garment company, what points you will check? If you are appointed as an auditor appointed under rotation, what points you will check? So there are so many cases. Clear? Then clause number 8. Clause number 8, very simple. It says that whenever you are accepting any role, previously that particular role was by another member of the institute. Who is holding that role or position previously before you take up that role? Another member of the institute, which means you must communicate with previous auditor. Which means you must communicate with previous auditor. This clause number 8 requirement apply for all types of audits that we do. Tax audit, internal audit, stat audit, any other operational audit. Getting it? Special audits don't apply. If any special audit is conducted under law, suppose previously to this client under 140 section income tax appointed one auditor there. 140 audit. He left. Again after 4 or 5 years, you are appointed as an auditor under income tax law for that particular entity. You need not communicate with previous special auditor. No condition. Routine audits will be there. No regular audits. Those kinds of regular audits, if at all a person is being changed, CA is being changed, then the new CA incoming auditor has to communicate with the outgoing auditor, has to get no objection certificate. Has to get no objection certificate. That's it. Getting it? Now, what is it? This is required for all types of audits. Invoice is not required for special audits. Invoice is not required if at all you are accepting assignment conducted by other people other than CS. Earlier the work is performed by MBA candidate. I need not communicate with him. What is the purpose of clause number 8 is? The purpose is to eliminate fights, or I can say disturbances in the profession, within the profession. Between members, there should not be any professional disturbances. Getting it? One member of the institute coming to IC and complaining that this fellow snatched my work. Okay, this should not happen. So members should work in a cordial environment. Getting it? Courtesy should be there. So when I'm accepting one work, earlier somebody has performed, I need to take his objection, no objection. Getting it? Only if he give no objection, then I will take up that work. There is a rule saying you cannot take original work. Suppose you went to one firm opening function or branch opening function of your friend who is also CA. Accidentally you met his client. His client also approached you and talking to you. Don't mention that you come here, I will provide better service. And especially if you worked as an article in one firm and after qualifying, calling that client where you worked as an article and asking them, sir, I will charge 10,000 only, you come to me. You know, right? I am the one who did in the entire 3 years. In fact, I spent more time in your office only than in my office, sir. Getting it? You cannot do like this. So this is a protection against the principal. This is protection to the audit firm. Suppose if an article after qualifying, if at all he is snatching the client, no, the principal can complain on this fellow. He worked as my article, now snatching away all my clients by offering lesser fee. Yes or no? In this there is a point. There is a point here. At last I'll show you. If at all incoming auditor is charging reduced audit fee, you need to show the proof why there is a reduction in the audit fee. If at all there is no proper proof why there is a reduced audit fee, you are punishable. Suppose previously the company paid stat audit fee 1 crore and you are charging 20 lakhs. Means institute will doubt you, okay, because by showing this as your negotiation, you are, snatching the client. Getting the point? So you are just grabbing the client from your previous auditor by reducing the audit fee. If this is the reason, you are punishable. Able to understand? So next, what are the reasons why you have to communicate? This itself can be asked as a 4 marks question. Suppose previous auditor's fee is not paid. What I should do? I should ensure that before accepting the work, I should use all my influence so that the remuneration pending to the previous auditor is paid by the company. Suppose if previous auditor is not traceable, his bank account details will be there, no? Pay. Suppose if his bank account details are also not available, somehow is not traceable, take a demand draft in his name. Take a demand draft in his name. Company demand draft means you have to pay cash and they buy a deed in their name and keep it. Getting it? And make sure that it is transferred to him as soon as possible, then accept. This is what this entire discussion is. Are you getting the point? So what is the correct procedure? If at all a new client is coming to you and asking you, can you be my auditor? What is the correct procedure? First identify what is the reason for replacement. Sir, who is the existing auditor? Ask. Why they want to replace? Ask. If the client, whether client has informed the previous auditor, so okay sir, have you informed previous auditor that you are going to change? Client said yes. Then situation is something normal, nothing abnormal. So fine, I will also do my additional due diligence. I will communicate. I will check my compliances under company side everything, then I'll accept. Suppose if the company did not intimate previous audit, no sir, I'm worried about him, what he will do at the last minute. Okay, there is something wrong. So why the company has not communicated? I need to ask. Getting it? Sometimes no, in bank and government audits, no, there will be a time limit within which you have to accept. For these cases, no, I cannot wait until the previous auditor gives me acknowledgement. I'll intimate him, I'll give 1 week time. Within 1 week, if at all he reply, happy. If at all he doesn't reply, 8th day I will accept. Able to understand? Is reply compulsory from the previous auditor? The incoming auditor has communicated with the previous auditor. Reply should come compulsorily. Yes, logically speaking, yes, reply should come. But how long I will wait? Reasonable time frame. I cannot wait for 1 year, no. I can wait for 1 week. I will send it to him. Last known mail ID, official mail ID, last known official mail ID or registered mail ID as per ICI database. To any of this, I will send a communication that your company where you are acting as auditor is appointing me. So tell me, do you have any objection? I'll have a format. There is a format of letter. So we will send a letter in that format. I'll give, please reply within 7 days. Failure to receive reply, presume that your acceptance, and I will accept the client appointment. I clearly mentioned this. A positive confirmation request, a negative confirmation request format only we follow here. Getting it? So if at all he reply within 7 days rising objection, I need to look at what is the reason behind the objection. If the reason is genuine, I need to work for it. If the reason is not genuine, not seems practical, I will accept. If at all he complains because the reason is not genuine, no, I can also fight in the council with this fellow. Getting it? What should be the mode of communication? Once upon a time, we used to send registered post, that to RPAD, registered post acknowledgement due. Certificate of posting is not sufficient. Registered post acknowledgement due, where you will get acknowledgement after delivery. Getting the point? That must be there only through that post. Now we are sending through mails, not just after Corona, even before COVID or COVID situation also, we are sending mails. Next. Suppose, we sent a post, registered post, but premises found locked. It is deemed that you delivered. If the firm itself is not found at the registered address, it is deemed that delivered. Able to understand all of? That's it. So that is clause number 8. Then 5, 6, 7 clauses. What all 5, 6, 7 clauses says is, actually, fifth clause is saying a CA cannot secure if a CA is securing. Getting it? If a CA is securing either through services of a person who is not his employee or who is not his partner, any professional business by means which are not open to CA. If at all a chartered accountant is procuring professional business by means which is not open to a CA in practice. What are the means not open to CA in practice? Clause number 6 and 7 tell you. Clause number 6 and 7 tells you how you should not bring a new client. They give you various examples. Getting it? Or if at all you are bringing your client not through partner, not through employee. Getting it? Somehow you are bringing a client through a means which is not permitted for you. You are treated as guilty of professional misconduct. However, if at all you are procuring through ways permitted under previous clauses. What are the previous clauses? 2, 3, 4. Before this, 2, 3, 4, I can secure professional business from a person of recognized qualification, from a member of recognized body, from another chartered accountant. Yes or no? Now, one of the means which is not permitted is clause number 6. A CA cannot, if a CA is soliciting clients, no, or if he is getting the professional work, no, either directly or indirectly by a circular, advertisement, personal communication, or interview. That's what I told. No, nowadays people are giving interviews and claiming that their CA's phone numbers are given. Firm name is not given, but CA designation is used. Firm name, phone number is given indirectly. So it's indirectly you are soliciting through interviews the clients by any other means, then you shall be treated as guilty of professional misconduct. Are you clear? This clause shall not apply if a CA is soliciting work from another chartered accountant. This clause do not apply if a CA is getting the work as a response to a tender. Again, for tender, there are some guidelines. When can I respond? Suppose in a newspaper, if I open, there are so many tender options where I can participate in the tender. Can I participate in the tender is the question. Yes, you can participate if the work is exclusively reserved. Sorry, you cannot participate if the work is exclusively reserved for CS. If the work is exclusively reserved for CS, don't participate. If the work is open for everybody, the other person can employ anybody. Means it is open for everyone. If you appoint, you cannot influence him. Suppose no, if the work is exclusively reserved for CAs and the fees is also quoted. Fees is quoted and work is exclusively rendered for CAs. I can respond to them with my profile. They are just asking, the government agency presented one contract. So we are looking for so stock auditors. This is a fee per location we pay. And we want exclusively chartered accountant firms having 5+ years experience. Any of you who are meeting with the above criteria and satisfied with the above pay can please respond to this tender by sending your profile, firm profile through to this mail ID. I can respond. Because though it is exclusively reserved for CAs, fees is already quoted. I cannot negotiate and I cannot influence him. Fees is already fixed. Are you getting the point? If the tender document contains minimum fee, then CA can respond. Or if the professional work is not exclusive for CAs, for that type of tender also I can respond. Suppose a biscuit manufacturing company is looking for internal auditors. Anybody can apply. CAs, BCom, MBAs, MCom, all of them can be applied. A process of selection process, screening process is there. Through that only they will give that work. So for that, my firm also made a tender. Replied to the tender. Nothing wrong. Able to understand. Because primary offer comes from the client and I responded. That's it. I didn't went behind the client and requested for the work. Are you getting it? Now this point, every student asks me this doubt. Now, can you advertise coaching and teaching activities? Yes, the council says advertising, coaching or teaching activities may amount to indirect solicitation as well as solicitation of any other means treated as guilty. You can only put name board outside the coaching institute or teaching institute premises, just contact details, subject details, and what is the name and size of the name board? See, this and all, this is a decision which was given in 1990s. Getting the point? At the time, members know if they put any coaching institute board also, they used to advertise their practice through that board indirectly. But now it is not so. Now it is not so. Now this decision may not hold good. But in exam, if it comes, what you have to do? You should write only this answer. So there is a question in one of the MTP or RTP I've seen. A CA is advertising in social media about the coaching classes that he is going to conduct. So what is the course of action? He is treated as guilty. As per exam point of view only, not in reality. In reality, they look at the facts of the case. What is it doing? Is it amounting anywhere, exhibiting his firm name, soliciting clients? Simple example, I'm taking from past 15-20 years, the class 20 years almost. Have any of you get a thought, sir, where is your firm? I won't have this work. No, you didn't get that. Suppose if I continuously talk about this firm, that work, this work, you may get this doubt. So there I'm indirectly soliciting my work, my firm. Able to understand, I'm advertising about my firm. It should not appear. Able to understand. Next. Educational videos. Can a CA put educational videos on YouTube and social media? Yes. Provided it do not contain details of the which website? Firm website. Not your education institute website. Getting it? Can I advertise regarding change in partners, change in office, opening of new branches and all? Yes. Provided it's a statement of facts. You should not put it the front page of Times of India. Getting it? Next. Can I put classified advertisement in journals where you want to share some professional work on assignment basis or you're looking for partners or salaried employee? Yes. It contains only the following details. Can you use the word chartered accountant in the greeting cards and invitations when you're inviting people for marriage, religious ceremony, inauguration of offices, change in office premises, all that? Yes, yes, it is permitted, provided you can send it through clients, relatives and close friends of the member consent. Only to them you can distribute greeting cards, all that. Like what greeting card means? Olden days greeting card we used to give. Now WhatsApp, good morning, good night, uncle messages. Yes or no? Yes. Joke, no? You get Ugadi Subhakangshalu, Sri Ram Navami Subhakangshalu, generally from old age group. We generation generally don't share all that. It's irritating, no? It's okay. For me, some students share, it's okay, but I don't feel irritated by just open and give same to you. Okay? But just telling, it's not required, no, basically. Whenever a festival comes, I need to reply 150 students at least. Getting it? Because everybody messages. If I don't reply, sir will not reply. Ego. What ego, man? 150 are there. Okay. Next, that too he will send me in broadcast and expecting reply from me individually. Correct? How you will send all wishes and all, if at all you are sending, you have a dedicated broadcast list in WhatsApp. You send in broadcast and expecting reply. Next, sponsorship activities. Can a member sponsor any sports activity, all that? Yes, if it is conducted by ICA program organization unit. Like ICA is conducting branches, seminars, crickets, all that. You can sponsor. Getting it. That and all you can sponsor. Getting your firm name can be there on the t-shirt, all that. Nothing wrong. Because that's a close fraternity game. Nothing wrong. Can we give television or movie credits? In movies, no. Names will come, no. Special thanks to, like that. So and so firm name will be there. Yeah. If the firm name comes, how other names appear, in the same way it should appear. It should not appear with glow lights. Okay. Next. Transfer of original work. That's what. If any professional work is emanating from a client, introduced to him by another member. My friend introduced me his client. I should not grab him. Getting it? That's what. Can a CA firm have a website? Yes, they can have. Inside that website, can CS partners put their photos? Yes, they can put the photos provided their passport photos. They cannot put their honeymoon photos and all. Getting it? Okay. Yes. I mean in positive manner, man. Like outside buildings and all, they take up. No? Yeah. It may contain name of the firm, phone numbers, passport photos, employee names, career opportunities. Remember, client name cannot be given. Client names cannot be given. How much fees we charge cannot be given. Even the firm rate card will be there, no? Generally, rate cards are there for certain firms. Suppose Big Four, they'll have a prefixed rate card. For ITR one, how much fees they need to charge, they have a rate card. Rate card don't put on the website. You're not selling products. Getting it? Website shall not contain name of the client's fees charged, no photographs other than passport size photos. Rate card of the services to be offered. So that's it. So these are various case laws that are happened. Then clause number 7. This is another way how members grab the clients by using their professional achievements. By using their professional achievements. I say somebody, they mention their name within bracket AR. Getting the point? No, I've seen some. I didn't remember names. I've seen some. Getting it? See, like you're showing your professional achievement earlier. That cannot guarantee quality of service now. The clause number 7 intention is what? Don't show your professional achievement and then getting it. You should command the work by the content that you have, by the respect that you gain. Getting it? So showing previous achievements, all that is not permitted. A CA firm advertised congratulations to their articles for securing all India rank, and they put a big advertisement in a newspaper congratulating their articles. Treat it as guilty. Getting it? That is there in this. That case is there in this. So if a CA is deemed to be guilty if he is advertising his professional attainments or services that are offered, uses any designation other than chartered accountant. See, ideally, if you study 6 months, you will get rank. 6 months. 6 months means what? Not your mode of 6 months learning. I'm talking about those who consistently read 9 hours a day for 6 months. If you read 9 hours a day consistently for 6 months of time. Preparation only. I'm telling about revision. Revision and preparation for 6 months, not coaching. Coaching is not included. Coaching means another 6 months. See, in North, no. FR is having 300, 350 plus hours. You spend 200 hours. That's why you get 55, 60, 70 worst case. But they get 90, which is very ordinary. Very easily they get 80 plus, 90 plus in FR. The only reason is they spend that much time on coaching and that much time on preparation. Getting it? You see any All India ranker interview, 6 months they have studied. More than 4.5 5 months they studied consistently, weekly one break. It's all process. It's all process. The more number of hours you sit and study, more number of hours not in a day, in a period. If at all a person is studying 9 hours a day, assuming 9 hours a day, 25 days in a month. Okay, 175 hours, sorry, not even 175, sir, 225 hours. 225 hours in a month. Plus 6 months, into 6 months. Approximately he is studying for 1450 hours, 1350, 1400 hours. 1400 hours he is preparing means, imagine. Obviously he'll deserve a rank. Who is there to study 6 months continuously in India? How many students will be there studying 6 months? For qualifying in that pass percentage ratio, there is a huge competition. But for all India first rank, the competitors are hardly 10 to 15 people only. You know that? Logically, yes. Because all India first rankers and all, whoever you see, I've seen almost 7 to 8 interviews of all India first rank holders. All of them studied more than 8 months. Common point what I observed is they studied more than 8 months, not because their brain is. I know many all India first rank holders don't have even any practical exposure. No idea at all. 8 months, if anybody study, they'll get all India first rank. They deserve all India first rank. Don't say, sir, my friend is studying for past 2 years, sir. What 2 years, sir? Once he wrote exam, 2.5 months he don't touch book. Yes or no? These all India first rank person, what they do, some of them, they have very much confidence that they'll qualify, no doubt. They're only looking for which rank they'll get. They're only looking for which rank because they put efforts that much, which nobody else put. Generally, most of the students study 1.5 months and 2 months and above. Everyone is common. How many of you, in your case, in your friend's case, imagine how many of you have studied consistently for more than 3 months? Just check out. How many of you have studied for more than 4 months? Check out. You'll get a filter. How many of you or your friends studied consistently in between without writing any exam for 6 months or more? Tell me, show me one person. You'll not find. Are you getting it? So that's it. So rankers are who are getting ranked, those who study for continuously 6 months to 8 months. They plan right from their articleship itself the preparation. Okay, in the last entire third year, they completely take 6 to 8 months leave and full-fledged attention to the preparation, and that's it. Even they get an eligible attempt. They don't write, they skip it. They go and plan for the next attempt. Our students will skip attempt when, sir, I'm unable to study, sir. Can I focus on the next attempt and rank? Some student messages me. They message me, sir, I'm done with the preparation. Like I decided I cannot qualify this time. Somehow, some reasons. I want to skip this attempt and next attempt I want to plan for rank. What will you say? I'll reply sometimes you don't get rank at all. Because you are choosing rank path for your inefficiency. Suppose 3 months before exam you decided, sir, this time I'm not making exam application at all. I'm not putting application because I want to get a rank. In 8 months I want to study or 7 months I want to study. Then I will appreciate it. He made an exam application. He's trying to prepare. April month came. Now he is getting rank thoughts. This category people, I don't never believe them. Getting it? Why no? This category people, what happened? They thought of writing in the May attempt only. Their thought is May only. Somehow, because of their inefficiency in planning, inefficiency in execution, somehow they couldn't finish the preparation because of the diversions they have. Finally, actually the target is to qualify. But qualifying also, they're somehow not confident. Since they're not confident of May attempt, they wanted to be overconfident for November attempt. You see, they're planning for ranks. You see, you saw many of your friends. They are unable to చెప్పుంటారు, అరే నేను చదవలేకపోతున్నాను, వదిలేస్తాను ఈ అటెంప్ట్కి, నెక్స్ట్ అటెంప్ట్కి ర్యాంక్ ప్లాన్ చేస్తా. విన్నావు ఎప్పుడైనా? చాలా మంది మీలోనే ఉంటారు. ఓకే, నెవర్ డూ దట్ బికాస్ procrastination is in your blood. Getting it? If you plan for rank, what is your next thought process? I'll tell you. Anyhow, 6 months time is there. 4 months is enough now for rank. I already studied 2 months. This fellow start wasting 2 months time. Again, next 4 months comes. Both the groups I'll write. So rank and all not required. Both groups will qualify. That's enough. Then he'll start preparing. Again, somehow diversion. Let me stick to single group. Okay. Then again he'll waste time. Can I get how to get exemption for one subject? This is how the thought process deteriorates. Law of diminishing marginal utility. Okay. Next. So that's why if you want to try for a rank by choice, then that's a different thing. By chance, if you are entering into rank mode, don't believe that. Don't trust your brain. It is manipulating you. Okay. And don't tell your friend also, if at all is coming, hey mama, both of us will try for rank, we'll ignore this attempt. Don't believe him. Okay. He wants company. Okay. Next. Next. Council decisions in this regard. Can I mention date of setting up the practice? See, only schedule 1 part 1 only tough. Remaining parts jujube, very easy. Okay. Can I mention qualifications of other institutions? Only 2. Yeah, this question is asked in RTP. In one of the RTP, this question has been asked. A member, he mentioned on the visiting card, Certified Public Accountant, Ireland, CA, England and Wales, this one, and only South African Institute, only these three are permitted. A member is permitted to mention these on visiting cards, only these three memberships. These are only recognized. Remaining are not recognized. Very recently, Institute is entering with Singapore. If a CA is residing there for more than 6 months or like that, some days were given, you directly get the membership. But that is not yet updated in our book. So what is there in the book only you write. Next. Can I put photo on my visiting card? No. Can I mention QR code on the visiting card to capture the details? Yes, that is permitted. QR code is permitted. Can I mention an advertisement in the newspaper? You can, provided the advertisement is for recruiting staff for your own office or recruiting staff for on your client behalf. Getting it? Or you want to sell some property of your client on his behalf, you are advertising? Yes, you can do that. Can you attend conferences? Yes. Can you write articles? Yes. Can you use signboards and all? Yes. Can you use glow signs? No. Glow signs means lighting boards. Yes or no? That is not permitted. Can I act as a director in your company? Yes, provided you are a director simplicity. You are simple director. Independent director you can act. Non-executive role you can act. But you cannot take executive directorship, whole-time directorship, managing director. If you want to take a, get special permission of the institute under clause number 11. Then you can act. Next. Can you use any logo of your choice? No. For all chartered accountants who are in practice, if they want to have a business logo, only one logo, CA logo. Okay. And the logo should be like this. Getting it? Blue color letters, green tick, that too upside down. Okay. And blue layout. You cannot modify this logo into any other color or shade. Only this logo has to be used as it is, intact. Are you getting it? But institute will not give me high definition logo picture. If I want to take a big print and keep in my office, no, they don't give me this high definition picture. Okay, they gave very bare minimum quality, JPEG quality. Next. Can you send bulk SMSs? Suppose a CA, no, he sent bulk SMS, 100 rupees ITR 1, bulk ITRs accepted. It's done, it's there, and the case was filed against him, it was punished already. Next, clear all of you? This entire schedule 1, part 1 is completed. Clear? Government is pressurizing institute like anything, I'm telling you. Government is questioning the ICI, what action you have taken on your members. There are many violations that your members are doing, but you are not taking any action. In fact, Narendra Modi has in 2017 or 18, one of the year conference, international conference, he explicitly told institute is not taking action against members properly. So many CS are adopting, malfunctioning, malpractices, all that. So the ICI has to, the disciplinary body of the ICI has to be little more serious. So they gave indirectly the warning to the institute. Next. This is about professional misconduct for member in service. If at all you are in employment and you are paying your salary to somebody, you're sharing salary to somebody, like to whom? Job agencies, consulting agencies, you are paying salary. Whatever the salary you are getting, which means you got the job through consulting firm. You paid some bribe and secured this job. The guilty. Sir, can I pay my salary to my relatives and family? That is permitted. That is no restriction. Can you accept tips from employer related service providers? This is called kickbacks. If at all a CA working in a company is in a production manager or say, let's assume accounts manager role, he has to approve vendors. While approving vendors, no, he spoke with vendors on back-end contract. You quote this price, I will approve it. But actually 10 rupees only per unit, but you quote 12 rupees, 2 rupees I'll take. Getting it? This is called kickbacks. Able to understand? That is disqualified. That is guilty. You cannot take bribe from the employer's clients for approving their contracts in this company. Being in a key role. See, I always tell this. Corruption is high, not in government, but in a private sector. Corruption is extremely high in private sector. Extremely high. You can't even imagine the amount involved. Getting it? Suppose I'm a very big company in India. Mine is a very big company in India. Let us assume I'm a director. In this company, my ownership is only 30%. And another person is there whose ownership is also 30%. Due to which we become controlling power. Remaining 40% is owned by public. But you see, 100% of the business money is in my control. Though 49% ownership is by the public maximum, but control on the entire company funds is with me. Getting it? From whom I have to buy material for this company. Remember, in this company, if any profit is there, who will enjoy the profit? I will enjoy 51 rupee, he will enjoy 49 rupee. But why should I make him enjoy 49 rupee? I will do one thing. I will manipulate the vendors. I will approve higher price vendors. Getting it? So a vendor has to, suppose in a year I will pay to one vendor 1000 crore for raw material. I will tell him to bill me 1200 crore. 100 crore I will take bribe behind. This is kickback. And this kind of corruption is high in almost all big corporates. Kickbacks will be there. Big directors will do all this. They take remuneration only 2 crores or 3 crores or 1 rupee. Some directors take remuneration 1 rupee. What 1 rupee? This is the background income. Getting the point? On the balance sheet is only 1 rupee or 10 rupee or 10 crore, 15 crore. Getting it? But behind they are getting thousands of crores. Imagine a company having lakhs of crore turnover. You can imagine the quantum of fraud they do. Getting it? Next. Now, professional misconduct by members generally, whether they are in practice, actually here it is printing mistake, generally. What is it? Generally. So, clause number 1, you are not a fellow of the institute, but acting, representing to the public as FCA. You are actually AC, but showing public as FCA. Then you are guilty. Getting it? Under Schedule 1, Part 3, Clause 1. Clause number 2, if you are failing to supply information called for by icai, all that, you're not responding, you're not giving information, then Schedule 1 offense. Suppose if you give false information, Schedule 2 offense. Schedule 2, Part 2 offense. If institute is calling, if the same people called you for information, you submitted, but falsely, wrong information, knowingly you submitted, then Schedule 2, Part 2 offense. You did not submit information, failure to submit information, then Schedule 1, Part 3 offense. Giving false information, Schedule 2, Part 2 offense. Able to understand the impact. You are giving false information to the client. If you are giving false information to others, nothing but outsiders, not to the institute, again it is Schedule 1, Part 3. You are giving false information to institute alone, Schedule 2 offense. That's why here itself you note down. Schedule 2, Part 2 is containing one more provision similar to this. If a member, in practice or otherwise, is giving wrong information knowingly to the institute, council, committee, director, board of discipline director, quality review board, appellate authority, to any of them, if a member is giving false information knowingly, is guilty under Schedule 2, Part 2. Suppose if you are giving false information to outsiders and others, not to the institute, then it is still Schedule 1 only. Then, Part number 4, other misconduct. Getting it? What is this actually? Sorry, it's other misconduct. What is it? Other misconduct. Here you just mentioned other misconduct. Part number 4, whether in practice or not. First one, if you are held guilty by a civil or criminal court and punishable for imprisonment for a term not exceeding 6 months. Second one, in the opinion of the council, you are bringing disrepute to the profession. On your name, a news article is printed in a newspaper that you are driving, alcoholic. They didn't use your name, they used your designation. So indirectly it is bringing disrepute to the profession. So they will debar you here. Are you clear? Then directly, second schedule, part number 1. 2 minutes gap. Or else I will save it as a separate recording. Are you clear until now? Next one, schedule number 2, part number 1. Professional misconduct for CS who are in practice. You are treated as guilty of professional misconduct if at all you are disclosing any information acquired during the course of professional work of the client to any third party. Unless if the disclosure is required under law or there is a consent of the client, you cannot disclose to anybody. If at all you disclose, it is treated as guilty of professional misconduct. Now, what is the member's duty in unlawful acts of the client? Generally, you are not duty bound to disclose to income tax authorities any taxation frauds committed by the client. Because in income tax, there is no provision which says that you must complain to income tax authority like that. If at all there is an obligation for you and you did not do, then it's a guilty. Generally, whenever you are rendering any representational services, you will have section 126 protection of Indian Evidence Act, where generally a barrister, attorney, pleader, vakil is barred from disclosing except with the express consent of the client. What are the communication made to him for the purpose of his employment? Nothing but that particular engagement. You need not disclose to any authority or court. You can always listen to the client. Getting it? And proceedings before income tax authority is also judicial proceeding. So accordingly, 126 of the protection, 126 protection apply for the chartered accountants, just like how it applies for lawyer or advocates for barristers. Suppose after you started any work, if a new fraud is discovered, another new fraud is committed by the client, on that protection do not apply. Past frauds, whatever client has informed you, you can support the client. But any new fraud client committed after you started the work, new fraud committed after the starting of the work, their protection does not apply. You have to inform to the regulatory authority if there is a requirement to do so. Getting it? Now, a CA is prohibited to certify accounts not verified by him. Like suppose you are in assumption that your article has worked very well and you certified the financial statements or accounts of a company without you verifying it. Guilty of professional misconduct. SA 220 also says engagement partner has to supervise and review the work, whatever is allocated to his staff. Next one, a CA is prohibited to use his name related to earnings estimate. Clause number 3, projections I told. Getting it? So a CA is prohibited to use his name on the earnings estimate provided if these 3 conditions are satisfied, you can. Indicates clearly about the source of information and mention that the forecast is based on certain assumptions and you did not vouch for the accuracy of the forecast. How far the forecasted information is accurately turning into reality, you don't know. You mentioned that fact. These are purely based on the past trends. However, we are not sure how far company is going to perform in a future date. We believe based on the past trends and past data, this is how the company can forecast and perform in the future. If you mention clearly this assumption and does not certify for it, you are not providing any assurance there, then you are not guilty. If at all you are expressing opinion on the financials where you are having substantial interest. First of all, in Companies Act, if you are having any ownership directly, you are disqualified. If it is any other entity other than company, suppose it's a partnership firm, it's an HUF, in that you are having some interest, substantial interest, and they appointed you, though it's a voluntary non-statutory audit, you cannot give opinion on the financials of an entity where you are having substantial interest. Not only you, even if your relative is having substantial interest, you are disqualified. If he expressed opinion on financial statements of entities where he or his firm or his partner has a substantial interest, relative is having substantial interest is given under council guidelines. You cannot give opinion on the financial statements of an entity where your relative is having substantial interest. Able to understand? Now here there is one more rule. Suppose you acted as a director in one company. To the same company, can you act as an auditor? No. Suppose you withdrawn from director. Can you act as an auditor? Yes, provided 2 years gap is required. How many years gap is required? 2 years. Suppose if a CA knows a material fact, getting it, but you failed to disclose. The financial statements failed to disclose a material fact and you know that the company did not disclose, still you certify. You are treated as guilty. If he fails to disclose a material fact known to him which is not disclosed in financial statements. Generally when something is not disclosed in financial statements which is required, it's a material misstatement. When there is a material misstatement, you need to give modified opinion. When you did not give modified opinion, in spite you know it, you are treated as guilty. Clause number 6 also something similar. If a CA is deemed to be guilty if he fails to report a material misstatement known to him. You know this. You discovered it. But you did not talk about that in the audit report. And financial statements are issued with that misstatement only. They didn't rectify the financial statements. Misstatement is there and you know that, but you didn't highlight it in the audit report. You didn't mention in the modified opinion paragraph. Same way, a CA is treated as guilty if he does not exercise due diligence and care. When you are rendering any work, you should be very careful. You should take precautions. You should work as per technical, professional, ethical standards. If you fail to comply with them, you are treated as guilty of professional negligence or gross negligence. Able to understand? Generally, whenever clause number 5, 6 attracts, 7 is also attracts. Generally, able to understand? You see the 8th clause. You must obtain sufficient appropriate evidence, only then you should give opinion. If at all you are giving any opinion without obtaining sufficient appropriate evidence, how come you frame an opinion? I asked you how the phone is performing. A new model is released in the market. I'm asking you how it is performing. You didn't even see the phone, you didn't even operate how it is performing, and you are giving opinion, is good or bad. How come? We can only give a review on a movie after watching it. Same way audit also, I can say whether they are good or bad only after auditing it. Only after I get sufficient appropriate evidence, I can give opinion. Without getting sufficient appropriate, you are giving opinion, you are negligent. So, whenever clause number 5, 6 attracts or 8 attracts, 7 also generally attracts. That's why you see most of the questions, practical questions, wherever clause number 7 is referred, 5, 6, 8 is also referred. Some again, no, they message me asking, sir, why here 7 is also referred, 7 is not there, no, because it's negligence. Most of these cases comes because of negligence. Since negligence also there, clause number 7. By the way, just because multiple clauses attract, are you punishable multiple times? No. It's a schedule to offense at the end of the day. For schedule to offense, only one punishment. Whether you committed offense in 1 way or 2, 3 clauses, 5 clauses, doesn't matter. Maybe the severity of the punishment will be high. Able to understand? And a CA shall follow gap, audit gap. In May 22, this question has been asked, and many students wrote peer review certificate question. Answer. This is the question has been asked for 5 marks or 4 marks. The question is, you are a practicing chartered accountant. You have got an option to do audit of a listed entity. Your firm is not possessing a valid peer review certificate. In spite of it, your firm has accepted the listed company audit. Explain the consequences. 90% of the students wrote peer review chapter, peer review validity of the certificate. But actual answer is clause number 9, gap. That time itself, after the evening exam is over, I gave a paper analysis video. In that I mentioned very clearly this point. Getting it? Only those who read this point will understand. Only for them it sinks. Clause number 9 will sink. So what is generally accepted auditing practice? For listed entities, what is generally accepted auditing by? Who will design all this? This is designed by various regulatories and law. Getting it? SEBI is one regulatory. What they mention? A CA firm can accept listed entity audit only if they have a valid peer review certificate. And the point is highlighted not in the ethics chapter, not in the peer review chapter. It is highlighted only in the ethics chapter, clause number 9. If at all this point is given, there also there is a point of confusion. But there is exclusively given here now. Very recently only peer review guidelines came. No, in that phase number 1 they mentioned that. Now you need to mention both. Able to understand? So a listed company audit can only be conducted by a partnership firm, CA firm having valid peer review certificate as per clause number 9, part number 1 of schedule number 2 of Code of Ethics or Chartered Accountants Act. Moreover, this is even highlighted under the recently issued peer review mandate under phase 1, which is a prerequisite for a partnership firm, for a CA firm to accept a listed company audit. Accordingly, in the given case, the firm has accepted the listed company audit without possessing a valid peer review certificate and accordingly held guilty under clause number 9. Remember, if you do not follow peer review guidelines, it is again violation of clause number 9 because failure to comply with institute guidelines, clause number 9 will attract. Are you getting the institute guidelines comes under gap, no? Generally accepted auditing principles. Who design all this? Institute, SEBI, IRDA, all of them. That's it. Clause number 10. Whatever the money a client is giving you, except your fees, any other money for tax payment, for ROC return filing purpose, any other money that he gives where you have to pay to somebody on his behalf, you must keep it in a separate bank account. You must keep it in a separate bank account. You cannot keep it in your bank account unless it is temporarily you are keeping. Now, many CAs, when they are filing IT return for their clients, they are mentioning their account details in the verification part of the IT return for getting refund. Why? The client did not pay the fee. The client will pay, okay, after I got the refund, I will pay the fee. Okay, don't worry, a refund will be in my account. So there is no possibility that he will escape. This is guilty. Are you getting it? So here they have given. Commonly, many CAs are mentioning their bank account details for getting IT refund. I have seen this. Many of you would have also seen this. When you are filing IT return, you mention your firm partner bank account, your bank account. Because in IT return, the bank accounts will be captured from previous year returns. It is not captured in the IT account. E-filing account, bank account information is not there. It will not match whether it's SSC account or not. You should always keep SSC account in the verification column. Getting it? You should not put your own bank account. That's it. So if a client complains, it's guilty. And guilty of professional misconduct in general. Members has to comply with CA Act, regulations and guidelines. Getting it? If a CA is failing to comply with any of these regulations, is treated as guilty. A member who is in employment shall keep the employer related information confidentially. Past employee information confidential. Past client information you should maintain. See, for practicing people, confidentiality is in clause 1 part 1. For employees, confidentiality is in clause 2 part 2. Are you getting the point? Part 3, you are providing misleading information to institute. I told you, no, schedule 2 part 2 clause 3, whereas schedule 1 part 3, I think there is a clause clause 2. There you are not giving information to the institute, not providing information to the institute. Here you are providing false information to the institute. False information if you are giving to the institute, schedule 2 offense, which is more severe. Not providing information to the institute is a minor offense. Getting it? Defalcation, if you are stealing client money. Defalcation of money received, you are manipulating, you are misappropriating client's money here. If you fail to keep the client money in a separate bank account, that is previous clause. Getting it? Part 1. Then finally, if at all any punishment is made on a chartered accountant where imprisonment is for a term exceeding 6 months, schedule 2 part 3, guilty of other misconduct. Clear, all of you? Next, council guidelines. A CA must maintain books of accounts irrespective of requirement under income tax law. You must maintain books of accounts. You must maintain cash book ledger. This requirement is separate in addition to income tax law. Getting it? In income tax 44A section says when specified professionals has to maintain books of accounts. Whether that rule is applicable or not, since you are in practice, you must maintain books of accounts. That's a requirement of the institute. How many tax audits you can do? 60 tax audits in a financial year. What is it? It's a financial year. In a financial year, I can do 60 tax audits. Suppose if my firm is having multiple partners, that many partners having COP multiplied by 60. Now the firm is having 10 partners, 600 tax audits I can sign. Now 600 reports, who can sign? 60 signs by each partner, or one partner can sign on behalf of all the partners? One partner can sign on behalf of all the partners. Now this is again relating to clause number 8, part number 1, schedule number 1 requirement. Suppose no, undisputed audit fee. Undisputed audit fee. If the previous auditor fees is not paid by the client, no. Getting it? And the fees is no dispute on the fee. Means our client agreed 10 lakhs to pay, even the other parties also agreed 10 lakhs only. No dispute on this. There is no dispute on this. Undisputed audit fee, we must ensure that it is paid. Even in clause number 8, no. What it says, if the client has agreed any fees with the previous auditor, that must be paid. Suppose if the previous auditor is demanding additional fee, which is under dispute, regarding that clause number 8, no objection. Only undisputed audit fee, you must ensure it is settled to the client before you accept the appointment. And prohibition on audit assignments under Companies Act. We have audit ceiling now in Companies Act. How many you can do? 20 companies. How many? 20. See here, under Companies Act, 20 companies. This 20 excludes which companies? 1% company, small company, dormant company, private limited with paid up capital less than 100 crore and complied with section 92 or section 137. So a company, private company, paid up capital less than 100 and complied with these sections, only then it is exempted from ceiling. Whereas under CA Act, no. You can do maximum 30 companies only. Only 2 companies are excluded. 1% company, dormant company. What are excluded? 1% and dormant only, no? Yes, correct only. 1% and dormant. Okay, CA Act is saying you can do maximum how many audits? 30 audits. And what is not counted in 30? 1% and dormant. Now student asks me, which one I have to follow? Both. You have to comply both. Able to understand. Example, what do you mean by complying with both? Suppose example, I am having 25 private limited company audits whose paid up capital is less than 100 crore. I am having 71% company audits. Getting it? I am having 7 government company audits. Government company audits, how many? 7. I am having some 13 public limited company audits. This is the client position. This is my client position or proposed engagements I am going to get in my first year of practice. Let us assume. Now I need to first check company as act. Can I accept 25 private companies? Yes, it is counted as 0 in my ceiling. Because private companies less than 100 crore complied with 92, 137, not counted. Assuming this all 25 are complied with 92, complied with 137, no default at all. So they are not counted. OPC counted as 0. Government companies counted. Public companies 13 counted. Maximum how many? 20 I am doing. Permitted also 20. So I can accept as per Companies Audit. Companies Act I can accept. But not only Companies Act. You should also satisfy CA Act also. Check as per CA Act. 25 private limited companies counted. 7 1% companies 0. 7 government limited. Yes, counted. Public limited companies 13. Where you are getting totally 45, which is not permitted. Maximum permitted is how much? 30. Now, which means here I need to make a decision. I need to leave 15 companies. I cannot accept 15 companies. So I need to comply CA Act also. So 15 companies I need to sacrifice. Able to understand? 15 companies I need to sacrifice. Only then it will be treated as compliance under both Companies Act and CA Act. See, 15 companies will sacrifice. In Companies Act, limit will come to 5. Limit will come to what? 5. Didn't understand? Able to understand? See, in Companies Act, it says maximum 20. CA Act says you are exceeding 30, so sacrifice 15. I will sacrifice. Is there any violation in Companies Act because of this sacrifice? No violation. So Companies Act satisfied, CA Act also satisfied. Both I have to satisfy, remember. Able to understand. All of you? CA Act provisions are not substitutes. Please understand, they are complementary to Companies Act. In fact, CA Act provisions are primary for a chartered accountant. Companies Act provisions only secondary for it. Able to understand? Next, this clause, this chapter number 9 says, what it says is, in case of PSUs, government companies, listed companies and other public companies having 50 crore or more turnover, the audit of these companies shall not be accepted by a chartered accountant if the audit fees is less than aggregate fee received for other services rendered to the same entity. This requirement do not apply if you are doing audit to a private limited entity. This requirement do not apply if you are doing audit of a public limited entity having less than 50 crore turnover. Having less than 50 crore turnover. Simply, if at all you are doing audit to any client, if at all you are doing audit to, just a minute, any government entity or public entity or statutory body, whatever, to that a company, to a single client, to a single company, you may be providing audit services and you may be providing non-audit services. What are they? Non-audit services. You should command the client to know. Getting it? You should command the client. You should not be unduly dependent on the client. There should not be any effect on your independence. There should not be any effect. Suppose you are charging fees for audit 1 crore, but for providing non-audit services, the client is offering 2 crore. And all these non-audit services fall under MCOS category. And they are not coming under 144. Can you accept this? Yes. But the problem is, it is creating self-interest threat. This is creating self-interest threat. In that company, beyond my audit, I am getting non-audit fees. Tomorrow if I have to compromise, I will compromise where? In audit. So remuneration is tempting me here. So this should not be there. To a same company where you are acting as a stat auditor, if at all to the same company you are providing other services also, ensure that fees charged aggregately for all other services shall not exceed fees that you are charging for stat audit. If that is how you can maintain, then take other services. If at all by accepting any additional other services, the fees that you are charging for stat audit is lesser than the aggregate fees for other services, don't do audit. Compromise in audit, go with that happily. Don't do simultaneously. This is the provision. Understood? What is the reason behind this? Because it is creating self-interest threat. Able to understand, all of you? Suppose network firms also there is a guideline. Network firms also there is a guideline. What network firms? Suppose there is a company. Let us assume Tata Consultancy Services. My firm is ABC & Co Chartered Accountants. Getting it? I am providing to Tata Consultancy Services Stat Audit. I am forming part of KPMG network. Example, I am forming part of KPMG network. To TCS, I am providing Stat Audit where I am charging 2 crore fee. In addition to my Stat Audit, to the same TCS, I am also providing other services where I am charging 1.5 crore. Getting it? Since as per council regulation, fees charged for other services is less than Stat Audit fee, or Stat Audit fees is more than other services fee, permitted. Here you did nothing wrong. This is permitted. Now, there are some your network firms. There are your network firms which are also providing to TCS various management consultancy. D & Co Chartered Accountants, E & Co Chartered Accountants, F & Co Chartered Accountants, G & Co Chartered Accountants. These are also forming part of your network only. These network firms are providing TCS some management consultancy and other services. And they are charging 3 crore fee. They are charging 6 crore fee. What is the fees that they are charging? 6 crore fee. Is this permitted? Yes. If you are charging 2 crore Stat Audit fees, right? You are also coming from the same network. And you are already providing other services. That is permitted only one time. One time of your Stat Audit fee only you can charge maximum for other services. Correct? One time. Now what about your network firms? For them is there any restriction? Yes. Your other network firms which are providing consultancy and other services to the same company where you are Stat Auditor, the aggregate fees charged by them shall not exceed 3 times the Stat Audit fees that you are charging. How much? It shall not exceed 3 times. Now all my other network firms are charging less than 6 crores put together. TCS is paying so much of fees to all of them for other services. All the fees I totaled. It came less than 6 crore, which is less than 3 times the Stat Audit fee which I am charging. I am not guilty. Are you getting the point? For your firm it is one time. For your entire all network firms put together, how much is the limit for other services? 3 times. Able to understand. All of you. So that's about network firm inside that fees guidelines for network firms. This is one of the ethical requirement. In ethical requirements for network firms, there is a concept. In network firms, there is one sub-side heading. Ethical requirements to be complied. Inside that, this will be there. Are you getting it? If at all you are indebted to a particular enterprise for more than 1 lakh, don't do audit of that enterprise. Generally, if it is a Stat Audit, what is the permitted indebtedness? Look at that statute. In Companies Act, permitted is 5 lakhs. For company, 5 lakhs only we'll see. For other enterprises where the statute is silent, 1 lakh is the criteria. UDIN guidelines, all this is very simple. Guidelines for networking. Whether multiple firms fall under a network or not, it depends upon case-to-case evaluation. Suppose each firm is just referring works to other firm, they cannot call it as network. If they share common brand name, if they share common quality control policies, if they share common resources, then common brand name, common quality controls, sharing of significant professional resources, obviously it is deemed to be network. You see all big 4, big 5, BDO, all these network names, they are all networks. Profit or cost sharing, with that objective they formed and designing, getting it. Sharing immaterial cost does not form network, but sharing material cost, big cost and sharing profits, it forms as a network. Like that they have given certain criteria here which is very easy. How a network firm can be formed? See, how do we identify networks? We identify network. See, network will have a name. It ends with affiliates. Firm name ends with &co or & associates. Any of these two only permitted. Firm names can be either &co or & associates. Any of these two only. But network name shall be different from firm name. Network name cannot be &co and associates. It should be & affiliates. And remember, network cannot render any service directly on the network name. You see, KPMG is appointed as an auditor, right? But KPMG will not be there. BSR & Co. There is a firm name called BSR & Co. It is the auditor. KPMG is a network name. On the name of KPMG, you cannot render any service. Inside that KPMG, some firm is there, no. Network firm is there, no. They will only render service. Now, a CA firm can join only in one network. I cannot join in Deloitte network, KPMG network, DDO network simultaneously. Same way, can I join in international networks also, which are not registered with ICI? Yes, you can join with international networks, but with international networks also only one network. Getting it? Internationally, there are AGN, like that, some networks were there. Getting it? In fact, KPMG, all these are also international networks, by the way. They're registered with ICI in India, moreover, and they are international networks. You can, tomorrow, if you want to start practice, you can first create a network. You educate your friends. Let us all develop common quality control policies. Let us create a big network. Let us create our own network name, branding, everything. So do practice with branding. That will fetch you better. Getting it? Branding is very important today. Next, logo guidelines have given. Guidance for corporate form of practice. This is one more topic. Now here, can a CA form partner, can he open a company? Can he act as a managing director, whole-time director? Only one case it is permitted. CA firm having partners, no? These CAs who are in practice can open a company with a main objective as per object clause, management consultancy and other services, and register that company with ICI database. And this company's only objective is what? Rendering management and other services. In that company only, a chartered accountant in practice can act as a full-time director, whole-time director, managing director. And this company has to obey all the council guidelines. This company cannot do advertisement. Remember, whatever ethical guidelines applicable for partnership firm, CA firm, all that guidelines apply for this company also. For the sake of convenience, we are asking you to create a company. For the sake of convenience, we are letting you to create a company. See, in your firm name only, you are billing for IT services. In your firm name only, you are billing ROC filings. In your firm name only, audit bills also you are giving. Just in order for you to have a different identity for consultancy services and stat audit services. Stat audit attestation services, bill in the name of your firm. For all consultancy, bill in the name of company. For that reason only. Now tell me, I'm doing audit, stat audit to a government company. I am charging stat audit fee. Other services I am providing in my consulting firm name. Then also 1:1 ratio applicable, maximum. Yes. How much fees I am charging for other services to the client? I need to calculate by looking into how much will raise from my firm and how much is raised from my associate company. Now the company you created, no, that will become associate company for partnership firm. That becomes an associate because same partners are directors. Able to understand? That's what given in the entire this one. The ceiling or non-audit fee, everything is applicable to management consulting company. And various other council guidelines and self-regulatory measures, all that were given. Can a member give his name and telephone directory? Yes, provided the telephone directory comes in alphabetical order. Can a member give his phone number, firm details in a directory exclusively published for all chartered accountants? Yes, he can give, no problem, he can give, provided his name also comes there in alphabetical order. Because in trade directories, no, a list of CS, list of doctors, list of engineers, list of actuaries. Suppose in Hyderabad there will be a trade directory. For Chennai there will be a trade directory. In the trade directory, can your name appear in the respect to profession list? Yes. But your name should not appear specially anywhere. Okay. With this, most of the discussion is completed in ethics. Almost I've covered almost all the points. Major points I've covered. Getting it? That's it. So with this, ethics is also done. So this is with respect to a newly added topic, that is NOCLAR concept in Code of Ethics. Nothing but in our syllabus as part of Professional Ethics chapter. So in our book it is 4th chapter. Professional Ethics is 4th chapter. In that edition 2022, question number 4. Now, what is the concept of NOCLAR first of all? What is the concept of NOCLAR first of all? Non-compliance with laws and regulation. Very simple. Non-compliance with laws and regulation. NOC means non-compliances, not no objection certificate. Okay, so non-compliances with laws and regulations. What are the objectives of professional accountants? What are the objectives of professional accountants? See, they didn't use the word chartered accountant. They used the word professional accountants. But it's okay. The code of ethics of ICAI is generally applicable to chartered accountants. To whom? Is it only a chartered accountant in practice or a chartered accountant in service? To whom? To both of them. So professional accountants includes both chartered accountants in practice and chartered accountants in service. What do you mean by a chartered accountant in practice? What do you mean by a chartered accountant in service? First of all, what do you mean by a chartered accountant? You will understand in the upcoming question. We have upcoming question called membership of the institute. So there you will understand. There you will understand. And I strictly advise you to watch this video if possible. Watch this video after finishing professional ethics chapter remaining videos. You have remaining totally in the entire professional ethics. We have so many videos, right? So many concepts, right? Yes or no? We discuss about schedule 1, schedule 2, all the parts, clauses, council guidelines, everything. After finishing all that, you please come back and watch to this video. Since it is question number 4 in our material, I'm discussing here itself like a part 2A video for edition 22 students. Though it is part 2A, do not watch this video at this moment. You can pause, you can stop the video, go with other lectures, finish all that and then come back to this. Why? In this NOCLAR concept, we are going to discuss about some clauses of professional ethics which we will be discussing in the upcoming videos. So it is better if you discuss to this particular, if you watch this video, okay, at the end of all other chapters, at the end of all other videos. Fine. So this is applicable for all professional accountants, whether the professional accountant is a chartered accountant in practice or whether the professional accountant is service. What do you mean by NOCLAR, by the way? Non-compliance with laws and regulations. Tell me, first of all, where do we heard this word called non-compliance with laws and regulations? Where do we heard this word laws and regulations majorly? First time we discussed that laws and regulations point under SA 250, if you remember. The third chapter in our subject is what? Standards and audit. Yes or no? So in the standards and audit, I think you have gone through SA 250. What is SA 250? Consideration of laws and regulations in an audit of financial statements or auditor's responsibilities relating to laws and regulations in an audit of financial statements. If you recap, what SA 250 divides, what SA 250 expect from the auditor. First of all, to whom SA 250 is applicable? Only for statutory audit of financial statements, only for audit of general purpose financial statements. One of the standard is SA 250. And SA 250 applies only in the context of audit. SA, standard on audit, only it is applicable in the context of audit. Then what is non-compliance with laws and regulations, NOCLAR? How it is different from SA 250? SA 250 puts responsibility on auditor. Dear Mr. Auditor, if there are any laws and regulations where there is a non-compliance and if it directly affects the financial statements, please look into it. No, it is not affecting directly laws of financial statements, but it might affect a company going concern, or it will bring material penalties and fines which will have an impact at a future date. Then also please consider, if SA 250 indirectly says, dear Mr. Auditor, if any non-compliance you discover that will affect our client, that will affect your client, that will affect your auditee, that will affect the company where you are the stat auditor, please consider. That is what the scope of SA 250. But NOCLAR, it doesn't define, NOCLAR defined stakeholders much more wider. It is not only the client, It is not only the management of the company. It includes creditors. It includes tax authorities. It includes tax authorities, creditors. Okay, general public. It even covers general public. Dear Mr. Professional Accountant, whether you are an auditor for the company as a chartered accountant in practice, whether you are a just employee of a company, chartered accountant in service, whatever it is if you came across any non-compliance with law and regulation that affects any of these, check, are you liable to report to any legal authority? Do you have any obligation to report to any legal authority? It may be a duty casted upon you under employment, or it may be a duty casted upon you as an auditor of a company. Check. Do you have any responsibility to communicate to the appropriate regulatory legal authority to communicate this non-compliance made by your employer company or your client? Check it out and accordingly report to the law and regulatory. When the company has done some non-compliance, the company has committed some non-compliance, the management has committed some non-compliance, the employee of the company has committed some non-compliance, I am the auditor, or I am a chartered accountant, I am a professional accountant, maybe an auditor or maybe employee. Because of this act, non-compliance, because of this non-compliance with law, it resulted in damages for either the company or the management or the creditor or the tax authorities or the general public. SCA 250 do not talk about general public. SCA 250 do not talk about damages to creditor. SCA 250 do not talk about damages to tax authorities. SCA 250 only talks about if a non-compliance is resulting in financial statements of the company being affected or the company being affected at a future date in the form of fine or penalty. Only if the company is affected because of some act, non-compliance with the law, then only auditor has to look into. In SCA 250, the law and regulation, non-compliance related information we should only see, keeping in mind the beneficiary only company. Whereas NOCLAR, as per Code of Ethics of ICI, considers stakeholders at large. SCA 250 only talks about the company client, whereas NOCLAR talks about all the stakeholders, whoever might affect. Example, in SCA 250 also I gave this example. Suppose if a pollution norm is breached, suppose I'm a statutory auditor of a company, I'm a stat auditor of a company. Let us assume I visited the factory and workers are discussing about a pollution breach. There is a standard, pollution emission standards, some pollution emission standards for their example. The workers are discussing about, something I heard in the discussion when the workers are discussing, when I'm passing by, I heard from few workers discussing about some pollution breach of emission norms. I spoke to them, what happened? That they explained, because of that pollution breach or because of some sort of, it may be air pollution or water pollution, whatever the sort of pollution, because of that, it is endangering some animal species residing in the nearby locality. It will endanger. So that pollution causes harm to that endangered species. You see Robo 2 movie. This one you would have seen, no? Pakshi Raja. He will just attract all the mobile phones, everything to curb the radiation. Yes or no? Because radiation is affecting the birds and all. That is why he is called as Pakshi Raja. Similarly, in the factory where you are doing audit, in the process of just visiting the factory, visiting factory visits, you came across about emission breach, because of that water pollution or water contamination, whatever being done by this company, that there is an endanger for some particular animal. It comes under public safety. See, the animals are being preserved. Endangered animals are being preserved because every animal in this universe have its own role, to protect to balance the environment. Okay. So you heard about it. Now that particular pollution contamination, water contamination will violate some forest law, or it will violate some protection of animals, cruelty, something. There is a law. It is violating. So I immediately got this doubt. Oh my God. Earlier when I'm doing audit, if I come to know about this, it's okay. Because of factory, everything happens. What we can do. Now immediately I'll think, is it affecting financial statements directly or indirectly? I'll immediately think of it. No, there is no effect on the financial statements directly or indirectly at present or at a future date. No, nothing, no responsibility under SA 250. But now, with effect of NOCLAR, since it is affecting, since it is affecting some general public safety, it comes under general public utility. Immediately, what should I do as per NOCLAR rules? First I must call a lawyer, or I must call industry technical people. I'm working in an industry. I need to go to the nearby any conservative activist, social activist, somebody, some lawyer will be there, or some legal person will be there. Consult legal person. Dear legal person, so I'm doing audit of this company. There is a NOCLAR concept is there. I need to report to regulatory authorities. Just first of all, I heard about this issue. So explain that issue to the lawyer. He will open that particular relevant law, that animals law or some protection law, forest law, something he will open. He will refer. In that particular law, if there is a responsibility, getting it, directly or indirectly casted upon the accountant of the company, professional accountant of the company, he may be an auditor, he may be or somebody, employee. If there is a direct or indirect responsibility, now you have to report to the concerned people, concerned authority, forest department or environmental department. You need to report, you need to complain. But I'm telling you, 99.99999% of the cases, no other law talks about professional accountants reporting responsible. Logically speaking, NOCLAR will not have any effect. Right now it will not have any effect, but in future the laws and regulations may be made in such a way. The laws and regulations will be made in such a way. Maybe when an industrial law is being designed, tomorrow when the industrial law is going to be amended, they may put responsibilities on the accountants. They may put responsibility on the auditors. As part of audit, you not only look into the financial aspect, but look at non-financial aspects also, which is affecting general public. If you come across any such situation, please report it. They may put a responsibility like that, but today it is not there. But tomorrow it will come. NOCLAR is a provision designed and implemented by ICI through Code of Ethics, not for the past or present, but for the future. Understand this point. For the future. Getting it right now, NOCLAR may not have much effect. I'm telling you, because of implementing NOCLAR. By the way, sir, from when NOCLAR is implemented, 1st April 2022 onwards, NOCLAR is implemented. First of all, this NOCLAR concept is brought by International Ethical Standards Board in 2017 itself. Later, ICI adopted in 2019 Code of Ethics. It is implemented from 1st July 2020 onwards. Implemented the Code of Ethics. This NOCLAR provision is applicable from 1st April 2022 onwards. This information is not required, even it is not given in the ICI study material as well. I just gone through some Bombay Chartered Accountant Society site, all that, and got this data. So right now it is not required. The dates and all not required. But remember only this, NOCLAR is applicable for professional accountants from which date onwards? 1st April 2022 financial year onwards. Even up to 31st March 2022, it is not applicable. And for the first time, NOCLAR concept is applicable from May 22 examination onwards. May 22 examination. I explained entire concept, actually speaking. Entire NOCLAR concept is explained. What is NOCLAR concept? Now let me sum up right now. SA 250 is there earlier. Even now it is there, SA 250. As per SA 250, what is our responsibility? Our responsibility is, if auditor come across any non-compliance, which may be a type 1 non-compliance, which will have a direct effect on the financial statements, type 2 non-compliance, which will have an indirect effect
which may not have an effect on the financials, but it will affect the company at a future date in the form of penalty or fine, what auditor has to do? Communicate with those charged with the governance, tell them to disclose that in the financial statements. If they didn't disclose, you report it. You give a modified opinion. Simple. If there is any non-compliance you identified which affect the company. But today, because of NOCLAR, you have another responsibility, additional responsibility. Even though company may not be affected party, because of a particular non-compliance, company may not be the affected party. Some general public is affected party, a creditor is affected party, a tax authority is affected party, or some other person is an affected party. Even this has to be reported to the appropriate authority as per the appropriate law, after taking legal opinion from the concerned lawyer, whoever is dealing in that issues. Actually speaking, NOCLAR is not such easy topic. It's a very big topic. Here, confidentiality requirement, should I report or not? See, here it is just like that. Suppose if there is a example, let me explain you what reporting responsibilities we have right now. Which non-compliances we have to report right now under company law. Let me first explain you. Suppose you take Caro as part of audit report. In the audit report, under which section of the audit report on legal and regulatory requirements section, if any fraud is noticed or reported, yes or no? If any fraud is noticed or reported on the company or by the company, it shall be reported in Caro, yes or no? If any fraud is, for more than 1 crore is discovered by the auditor at the time of audit, it shall be reported to central government. There is a clear responsibility on the auditor. Company law has put a clear responsibility that please report in the audit report, please disclose in the audit report. And this is also, please report to central government and disclose this also in the Caro fraud clause. Yes or no? Public deposit in Caro, if there is any non-compliance of Companies Act, RBI directions or NCLT or Company Law Board directions, please report that non-compliance also. They put a specific provision that you need to report it. Here you need to report to central government. Here you need to report to shareholders in the Caro. Statutory dues, is the company paying regularly? If not, if there is a non-compliance, report it. Preferential allotment, whether the company has raised any money by way of preferential allotment, report if there is a non-compliance of section 42. So, Companies Act has put some responsibility. Like I took only these examples because we discussed all this already. As part of audit report chapter and company audit chapter, we discussed it already. So I'm mentioning these examples. I'm not taking other examples. Same way, in listed companies, in company law and allied laws paper 4, you would have discovered, you would have understood some other reporting responsibilities for auditor to SEBI. LODR regulations, where you may have to comply, where any non-compliances were there, you may have to report to SEBI. In case of a bank, you may have to report to RBI. In case of insurance, you may have to report to IRDA. There are some responsibilities under some laws and regulations that were casted upon you to report to the appropriate authority. Getting it? So, what NOCLAR concept is trying to tell, generally, whenever we come across some issues that are there in the employer organization or some issues in our client where we are acting as auditor, we generally maintain confidentiality. We will not report any issues to the outsiders. However, if there is a legal requirement, if there is a regulatory requirement, then you must report. A few examples I discovered. I discussed here. In all these cases, no, if the company is affected party only, please report. Indirectly, that is what they are saying. Indirectly, this is what saying. By the way, here, who will do this non-compliance here? Who will do this non-compliance? Obviously, company is an artificial person, man. Partnership is an artificial person. Partners, staff, employees. So in a company, those charged with the governance, they may do non-compliance. Remaining management people may do non-compliance. Employees may do non-compliance. Persons inside the company may do some non-compliance. That will affect the company or third party, anybody. And you are the auditor of the company or you are the employee of the company, but you are a chartered accountant. For you, code of ethics of icai is applicable. Getting it? Because NOCLAR says NOCLAR is applicable for practicing chartered accountants and as well as members in service. For both of them. If you come across any non-compliance, first and foremost thing, don't ignore. Think, do you have any legal responsibilities? Do you have any legal responsibility to report about that non-compliance to somebody. Do you have any legal responsibility to report that non-compliance to some legal and regulatory authority? Check it out. Go to a lawyer, consult a lawyer, take a legal advice, go to an advocate and take an advice. Then accordingly act. Irrespective of reporting to legal authority, report whatever non-compliance you came across to the top management of the company. Report it to the top management of the company. If that non-compliance comes within SA 250 purview, report it in the auditor's report. Summary is this. The summary of whatever we discussed until now, simply speaking, whether you are a chartered accountant in practice, whether you are a chartered accountant in service, when you're doing audit, when you're working in a company, you came across some non-compliance that affects somebody. This non-compliance definitely committed by company people only, nobody else. Outsider cannot come into non-compliance, company people only. If it is affecting somebody, stakeholders at large, check, do you have any legal responsibility to report? If there is a legal responsibility to report, report it. How do you know whether do you have a legal responsibility or not? Consult with a lawyer. Consult with a lawyer. Pharma companies, defense companies, defense production related companies, pharma companies, telecommunication companies, this NOCLAR is very, very powerful. The auditors of these companies, telecommunication, pharma, chemical manufacturing companies, this NOCLAR is very powerful because these are the companies which will cause huge damage to environment. Huge damage to environment. In all these cases, NOCLAR will apply. NOCLAR will cast your responsibility. But right now, I'm telling you honestly, my personal opinion, because of this NOCLAR, right now, it may not have huge impact on our work procedure, work method, or our way of working relating to laws and regulations. Whatever is there under SA 250, we only do that. We don't do any additional work. We don't do any additional work. It is just that NOCLAR is added. It is saying you have to report to appropriate authorities after seeking a legal advice. That's the only difference. Fine. Let us get more clarity by understanding what is the provision of NOCLAR. So first of all, applicability of NOCLAR. Actually, NOCLAR is applicable for all assignments. Originally speaking, as per the code of ethics, it is applicable for all assignments. It is applicable for members in practice as well as members in service. Sir, what do you mean by member in practice? What do you mean by member in service? You will understand in the upcoming video. That is why I asked you to watch this video after finishing the entire ethics chapter. Fine. However, right now, as of now, the institute restricted applicability of NOCLAR to listed entity audits only. And moreover, it is applicable to employees of listed entities who are also chartered accountants. Here, he is also a chartered accountant. And here also audit of assignment means CA. He is also a chartered accountant in practice, but this fellow is a chartered accountant in service. Only for listed entities, wherever you are dealing with, wherever a chartered accountant is dealing with a listed entity, either as a practicing fellow, all assignments, getting it? So this is applicable. Moreover, right now audit assignments only covered. Right now it is audit assignments. At present for listed entities, audit assignments only covered, and listed entities, employees who are chartered accountants only, NOCLAR provision is applicable. Logically speaking, even if you read this entire question, if at all you read this, you understand basically nothing. What auditor has to do? You will not get a concrete conclusion. But right now I told, right, what is the intention of NOCLAR? I told you. The intention is very clear. Generally, if auditor come across any non-compliance that affects the company directly or indirectly on the financial statements, that we need to report. That is SA 250. Now NOCLAR says, irrespective of the affected party, do you have any reporting responsibility? Do you have any responsibility to complain to somebody? Okay, so as per some other law, check it out, get a legal advice, and then complain. Logically speaking, right now, no other law has brought a responsibility. Suppose if a particular law says, any person whoever come across this, as a citizen of India shall report it to appropriate authority, if at all it says. Naturally, citizen of India or resident of India includes auditor as well, right? Generally. So naturally, you may have responsibility to report it. Breaching confidentiality requirement. You need not consider confidentiality and all there. And moreover, in future we have a category 2 chapters, right? Like what are the category 2 chapters? liabilities of auditor, okay, audit and fiscal loss, and insurance audit. These are category 2 chapters I told you. Now in category 2 chapters, liabilities of auditor, there is a chapter, liabilities of auditor, where we are discussing about completely what are the auditor's responsibilities under income tax law, under GST law, under company law, what are the auditor responsibility we are discussing. There, once again I will connect SEA 250, NOCLAR and liabilities of auditor put together we have to discuss. We have to discuss put together. So once again I will cover NOCLAR there. You will get even more clarity when we discuss about liabilities of auditor. Right now, this level of understanding is enough. Now, what is NOCLAR meaning? What do you mean by a NOCLAR? You see here, what do you mean by non-compliance with laws and regulations? Non-compliance with laws and regulations comprises, what it comprises? It comprises an act. Some act you did. How you did? You omitted or you committed intentionally or unintentionally. What is that activity? That activity is contrary to the prevailing laws and regulations committed by a client. Means if you are a chartered accountant, okay, or your employing organization, those charged with governance, management, other individuals working for under the direction of the company, nothing but other employees. The organization where you are working as a chartered accountant, or the organization where you are conducting audit, especially that organization right now is what? Right now that organization must be what? Listed entities only. Right now NOCLAR is applicable for listed entities. If any of those charged with governance employees have committed some act against the law, either intentionally or unintentionally, we call it as non-compliance with laws and regulation. This itself can be asked as a 2 or 3 marks question, theory question, highly important for May 2022 and November 2022 attempt. This itself can be asked as a straight question. Write about non-compliances with laws and regulations as per NOCLAR Code of Ethics. You know, non-compliance definition is given even in SEA 250. What is SEA 250 non-compliance? Non-compliance, SEA 250, it just defined non-compliance. Non-compliance means an act which is an act of omission or an act of commission which is contrary to the prevailing laws and regulations. That's it. They just put up to that. Committed by employees, those charged with governance, other that and all they didn't discuss. But anyhow, the definition of non-compliance with law and regulation is mostly similar. And what this do not include, NOCLAR does not address personal misconduct unrelated to business activities of the client or employing organization, non-compliance by parties other than listed out in the definition of NOCLAR. Suppose if a third party did some non-compliance where company is also an affecting party, that is not covered in the NOCLAR. Only NOCLAR provisions are applicable only when the management, the employer or those charged with the governance of the company is involved in that non-compliance. And moreover, it do not involve personal misconduct. Suppose if the employee of the company met, in his some personal affairs, getting it, he did some non-compliance against some other law, some law or regulation under Indian Penal Code. That is not affecting the company, no. So you need not worry about that. Only if that is a non-compliance committed by employee, management, top management of the company, affecting the company or any other person. But it is as part of company, on behalf of company, they did that non-compliance, then only this provision is applicable. What are the examples? International Ethical Standards Board Authority gave the following examples. Fraud is covered in NOCLAR. Corruption is covered. Yes, if you come across any corruption, if the company is paying any corruption, if a company is paying any bribe, which is against anti-corruption law, okay, or bribery, money laundering, terrorist financing, proceeds of crime, securities market and trading, banking and other financial products, data protection related frauds, environmental protection, I told you, animals, all that, public health and safety, tax and pension liabilities and payments. Every type of fraud is covered, you see. Every type of non-compliance is covered. See the effect. See, with respect to environment protection in India, we might have more than 100 laws. With respect to public safety and health, we might have more than 100 laws and regulations. With respect to data protection, we have Information Technology Act example. We have many other laws, privacy related laws. Banking laws, we have n number of laws. Tell me, is auditor, first of all, no, by looking at this, you can understand, sir, these laws and all regulations, we don't know, right? Should we read all these laws? And suppose I'm doing audit of pharma company, sir. Should I read all the laws and regulations related to pharma company? They clarified below. They clarified, hey, Mr. Auditor, expertise of law is not required, man. You need not require expertise of law. Then what, sir? In the course of audit, in the course of your employment, if you come across any symptoms, indications, then investigate. That is what even SA 250 also says. So, a professional accountant is expected to apply knowledge and expertise and exercise professional judgment. Only your whatever your existing knowledge is, that's enough. He is not expected to have a level of knowledge of laws and regulations greater than that which is required to undertake that audit. But for that particular work, for that employment, whatever level of knowledge, whatever the knowledge of law and regulation that is generally expected from you, beyond that, you need not learn. Whether an act constitutes non-compliance is ultimately a matter to be determined by court, other appropriate adjudicative body, not by you and me. That's why, is it a non-compliance or not, go and take a legal advice. Matters that are clearly inconsequential or relating to personal misconduct, pertaining to business activities of the client are not covered, not relating to actually. Okay, relating to personal misconduct. Relating to personal misconduct, while conducting business activities, but actually the employee has committed a fraud, cheated a customer. Getting it? Cheated a customer in his personal capacity using the name of the company. That cannot affect the company. That cannot affect the company. Getting it? Inconsequential means immaterial. They're not of material size. They're not of material size. They're not significant. And further, if the law says disclosure is not required, suppose if you come across any non-compliance, you need not disclose. If there is no specific requirement under law that you need to disclose that non-compliance to the appropriate authority. Suppose you did the company has committed some violation, which is against some environmental law. In that particular law, there is no responsibility on you to report to particular authority, forest department or something, environmental department or something. There is no such responsibility. Then also NOCLAR is not applicable. Then also NOCLAR is not applicable. As per ISBA code, disclosure of matter would be precluded if doing so would be contrary to law. I mean, if the law specifically says you need not report, if the law specifically says you should not report, or if the law is silent, you need not report. Take a legal advice. See, better thing is always take a legal advice. You're doing audit of pharma company. You came across some non-compliance with the Medical Council of India guidelines in a vaccine manufacturing process. Consult a legal advocate who is expertise in that particular pharma related business, and then accordingly respond. He will guide you. But what it is asking you is be skeptical, be prudent. So NOCLAR will be applicable if a professional accountant come across or is made aware of non-compliance, suspected non-compliance in the course of providing an audit service to a client or employment service to a client. He is not required to investigate, not responsible for compliance. You need not sit and tell the management, hey, do comply with that law, do comply. No, you are not responsible to discover all the non-compliances. In the course of work, you came across a non-compliance, then only NOCLAR is applicable, otherwise not applicable. Now you may tell immediately, sir, I came to know about one non-compliance, sir, I didn't report, sir. How do ICI will know that I came across a non-compliance? How do ICI will know that I came across non-compliance? Generally, whenever we are working, we have a habit of documentation and discussion with people. When simple logic, ma'am. Tomorrow, suppose you discovered some non-compliance. And you didn't report to anybody. Fine. Someday it will be reported, right? One day, at a fine date, it will burst out. At the time, investigating agency will start investigating. At the time, the investigating agency discovered that this knowledge of fraud, this knowledge of non-compliance is already known to the auditor. Employees are saying that auditor also aware of it. That time they will call you. Simple. Until then, you don't have any problem. Until that particular consequence comes, you will not have any trouble. In Punjab National Bank or ABG Shipping Yard, almost a fraud is happening from 2013 or 14. But it was not reported until 2022. Only in 2022, now people are questioning what auditors are doing. Simple. So, what is the objective of this NOCLAR? Now, let's look at what is the objective, what NOCLAR is trying to tell. Okay, the objective of NOCLAR is that turning a blind eye to potential NOCLAR is not an appropriate response from the professional accountant. Dear professional accountant, if you come across any non-compliance, don't behave like a blind person. Don't turn blindly. Don't ignore it. Okay, don't ignore it. Please discuss it with the management and those charged with governance, and disclose it to appropriate legal and regulatory authorities after taking legal advice. While placing renewed emphasis on the role of management and those charged, because they are the one who are primarily responsible for compliances. Further, it increases awareness and understanding among accountants like us of their legal and regulatory responsibilities when they face non-compliance with law and regulation. When a professional accountant come across non-compliance with law and regulation, this NOCLAR guidelines provide me what should I do, what I cannot do, what I can do, what I cannot do. Simply, until this NOCLAR guidelines come, we only have SA 250 with respect to laws and regulations non-compliances. Now with NOCLAR, we understood that we have much more responsibility than what is given under SA 250. But I'm telling you, it will take at least 1.5 years to get a concrete output of NOCLAR, to get a concrete examples on NOCLAR related, effect. So what is the difference between non-compliance with laws and regulations as per Code of Ethics and standard on audit SA 250? SA 250 is applicable only on audit, not on the other assurance engagement. However, NOCLAR covers professional accountant service as well as practice, all assignments. Only temporarily listed entity audits are covered. Otherwise, NOCLAR is for all assignments. Among those in practice, it applies to auditors as well as professional services other than audit. So it is applicable for audit as well as non-audit. However, degree of responsibility of professional accountant varies depending upon the rule. What is the responsibility varies depending as per the rule. SA 250 talks of auditors' responsibilities for law having direct effect on material amount and disclosure in financial statements such as tax and labor laws. Other laws and regulations that do not have direct effect on amounts and disclosure in financial, but compliance is fundamental to operational aspects of the business. So NOCLAR is further ahead of SA 250, that it takes into account non-compliance that cause substantial harm resulting in consequences to financial and non-financial terms. NOCLAR is related to effect of non-compliance on investor, creditor, employee and the general public. Everyone is covered. Whoever is the affected party, NOCLAR rules are applicable. As per NOCLAR, now you see here, this point is even more important. As per NOCLAR, in exceptional circumstances, I am telling you, it is very rare, the professional accountant might become aware of breach of law, imminent breach of law or regulation that would cause substantial harm to investor, creditor, employee or the general public. So very rarely we come across any law. Having first considered, if the moment you got, it is appropriate to discuss the matter with the management or those charged with governance. First discuss with top management. Then exercise professional judgment and determine whether to disclose the matter immediately to the appropriate authority. Suppose if it is a fraud for more than 1 crore, you need to report immediately to central government within 60 days. In order to prevent or mitigate the consequence of such breach, in order to mitigate future bigger loss, immediately report. Immediately report. If disclosure is made, the disclosure is permitted. Generally, only if the disclosure is permitted by law or regulation, you have to make the disclosure. The provision is not inconsistent with the SA 250. It is not inconsistent because in SA 250, it is only talking about effect on the financial statements directly or indirectly. So what is the steps for responding? This is again an important aspect. This 8th point can be asked as a 3 marks or 4 marks question. Only 8th point. What are the steps in reporting under NOCLAR? Or they may ask you, what is the relationship between NOCLAR and SA 250? This can be asked for 4 marks question. Important for May attempt and November attempt. Okay. And definition of NOCLAR. What is the NOCLAR meaning? Meaning of NOCLAR. 2nd point and 3rd point together you need to write. And give few examples of NOCLAR. So they may ask you 4 marks question. What do you mean by NOCLAR? What it does not include. The 3rd point and 2nd point together they may ask you for 6 marks. That is also possible. That's it. What is the objective of NOCLAR? And what are the factors while considering the NOCLAR under Code of Ethics? 5 and 6 point together they may ask you. What is the objective of NOCLAR? What are the factors to be considered? So this itself is relevant for 4 marks question. See how they can. 2 and 3 point together they can ask you a question. 5 and 6 points together they can ask you a question. And 7 and 8. 7th point alone can be asked as a question. 8th point alone can be asked as a question. So what is the steps for responding to NOCLAR? How do you respond on a non-compliance if you come across? First, look at the matter. Okay, addressing the matter, like first report to the top management, then take a legal advice. Check, is there any further action required from you? Like, do you require to report to the appropriate authority? Check it out. And is it a breach or not? Finally conclude and document it. Simply document all these steps. You have to document. Suppose the appropriate authority would be SEBI in case of fraudulent financial reporting. If you discover a FFR in a listed company, you need to report to SEBI. Appropriate alignment has been made in code with regard to requirement of confidentiality as required under CA. Already in Code of Ethics, a member of the institute, example you see, what are the provisions of confidentiality if you check? Provisions of confidentiality, a chartered accountant in practice shall be deemed to be guilty if he discloses information required in the course of his professional engagement to any person other than his client or so engaged without consult of the client. So like if you come across any issue of the client, you should not disclose that issue to anybody without permission of the client or otherwise than required by law. This was an amended one. Of course, not now. It was amended long ago. Earlier it used to say, Code of Ethics of ICI says earlier, once upon a time, without permission of the client, information about the client don't disclose to the authority. Now what it says, otherwise than if there is a requirement under law, client permission not required, you can disclose. That's it. Same for members in service also. Same. See, these two provisions. One is clause 2 part 2 of second schedule, clause 1 part 1 of first schedule. Both we discussed in the upcoming videos. That is why I am asking you to read this question, watch this video only after completing entire ethics chapter. You will connect to this better. Now same way in ethics also we have one more question. We have one more schedule. What is that schedule? Left side you see. Second schedule of part 2 clause 1. What it talks about, it says, suppose now you might get, sir, what if I don't comply NOCLAR? Future ICI discovered this. They will punish you under clause 1. Part 2 second schedule. What? If you fail to comply with any CA regulations or guidelines or ethics, professional standards, you are treated as professional misconduct under schedule 2. Accordingly, punishment as per schedule 2 applicable. That's it. Documentation requirement of NOCLAR. This itself can be asked as a question again. The documentation requirement can be asked as a 4 marks question. You need to write any 4 points. You please strike off F and G, not required. No, not that. Sorry, just a minute. E and F not required, not necessary point. So the revised code over and above require professional accountant to follow additional documents as follows. How management responded to the non-compliance. Matter means here what? Non-compliance. NOCLAR is what the matter. The course of action accountant consider. The judgments made. Decisions were taken. Having regard to reasonable and informed third party test by taking legal advice, all that. What decision you have ultimately taken? Suppose you decided not to report. Why you didn't report? Have you considered legal advice? You need to document all that. How accountant is satisfied that responsibility of public interest has been fulfilled. So how do you say public is not affected? Or how do you say public is affected? And by reporting this to a lawmaker, have you fulfilled the public interest? See, on this, guidelines have to come. Even more still guidelines have to come, since it is being implemented from 1st April 2022 only. Okay, we still do not have any concrete cases on this, how this NOCLAR is going to affect our work culture, how it is going to affect our CS work culture. It is not clearly identifiable right now at this moment, but still it's part of syllabus, so we are discussing. This documentation is in addition to documentation requirement as per standards on auditing. NOCLAR documentation you should maintain a separate bunch. SA 230 documentation you have to maintain normally. And document identified or suspected non-compliance and the result of discussion with the management, those charged with governance and other parties, all that discussions related documents you need to store, documented. This is NOCLAR documentation. This itself can be asked as a 4 marks question. A, B, C, D and G point are the relevant points. Almost I took 45 minutes to explain, but still I'm telling you, I am going to connect this with liabilities of auditor chapter. There you are going to get even more better clarity, the NOCLAR concept. Though we don't have any express concept in that material, but I will connect NOCLAR to that particular liabilities of auditor chapter, which is a second category chapter. Liabilities of auditor, insurance audit, and fiscal loss. These three are second category chapters. Only if you have time, please watch the video and then read. Otherwise, you can ignore them, whether you're a full course student or smart course student. That's it. So this is part 2A video in professional ethics. But actually, I'm requesting, I hope you are watching this video at the end of the professional ethics videos only. I hope so. Though I should have put this video at the last, but I just added it as 2A because after question number 3 we need to add this video, so we added it. That's it. Carry on. Have a nice time. So that's about NOCLAR and SCA 250. Now what you have to do, close the video and read once again SCA 250 once and this. Just give a single reading to SCA 250 and this. Enough.
I hope you have already watched the NOCLAR concept. Now, regarding that NOCLAR, there is a slight amendment. Actually, people think these are amendments in ethics, but I'll show you these are not amendments at all. These are just clarifications. You see, so in the amendments book issued by ICI, there are some, there are some provisions which council has discussed in their 413 meeting. Okay, 413 meeting, the council has discussed something. Okay, and some provisions, they were deferred earlier and now applicable from 1st October 2022. Okay, now there are some amendments related to fees to be charged. It's not about fees to be charged, I can say. It is about fees charged by practicing units, disclosure to the institute. Disclosure to the institute about fees charged by the practicing unit. By the way, this right now, whatever you're watching, it should be done after completing NOCLAR timestamp. I hope in the timestamps, NOCLAR concept you have finished. Okay, after that, come to this. Okay, before I talk about fees, something related to NOCLAR. I hope you have seen the NOCLAR provision where you understood that, NOCLAR, non-compliance with laws and regulations, the provision is applicable for all practicing chartered accountants and all employees who are CS, who are members, who are in service also, it is applicable. Now it is clarified that earlier NOCLAR is applicable for employees of all listed entities, but now it is applicable only for senior professional accountants in service, being employees of listed entity. If you are a CA and you are employed in a listed entity and you belong to the senior professional accountant category, only then NOCLAR is applicable for you. Which means, suppose if you newly qualified as a CA and in a listed entity you joined, okay, for some role, getting it, for you NOCLAR do not apply unless you fall under senior professional accountant definition. This is relevant for MCQ in exam. So they may give you a brief case kind of thing. Below they'll give the NOCLAR is applicable for all professional accountants whether in practice or not. NOCLAR is applicable for all professional accountants who are in service of listed entities. NOCLAR is applicable for all professional accountants who are senior professional accountants in listed entity. Then option C is correct. So this is how they can test. Okay, earlier before this amendment was came, NOCLAR is applicable for all employees. So that is what we have covered original. That's why you see NOCLAR video, we first covered the main provision of NOCLAR. This is the main and original provision, whatever I have covered. I hope you would have understood, getting it. Then now what they clarified after the main provision was issued, now they are making it applicable for senior professional accountant. Now who are senior professional accountants? Senior professional accountants in service are nothing but directors, officers, senior employees who are able to exert significant influence and make decisions regarding acquisition, development, control of the organization's human, finance, technological, physical, intangible. Simply who can influence the company's decision-making process, and those chartered accountants who can influence company decision-making process who are in service, employed in that company, were treated as senior professional accountants. So this is one amendment in NOCLAR. Original NOCLAR provision, I hope you saw. You gone through that entire, almost it is 45 minutes, original NOCLAR provision. I hope I clearly explained you the difference between the NOCLAR and SCA 250. I hope you understood. Now, what is the revised one is saying? It is saying in case of members who are in employment, NOCLAR is originally applicable to all employees of listed entity. But now it is applicable only for senior professional accountants. Next. Now, what is senior professional accountant in service definition? The definition has no change. Definition is same. But earlier, it is applicable for all employees of listed entities, but now it is applicable only for senior professional accountants in service of listed entities. Now, what about NOCLAR applicability for CAs in public practice? Nothing but chartered accountants in practice. You know, earlier they used to say NOCLAR is applicable for audit engagements of all listed entities. They used to say earlier old provision. That's what I told in the NOCLAR original provision also. See, first I covered original provision. See, if I have to discuss amendment, first I need to discuss original. Then I need to discuss amendment. So what I gave you in this amendments video, first I gave timestamp NOCLAR concept, original provision. Now I am giving you amendment. So original, as per the original provision, whoever is doing audit of a listed entity, for all of them NOCLAR provision is applicable. Now they have added one more monetary criteria. Of course, it is applicable for audit of listed entity provided that listed entity satisfies some monetary criteria. What is that? Here you see. Okay, it is applicable for audit engagements of entities, okay, the shares of which are listed on stock exchange, and you see this is the amendment, and have net worth of 250 crore or above. Only if that listed entity is having a minimum net worth of 250 crore and above, only then those chartered accountants who are in practice and doing audit of that listed entity having 250 crore and above turnover, net worth, only for them NOCLAR is applicable. Which means, suppose if I'm an auditor of a listed entity whose net worth is less than 250 crores, NOCLAR do not apply. That regulation do not apply. Getting it? Now, what do you mean by audit engagement? Suppose here they said no audit engagement of listed entity. Here also they mentioned auditing. What is audit engagement? Earlier they have one definition of audit engagement. Now you see the revised definition. Audit engagement shall mean a reasonable assurance engagement in which a professional accountant in public practice expresses an opinion whether financial statements are true and fair as per applicable financial reporting framework. Getting it? So, and measures to be taken in case of breach of NOCLAR. There is a provision earlier, original, now it is repeal, means it was taken off. There is no more provision for that. So now audit engagement definition has been changed. This audit engagement definition is relevant for MCQ or maybe relevant for short answer question. Write about audit engagement definition as per NOCLAR. They may ask you this question. Write about applicability of NOCLAR to professional accountants in public practice, and also clearly explain what do you mean by audit engagement. So they will ask you a 4 marks question on this. Right now, whatever I told. So they may ask you a question on applicability, and they'll ask you they'll continue that question with define an audit engagement. That's it. So this is something related to NOCLAR. Earlier old definition, no. It's a reasonable assurance engagement in which you are expressing opinion on financials, whether they are in all material aspect prepared as per framework, such as an engagement conducted as per standards on auditing. This includes stat audit, which is an audit required. So earlier the definition was very detailed. Now the definition was briefly, they just squeezed, they just simplified the definition. That's it. Technically speaking, there is no change in the definition. Only thing is they simplified the definition. Getting it? Next. So this is an amendment related to NOCLAR applicability. So NOCLAR is applicable for employees who are chartered accountants. NOCLAR is applicable for those chartered accountants who are in practice, for both of them. But in both the cases, what is the applicability conclusion right now? For employees, if you are a senior professional accountant in a listed entity, NOCLAR is applicable for you. Then you are a CA in practice. For you, is it applicable? Yes, it is applicable, provided you are doing audit engagement of a listed entity and having 250 crore and above net worth. Only then NOCLAR is applicable. So applicability of NOCLAR has been changed. Please remember. Applicability provision for NOCLAR has been revised. So for employees, it is applicable provided he is an employee of listed entity and moreover he is a senior professional accountant. NOCLAR is applicable for even for CS who are in practice, provided they are appointed as auditor for listed entity and that listed entity has a minimum net worth of 250 crore. That's it. So this is provision. This is amendment related to NOCLAR. Then coming to this is something about disclosure to the institute. Technically speaking, this original provision itself is not discussed in CA final ethics book. It is not discussed. Getting it? But it is covered here. So let us just discuss briefly. This is not important. This amendment is not important. Only NOCLAR related. Only from here it is important. Whereas the above, this amendment is not important at all from exam point of view. Here there is a disclosure. Let us first read a disclosure requirement for the practicing CA firm. This is a disclosure requirement for the practicing CA firm. What practicing CA firm has to do? This has to disclose to the institute what? Disclosure is required where for 2 consecutive years the gross annual professional fee from an audit client represent more than 40% of the total fee received of the firm. Suppose non-public interest entity and public interest entity. Non-public interest entity 2 consecutive years, 40% of gross annual fee, 40% of the total annual fee of the firm. Suppose my firm is providing so many services, audit, non-audit, all that. My firm turnover is 1 crore, let us assume. Now, when I see my breakup of the turnover, from which clients I'm receiving? I am receiving 40 lakhs out of my total 1 crore. 40 lakhs I'm receiving from one particular client. And that client is not a public interest entity. I mean, public interest is not there. Public interest entity means where borrowings were there. Borrowings were there. Public interest entity concept is defined in peer review. In peer review, I think in the timestamp peer review, when we are discussing amendments on the peer review, you might have understood what is public interest entity simply. Where they are having borrowings from public, where they are having capital raised from public for a certain amount it crosses, then we call them as public interest entities. Public interest entities means where public money is involved. Non-public interest entity means what? It's an entity where public money is not involved. So it's a completely private sector, I can say. Getting it? Now, so here, if at all, out of your total turnover of the firm, 40% of the turnover is generated from one client. Getting the point? That too for 2 consecutive years, which means your firm is dependent on them predominantly. Intimidation threat is possible. Self-interest threat is possible. Familiarity threat is possible. Why? Because you are depending significantly. Most of your firm, major portion of the fees is received from one client. One client is deciding your firm's continuity, going concern indirectly. 40% fees means not normal. In my total business, 40% is only from one client. Means that client can influence your integrity. That client can influence your independence. That client can influence your overall performance of an audit. If there is any such client, nothing wrong. See, accept, it's okay. Luckily, you got a big client and they are paying you major fee. What's wrong? The institute is asking disclosure. You have to file annually some forms with the institute. Being a practicing CA, you have to disclose to the institute if one particular client is paying you and a fee, audit client is paying you a fee, which is 40% of the total fees charged by the firm. For 2 years, he continuously gave like that. 2 years, you continuously meet this 40% criteria. You have to disclose. Sir, suppose I have public interest entity clients also. I have clients who are public interest entity. For them, same 2 consecutive years, 20% is only criteria. Suppose if I'm doing audit of a public interest entity, they are paying me audit fees, right? That audit fees divided by my firm turnover, 20% it is. Then also I need to disclose to institute. So this is one disclosure requirement which they brought. Next. Now, this disclosure requirement is there, no? Suppose if you are receiving any fees from audit entity, which is non-public interest entity, 40% of the total firm turnover is from this fellow for 2 years, you need to disclose. Public interest entity, 20% of the total turnover of the firm for 2 years, you need to disclose. This disclosure requirement is exempted. This disclosure requirement is not applicable for few audit firms. Which audit firms? If the audit firm total fee does not exceed 20 lakhs. My total fee itself at 20 lakhs does not exceed. Suppose I am having 20 lakhs only turnover exactly. Let us assume 8 lakhs fee I am receiving from non-public interest entity and some 4 lakh I am receiving from public interest entity. Logically speaking, this is 40%, this is 20%. Now, should I also disclose? My total business itself is very small, less than 20 lakhs turnover. No need. For you, it does not apply. Suppose if your firm turnover is more than 20 lakhs, now check how much fees you are receiving from non-public interest entity audit client. How much fee you are receiving from a particular public interest entity audit client.
what is his fee percentage to the total turnover fee? If it is more than 20% in case of public interest entity client, disclosure is required. If it is a non-public interest entity client, more than 40% of the turnover is generated from him for 2 years, disclosure is required. Now this entire disclosure requirement is exempted for whom? It is exempted for those CA firms whose total turnover is not exceeding 20 lakhs, less than or equal to 20 lakhs turnover, exempted. This is not an important. Earlier, no, we need to disclose it to the client of the organization. Earlier, this disclosure is required to be disclosed to the audit client. We need to disclose, dear management, you are the major client to us. Like that, we need to disclose them only. Now, that has been changed to disclosure to the institute. Obviously, institute has to regulate them. Institute should know their members receiving significant fee from any particular client. They want to know. You know, if you disclose to institute, what happens? Nothing happens. Institute, when applying, when selecting for peer review, when selecting for any special reviews, will give priority to these audit firms. They will select these. Hey, these audit firms are having big clients where their major revenues from one particular client. Let us select them and see how they are working, how they are complying with the provisions. Let us look at them. So that is the reason. That's it. This is ignored, not required. Then we have another one. This is also court definition. It's just that court does not include tribunal. They just clarified. Court does not include tribunal anyhow. So ignore that. That's not required. So it is about disclosure of fees charged by audit firm from a particular client exceeding a particular percentage of the total fee. For 2 years, you need to disclose. The firm has to disclose that fact to the institute. Earlier, they used to disclose it to the client himself. Now that is not correct. The institute you need to disclose. That's it. Okay. So these are the amendments in ethics. I hope almost this 4, 5 or maybe 6 hours probably. I'm not sure exactly. Okay. Because I'm now recording. Maybe after merging only I'll understand how many hours it is. So I hope you thoroughly enjoyed all the amendments or entire this thing. Getting it. Along with this amendment, please watch the revision marathon also, which I uploaded 1 month ago. So for May 23, 2 parts I have uploaded for 23 hours. Watch that and you see you will enjoy like anything that particular thing. Okay. So have a nice time. Take care. All the best. And one more thing, by the way. Okay, fine. That's it. Carry on. Okay. Yes. See, once we give the audit report, once we submit the audit report, there are certain reviews that will be taken care. There are certain reviews that will be made on us. Various types of reviews that we generally undergo during the audit and after the audit. For listed entities, EQC review. For listed entities, there is a review called Engagement Quality Control Review as required under SQC. There is a standard SQC which says that, sorry, SA 220, read with SQC. SA 220 says that every listed entity audit report must not be signed unless an engagement quality control review has been conducted. Now this is before the date of signing of the audit report of a listed entity. So there is a review called engagement and quality control review. Now once audit report is signed, we are supposed to various types of review like peer review, quality review, NFRA review, financial reporting review board review, tax audit tax audit quality review, like this various types of reviews that we are having. Getting it? Now we are having only these 2 reviews in our syllabus, where peer review is conducted by peer review board, quality review is conducted by quality review board. Getting it? Peer review board will issue guidelines regarding peer review. Right now the latest guideline is peer review guidelines 2022. This is the latest guidelines. Before this there is a statement on peer review 2021. Now peer review guidelines 2022 is latest. Quality review, these are the guidelines which were issued somewhere in 2009-10 or somewhere when the quality review board is constituted. At that time quality review guidelines were that is applicable. Now in both the cases, whatever assurance functions. Now peer review scope is assurance functions. What is it? All assurance functions are covered within the scope of peer review. All assurance engagements. Assurance engagement means what? Stat audit, non-stat audit, everything is covered. Tax audit, internal audit, everything is covered. Whereas within the purview of quality review board, only statutory audit under Companies Act is covered.
What is the scope of quality review board? Statutory audit under Companies Act. Actually, all audits are covered in quality review board, but right now practically, as per the implementation guide of quality review, the quality review board is now only looking about statutory audits conducted under Companies Act for quality review, whereas peer review board will cover all types of assurance functions that are performed by the auditor, whether it's a statutory audit, voluntary audit, tax audit, GST audit, companies audit, or LLP audit, whatever, corporate societies audit, everything is covered. Every audit is covered. In both the cases, the work approach is similar. The work approach is similar, but the objective is different. Peer review is conducted by peer review board, which is one of the committee in the ICI. Example, I think some part of ethics will also be covered here itself, indirectly. You will understand all that. Now, you see here, this is ICA website. We have committees, right? The committees are multiple types: standing committee, non-standing committee, directorate committee. Directorate committee means you might have seen this in ethics, code of ethics. Any directorate discipline, directorate committee, board of discipline, schedule 1 offense shall be referred to board of discipline, schedule 2 offense shall be referred to directorate committee. Yes or no? Like now, there are various non-standing committees that were there. Various non-standing committees. IndAS is issued by Auditing and Accounting Standards Board, SR AASB. Auditing and Assurance Standard Board is what? Auditing standards were issued by Auditing and Assurance Standard Board. What is Auditing Assurance Standard Board? Who are the members of Auditing and Assurance Standard Board? All that is given. This is a committee of ICI. Understand? This is one committee of ICI. Accounting Standards Board is one committee of ICI. Peer Review Board. Peer Review Board is another committee of ICI. You see here. Peer review board is another committee of ICI, and you see here, list of the firms having valid peer review certificate. These are the firms which are having peer review certificates. Approximately more than 5,000 firms will be there in this list. Getting it? Now, when the peer review certificate was issued, until when it is valid, you can find all the details. So what is the firm name? What is the firm registration number? Where the firm is situated? When the peer review certificate was issued last time, until when it is valid. So entire that list of firms is given in this. Okay, next up. Now you see applicable important information for peer review. Like you see here, peer review guidelines were given. This is the latest guidelines based upon which amendments material of ICI was done. Getting it? So this is a peer review guidelines which are given, almost 112 pages guidelines. Peer review guidelines. From this, we need to discuss some 10 pages content where there is an amended portion. In the entire peer review itself is from this 112. See, actually, this is 112 pages because in peer review, there are so many communications will happen between the peer reviewer and the peer review board and the practicing unit. First of all, who are the parties involved in peer review? Who are the parties involved in peer review? There is something called peer review board. There is something called practicing unit and peer reviewer. What is we call it as peer reviewer? Getting it? Now this peer reviewer is also a chartered accountant. Practicing unit is a CA firm. It's nothing but what? CA firm. It may be a sole proprietary firm, or it may be a partnership firm, or it may be a sole practitioner, individual practicing member. Getting the point? Now peer review board will appoint a peer reviewer for the practicing unit for conducting peer review. Peer means what? Colleague. Getting it? Your friend is your peer. In organizations we call them as peers. In CA fraternity, who are peers? Each CA member is a peer of another CA member. So it's a review by one member of another member's work. So that's called peer review. Are you getting the point? Now, what is peer review board? What is the composition of peer review board? Who are the members of the peer review board? That is one question in peer review. Who is a peer reviewer? What is his eligibility criteria? What are his rights and duties is one question. What is a practicing unit? Which practicing unit is eligible for peer review, liable for peer review? Which are not liable for peer review? That is one question. Are you getting the point? Now, liability for peer review has been changed. Now, which practicing units are liable for peer review? There is a peer review mandate. Now there is a peer review mandate where peer review applicability has been discussed in phase 1, phase 2, phase 3, phase 4, phase 5. Peer review is applicable for various practicing firms.
Now, which firm are you liable for peer review? Suppose I am having an audit firm, having 3 or more partners. I am having so and so entity auditor. Am I liable for peer review? Look at the peer review mandate. Inside that mandate, under which phase you will fall, check out. If you are falling under phase 1, you are liable for peer review from 1st April 2022 onwards. If at all you fall under phase number 2, implementation guide, 2023 April, 2024 April, 2025 April. Are you getting the point? So this is an amendment. Earlier, peer review applicability is based upon level 1, level 2 practicing units. Before that, 3 levels were there. Later they reduced it to 2 levels. Now institute decided it's not level 1, level 2, nothing such. Let us implement peer review by 2025 to all the practitioners. Now let us issue a peer review mandate. This has been finalized in October 2022. Since it is finalized before 31st October 2022, it's applicable for our exam. Just 1 week delay happened, this is not applicable for our exam. Just 1 week, if the institute finalized it lately, it would have not been applicable. Are you getting the point? Yeah, it is done in 21st October or 22nd October. Peer review is finalized. Able to understand? Now, so who is a peer reviewer? What is his eligibility? What are his qualifications? All that we are going to discuss. Confident? Now, let's start. Let's start a discussion. $159. So, what is a peer review? Inside this peer review, the definition has been amended. By the way, the smart notes I gave is edition 22 notes. Getting it? For peer review, amendments were not incorporated in this, but I will read like in conjunction with amendments material. You see here, this is the amendments material which I have issued. You can download this in our application also. Sreshta for CA and CMA, there is an application in the Google Play Store. You can download that. Or you can even directly read from the institute book. If you want, I will explain from institute book directly. Institute book means amendments book only. Okay, yeah, fine, I'll do that then better. Because it's there for, this access is there for everybody. Or I think, let's go with this only because I simplified it very well. Okay, I simplified it very well, and this we need to read with my main book. So I have a module 1. Peer review, quality review 356. Just 1 minute. The app will not work if I don't remove. There is an app called Sreshta for CA. See, in iOS device, it's Class Plus app. Okay, in Android, it is directly our name, white label app is there, Sreshta for CA and CMA. So you just download that app, and inside that you will find options. Just 1 minute, just download it. So here, explain the concept of peer review is there, right? Inside this, there is an amendment. The amendment 1, it is in our material, there is a question number 1. Inside that our material, in institute book, it is concept number 1. The ICI study material, main study material, it's concept number 1. Okay, now inside that, there are some key terms of peer review. Inside that, earlier we used to have a word called statement on peer review. Now it has been revised to Peer Review Guidelines 2022. Now you see here,
So the word statement has been substituted with guidelines. Statement on peer review has been changed to peer review guidelines. Inside the same question, there is another amendment. There is another amendment. Like this is the amendment: audit quality maturity model where applicable, or any other regulatory requirement as may prescribed by the council or any other committee. Audit quality maturity model. What is this audit quality maturity model? See here, no, earlier we have this peer review, right? Here there is we have something called technical professional ethical standards definition. There is something called technical ethical professional standard definition. Additional wordings added. The words technical professional ethical standards applicable including other regulatory requirements there too. This is the original wordings. Now that has been changed to, like what is the wording like it has been now changed to? It has been changed to technical professional ethical standards as applicable, including audit quality maturity model where applicable, or regulatory requirements as may be prescribed by council or any committee thereof. That old sentence is replaced with the new sentence: audit including audit quality maturity model or any other regulatory requirements as may be prescribed by the council or any committee. So this is the wordings which are substituted. Getting it? Now where that will impact in peer review? That will impact in peer review here. Peer review means what? It's an examination on review of systems and procedures to determine whether same have been put in place by practicing unit. Peer reviewer will come and do review. No, what he will review? He will verify whether you have established systems, whether you have established procedures, so that you ensure quality of assurance services as required by technical professional ethical standards as applicable, including audit quality maturity model, any other regulatory requirements as prescribed by the council or any other committee. That is the word substituted. So peer review definition has been changed. Definition has been changed only to this extent. I'll highlight with yellow color. Only this has been changed. How this has been changed? Earlier, what is this? Technical professional ethical standard is applicable, including regulatory requirement. They said no. Now including, here they added one more: audit quality maturity model. Are you getting the point? And other regulatory requirements, there too it's given, right? Instead of that, requirements prescribed by council or any committee. This is the word they added. Able to understand? So peer review, what auditor has to examine? Peer reviewer has to examine whether practicing unit has put in place any systems and procedures for ensuring quality of assurance services so that they comply with technical professional ethical standards, including AQMM wherever applicable, and other regulatory requirements as may be prescribed by the council or any committee. This is the wordings. Getting the point? So this itself can be tested as an MCQ. They will test which of the following is correct. So the peer reviewer has to examine. They may give you peer review means examination of systems, old definition they'll give you. Then they'll give you new definition. By ignoring AQMM, they'll give another definition. By ignoring committees, that council. Then fourth option, they'll give full-fledged proper definition. You need to pick the fourth option. Able to understand? All of you. Next, reviewer means who? Who is a reviewer? Reviewer means a member duly empaneled. A reviewer means a member duly approved and empaneled by board on fulfilling qualification prescribed as per guidelines. They just added as per the guidelines. That's the only difference. Earlier reviewer definition, now reviewer definition, same. Peer review board means what? It's a board constituted by council. What do you mean by council of ICI? In ethics also you will understand. You will get this word council of ICI. You need to get a permission of the council. Council means it's a 40 members council. It's a 40 members council. You see here in the ICA side, you will understand here. Like you go to the committee, you will see the standing committee. You will see here the council of ICI. I mean, I think you will see here overview itself. You will find. Yeah, the council. You see. So from western region, these are the council members. From southern region, eastern region, like that you will find. Okay, getting it. Total ICA council is having 40 members. Out of them, 32 were elected from various regions. Getting the point? 8 members were nominated by government. These people are nominated people by government of India. Last, these are nominated from government of India. Able to understand? So totally 40 members. These 40 members put together were called as board of directors of ICI. Able to understand? In a company, we will have risk management committee, audit committee, all that. Peer review board is one committee like that. Able to understand? In a company, there will be board of directors. Reliance is having 14 board of directors. Now all 14 board of directors will not look into all the operations of the company. Three directors will look into risk management affairs. 3 directors will look into audit. 3 directors will look into so and so. Some 4 directors will look into so and so. Able to understand? Same way, ICA has various objectives which they need to accomplish. They need to issue accounting standard, they need to issue auditing standard, they need to review their members, they need to check tax audit quality review, they need to form an examination committee, they need to have a disciplinary committee, various objectives they need to accomplish. So, this entire 40 members council will take overall decisions of the institute, plus these council members will participate in peer review board, some council members participate in quality review board. Of course, quality review board is not a committee of ICA, remember, quality review board is an external authority, correct? All of you. Now, next. So, amendment 4, there is another amendment which is added. Branch peer reviewer. What is it? Branch peer reviewer. He is a reviewer. He is a reviewer appointed to conduct peer review of the branch. The qualification and obligation of the branch peer reviewer shall also be same as the main reviewer. So, suppose if a practicing unit is selected for review, to that particular practicing unit, institute will appoint a reviewer. Suppose if the peer review board feels one reviewer is not sufficient because the practice unit is having multiple branches in multiple locations. So the peer review board may appoint a separate reviewer for the branch of the practicing unit. Then we call him as what? Branch peer reviewer. The branch peer reviewer and the main peer reviewer shall coordinate here, just like principal auditor and other auditor. Able to understand? Peer review is very simple. Whether company financial statements are true and fair, you are doing audit. Whether are you doing audit properly, peer review is there. Able to understand? Next. Now, there is another concept which is added in peer review, new unit. New unit means what? Can we conduct a peer review of the new unit? For new unit, peer review should be conducted or not, there is a separate guidelines. Getting it? Whether new unit means what? Newly started practicing unit, or a practicing unit which has not been rendering any assurance services. It is started long back, but this is an audit firm where they have never done any assurance. They are only doing consulting works. They are not doing any practice. They are only involved in MCOS services. Management consultancy, other services only they are providing. They are not, like there are many firms in India which exclusively render MCOS only. Though they are having practicing COPs, they don't provide any practice oriented work. They don't do any attestation. They don't do any certification. Able to understand? Which is a major, finance, major income for this ES. Getting it? So, now what is a new unit? This can be tested as a direct descriptive question for 2 marks. They may ask you, define the following terms. New unit, branch peer reviewer, 4 marks question, 2 plus 2. Getting the point? Because there's an amendment. So, a firm whose date of establishment is less than 12 months, immediately preceding the date of receipt of application for peer review. Like the institute want to select them for peer review, right? New practicing unit voluntarily made an application for peer review. Now, from the date on which they applied, if I look at the date of establishment, it is less than 12 months. And which may or may not have rendered any assurance services in the last 12 months. They might have rendered, they might have not rendered assurance. Or it's a practicing unit which is in existence for more than 12 months, but till date, no services were rendered. Assurance services were not rendered. Remember, peer review will apply only when there is an assurance service. If assurance service is not there, peer review will not apply. What peer reviewer has to check? Peer reviewer has to check whether the practicing unit has established systems, policies, procedures so that assurance services are provided qualitatively in compliance with technical, professional, ethical, audit quality, maturity model, all that. Able to understand? Now, scope of peer review has been changed. Inside that, this 4th clause has been added. Earlier, this is 4, this is 5, this is 6. Now, all these were renumbered because 4th clause was substituted with another. Earlier, scope of peer review will have only 6 points. Now, scope of peer review is having 7 points, where 4th point was added. Able to understand? Now, what is the 4th point? Some audit firms has to do self-evaluation under audit quality maturity model. The practicing unit has to self-evaluate audit quality maturity model. Whether the audit firm is doing self-evaluation or not, peer reviewer will have to check. Able to understand? Now, before I discuss like this piecemeal, first let me discuss overall peer review process. Then I will come back to this and discuss. That will give you more meaningful understanding. Getting it? Now, first of all, what is audit quality maturity model? What is audit quality maturity model? Audit quality maturity model totally has a scorecard of 600. What is the score of audit quality maturity model? Maximum score 600. Inside that there will be so many points. Audit quality maturity model is divided into 2 or 3 parts: administrative functions and systems related functions and so and so. Like I think I have downloaded that also earlier. Yeah, it's there. Audit quality maturity model is there. You see here. You see here. What is the total score possible in audit quality maturity model? 600. Now, how you are practicing firm doing practice management operational activities? For that maximum score is 280. How your audit firm is good in strategic and functional role? For that 80 marks were allocated. How your audit firm is doing HR management? How you are hiring articles? How you are training articles? How you are hiring audit managers? You might have seen self-regulatory measure in ethics, you know. For every 5 non-qualified assistants, 1 qualified assistant should be the self-regulatory measure. Like that, if you comply, you know, HR management, you will get score. Now, 600 is a maximum score. Suppose, no, if at all you scored only 25% in each section. In each section you scored less than 25% marks. Then you have to immediately upgrade your firm. No competency at all. You will be disqualified for many government audits, many big internal audits and all. See, big IT companies and all, they will not give you audit based on your just because you are a CA. They will come and see your systems. They will come and see how you are implementing confidentiality rules. Getting it? Suppose if it is 25 to 50, as per audit quality, you will come under level 2 firm where you have made some progresses. You just have to fine tune them. If the score is level 3 score means in each section nothing but for 600, at least 300 to 450 score you should get. In each section 50% to 75%. It indicates firm has made substantial progress. So highest level of competency, above 75, firms just have to maintain and optimizing. They are excellent already. So in audit quality maturity model, if you apply to your firm, wherever you did articles, you just apply this model conditions. Do you have a documented systems and procedures? 90% firms in India don't have. Say more than 60 to 70% firms will fall under 11.1 category, where they describe it is very nascent, very poor. Getting the point? So this is AQMM. Like you can see the questions also in AQMM like this. So you just have to score. Suppose if the firm is reviewed by ICI, okay, scoring, if the answer is yes, 4 points you will get. Suppose if the firm is not having peer review certificate, 0. Like that, there are so many things. Whether the firm is having engagement quality control reviewer inside the firm. Whether the firm is reviewing audit reports and documentation before signing. Whether you have this condition, no, within 60 days working paper file shall be assembled. And after the audit has been completed, SA 220 inspection has to be done. Whether audit has been done as per the standards. If the firm is doing all that process, 20 points they will get. If the firm is not doing all that, they don't get. Do you have a file room properly? Do you have a numbered? Is the files numbered? Database numbered? Are you following structured database inside your practice? If you do have a clear-cut client list, separate classification wise, individual clients, corporate clients, and stat audit clients, tax audit clients. If you have a register, if you are maintaining register, you will get some points. You don't maintain register, 0. Do you have training sessions for your articles weekly? Some points. No training, 0. Imagine how many zeros your firm will get where you did articles. Getting it? Next. So, the peer review, scope of peer review, which is very important question. Write about scope. This is which is frequently tested in exam. Scope of peer review. Some 4 marks question is important. What is the scope of peer review? The peer review shall cover compliance with technical, professional, ethical standards, quality of reporting, systems and procedures that are there in the firm for carrying assurance services, and how the firm is evaluating itself with audit quality maturity model, how the training programs are conducted for staff, compliance with directions issued by council to the members, in relating to fees to be charged, number of audits to be taken. There is a minimum scale of fees which is given by ICI, which is a self-regulatory measure. Like for every work that you are doing, you must charge minimum that much fee. If you are charging that much fee, in audit quality maturity model, you will get score, otherwise zero. Getting it? That's why only Big Four will fulfill AQMM. No other firm in India will fulfill that AQMM points. Next, compliance with the directions, guidelines issued relating to articles, relating to audit assistance, attendance, work days, stipend payments. Have you maintained work day in article? No. That means your firm will get zero for that. Are you getting the point? Like this. Okay. So this is the scope of peer review. What peer reviewer will come and check is these points only. He will check how you are doing audit, how is your documentation, how is your standards, how is the documentation methodologies. Do you have a standard checklist? Do you have a questionnaire? How your audit team plans the audit? Do you have a proper planning team? Do you have a risk assessment process? They will check all the standards, each and every standard line by line. They will check whether you complied or not. Like SA 501 says, get a written representation for completeness of disclosures of pending litigations. Where is the disclosure? Show me. Where is the representation? You didn't get that. Zero. Standard SA 501 compliance is zero. Able to understand. Like this, they find all the requirements. This is what happens exactly in peer review. Getting it? Like you might have done some audits, right? Some company clients audits, right? Yes or no? Like, do you have a proper audit plan? Have you taken printout and signed, the partner signed, article who is involved signed and kept in the folder, in the working paper file, physical copy, and soft copy is there in the computer, in the client folder, respective financial year folder? If yes, you will get mark, otherwise zero. In audit quality maturity model. All this is what formally should happen. In all big firms, above medium sized firms, this happens. Practically, this all happens. Getting it? Next. Now you see, peer review, directly I'll discuss about the process first. I'll discuss the process and then I'll come back to the main, again amended part. This entire process is amended. This entire process is amended. In exam, they may ask you only on this. Write about selection of practicing unit and appointment of reviewer. Write about selection of practicing unit and appointment of reviewer. First of all, practicing unit may voluntarily apply for peer review. Example, new unit is there, which has been in existence for less than 12 months. See, suppose I'm a new unit. New practicing unit, but the partners in my firm were highly experts. They have very good connections in the industry. So they want to bring listed company audit. They want to bring listed company audit. They have a ready client. Ready client is there. Client is ready. But the problem is Code of Ethics clause number 9, gap, schedule number 2, part 1. It says peer review certificate is mandatory to accept a listed company. Mine is a new unit. I have a client ready to give me audit. Listed company is ready to appoint me. All the shareholders are ready to appoint me. But the problem is I don't have peer review certificate. If I accept, it's a guilty of professional misconduct, schedule 2. So what? So peer review. So I'm not having this. Earlier, I don't fall under level 1, level 2, both. So I'm not able to accept these kinds of audits. So new unit concept has been defined. Now I will make an application to the peer review board. Sir, I am falling under new unit. Please give me peer review. Please come and conduct peer review. I have established all the policies and procedures. Come, tell your reviewer to review all the things and grant us peer review certificate. Immediately I'll go and accept peer review. Are you getting the point? All of you. Now, entire peer review shall be completed within how many days? 20 days. The peer review process shall be completed within 20 days. Okay. From the date of receiving the application from practicing unit or from the date of notifying the practicing unit about its selection. Now, see, peer review of a practicing unit will be conducted because of 2 reasons. One, as per peer review mandate, you are falling under mandatory category. In such a case, peer review board will notify your firm that you are liable for peer review. Once I notify you, from the date of notifying, 20 days. Suppose you are not liable as part of peer review mandate. As per the applicability provision, you are not liable for peer review. But you only voluntarily applied me. Then from the date of your application, I need to finish peer review within 20 days. It's peer review board responsibility. Are you getting the point? So, once if a voluntary application is received, peer review board shall take that application and come questionnaire. Actually, there is something called application come questionnaire. Once you make an application to me, no, I will send a questionnaire to you. What is this questionnaire? I will get some details. What it will be there in the questionnaire details? What is your name of the practicing unit? How many partners you are having? Date on which you have established? How many staff members you are having? What are the clients that you have undertaken in the last 3 years? Able to understand? Period under review means what? Preceding the date on which I notified you, or the date on which you applied for me for peer review, preceding the 3 financial years. What are all assurance services you provided? It may be stat audit, tax audit, internal audit, it may be operational audit, any type of assurance you provided. You have to give me list of all the assurance services you provided. What is their turnover? What is their fees that you charged from them? What is the scope of work? You should give all the details to the peer review board. So that you will submit through what? Questionnaire. Now I got the questionnaire from you because I notified you. I asked you to send the questionnaire. You sent me the questionnaire, or you applied for me voluntarily. I sent a questionnaire. You have sent me back the filled questionnaire. Now numbering. Once I received the application from you, or once I notify you, I will number it in my records. Okay, for number 1 practice unit, number 2 practice unit, number 3 practice unit, like that register. I have a peer review board will maintain a register of practice units now where they are going peer review. Next, then once I notify you, once you sent me the questionnaire, once you forwarded me the questionnaire, all that, I will recommend 3 names to you. I will recommend 3 names to you, and I will also recommend your preference. Do you want reviewer from the same state? Do you want reviewer from the same city? Do you want reviewer from the same region? So I will ask, if you want to have a reviewer from different region, you can. It is your choice. Because in peer review, you are only going to bear the remuneration. Peer review board will not compensate. Whereas in quality review board will bear the remuneration of the technical reviewer. In quality review, we call the person who is conducting review as technical reviewer. In peer review, the person conducting review, we call him as peer reviewer. In quality review, we call the firm as audit firm under review. In peer review, we call it as practicing unit. Are you getting the point? Remember, you studied earlier. Fine. So we will recommend 3 reviewer names, okay, and within 3 working days. So within 3 working days of you sending back the questionnaire to me, I need to recommend you. Suppose I am a peer review board, I need to recommend you 3 names of the reviewer. By the way, I will have a list of reviewers. They are all empaneled on my reviewers list. How they were empaneled? There is an eligibility criteria. There is an examination which I will conduct. You might have seen a 7 years audit experience, 10 years audit experience, like that points you might have remembered. So based on that, so and so chartered accountant registered with the peer review board as a reviewer. Sir, I am eligible for reviewer criteria. So he is registering with me as a reviewer. So I will send 3 names out of my list of reviewers to your practicing unit. You have to select one. So the practicing unit selects one reviewer and inform to the peer review board within 1 working day. Are you getting it? Now peer review board will appoint that reviewer. You selected one reviewer, he will be appointed for you, and appointment should be intimated to reviewer also, Yes or no? I recommended 3 names. You selected one name and informed me. I appointed that particular fellow for conducting review at your practicing unit. I need to inform to this fellow that you are appointed for so and so practicing unit. So intimate the reviewer by the board about the selection within 2 working days from the receipt of choice of name of the reviewer. Getting it? So practicing unit selected one reviewer. I have to appoint that reviewer and intimate to the reviewer within next 2 working days. Then practicing unit, okay, I appointed reviewer. Now earlier you forwarded me, you are practicing unit, you forwarded me a big questionnaire, forward the same to my reviewer also, because he is the one coming and doing review. I am not. I took it so that I will see your clients list, all that accordingly I have reviewers. According to the experience of the reviewer, I will allocate so and so reviewer for you. Getting it? So forward the same questionnaire which you forwarded to me to the reviewer. Now the reviewer has to submit a declaration of formality, declaration of confidentiality. Getting it? The reviewer has to submit me declaration of confidentiality before commencement of the peer review. Now the reviewer shall intimate the practicing unit about the visit. Getting it? See, peer reviewer, the person conducting verification of the firm books, nothing but firm audit files. What this fellow has to do? First offsite, before going to the firm, first from offsite, you have questionnaire, all the details, evaluate all that. Getting it? And inform the practicing unit when you are planning for visit. You need to do on-site visit. Now there is an on-site visit restriction, maximum how much? I think 7 days also it's removed, man. I think 5 days or 7 days. 7 days only, no? No. I think it's 7 days only, I think now. For new units, the process has to be completed within 7 days. Just a minute. On-site visit is given here, not beyond 6 working days. Earlier it used to be 7 days. Now they have classified it as 6 working days. On-site visit, the on-site review should not exceed beyond 6 working days. This is important for MCQ. Getting it? Now you see. So as a reviewer, after looking at the questionnaire, I should inform the practicing unit that I am going to come for so and so date. And what are the audit samples I am going to select also I should intimate. I should intimate the practicing unit. See, you have done audit in the past 3 years for these many clients, no? These are the clients related particular financial year audit documentation, keep it ready. I will come for on-site visit and check. I have only 6 days left for on-site visit. Within 6 days, as much as possible, I will check. So in the meantime, you keep ready all the documentation at one place. So I will intimate. Now, if at all I want any additional information, I will get that additional information. Then I will select the assurance engagement. That's what. After selecting only, I will intimate samples. The reviewer shall, within 2 working days of receiving the information, select assurance service engagements that he would like to review and intimate the same to the practicing unit. This is what intimation of sample also. This is what actually refers to intimation of sample. Then plan an on-site visit. When you plan an on-site visit, at least 2 working days. Time must be given to practicing unit on a prior basis so that they'll make ready every documents. Are you getting the point? Next, entire review process shall be completed within 20 working days. In case of new unit, entire review must be conducted within 7 working days. Just because of peer review certificate, new unit should not miss the client. So with that objective, this new unit concept has been added and all this is added. Now, peer review visit. So execution. Now you see in examination, they may test you what is the procedure to be followed by reviewer. They may test you on this. Write about selection of the practicing unit and appointment of reviewer. They may test you on this. So in this, what are the key points? 1 and 2. 4th point. 5th point. And 6th one. That's it. Getting it? Only these points are relevant from exam point of view. You need not write all the 8 points because examination question will be for 4. 4 points only you need to write. For 4 marks, 4 points. Then, what are the review procedures? What is the peer review procedure to be followed by reviewer before commencement of the peer review? Getting it? Now, in this, first he has to submit declaration of confidentiality. He has to intimate the practicing unit about the on-site visit and samples selected. And the review process shall be completed within 20 days. Before visiting on-site, 2 days time must be given to the reviewer, the practicing unit, so that they make it everything ready. And for new units, 7 working days, the peer review process has to be completely done. Now execution, the peer reviewer can do on-site visit where it cannot exceed beyond 6 working days. So that's it. Now they may ask you a question on this also. How selection of assurance engagements will happen? How selection of assurance engagements? Like the practicing unit, in the last 3 years, they have rendered audit services to A Limited, B Limited, C Limited, D Limited, E Limited, like that 20 companies they rendered services in the last 3 years. Means 60 audits they signed in the last 3 years for companies, stat audits. Now out of these 60 files, which files you will select? How many you will select? It depends on what is the standard of quality control they follow? What is the nature of assurance service? Is it stat audit, tax audit, GST audit, non-stat audit? What? Methodology adopted by practicing unit. Number of partners and members involved. What is the fees charged? What is the GST paid? And what is the number of locations or branches of the practicing unit? Based on all this, the reviewer will fix the sample size. Are you getting it? By the way, this and all generally happens at off-site. This generally happens at off-site. First, reviewer will get a questionnaire. No, in that questionnaire, practicing unit's entire profile is there. So I can study that questionnaire for 1 week to 10 days time. Or since I have to complete within 20 days, maybe 3-4 days. Okay, 3-4 days, he will study only the questionnaire. He will understand what is the practicing unit. Do they have quality control policies? Do they have training methodologies for their staff? So, what are the clients they have? What services they rendered? How much is the turnover of each client? Entire that information will be there. How much fees they charge? How much GST this fellow is paying? I understand all this. Based on that materiality concept, I will apply and select important audit engagement files by this practicing unit. Able to understand the terminology? Yes or no? Then I will come and do review of records. Review of records means how it is done only on site. I have to go there, I have to physically take the records and then review. First I will see how assurance records were maintained. How records were maintained. What is their file room? What is the file numbering system? Now look at the controls, substantive test, financial statements, presentation and disclosure, assurance service conclusion, assurance services report in the 6th point. It's not that important. No, don't worry. Now in case of a practicing unit which is a new unit, no, on-site visit shall be restricted to 1 day only. What he will do within 1 day? Formality sake only. Okay. The reviewer shall thereafter submit a report to the board in the format prescribed by it. Reporting by reviewer. Finally, first no, preliminary report we will make. The peer reviewer, no, he will examine all your systems, no, how you are working, how you are practicing, all that he will evaluate. Okay, the firm is having a good decent infrastructure, the firm is having systems, they are having password protected, there is a server room which is there, for every person can use the system only with the login ID, entire logbook is recorded, entire confidentiality is maintained, persons cannot be allowed, persons are not allowed to access their personal Gmails, persons cannot be allowed to access social media. This is quality control checking, confidentiality checking. Like this, we will do so many evaluations. Simply speaking, audit quality maturity model, I will read that and go and apply there. That itself is best. Peer reviewer will apply what procedures? The procedures given under audit quality maturity model, same procedures peer reviewer will question. Do you have a system of quality control? Like what is system of quality control? See, in firms, no. Suppose you go and check Big Four, no. How to file ITR1, they'll have a 20 pages document. They'll have a guide, manual. We call them as what? Manual, work manuals. That is nothing but documented policies and procedures. This is an SQC requirement. In SQC, you might have seen establish policies and procedures for ensuring quality of services. Yes or no? So, how to file ITR2? They'll have some 30 pages document. How to file ITR6? They'll have a big document. How to verify purchases? They'll have a document checklist. How they prepared all this? They prepared all these based on IFC manual, internal financial control manuals. They use that manuals and prepare checklist for works. Able to understand. That's why you see people coming from above medium-sized firms and Big Four firms, no, when they go and do audit of any company, purchases. Okay, wait, I have a checklist for purchases. I'll open. Is there a separate purchase department? Tick. Is there a separate vendor mechanism? Tick. Is there tenders mechanism? Tick. Like this, they'll have question and answers. That is called questionnaire or checklist. Are you getting it? This is a system of quality control. So whether this kind of checklist is there for you to do audit. Are you getting the point? See, the object behind this is very simple. If you are there, if the checklist is there, whether a senior article is coming and doing or a junior article is coming and doing, a fresher is coming and doing, they will have to verify the things as per the checklist. So I will ensure quality. If I don't have checklist, no, I will ask you, have you verified purchases? You will say yes, sir. What you verified? Amount, match the tick. Getting it? How do I know whether you have checked the vendor approval mechanism? How do I know whether you checked purchase order approval mechanism? How do I know that? So if I have a checklist like this, a system of quality control like this, I can ensure, okay, whoever goes to that audit, they will do as per a particular checklist. So I am convinced, I am having assurance that my audit will be conducted as per quality control policies. This is called quality control policy, quality control manuals. Getting it? Fine. I'm not reading, okay? I'm explaining things to you clearly. Next. So first, no, we will prepare a preliminary report. We will prepare a preliminary report. then I will have to get a response of the practicing unit within 2 working days. First, peer reviewer, after conducting peer review, will prepare a draft report and send to the practicing unit, and the draft report will also be sent to the peer review board. To both of them, because that is the one who appointed me. I am doing review of the practice unit. I need to send to both of them preliminary report. Now the practice unit has to submit their reply within 2 working days. Suppose if the reply is satisfactory, no, I will finalize my report and submit the final report to the peer review board. Once I submit the final report to the peer review board, if everything is satisfactory, peer review board will issue a peer review certificate. And the certificate is valid for 3 years. The certificate is valid for how many years? 3 years. Earlier, no. The certificate is valid for level 1 forms 3 years, level 2 forms 4 years, like that it is there. Now there is no such thing, level 1, level 2. Straight away now the peer review certificate is valid for 3 years. Suppose if unsatisfactory, I will give a qualified report. I will give a qualified report. Then review of report by peer review secretariat. There is something called between peer review board and between peer reviewer. There is a secretariat which is established now. This is purely to assist the board. This is purely to assist the board. This is something, a similar concept to quality review group. In quality review, there is a concept called quality review group. Okay, I'll come back to it. I'll come back to that after finishing this and I'll explain you. Getting it? So there is a peer review secretariat. You submit preliminary report, final report, response of practice unit, all that, right? Okay. The peer review secretariat will just go through all the reports, all the reports furnished to him, furnished to the secretary by the peer reviewer. The secretariat department, secretary will be there. Peer review secretary will be there. That secretary will take a report from you, he will evaluate everything and recommend it to the peer review board. Yes sir, fine sir, everything seems good, you can issue certificate. Able to understand? So peer review secretary is to check procedural formalities of the peer review process. Whether all the procedural formalities were correctly done or not, he will just check the administrative process. Are you getting it? Next. Now finally, issuance of peer review certificate. Okay, so in case of an unqualified report issued by peer reviewer, the secretary shall place the report before the peer review board for consideration and issuance of peer review certificate to the practicing unit, but only after peer reviewer confirms the fees received from practicing unit. So practice unit has to pay the fee for peer review, no? Only after reviewer confirms that yes sir, I received fee, then only certificate will be issued to you. Getting it? This is the one side of income for the members. One income created by, one revenue created by institute. Same way, new units also, peer review certificate shall be issued as per the peer review guidelines for new units also. Suppose if it is a qualified report, no, peer review board will not issue peer review certificate and along with the reasons. So in that case, peer review board will issue a follow-on review guidelines. Will order follow-on review. Now, what is the validity of peer review certificate? 3 years from the date of receipt, receiving the report. New unit, board will decide. For new units, for how long the review certificate is valid, board of peer review board will decide. In MCQ, they may ask, for new units also, peer review certificate is valid for 3 years. Wrong. Getting it? Now, if for any reason, the certificate's validity can be extended. In the COVID time, for almost all the practice units that are there in India, peer review certificate is extended for 1 to 2 years. In the COVID time, because peer review processes was not conducted, because lockdown was during April, May, June. Getting it? So, this is the process of peer review. Are you clear? All of you? Now, let's look at next. So, next one, What are the practicing units that are liable for peer review? First of all, how many ways peer review is applicable? One is mandatory, another voluntary, another a special case where disciplinary director referred, getting it to the peer review board. So it's a practicing unit. We are somewhat doubtful about their efforts. Peer review board, can you please initiate peer review on them? That is called special case peer review. And mandatory peer review. Mandatory peer review is as per the peer review mandate. Voluntary means for only voluntarily applied. Example, new units. Getting it? Now, peer review mandate has been issued. Peer review mandate has been issued. As per the mandate, if you want to accept audit of listed entity, with effect from 1st April 2022, you must have a peer review certificate. With effect from 1st April 2022, if you want to do audit of listed entity or an entity which is in the process of listing, nothing but listed entity, proposed listed entity or listed entity, you must have peer review certificate in hand. Otherwise, your firm is disqualified for becoming an auditor of the listed entity. So, whenever I say mandate, no, this mandate is applicable in 5 phases. This mandate is applicable in 5 phases. You see, 4 phases. 4 phases. This mandate is applicable in 4 phases. As per the 4th phase, no, which is applicable from 2025, 1st April 2025. As you know, with effect from 1st April 2025, if your firm is having 3 or more partners, you must have a peer review certificate. It's mandatory now. In such a case, only if you can accept audit of a PSU, public sector bank, audit of a PSU bank, audit of a public sector bank, that is not central audit, only branch audit. If at all you want to accept branch audit of a public sector bank with effect from 1st April 2025 and your firm is having 3 or more partners, peer review certificate is mandatory. Nothing but peer review is mandatory. Are you getting the point? Now, phase 3, with effect from 2024, if your firm is having 4 partners or more than 4 partners, you must have peer review certificate. You must have peer review certificate. Or if you want to conduct statutory audit of entity which has raised funds from public or banks or financial institution for over 50 crore or from any body corporate including trust which are covered under public interest entities. If you want to do stat audit of an entity which has raised funds from public more than 50 crore, or you are treated as a public interest entity, you want to do audit of an entity which is a public interest entity, we call them as PIEs. You want to do audit of public interest entity, or you want to do audit of an entity which you borrowed for more than 50 crores from banks, FIs and general public. If you want to do audit of them with effect from 1st April 2024, you must need peer review certificate. That is one criteria. Another criteria, even if you have 4 or more partners also, you must have certificate. Very simple. Let me be even more simple. Phase 3 will apply from which year? 1st April 2024. Now, which firms will fall under phase 3? 2 criteria they give. Under phase 3, they give 2 criteria. Under phase 4 also 2 criteria. Even under phase 2 also 2 criteria. Only in phase 1, 1 criteria. Getting the point? Phase 2, phase 3, phase 4. Which firms are liable for peer review? In each of the phase, they give 2 criteria. One criteria is based on what you are auditing. Another criteria is based on how many partners you have. If you fulfill any criteria, you fall under that phase. Getting the point? Example, you see phase 3. Suppose you see phase 4. Suppose I am doing branch audit of a public sector bank. I will fall under phase 4 because of the criteria 1. No, I am not having bank audits, but my firm is having 3 or more than 3 partners. Then also I will fall under phase number 4. If I fall under phase number 4 because of any of these criteria or both the criteria, whatever, I must have a peer review certificate because I fall under phase number 4. With effect from which date I must have peer review certificate? 1st April 2015. Suppose, what if I do not have peer review certificate? What is the consequence? I cannot do branch audit of PSU, public sector bank. I cannot do bank audit of public sector bank. I cannot do public sector bank audit. Getting the point? Because if you fall under phase 4, it's a prerequisite. What is it? It's a prerequisite for you to have peer review certificate in order to accept PSU audit, PSU bank audit. Branch, that too branch audit only, not central audit. Central audit means most of the banks are listed. Listed means they come under phase number 1. Are you clear? Same way, phase number 3 has given 2 criteria. If at all you are doing statutory audit of an entity, if at all your firm is doing stat audit for an entity, that entity has a borrowings from banks, FIs, public for more than 50 crore, or you are doing audit of an entity which is a trust or which is an entity which is a public interest entity, then you fall under phase 3. Sir, I am not doing any of these kinds of audit. I don't have any client who is having more than 50 crore borrowing. I don't have any client who is a public interest entity. Okay, tell me, do you have 4 or more partners? Yes, sir. Then you fall under phase 3. Are you getting the point? Then you fall under phase 3. Okay, what a big deal. If at all you fall under phase 3, if you want to accept any entity audit whose borrowings are more than 50 crore, you must have peer review certificate. Without that, with effect from 1st April 2024 on until they see, right now you may have a client who is having 100 crore borrowing. You do not have peer review certificate. Now there is no problem. But with effect from 1st April 2024, if you want to continue with this client again, get a peer review certificate by 1/4/2024. Otherwise, you have to withdraw here. If you don't withdraw, what happens? Non-compliance with GAAP. Schedule 2, Part 1, Clause number 9 offense. Getting the point? Next, phase 2. What is phase 2? Are you doing an unlisted public company audit? Which unlisted public company whose paid up capital is minimum 500 crore or turnover is 1000 crore or loans, deposits, outstanding, everything is minimum 500 crore? If yes, then you fall under phase 2. Sir, suppose I don't have a public limited client at all. Do you have 5 or more partners? Yes, I have 5 or more partners. Then you fall under phase 2. No, I have only 4 partners. Then you fall under phase 3. I have only 3 partners. You fall under phase 4. Able to understand? Don't mug up. If you read that later, you will understand better. Getting it? Now, suppose if you fall under phase 2, no. Within a week, 1st April is starting. Another 3-4 days, we are going to start with the next financial year. 1st April 2023 onwards, if I want to accept any PSU audit, public entity audit, public company audit, not PSU, public company audit, public limited company audit, whose borrowings were exceeding 500 crores or turnover is 1000 crore or capital is 500 crore, I cannot accept if I don't have peer review certificate with effect from 1st April 2023. Clear? Now phase 1, listed entities. If you want to do audit of listed entity, peer review certificate is mandatory as per peer review mandate with effect from 1st April 2022. But this requirement was there in the SEBI guidelines in 2009-10 itself. If any practicing unit want to accept listed company audit, they must have a peer review certificate. This is SEBI regulation which was there in 2009-10 itself. Are you clear? Got an idea? That's it. So this is about applicability of peer review. For all the above cases, it's a prerequisite of having peer review certificate before accepting any statutory audit falling under that phase. Getting it? Now peer review period means what? 3 financial years preceding the year in which practicing unit is selected. So for how many years we do peer review? We selected in 23-24 year. Suppose today I got peer review notification from the institute for my firm. Exclude this year. Last 3 years were there, no? 21-22, 20-21, 19-20. All the 3 years will be selected for peer review coverage. The reviewer will come, no? Whatever the audits I signed in the last 3 years, any audit he can select. Any number of files he can select. But for him, 6 days only time available for on-site visit. Able to understand? That's all. This clarification is not required. Now you see here, eligibility of a peer reviewer. Just eligibility point if we discuss, we can close this topic. Eligibility of a peer reviewer. Just 1 minute, 2 minutes gap, okay? How many of you have gone through peer review chapter earlier? Almost, right? So that you are able to connect. Yes, shall we write about eligibility of a peer reviewer? In order to become a reviewer, what should be the eligibility? See, you are going to review a practicing audit firm, how they are doing audit, which means you must know how to do audit. Correct? Which means what is required is, for you hands-on experience is required. So that is what is reflected here. You must be a member in practice with at least 7 years of, they substituted the word here, assurance practice experience. What is it? Assurance practice experience. Instead of using the word audit experience, they use the word assurance practice experience. This is the only amendment in this question. If you are in practice, you are a member in practice having at least 7 years. In the past 7 years you are in practice, then you can empanel yourself on the institute website. In the peer review board panel of reviewers, you will be conducted an exam. You will be given training how to do review, all that. Then only you will be empaneled onto the final reviewer list. Getting it? Suppose, sir, I am a member. No, I am a member of the institute. Earlier I worked in industry. I am not having COP. Now I am having COP. Are you getting it? So, and you are now currently in practice. Then you must be working in the industry in the past 10 years. Plus already 3 years of audit practice is also completed. Which means you must be having 13 years experience. You must have qualified at least 13 years before. When, if at all you are not in practice from the beginning of the career. So if at all you are not in practice from the beginning of the career, now I turned into a practicing, and now I turned into practice. Now can I become a reviewer, or for me also 7 years I should wait? Getting it? No. If at all you worked in the industry for the past 10 years, now you started practice, 3 years already completed, enough. You are eligible for reviewer. Are you getting the point? All of you. Next. And you must undergo training, and you must clear the peer review test conducted by peer review board. That's it. And you have to give declarations, all that. Disqualifications of a peer reviewer. This is also important for 4 marks question. Getting it? You are disqualified to do audit of the practicing unit where you did articles. Getting it? So you cannot go and do peer review of the firm where you did articles. Then, or if the, like, a member shall not be eligible for a reviewer if any disciplinary action is pending against him, or you are guilty of professional or other misconduct by the council at any time. Once you were treated as guilty, forever you are boycotted from peer review. Whereas in quality review, 3 or 4 years only the limit was there. Getting it? Suppose instead of taken disciplinary action, once disciplinary action is completed, you can again become a technical reviewer in the quality review board. Okay, anyhow, I'll come back to that later. Or you are convicted by a court for an offense involving moral turpitude, and you are punished with imprisonment. Then also you are disqualified from becoming a reviewer. You or your partners or your personnel has a conflict of interest in the practicing unit. So some practicing unit selected your name, no, but you are having conflict of interest. Family relationship is there, or some other relationship is there. Then also you are disqualified. Now you may get a doubt, sir, what if the reviewer did not disclose this? If you submit a false information to the institute, professional ethics, part 2, guilty, yes or no? That's it. Now next there is one more thing. Once you are appointed as a reviewer for a practicing unit, we see 2 conditions. Before you accept appointment, tell me, do you know this practicing unit in the past 2 years? I know. If you know, that's fine. Have you associated with them in the past 2 years with any respect, any work? Have you associated on any work with them? No, I don't have any work association with them in the past 2 years. Fine. After completing review, don't associate with them for the next 2 years also. So before doing the review 2 years, no association should be there. After completing the review, next 2 years, association should not be there. Are you getting the point? Understood? Suppose one firm outsourced me one work in the last 2 years. Coincidentally, to the same firm I am appointed as a reviewer. Since in the last 2 years, their work one is outsourced to me, right? Which means we had an active association in the past 2 years with respect to some work. Getting it? I am disqualified to do audit of that firm. Once I am disqualified to do peer review of that firm. Once I completed the peer review, next 2 years also I should not take any work from that firm. Able to understand. Right, firms can outsource works to another firms. That's it. Next, now, can the reviewer take help of a qualified, can the reviewer take along with him assistants? Yes, you can take only one assistant who should also be a chartered accountant, and who must be either your partner or your employee. But he must be CA, and he must be associated with your firm as per the records of the institute. Able to understand. All of you. So that's it. Peer review major topic is covered. Major almost main gist of amendment is covered, and also eligibility of a peer review topic is covered. Important questions were covered. Are you confident? Scope of peer review is important. Peer review process we covered. Peer review certificate we covered. Validity point we covered. Eligibility we covered. Applicability of the peer review for the practicing units we have covered. Clear, all of you? Amended part understood, right? That's it. Next we have quality review. Can I proceed? Yeah, I'll give a brief introduction to the quality review, and we'll do a comparison with peer review. Exactly one more point in peer review I didn't cover, but because we want to discuss it as a comparison. What is the objective of the institute for conducting peer review? Very simple. The institute want to know how many of the members are complying with technical, professional, ethical and quality control practices while rendering assurance services. They want to know, first point. 2, if they identify any lapses, they want to recommend, they want to they want to encourage the members so that they will do services in a much more better way. Through mandate, institute is restricting the members not to accept audit of certain entities if they don't have peer review certificates, so that institute will not get a bad name. Able to understand? So that is the main objective. It is not to punish any member. You see, in peer review we don't see anywhere punishment point. There is no disciplinary action. But remember, if peer review board finds if any of the practicing unit affairs were so bad, they can refer to disciplinary directorate. They cannot directly punish. Quality review board also don't have punishment power. But the purpose of quality review is find fault. The purpose of quality review, it's a quality review. How are you doing audit? It's an audit quality review. We call it as what? Audit quality review. Getting it? The primary objective of quality review board is to find out how the members of the institute are discharging their statutory functions. How the members of the institute are discharging their statutory functions. This is a primary objective of quality review board. Able to understand? And if at all, if they find any fault, it is not to explain them what is the importance of standards, what is the importance of certain. It's not to explain them or encourage them. It is to find the fault. You did audit of so-and-so entity. I want to see the audit quality. If you fail to comply with the quality, straight away my objective is what? Refer to disciplinary directorate. But peer review board, their objective is not to refer to disciplinary directorate. Their objective is to encourage members so as to comply with all the standards. Able to understand? That's a basic difference between peer review and quality review. Are you clear? Now in quality review, we have various things. Like who are the parties involved in quality review? So there is a quality review board, and there is a audit firm under review, and the quality review is conducted by technical reviewer. We call him as what? Technical reviewer. And there is another thing called quality review group. Now, what is this quality review board? It's a board constituted by an act of parliament, because of the powers given by the ICA Act, CA Act. It's a separate body. It's not part of ICA. Quality review board is a separate body. In that 50% of the members of the quality review board were council members of the ICA. These people, quality review board major members were nominated by whom? Council of the ICA. ICA has 40 council members. No, they will only select quality review board 50% members. Remaining 50% will be notified by Government of India. So this is the composition of the quality. Actually, they will say quality review board will have some 10 or 11 members. They will say 5 members will be nominated from ICA, 5 members will be nominated by government. Like that, there is a rule. Now, what are the companies that are covered under quality review board purview? What are the companies that are covered under quality review board purview? Until 2019 January, almost all the companies in India, listed, unlisted, everything is covered in quality review board purview, which means you are a CA practicing, you have done a listed company audit, that audit is also, that audit quality review can be conducted by quality review board. And later 2019 onwards, NFRA has got that power. Who has got that power? NFRA has got that power. Even in NFRA, 11 members were there, but only one person is representing from the institute, that is president. In NFRA board, only one person is there from the ICA, that is president. And that's why when NFRA was implemented, getting it, certain companies audit quality review can only be performed by NFRA with effect from 2019. What companies? Listed entities, banking companies, insurance companies, like that. Material subsidiaries of these companies, and public companies having more than 500 crore, 1000 crore, that criteria. These companies, audit quality can be conducted by, quality of audit can be reviewed not by quality review board, but can only be done by NFRA with effect from 2019 January, February onwards. Which means right now, what are the companies whose audit quality can be reviewed by quality review board other than those companies which are in the purview of NFRA list? Other than those companies, remaining companies audit quality review can be conducted by quality review board. Are you getting the point? Now let's look at that list once, then we will discuss further. Now, selection of audit firms. You see, page number 175 in smart notes. Yes. NFRA will have the power to monitor and enforce compliance with accounting standards and auditing standards, oversee the quality of service, undertake investigation of the auditors for the following class of companies. Which means NFRA only can take the audit quality review of the following class of companies, which means quality review board has lost the power for these companies. If at all quality review board is there, CA Institute only predominantly dominating the board, so they are happy. The moment it was changed over to NFRA, they were not feeling good. Getting it? That's why in 2019-20 and all, so many issues happened between CA Institute and MCA and with the NFRA, all that. Now finally Institute kept quiet. Okay, next. Companies whose securities are listed on stock exchange, for all these companies, quality review can be performed only by NFRA, not quality review board. Securities of unlisted companies, but paid up capital is 500 crore, turnover is minimum 1000 crore, outstanding loans is minimum 500 crore. In these unlisted public companies, audit quality review can also be conducted only by NFRA. And insurance companies, banking companies, electricity companies, which are governed by any special act, body corporates, all these audit qualities review can also be conducted only by NFRA. And central government, if at all any reference made with respect to any body corporate, then also NFRA will involve. Even NFRA involved, the quality review board has to step out. Next, and subsidiary company, associate company of the above companies. Which subsidiary, which associate? Material subsidiary, whose a subsidiary company of the above companies whose consolidated income exceeds 20% of the total consolidated income, or whose net worth exceeds 20% of the consolidated net worth, then we call that as a material subsidiary or material associate. This material subsidiary, material associate audit quality review can also be performed by NFRA, not quality review board. Clear or not? Now sir, with respect to these companies, literally quality review board have no access? Yes, no access, unless NFRA requests them to do. If NFRA is only coming and asking quality review board, hey dear quality review board, this is a listed company, you do quality review, I'm already occupied fully, then quality review board can do. Otherwise, can quality review board initiate quality review of these companies listed under above? No. This is one important provision. Are you clear? Now next, what is the quality review? How quality review board selects the client, how the quality review board selects the companies? Risk-based selection, or on account of risk, susceptible to risk of fraud, or there may be a case of reported fraud, or there may be serious irregularity in financial statements, accounting, It's actually E point. Is actually E point, or there is a major non-compliance under relevant statute. Because of these reasons, quality review board may undertake audit quality review. This is one reason. Criteria based selection, getting risk based selection, we call it as what? Risk based. Suppose when I select one company, one particular firm for audit quality, all the joint auditors may be reviewed, or any one of the joint auditor only may be reviewed. Suppose NFRA is selecting SBI for quality review. SBI is having 12 joint auditors. NFRA may do review of all the 12 joint auditors, or may do only 2 joint auditors review. Same way quality review board also. Able to understand. Next. Or quality review board may select audit firms on suo motu, on its own. Getting it? Or it may be based upon audit firms. Maybe quality review board will bring from the institute, will take from the institute list of audit firms on a random sampling. They will select a quality review. This is one criteria. First criteria, risk based approach. Second criteria, audit firm sampling approach. Third one, or I may select audit firms based on cycle, review cycle. Review cycle means what? For a firm is having 20 or more partners, quality review will be conducted once in 3 years. Or if a firm is having 10 to 20 partners, once in 4 years. For remaining firms, once in 5 years. The quality review board may follow this cycle approach also. But in reality, quality review board is following risk-based approach. What is the approach they are following? Risk-based approach. This is quality review board annual report for 21-22. This is quality review board annual report for 21-22. 22-23 is not yet released. Getting it? This is 21-22 quality review board. And you see here how the quality review board have selected the audit firms. Here they have seen our approach, our expectation. Yeah, how we select the firms. How they select the audit firms. This is a quality review report, quality review board annual report downloaded from the quality review board official website. Getting it? You just type in Google quality review board ICA. You'll get a link. Inside that you can download this. Okay, so QRB has adopted risk-based approach for selection of audit engagements. So quality review cycle once in 3 years, 4 years, 5 years, that is not followed. Are you getting the point? So in practicality, they are following this approach. Any approach they can follow. One is risk-based approach, another one sampling approach, another one cycle approach. Cycle approach means 3 years, 4 years, 5 years, that logic. But in reality, what they followed? Once in, risk-based approach. Risk-based approach means what? What is risk-based approach? Here we have seen, no? Here, regulatory concerns susceptible to risk, reported fraud, serious accounting irregularity, major non-compliances. Same points we have seen in the book. Yes or no? You see here, same points we have seen in the book. So, exactly. Next. Now you see, quality review board report, if you observe, what they identified, summary they are giving. They have given a summary of findings. You see, this is the summary of the findings of the quality review board. Now, during the 21-22 financial year, the audit firms, number of firms reviewed by quality review board were how many? 22. And how many entities they covered? 23. Means one firm, from one particular firm, 2 audit companies were selected. You know it. Like in quality review, you have studied. From a particular firm, not more than 1 file should be selected. Have you? How many number of engagements a quality review board can select? It can select per engagement partner 1 file. If at all in past any lapses were identified, maximum 3. So here for one firm, 1 file only selected. Maybe for one particular entity, 1 extra has been selected. So one listed entity, one public interest entity, 21 private companies. So one listed entity might have been referred by NFRA or somebody specifically. Now totally how many files were reviewed? 24 files. So though there are 23 companies, 24 files means for one financial year, for one company, 2 years related files they might have verified, or 2 joint auditors files they might have verified. And how many they referred? ICI. How many ultimately referred to council of the ICI? 0. For where audit firms, where advisories are issued, 22 cases advisories were issued. How many were closed? 2. Now, do you have a question in quality review? What actions quality review board can take? The quality review board, after conducting audit quality, they can take any of the following. If everything is satisfactory, they will close the case. Or they may issue advisory to the firm. Or they may refer the matter to the council of the ICI. This is the answer. That is what they did here. Able to understand. Next. Where they find observations. Percentage of the firms having observations on standards on auditing. How many? 18% of the audit firms failed to comply SQC1. Out of 22, almost 20% means 4 firms. 4 firms SQC1 not complied. 9% of the firms, nothing but 2 firms, SA 220 they didn't comply. So and so firms have not complied 250. Like each stat advice, whatever non-compliances they found, they mentioned. Same way, they did audit of companies also, no. They did audit of companies also, no. Accounting standards, which companies there is a non-compliance in accounting standards, they mentioned. Which companies there is a non-compliance with NDIS, percentage of companies having non-compliance with NDIS, they mentioned. Able to understand. So they give like what is exactly now SQC1, what is the main point quality review board is focusing, they have given here. So you can understand in practicality what happens in quality review from this document. Next. So we understood quality review cycle also. Okay. Now we need to understand the quality review process. Straight away I'll go with quality review process. One more thing, functions of quality review board, which is an important question. Functions of quality review board, which is an important question. You know, in May 22 exams, there is a question which is asked. People will be shocked. Nobody will read this question. Powers of quality review board. There is a question called powers of quality review board. Where is that? 176. They asked in May 22, call for information 4 marks. That to which point you know? They asked the C point as a 4 marks question. Okay, they gave a situation. Quality review board has asked for one company some information. The company has not furnished. Getting it? In such a case, what is the procedure? The quality review board can directly collect that information about the company from MCA. Getting it? If the board of directors of the company do not respond for an information called by quality review board, quality review board has a power to call information from the audit firm, or they have the power to call directly from the company whose audit firm has been selected for quality review. They can ask from the company. Board of directors must give that information. You need to write these 2 points mainly. Are you getting it? Or you can write entire call for information. You need to write the quality review board has the power to call for information. Like this you have to write and highlight the C point mainly. In the given case, since the board of directors of the company have not responded, the quality review board can get the information from the Ministry of Corporate Affairs. Are you getting it? This question was asked for 4 marks in the May 22 exams. Are you clear? Next. Just a minute. Like now until here we have selected how many number of engagements we can select for quality review. How many engagements? Suppose I selected one firm. How many files of that firm I can select? Maximum 3 audit engagements. For a particular audit firm, how many files they audited by them? I can select only 3. Remember, only statutory audit of companies are covered within the scope of quality review board right now. Actually, they can do all assurance. But right now, quality review board is restricting themselves to only company statutory audits. That to which company stat audits? Those companies which are not falling under NFRA purview. Getting it? Next. Suppose, if at all there are no findings in past from the same firm, when we did in past also quality review, nothing is found, everything is good. In such a case, only one audit engagement we can take for the same partner or proprietor. Maximum how many you can take? One file of the same partner can be selected for review. Suppose in case of any adverse findings in the past, quality review board may do quality review of more than 3 engagements, or may visit the firm more frequently for quality review without ignoring review cycle, all that. Are you clear? All of you. That's it. Now quality review process, all that will be continuing in the next class. Are you confident? Almost within 1.5 hours, peer review amendments and peer review main gist of the main concept and quality review main concepts we have covered. Now we are still left with the quality review process, technical review or disqualifications. Important question, what is quality review group? That discussion we need to do. If it is done, we are done with this chapter. Okay, the next one we will be starting NBFC audit, which is also having amendments. Fine, everyone? That's it. Okay, take care. So in the previous session, we have discussed the overview about quality review. Now we need to discuss certain aspects in quality review. That is, if we cover quality review process, I think most of the content is covered. So first of all, the entire process of quality review, the main quality review will be conducted by a technical reviewer empaneled on the quality review board. So in the quality review, how qualitatively the review should be conducted? It is completely in the hands of the reviewer. And there is another thing called quality review group. Like, this aspect is something which many don't understand in this chapter. Like, what is quality review group? It's a mediation. Quality review group is a mediator between technical reviewer and quality review board. These technical reviewers, for an audit firm under review, the technical reviewers were appointed directly by quality review board. Getting it? Now, after doing the quality review, the technical reviewer has to present his preliminary report. Then he will also submit the preliminary report to quality review board. And he will also give the report to the practicing unit, nothing but the audit firm. Now, the quality review board, what they will be doing is, instead of reading the report directly by them, they will give that report to quality review groups. These groups are two types: industry specific group, general groups. Like normal, a manufacturing trading company means normal GAAP principles only will apply. But as I told, atomic energy companies, defense companies, if at all you do audit of these entities where specialized skill set is required, then industry specific review groups will be there. These review groups will be headed by people coming from various industries, worked in various industries, finance departments especially. So this quality review group evaluates the reports submitted by technical reviewer. Whatever the preliminary report you give, right, that is evaluated by quality review groups. Not every report can be evaluated by board directly. It is similar to committee's concept in Companies Act. In Companies Act, we have board of directors, we have audit committee, risk management committee, like that. Generally, you might have seen in LODR regulations, for specific things, we directly go to the concerned committee, not to the board every time. Correct? Most of the affairs of the company were handled by the committees, respective committees for whom the duty has been delegated. Exactly the review group. So review group is like acting as a medium between technical reviewer and the board. And one more thing, technical reviewer can communicate with the board members or can with the review group members. They can communicate with both. But quality review board, the ultimate authority, getting it, what decision they should take in respect of quality review of one audit firm, what action we should take, who will recommend them? Review group will recommend them. Who will recommend? Review group will recommend them. Sometimes this quality review group will also prepare their own report, quality review group report. We call it as what? Quality review group report, especially in case of PSU audits. In case of PSU audits, for some cases, they prepare a special report. Like their technical reviewer has already done quality review of the audit of PSU. Audit firm he reviewed. Preliminary report is submitted. On that preliminary report, the firm has gave reply. Based on that, he submitted final report. On the final report, firm has sent again response. On the response of the firm, technical reviewer has to give his comments. Totally, how many will be there in the form of reports? 5. One is, first I'll do quality review. I'll review all the audit documentation, your firm policies, everything. Getting it? One point where that differentiates, one more important significant point that differentiates between peer review and quality review is, in peer review, we just see, have you used a particular standard or not? But in quality review, we also evaluate the judgment of the auditor. Example, suppose the auditor has used SA 705 standard and have given a qualified opinion in respect of a particular company. In a peer review, okay, while giving a qualified opinion, what factors he take into account? Like in the sense, standard related guidelines we look at. We don't question why not adverse, why qualified. This kind of questioning process will not be there in peer review. That's what you might have seen the sentence. Peer reviewer will not sit on the judgment of the audit firm, practicing unit. Whereas in quality review, we evaluate that also. The main differentiating factor is, in this scenario, you must give adverse opinion. Why you have given a qualified opinion? We question his judgmental skills as well. Able to understand. Here, not just to see compliance with technical, professional, ethical standards. In quality review also, we see compliance with technical, professional, ethical standards. Along with that, what kind of decision making you are taking? How is it apt or not? Just that you followed some audit procedure doesn't mean you are satisfying it. You need to follow in substance. You need to follow it in intention. Your decision making should be correct. We evaluate from quality point of view. Understand? So that is one more differentiating factor between peer review and quality review. And next, coming to the PSUs. No, there is a one question. Write about quality review group in case of PSU audits, like something, or write about quality review group report. There is a question which 99% don't understand. In PSU audits, many PSU audits related quality review we will be doing, and their reports technical reviewer will be submitting. Correct? Technical reviewer, what he will submit? He will submit preliminary report. On that, the audit firm will give reply. Based on this reply, he will prepare final report and submit. On this final report also, audit firm has to give some explanations. On the explanations and replies by audit firm, what is your comment? You need to submit. So totally 5 things that you will submit to the quality review board as a process of quality review. Able to understand? Now, on all these things, review group will evaluate on a case-to-case basis, and sometimes they prepare a separate report in respect of a PSU or in respect of a PSU, and that report will be submitted to C&AG also. That report will be submitted to C&AG also. Like, it is not on every PSU quality review. Suppose quality review board has conducted 15 PSU audits quality review in a particular year. Maybe the review group might have taken 2 PSU audits, and on that they will study completely and they prepare their own report. In such a case, what are the reports were there in respect of that PSU audit? Technical review preliminary report is there, final report is there, responses on the preliminary report and final report given by the audit firm is there, and quality review group report is also there. All these will be submitted to whom? C&AG. Now what about remaining 13 PSUs where we did quality review? No need. There we just submit to the board what recommendation, what action they need to take. So quality review group will recommend to the board what action they need to take ultimately in respect of quality review, whether it is PSU or non-PSU, whatever. What kind of actions the QRG can recommend? A question is there. What are the actions the QRG can recommend to quality review board? There is a question specifically on that. QRG can recommend to the board the following actions. 1. Issue advisories to the audit firm. 2. Refer the cases to the disciplinary committee. 3. Close the case. After giving it advisories, whatever. That's it. So what are the actions that can be taken by QRB? That is also answer is same. What action that can be recommended by the group to the board? The answer is same. What action board can take on the practicing unit, audit firm? The answer is same. Are you getting the point? Now, so that is regarding the board's concept. That is regarding quality review, group's concept. Now, technical reviewer. Who will become a technical reviewer? In peer review, we have seen he must be having 7 years audit assurance practice experience, and currently in practice must be. Only he can be empaneled onto the peer review board as a peer reviewer, getting it in the peer review authority, and provided he qualifies certain test, all that. Same way here, quality review also he will have to undergo certain test, all the training, everything will be there. But before going with training, all that, what is the eligibility criteria? The eligibility is minimum 15 years post-qualification experience. What is it? Minimum 15 years post-qualification experience, and must be active in practice of accounting and auditing as on the date of filing the application. Next. Moreover, just because you are having practicing certificate is not sufficient. You must be involved in actual audits. You must act as an engagement partner, signing partner. The reviewer should have handled as a signing partner for at least 3 stat audit assignments. For at least 3 stat audit assignments, you must be acting as signing partner. Like what are the stat audit assignments? Central stat audit. Okay, central stat audit, public limited companies audit, government companies audit, or private limited companies having annual turnover of 50 crore and above. Private limited companies having annual turnover of 50 crore and above during the last 10 financial years. During the last 10 financial years. Now here, no, there is a mixed judgment. Getting the point? No clarity in the implementation guide also. Okay. Now here, what are they saying? Private company having annual turnover during last 10 years. Should we consider for the private companies? Or you must be having these 3 companies we are saying, right? You must be having 15 years experience, right? 15 years assurance, audit pack. I mean, you must be having 15 years post qualification experience. They use the word post qualification experience. Once I qualify, suppose I'm having 8 years experience, post qualification experience. Getting it? Like after you qualify, how many years pass by? That is post qualification experience. Able to understand? Now, you must be acting as a central stat auditor of a bank, or principal auditor for public limited company, or principal auditor for government company, or private limited companies having annual turnover 50 crore and above during the last 10 years. Means in every year 3 signings must be done. This is one reasonable interpretation we can take. One reasonable interpretation that we can take. But in my regular class, I explained very clearly that this private limited company means in the last 10 years, it must be having 10 crore, 50 crore and above. Why? Because banks, public limited company, government company, to all of them anyhow you will be doing audits. Anyhow for them turnover will be more than specified limits, obviously. Moreover, in the last 10 years, you must be doing audit of these entities. Private limited company, more than 50 crore turnover, should it be there for the last 10 years or any one time should be there? No clarification. And should I do all the 3 signatures every year in the last 10 years? No clarification. Are you getting the point? So in exam also, you also write without any clarification like this. Whatever they wrote, you just mention that. So you must be acting as a central stat auditor of bank or public limited, government company, private company having turnover more than 50 crore during the last 10 years. That's it. Last 10 years for all the companies are private company have to watch exactly that. No, don't need to discuss that further because it is silent. Let us we also be silent. Are you getting it? Next, provided out of the aforesaid 3 audits, any of these 3 they said no. They gave a list of the companies and any of these 3 said they said right. Now suppose all the 3 private entities only have. All the 3 I'm having only private company audits. Then you are disqualified again. Like what they say is, at least one must be other than private limited company. At least one signing part, you must be signing at least one company other than private limited company. Other than private limited company. Like one reasonable interpretation is, every year I can take. Every year you must be signing 3 audits. Why I meant every year is, in the entire 10 years 3 signatures means how poor it is. Where is audit experience for you? Are you getting the point? So one reasonable interpretation we can take like this. Are you getting it? But it is not clear. It is not exactly clear. Now anyhow, now out of the 3 signs of any of these companies, one must be other than private company, which means one at least should be a public limited company or government company or bank. Remaining 2 can be private companies in every year. Are you getting the point? That's it. Further, you should not be having any disciplinary action taken against you or pending against you during the last 3 financial years. Are you getting it? In the last 3 financial years, you must not be having any pending, cases or actions, or thereafter. Thereafter means even in the right now, at this moment also, there should not be any pending proceeding against you. Further, you should not be a member of quality review board or central council, regional council, branch level management committee. If at all you are participating in the ICI management committees anywhere, right from the branch level till the regional level, anywhere if you participate, getting it, you are disqualified to become a technical reviewer. Further, suppose you just qualified for all the criterias. You made an application. That doesn't mean board will accept it. It is ultimate authority is the board. The board may accept your application or may reject application without giving any reason also. So that is absolutely their choice. Next. Now, once you empaneled as a technical reviewer, how long your empanelment is valid? Here, 3 years. Actually, It is not 3 years from the date of enrollment. 3 years in a block. It's actually a block system, block period system. Suppose right now let us assume 2021 to 2024 block is going on. Example. Today I enrolled as a technical reviewer into the quality review board. Today I enrolled. Now my enrollment will be expired by 2024. Why? Because the block is over. Getting it? So that's what they say. So subject, the empanelment shall be for the ongoing block period of 3 years. Suppose if at all you are in the last 6 months of that ongoing block of 3 years, for you empanelment is only for 6 months. Again you have to apply for, you have to renew it. Then training, declarations, renewal, all that. Next. Now what are the stages involved in quality review? So the board will select the audit firm and the audit file. Audit firm means, let us assume ABC and Co. Audit file means XYZ Limited audit for the financial year 21-22. This is the stat audit which they signed. Getting it? For review and identifies Mr. P, technical reviewer, to conduct the quality review of this audit firm for this client, for which they performed statutory audit. Are you getting it? Next. Now immediately they will send an offer letter to technical reviewer. Technical reviewer will give acceptance letter and send all the necessary declarations. Getting it? Then the board will intimate audit firm about the proposed review and sends a copy of intimation letter to the audit firm to the technical reviewer. Technical reviewer sends the specified questionnaire to the audit firm. See, he didn't visit yet. First, I want to know what is audit firm is doing, who are the clients they have, all that. Getting it? So I will send a questionnaire to the audit firm. They will have to fill a questionnaire. Just like in peer review, we call it as application cum questionnaire. Once peer review notify the firm, they will send an application cum questionnaire. Firm has to fill it and then send back. Same way, when a firm voluntarily applied, peer review board will send an application cum questionnaire. They have to fill it and send back. Same way here also, the technical reviewer will send a questionnaire to the audit firm. Getting it? How the questionnaire looks, all that in my regular class I used to show. Okay, because we have a technical guide on quality review, technical guide on peer review, all that we used to see. Getting it? But here it's not required. You just need an exposure. That's it. Now, carrying out the review. So finally, technical review and his team will carry out the review by starting their off-site review. First, from the off-site means without visiting the audit firm, they will do. Remember, in peer review you have 20 working days time. Here there is no such time. Able to understand? Here there is no such time bound, because here it is done by a statutory body separately constituted. It is not done by ICI just for formality sake. Are you getting it? It's a real body. It's a real body and the intention is very much real. Next. That's why audit firms also, they don't care much when peer reviewer is coming. When a quality review, technical reviewer is coming, they take care of so many things. Because obviously quality review is far superior than audit, peer review. Peer review we are just doing for the namesake, formality. I have seen peer reviews. You have seen, right? Any of you have seen peer review process ever? 2 days only they'll come, hardly. The 2 days also they'll come, have lunch, tea, coffee, enjoy, chit chat and leave. Nothing they'll do. Getting it? Next. On completion of on-site review, technical reviewer sends a preliminary report to the audit firm. Then after that, audit firm will submit a reply on the preliminary report. Based on that, final report will be prepared, and that final report will be forwarded to the quality review board, and also be forwarded to audit firm. On that final report, firm has to reply, within 7 days. Audit firm shall also send a copy of their final reply to technical reviewer. Feedback. Now this is one additional thing which is there. Of course in peer review also it is there. Okay, here from the audit firm, we will take how the technical reviewer is doing quality review. Is he using any abusive language? Is he working properly? Getting it? Is he disciplined, professional? Getting it? How courtesy is maintained? All that we will be taking feedback from the from the audit firm about the technical review. Same way about the peer review, from the audit firm we will take feedback. Next. Once you get the final reply from audit firm, technical reviewer shall submit to the quality review board within 7 days a summary of his findings. Then the QRG will consider the report of the technical reviewer. What QRG will consider? They will consider preliminary report, reply by the practice unit, final report, reply by the practicing unit, comments of the technical reviewer on the final reply. So if at all QRG wants any additional information, they will call that additional information either from the technical reviewer or from the audit firm, or even from the company also you can get. Even from the company whose financial statements audit process is subjected to quality review. Even from that company also he can ask. Finally, based on the recommendations given by QRG, QRB will finalize. This is the main total process of quality review. Now, who will be part of the review team? Generally, only the technical reviewer will go, but if at all he want any assistance, he can take maximum 5 qualified assistants. In peer review, you can take only 1, whereas here maximum 5. But the qualifications are same. Qualified assistants. They must be qualified. Next, independence of the technical review. Now you see, we have seen, in order to get eligibility on the board, in order to get eligibility of a technical review, if I have to become a technical review, there is a qualification, disqualification we have seen. 15 years experience, no disciplinary action against me in the past 3 years, like that. That is for me to become a technical reviewer. Fine. Now I became a technical review. There is an ABC & Co Chartered Accountants audit firm which is practicing somewhere in Hyderabad, and that firm is selected for quality review by the quality review board. Can I be appointed as a technical reviewer for that firm for one of their audit? That is the question. Now here, let us assume there is an ABC & Co Chartered Accountants, okay, where they have did audit of, let us assume, TCS Limited, where these are the one who have audited TCS Limited for the financial year 2021. Now, this particular engagement is selected for quality review. Are you getting it? I am Mr. T, technical reviewer, appointed for this. First of all, can I accept this or not is the question. See, in the process of appointment, you see, appointment is there, acceptance is there, separate. Before you accept, you need to check certain disqualifications. Now, TCS Limited, no. ABC & Co is the auditor, right? We all know auditor has disqualifications under Companies Act. Correct? Huh? Now tell me, if at all a person is disqualified to audit, that audit process is conducted, no. To verify that process, the person who is verifying that audit file should also not be disqualified. Logically. So, he should comply with all the eligibility condition for appointment as auditor under 141 subsection 3 of the Companies Act. If technical reviewer falls under any of the disqualification, to become an auditor of the company, he cannot do quality review of audit of the same company. Are you getting the point? Simply, whatever disqualifications apply for the firm to that company, with respect to that company, same disqualifications apply for the technical reviewer also to do quality review of the same audit file. Are you getting it? He should not belong to the city or region of the head office. He should not belong to the city or head office or region of the particular audit firm. Reason means not defined specifically. Generally, reason means the SIRC, NIRC. This is the reason in the ICI terminology. Able to understand? So reason they didn't specify clearly. Or do they intend state exactly? They didn't give any clarification. Are you getting it? Next, maybe in the actual application, you may, if you look at the signing applications will be there, edictures will be there. In that, I think we will get a clarity, but that is not required. To that extent, depth of clarity is not required. Next, you are technical. He means what here? He means what? Technical reviewer. Getting it? He or his firm or any of the network firms or any partners of the firm or of the network firm should not have any association with the audit firm during the last 3 years and thereafter. Nothing but, now I am doing the quality review in the current year, 22-23 financial year or 23-24 financial year. I am selected, I am been appointed as technical reviewer for them. In the last 3 years, I must not have any association with that audit firm. Not just me, my partner, my firm, my network firm and their partners. Are you getting the point? You see, the disqualification is very broad. Either me or my partner or my firm or my network firms and my partners of the network firms. None of us should have association with that audit firm, ABC & Co. Getting it? In the last 3 years, we have never worked on any common assignments in the last 3 years. Like that, you must check. Next, not only that, you or your firm or any of the network firm or any partners of the firm, getting it, should not have been stat auditor of the company or render any services to the said entity. Now we have seen, this is the ABC & Co, I don't have any connection. What about TCS? I am a technical reviewer of audit of TCS. Getting the point? Now, with the TCS also, I should not have in the last 3 years any connection. And this is a general thing. You must not be having any disciplinary action taken against you or pending against you in the last 3 years. Are you clear? These are the disqualifications of a technical reviewer. If in examination they'll ask you, write eligibility criteria to become a technical reviewer, then not this answer. Earlier question, 15 years post qualification experience, that is eligibility criteria to become a technical reviewer. Disqualifications of a technical reviewer for a particular audit engagement quality review, then this answer you should write. Are you getting the point? And this is important, and that is also important. Next, same way you can take qualified assistant, provided he should be a chartered accountant. He should not attract any disqualifications under CA Act. Disqualifications under CA Act you will have in ethics. Unsound mind, yes or no? A person on whom a disciplinary action is taken, like that we have some list. Also, he has to sign the statement of confidentiality. No direct interface. By the way, assistants cannot directly interfere with the audit firm or with the quality review board. Assistants, if at all they have any issue, they have to talk only with the technical reviewer. Moreover, he must be working with the firm only from the past 1 year at least, either as a member or as a partner. My assistant should be working with me only in my firm. He should be internal person. He should not be associated with the audit firm or the concerned entity whose audit is being reviewed in the last 3. This disqualification is there for the reviewer also, no? Same disqualification is there for the assistant also. And he should not have any disciplinary proceeding pending against him in the last 3 years. He should not be a member of quality review board. Same. He should not be a technical reviewer, which means a technical reviewer cannot take assistance of another technical reviewer, simply speaking. That's it. Confidentiality is a common thing. Guidelines to reviewers is a common thing. Easy. Stage wise approach. This is also very easy because I've told very clearly entire that process. This can be asked as a question. What are the recommendations of QRG? Particulars of the, first of all, while making recommendations, what points you will include? What are the points that QRG will include while making recommendations to the board? What are the points they will consider? They will consider particulars of the enterprise, whose financial statements audit process is subjected to quality review, and description of the evidences that support first of all, what are the non-compliances? This is 1, 2, this is 3, and this is 4. Same order you have to follow. Getting it? First, I will talk about the enterprise. What non-compliances we found, we will identify. Detailed description of evidences we got for non-compliance, and what is my recommendation about actions. Now, QRG may recommend the following actions. This itself can be asked as a 4 marks question. What action? If at all there is a material non-compliance, in the audit quality, we will recommend to the board, take disciplinary action against that concerned audit firm or that member. Next, if at all immaterial, we recommend it to the board that please give an advisory to them. If at all any observation is trivial means not even material, the very, very minor, excusable, getting it? So in that case, we just audit firm have to cooperate the step and close the matter. That's it. Matter will be closed. Even in the report also we have seen the same. Refer to the council how many, advisory issued how many, closed how many. Then what about QRB expenses, QRG expenses, technical reviewers expenses, all that board only will pay, not the practicing unit. In case of peer review, audit firm will pay. In case of quality review, the board will pay. And reporting and other procedures. What does a clean report indicates? Generally, a reviewer may qualify the report in case of 1 or more of the following. What are the circumstances when a technical reviewer will qualify? He will qualify when there is a non-compliance with standards, non-compliance with laws, quality control system is defective, non-compliance with quality control policies and procedures. Suppose you have not followed SQC properly, or you implemented SQC but that is not correctly complied, or there is a non-compliance with law or regulations when you are doing audit but you didn't reveal, or there is a technical standards, auditing standards you didn't follow correctly, guidance note you didn't follow correctly. So in all these cases they will report. The quality technical reviewer will report in all these cases. What are the elements of review report that's not required? Now, consideration of reports of the quality review group. This is quality review group report. I told right, In case of PSU audits, or public sector audits, big audits, no, quality review group will prepare a separate report. Normally, technical reviewer will prepare a final report. Preliminary report is there, audit firm reply is there, final report is there. On that also audit firm has responded. You have to comment on that. Complete is there. Board can take direct action. But sometimes quality review group will prepare their own report of observations. We call them as, what is it? Report of observations. And that will be given to the board for further better action taken, for better action implementation. Getting it? So quality review group report will be prepared. That will be submitted to C&AG. That means that will be submitted to C&AG. So quality review group on quality of audit of PSUs should be furnished to C&AG on a case-to-case basis. QRG report, C&AG views shall be put before the board along with recommendations. Once you submit report to the C&AG will again reply with their views. Now you are having technical review, final report, quality review group report, C&AG recommendations, all that. Everything will be put before the board and they will take better, action. Next. Remaining cases, no. Remaining cases means what? In all other cases means what? This one many you don't understand. In all other cases means what? In cases where QRG did not prepare any report. They don't prepare any report. Every time they don't prepare report. Only for few cases they prepare a separate report. Generally QRG will not prepare any report. They are not having any obligation. But for better summarization purpose, they may prepare report based on the technical review, quality review. So in all other cases means where QRG do not prepare separate report. Correct? So that's what actual interpretation. Then directly QRG recommendations along with the decisions of the board, shall be forwarded to the C&AG office. That's it. This is in respect of PSUs. And in respect of remaining entities other than PSUs, you will directly put it before the board for consideration. QRG will directly put all the reports, everything before the board for consideration. Now, what actions quality review board can take? They may recommend to the council for disciplinary action, or they may give advisory. If at all non-compliance is very simple, they'll close the matter and inform the details of non-compliance to regulatory bodies and intimate the audit firm regarding the findings. And in case review because of a reference made from regulatory authority, this is a special case review kind, then we give report to the regulatory body and consider the matter complete and inform the audit firm accordingly. These are the broad actions that they need to initiate, quality review board. And wherever we have negative findings, no, we will insist upon follow-up review. The follow-up review must be taken within next 6 months or some limit will be there here. I think that is in peer review. Yeah, that's in peer review. So quality review board shall require audit firm to submit a compliance report to the board within specified period, adopting necessary measures. This is like once we give final report to the audit firm, no. Getting it? We will give advisories to the audit firm. Dear audit firm, you are having these many non-compliances. Please comply with them within next 6 months or 1 year and submit a compliance report to me. Getting it? Now, quality review board may follow up the review for effectiveness of corrective actions taken by audit firm. These results shall be used for off-site monitoring as well as next on-site visit. We take a compliance report, right? What is this? We just want to ensure that audit firm is complying with all the recommendations. That's it. That's it. In case of continued non-compliance, we may recommend ICI for necessary action. If at all audit firm, in spite of reminders by review board, they are not responding at all, then we will recommend to ICI for disciplinary action. That's it. With this, quality review is done. Clear? All of you? So, in quality review, so what I mean, inside this quality review, there is one more thing which you need to understand, that is scope of the quality review. That is also an important aspect. Scope of the quality review. This is the one that is differentiating. This one we will check. Generally this we will not do check at peer review. This is one thing that we check in quality review. And see what is the scope and objective of quality review. This itself is important for 4 marks question again. Getting it? Whether stat auditor has complied with applicable standards and other professional standards. Whether you have complied with relevant laws and regulations when, see, whether auditor has complied with laws and regulations, the technical reviewer has to check. What is the scope of quality review? The technical review, while doing quality review, has to check these items. Whether audit firm under review has implemented quality control, nothing but SQC. Standard on quality control gives so much guidance where you have to establish policies and procedures. Whether the firm has implemented or not, we need to check. And whether there is no material misstatement of assets and liabilities as at the reporting date in respect of selected entity. So the technical reviewer has to check whether any misstatement exists in the financial statements on which this firm already gave audit report, which means we also have to evaluate whether any misstatement is omitted by the auditor, ignored by the auditor. That's why we say the technical reviewer will question your judgment here. Why have you not taken this course of action? Why have you taken that course of action? We have tried to judge. Getting the point? Whereas in peer review, if at all he followed audit procedure of that standard, that's enough. We will see, sir, SA 580 or simple SA 501 pending litigations, have you taken written representation? He showed written, that's it, fine. Now we will see whether he followed entire that procedure correctly, how he has taken the conclusion. Able to understand why you have taken this conclusion, why not that. We will question like this in technical review. Able to understand? In technical review, simply speaking, it's about quality of decision making we evaluate. Whereas in peer review, we evaluate compliance with the technical standards, compliance with the quality control practices implemented by the firm. And whether quality control practices are implemented or not also we will see in peer review. Whereas here we will check additionally whether even after you did the audit, if still some misstatement exists, why you have not discovered them, we will see. If there is a reasonable clause, if there is a reasonable answer, why they have not discovered some mistakes, because audit process is subject to certain limitations. Able to understand? And you see here, review QRB undertakes statutory audit services only review of statutory audit and does not extend to internal audit and members who are in employment. That's it. Clear? Easy? So with this, quality review is also completed. Yes. See in Indian, audit of insurance company, there are various, points that you need to first understand in order to understand better insurance sector, insurance audit. First of all, for us, the main provisions are with respect to insurance entities. Just a minute. With respect to insurance entities, we have IRDA, preparation of financial statements and auditors report thereon, regulations 2002. In this entire chapter, we are going to discuss IRDA, preparation of financial statements and audit report, regulations 2002. This is what we are going to discuss. Getting it? This IRDA regulations is what we are actually discussing this entire chapter. Preparation of financial statements and audit report, regulations 2002. This regulation is having totally 3 parts. Okay. It has 3 schedules, I can say. Schedule A, Schedule B and Schedule C. Schedule A is applicable for, preparation of, Schedule A contains the guidelines for preparation of financial statements for life insurance companies. This is for life insurance. Schedule B contains guidelines for preparation of financial statements for general insurance companies. Schedule C talks about audit report. Auditors report requirements. That is what covered in Schedule C. So these are the 3 schedules which are there under insurance law. Getting it? Now, see what are the companies which are what exactly is life insurance and general insurance? Insurance is of 2 types. It might be a benefit contract, it might be an indemnity contract. First of all, insurance is a type of assurance. It's a type of assurance provided to the customer by the company. Getting it? Now this insurance contract is again subdivided into 2 categories. It may be a benefit or it may be an indemnity contract. Indemnity means what? Whatever the loss arises to you, we compensate the loss. That's it. Here, in an indemnity contract, maturity amount will not be there. Whereas in a life insurance, most of the life insurance contracts are benefit contracts, where you pay certain amount of money every year for certain number of years. In between,
Upon an uncertain event, if anything arises, whatever sum assured will be given to you, or on maturity of the policy, sum assured and bonus will be given to you. This is a benefit contract. Getting the point? Where there will be an inflow actually to the policy holder. Getting it? Whereas in case of indemnity, there will not be any inflow to the policy holder. Whatever the loss is there, it will be compensated. Suppose I take a car insurance. Okay, so I have taken car insurance for vehicle insurance. In car, we have two types of insurance: third party insurance and vehicle insurance. Vehicle insurance means if something happens to the vehicle, insurance company will bear the repair cost of the vehicle. Now cars are bumper to bumper zero debt protected. Means if somebody completely scratches my car on the entire one side, I can go to the showroom, replace entire doors, everything with new one, just pay 1,000 rupees enough. Getting it? That is a kind of facility now it is there. From the past 7 years, it is famous. Zero debt insurance contracts where they charge little extra premium. That's it. Able to understand? So now whatever loss I incur, they compensate. Now general insurance, most of the general insurances they come under indemnity contract, and life insurance comes under this one benefit contract. Now this general insurance is again divided into three more types: fire insurance, marine insurance, miscellaneous insurance. And predominant business for general insurance companies is miscellaneous business. Getting it? 70% of the revenue of general insurance company comes from miscellaneous. Remaining fire and marine put together, how much business happens? 30%. Generally, since the word miscellaneous is used, we think it is very minor. No, miscellaneous insurance means various types of contracts: accident insurance policies, health insurance policies, theft insurance policies, various types of insurance policies, credit insurance policies. Various types of policies of insurance company comes under miscellaneous insurance, which is the predominant portion of any insurance company. Are you getting it? Right now in India, we are having roughly some 60 insurance companies. Some 24, 25 companies were there. Some 25 or 26 companies were there which are engaged in life insurance business. Some 35 companies were there which are engaged in general insurance business. Now, can a single insurance company do both activities, life insurance and general insurance? No. In order to do both the types of insurance, you must incorporate two enterprises separately. Why? Because the format of financial statement is different for life insurance company. The format of financial statements is different for general insurance. Best example, you take SBI. SBI General Insurance Company is a different company. SBI Life Insurance Company is a different company. Why can't they operate in a single company as two different segments? Because preparation of financial statements becomes difficult. Are you getting the point? Now, let's look at financial statements of insurance companies. Financial statements of insurance companies, whether it is Schedule A. Financial statement of insurance company, whether it is Schedule B. Schedule A is applicable for life insurance company. Schedule B is applicable for general insurance company. The financial statements of both these companies will have three parts. Getting it? One is revenue account. Another one is P&L account. Another one is balance sheet. Another one is receipts and payment account. There are four accounts which whether a life insurance company or a general insurance company has to do. Now, life insurance company has to present segmental reporting for funded policy, non-funded policy, linked policies, non-linked policies. Like that, segment reporting they need to do. Whereas general insurance companies has to segment reporting like fire insurance, marine insurance, miscellaneous insurance. There is a difference in the financial reporting format itself. Are you getting the point? Now, what is revenue account? What is P&L account? What is balance sheet? What is receipts and payments? Receipts and payments is nothing but cash flow statement. Now, insurance companies prepare cash flow, that itself is treated as receipts and payments account. Now, receipts and payments account is subject to audit. Receipts and payment account is not covered within the definition of Insurance Act financial statements. IRDA financial statements regulations require Schedule A, Schedule B, every insurance company shall prepare receipts and payment. Schedule C, audit report shall cover in receipts and payments accounts in the opinion of the auditor. Therefore, receipts and payments audit is also compulsory, even though it is not covered in Section 11 of the Insurance Act. Getting the point? I'm only giving overview. Now, what is receipts account? Revenue account. Revenue account is also called as technical account. What is it also called as? Technical account, or is also called as policy holders account. What is it called as? Policy holders account. P&L account is called as non-technical account. Also called as shareholders account. What is it also called as? Shareholders account. Now, this is something like trading, manufacturing and P&L. Earlier you might have learned not trading account, then P&L account. Getting this? Trading means all direct expenses, direct income will route through trading. Anything left from direct
business, then balance will be transferred to P&L. Same way, see what insurance company do. Now, first of all, in order to start an insurance company in India, minimum capital requirement is 100 crore. What is the minimum capital requirement for an insurance company? 100 crore. You must have 100 crore capital. That is one source for the insurance company. What is another? This is shareholder funds. What is another source? How insurance company operates in India? They sell insurance policies where they collect premium from the policy holders. Where they collect premium from the policy holders. Now, how this premium amount collected by the insurance company will be invested? They will be investing this in the investments. IRDA investment regulations were there. See, IRDA has issued almost 50 to 60 types of regulations. For us in our syllabus, we have only one type of regulation. Preparation of financial statements and audit report regulations only we have in syllabus. But IRDA has issued more than 50 varieties of regulations to insurance companies. Every insurance company has to satisfy all these regulations. Among that, one more type of regulation is IRDA investments regulations. What is it? IRDA investments regulations. So whenever you collect any money from policyholders, company has to invest in some securities. How investment should be made in securities, how much to be made in bond market, how much to be made in government securities, how much to be made in equity, how much to be made in exchange traded funds, all that. So they have given some investment guidelines. Getting the point? IRDA has given some investment guidelines. Now, from policyholder money I am collecting and investing. Now from that whatever income I get, that income will be transferred to revenue account. Now, to sell this policy, I am incurring some expenses like insurance commission, agent expenses, commission or brokerage paid to insurance, underwriting expenses. Underwriting means to underwrite this contract. Getting the point? We call it as what? Underwriting. Underwriting means I will assess a customer and I will sell a policy to him and I will charge some premium. Before charging the premium, we will identify how much premium should be charged. Bank, when they are giving a loan to a very big infrastructure project, they will underwrite that project. Underwriting the project means what? They will check the project risk, everything. And accordingly, interest rate will be fixed. So that process is called as what? Underwriting. Are you getting the point? So underwriting expenses, commission or brokerage expenses, claims paid. What is it called as? Claims paid. Claims means again what? Policyholder lodged a claim against me. Getting the point? Uncertain event happen, I need to pay claim. So all policyholder related incomes, all policyholder related direct expenses will be transferred to revenue account. Now, after setting off these incomes and expenses, if anything is left, then that will come to P&L account. Then in the P&L account, all operating expenses of the insurance company, directors' salaries, depreciation on the office equipment, all these items will come in the P&L account. Understood the basic difference between revenue account and P&L account? Now, in P&L account, if something is left, then to whom it goes? Shareholders. That's why it's called shareholder account. Are you getting the point? Now, next. So whether it is life insurance or general insurance, this is what you have to do. Now, there is something else called reinsurance. There is another thing called reinsurance. Reinsurance means an insurance company is taking a insurance contract with another insurance company. So that is called as what? Reinsurance company. Right now, in India, insurance business can be conducted only by an Indian insurance company. Only an Indian insurance company can do insurance business in India. What about foreign company? They can also do, but only reinsurance. A foreign company can only do reinsurance in India. They cannot do direct insurance business. See, in insurance, businesses are two types: direct insurance, reinsurance. Co-insurance is not a type. I'll come back to co-insurance later. Co-insurance is like a consortium lending. It is something like a consortium lending. I'll come to that later. So direct business and reinsurance business. Can an Indian company engage in reinsurance business? Yes. Can an Indian company engage in direct business? Of course, that is what main income. Can a foreign company do direct business? No. Direct business means what? Directly selling a policy to a policy holder. That is direct business. Reinsurance means what? Selling a policy to an insurance company. That is called as what? Reinsurance. Reinsurance is a risk mitigating tool for the insurance companies. Are you getting the point? In India, there is one big reinsurance company, that is General Insurance Company. General Insurance Corporation of India is exclusively registered as a reinsurance company with IRDA. General Insurance Corporation, GIC, General Insurance Corporation, LIC, GIC, both are government owned. Getting it? GIC is completely what? This one, corporation established by separate act of parliament, and GIC is providing reinsurance business for all the insurance companies that are operating in India. Now, so reinsurance business can also be conducted in India by a foreign entity, but an Indian insurance company is only permitted to do direct business. Who can do direct? Only Indian insurance. What is Indian insurance company? It's an insurance company in which foreign shareholders shareholding percentage do not exceed 49%. Whether it may be a foreign individual investor, foreign institutional investor, portfolio investor, whatever. Total foreign shareholders who are not residents in India, who are non-residents, simply speaking, so the non-resident shareholding is more than, not exceeding 49%, then it is called as Indian insurance company. And Indian insurance company can only do direct business. Next. Now capital is 100 crore. Insurance company shall maintain a minimum capital of 100 crore. Further, see, insurance company, what they do? They design one scheme, insurance scheme. Under that scheme, they will sell policies to various customers. Now, where under the policy, they will either compensate the loss in case of general insurance, or there will be a benefit to the customer in case of life insurance. Are you getting it? Now, when they sell an insurance policy to a policy holder, what they will collect in return? Consideration. We call that consideration as premium. Getting it? Now, premium is having, premium accrued. What is it? Premium accrued and advance premium. What is it? Advance premium. There is another thing called unearned premium. There is another thing called unearned premium. Advance premium, unearned premium shall not be accounted, in the P&L account. They should be accounted separately in the balance sheet. Moreover, they should be accounted separately again. You cannot merge these two. Are you getting the point? You cannot merge these two. What is advance premium? What is unearned premium? Example, unearned premium, best example is motor vehicle policy. Best example. Okay, today when you buy a motor vehicle, getting it car, I need to buy 3 years third party insurance on the date of purchase of the car itself. I need to buy 3 years third party insurance. Now I am paying insurance premium. Some 1 lakh I paid insurance. Example, getting it? I paid 1 lakh for getting this car. This 1 lakh insurance premium belongs to next 3 years. Now tell me, can I pay every year separately, or should I pay at the time of beginning itself? 1 lakh. I should pay at the beginning itself. Is this advance? Is this an advance I am paying? No, it's not an advance. It's compulsory. When do I can use the word advance? If it's optional. I am not paying in advance. It's compulsory as per the motor vehicle law. You have to take at the time of purchase of new vehicle, 3 years insurance is must. It's compulsory. Now insurance company received 1 lakh from you. Out of this 1 lakh, only 1 year premium only belonging to the current year. Remaining 2 years premium, insurance company did not earn. They just received it, but they did not earn. So that amount has to be kept under which head? Unearned premium. Are you getting the point? Suppose no. I told insurance company, sir, 3 years fine. I will take insurance for 5 years, sir. 3 years you take. 2 years, I will have to pay in the 4th year, 5th year. No, due date is when? 4th year and 5th year. For 4th year premium, due date is what? Beginning of the 4th year. For 5th year premium, due date is what? Beginning of the 5th year. I requested insurance company, sir, I want to pay now itself in advance. That is advance premium. Before due date, if you pay advance. Are you getting the point? Now, I am paying 3-year insurance policy, right? Is it before due date? No, due date is purchase date itself. You have to pay today only. This is compulsory. You are not paying, before due date and all. Due date is already there. Only thing is, policy will be there for 3 years. Advance means what? The due date is somewhere in the after few months or few years. But now only I am paying before the due date of payment. That is called advance premium. If you pay before due date, it is advance premium. If at all payment in advance is compulsory, it's called unearned premium. Are you getting the point? All of you understood the difference between unearned premium and advance premium? Now premium accrued means, see, in insurance, premium is accounted based on the time period only, generally. Based on the risk attributed. Actually, they use the word risk attributed. Are you getting it? So nothing but time frame. Generally, insurance companies recognize this incomes based on the time frame only. Getting it? So insurance policy will have a certain number of years contract, right? Premium will be paid on annual renewal. Premium will be paid on quarterly or biannually, nothing but 6 months once, or it may be paid annually. So whether you pay annually or half yearly or quarterly, it doesn't matter. What period you are paying the premium, for that period only you should recognize it in the revenue account. For that only you should recognize in the revenue account. In the revenue account, in case of general insurance, the premium accounted should be separately shown for fire, marine and miscellaneous. And for miscellaneous insurance, you need to give a segment reporting in the notes to accounts. Are you getting the point? All of you. This is what given in the entire one part of the chapter. After that only in your chapter, audit of life insurance, write about provisions of audit of life insurance. Then the third part of the chapter starts, write about audit of general insurance. So this chapter, if you look at your study material, it's divided in three parts. Part A, basic introduction to the insurance sector. Part B, how to do audit of items of life insurance business. Part C, how to do audit of general insurance business items. Getting it? So these three parts were covered. Right now, whatever I spoke is completely part A related. Are you clear? Don't confuse this with Schedule A, Schedule B, Schedule C of IRTA. Don't confuse this part A, part B, part C with the schedules. I am talking about your chapter. Your chapter is divided by ICI into three parts. Getting it? IRTA schedules also have three schedules. IRTA regulations were there, no preparation of financial statement. Inside the three regulations were there. Now, few regulations were covered in our book, part A. Few regulations were covered in part B. Few regulations were covered in part C. Clear? Have you seen insurance audit earlier? Have you gone through the chapter earlier? No, how many of you have not gone through the chapter at all? Honestly, please be honest. Okay, now you able to understand slightly? Yeah. Next. Sometimes in exam they'll ask a simple question like this. What are the legislations that are applicable for insurance? Or they may ask to write about legal framework for insurance companies in India. Insurance Act, IRDA Act, getting it? And Companies Act, IRDA Investment Regulations, IRDA Preparation of Financial Statements Regulations 2000. It's actually 2000. I meant 2002, I think. Okay, so 2000. Next. What are the key provisions? Who is an insurer? Insurer means only an Indian insurance company or a body established by Act of Parliament, nothing but LIC, GIC, an insurance cooperative society. Right now that is not there. A foreign company engaged in the reinsurance business through a branch established in India. It may be noted that a foreign company includes Lloyd's established under Lloyd's Act. So this is something again Britain's related, UK related provisions. There is something called Lloyd's. A group of insurance companies are called as Lloyd's. Getting it? Policyholder means policyholder is a person whose interest in the policy is defensible or is for the time being subject to any condition. So policyholder is a person to whom the whole of the interest of the policyholder is assigned once and for all, but does not include an assignee thereof. What do you mean by assignee thereof? I can give life insurance policy as a security in a bank and get a loan. Now I am giving life insurance policy security to a bank. No, is it marked as a pledge? None of this. Assignment. What is it called as? Assignment. The process of creating security on an insurance contract to a bank, that's called assignment. Where you are called as assignor, the bank is called as assignee. Just because you assigned an insurance policy to a banker, the banker becomes a policyholder. That's it. So the policyholder is the person who is having complete interest in the policy. Sometimes in case of medical insurance and all, life insurance and all, policyholder is different, the insured person is different. Able to understand? Insured person is different. Who will get the maturity amount? Insured person. Whose loss will be compensated by the insurance company? Insured person. Policyholder means is the one who purchased the policy. On whose name? That is insured. Next. Only Indian companies are permitted to do insurance business. And further, no consideration is received, no insurance. You cannot sell an insurance policy on credit. Like I sold a policy today. You agree to pay me, premium amount after 30 days. These 30 days, no risk for you. I mean, no risk coverage for you. Are you getting the point? Next. So this is also asked many times in exam. In MCQs and as well as main question also, this has been asked many times. Risk coverage will start only from payment date onwards. Risk coverage will start only from payment date onwards. Registration. Every insurer shall obtain certificate of registration before commencing the insurance business. And in order to start the insurance business, the company must have 100 crore capital. Where is that? Minimum capital is 100 crore excluding preliminary expenditure and registration expenditures, all that. They have to maintain a solvency ratio of 150%. Many students are confused here again. What is solvency ratio? What is solvency margin? Both are same only. Getting the point? Ratio means, assets by liabilities is equal to ratio. 1.5, 50%. Margin means what? beyond the liabilities, how much margin you should maintain? 50% margin. That is also same only, no? 150% ratio means where I am having assets by is 50% higher than my liabilities. Margin means what? 50%. So solvency margin should be 50%. Solvency ratio should be 150%. Correct logically? Are you getting it? Suppose I have to maintain assets 150, liabilities 100. So what is the margin? 50. That is solvency margin. What is the solvency ratio? 150 by 100 is equal to 1.5, which is 150%. Both are same only. Are you getting the point? And again, solvency margin should be excess of assets. Sorry, excess of liabilities. The assets value should be in excess of liabilities by 50%, which shall not be less than minimum capital. They use this word, which shall not be less than minimum capital. Minimum capital should be 100 crore, no? Are you getting it? Assets minus outside liability should be how much it should come? 100 crore it should come, no? Minimum capital of the insurance company. So solvency ratio should be 150%. Margin should be nothing but 50%. That 50% value should equal to minimum how much? 100 crore. That is what that logic. Are you getting the point? Now tell me, what happens to insurance company if the insurance company is unable to maintain solvency margin or solvency ratio? They need to submit an alternative plan to the IRDA. What is your plan of action? Your solvency margin is not maintained. What is your plan of action? You need to submit a report. If at all IRDA is not convinced with the report you submitted, IRDA will initiate liquidation proceedings. IRDA will initiate liquidation proceedings. They will cancel the insurance license and initiate liquidation. So 150% solvency margin is compulsory for all insurance companies, and many insurance companies manipulate records so that they pretend to maintain solvency ratio. Are you getting the point? And in insurance, we have seen some ICICI Lombard and SBI life insurance. We have seen where they are having solvency margin of 2.5. Where it is 1.5 is enough, they are having 2.5, 2.73. Solvency margins are very high for insurance companies that are there in India. Are you getting it? Now, whenever insurance company want to advertise, through their policy, first policy before selling policy, company highlights they will present. In the company highlights, they will mention solvency margin first place, because that is one of the important factors before you buy a policy from any insurance company. See what is the kind of margin they are maintaining. If the margin they are maintaining is very close to statutory norm, it's a risky. If the margin is very, very higher than statutory norm, it's safe. Now, today when you are buying insurance contract in online, like insurance company premium amount, solvency margin also showed for the customer right side. You see Policy Bazaar, there's a site called Policy Bazaar, which is exclusively reserved, where they will show you complete insurance policies offered by various insurance companies. Getting it? So which insurance company product is best? The decision making is not only based on premium. The decision is based on the risk, that decision is based on the solvency margin. The decision is based on the settlement to claim ratio. What is it called as? Settlement to claim ratio. 100 customers claimed me, and I settled only 90 customers. My settlement to claim ratio is 90%. You have to buy the policy of that company where settlement to claim ratio is higher, where solvency margin is higher. For those companies, they charge premium also higher, because riskless. The risk is less, cost is high. Are you getting the point? It's not loan. Understand, where the risk is high, cost is high. Obviously, in insurance company, for you risk is less, for the company risk is more. Able to understand. Next. Then form and content of financials. I told right, Schedule A applicable for life insurance, Schedule B applicable for general insurance, Schedule C is applicable for auditor reports. Now, write about audit of receipts and payments of an insurance company. They will ask you a question on this. Section 11 of IRDA Insurance Act, Section 12 of Insurance Act does not cover anything about audit of receipts and payments account. But IRDA preparation of financial statements and audit report regulations covers. Auditor has to cover receipts and payments, true and fairness also. So accordingly, receipts and payments account shall also be audited. Now, appointment of auditor. See, for insurance companies also there is a joint audit provision. Insurance companies also there is a provision called joint audit. IRDA has given guidelines for appointment of auditors of insurance companies. It is not our regular Companies Act provision. Look, for banks, insurance companies, that's it. Only for banks and insurance companies, and probably maybe tomorrow in future, NBFCs that fall under upper layer, NBFCs that fall under top layer. For them also RBI will regulate appointment of auditors. Getting it? Now, for banks, insurance companies, the appointment of auditors, guidelines were given by the respective regulatory authority. Appointment power is in the company hands only, shareholder hands only. But guidelines on selection of auditor is determined by regulatory. Now insurance company audit, if you want to do, you must have at least 5 partners, 7 partners, like that condition is there. Getting it? One partner must be associated with the firm for more than 15 years. One partner should be associated with the firm for more than 10 years. 2 partners must be FCS, and another 2 or 3 CS must be associated with the firm for more than 2 years. Like that, there is a eligibility requirement for firms. Which firm can be appointed as an auditor of insurance company? So there is a eligibility requirement. Only those firms which meet the eligibility requirement, only those firms will get eligibility to do audit of insurance business. Insurance sector also, we have central audit, branch audit. In insurance, we don't call it as branch, we call it as division. In insurance, we use the word what? Division. And anyhow, that's why you see component definition in SS 600, branch or division, both are covered. Are you getting the point? Then remuneration of auditor, it is as simple as same Companies Act 142 section. Now what are the rights and duties of the branch auditor? They will also have a similar rights like central auditor. Here divisional auditors were there. No, whatever branch auditor rights were there under Companies Act, same rights were there even for the divisional auditors. Now remember, in private sector, this point of divisional auditor is not there. You see here, in private companies, as the accounts are centralized, the principal division officers preparing accounts is not applicable. Accordingly, branch audit and all will not be applicable. Directly head office audit only. Able to understand? Now there is something called investment risk systems and process audit. In investment risk management system and processes, how the insurance company investment risk management system is designed, how the processes are designed, audit report should be submitted, and this audit shall be conducted by other than start auditor, other than internal auditor. So there should be a separate ISMS auditor. Investment risk management system auditor should be separate for the insurance company, and he must give report on quality of investment risk management system and process implemented by insurance company. Are you getting the point? See, how to improve command on the subject. Only reason is conscious reading. What is it? Consciously you should read. Everyone reads. But what differentiates is how effectively you're reading, how focused you're reading. Getting it's not number of times. Some students ask me, sir, should I revise audit 3 times or 4 times? 1 time you do proper revision. Proper revision 1 time means what? See, many students, they just read this and proceed further. They don't try to understand what is that exactly. Investment risk management system and the process. In an insurance company, they need to invest in securities and bonds, deposits and all. For that, they need to design a system of investment. Now, they need to assess risk of investment before investing there. So, there should be an investment risk management system. Which means, in the risk management committee of the insurance company, specifically designed investment policy of the insurance company. Are you getting the point? So, that line itself has this much meaning. If you understand like that, that terminology will be, like you absorb it. Then you absorb, a terminology only when you read it effectively. Able to understand. Next. So here, other than stat auditor, other than internal auditor, other than concurrent auditor, other than these auditors, a special separate auditor who is also CA and having COP, he should certify whether investment risk management systems and the processes that are followed by insurance company, are they in place? Getting it? So for this, there is a technical guide issued by ICI for reporting on certification on investment risk management system and processes of insurance companies. There is a guidance note issued by ICI. You read the guidance note, verify that in the insurance company, if they are in place, then give a certificate. Now see, they are not asking about operating effectiveness. They are just asking, are they in place? Whether the insurance company has implemented in investment risk management processes, investment risk management systems. Are they in place? That's it. Able to understand. Then in case of public sector insurance companies, CAG will give certain directions to the auditor, then the auditor has to follow, and CARO do not apply. We know very well. Insurance companies, CARO do not apply. Because regulatory is already given certain reporting requirements and that is applicable. And same way, tax audit is applicable. Here, they have used the word form 3CB, which is wrong. which is wrong. In the ICA book also they mentioned the word form 3CB. For insurance companies, which form is applicable? For fiscal or tax audit report, 3CA form is applicable. Which form is applicable? 3CA. What is 3CA, 3CB in fiscal laws? 3CA format of audit report is applicable for those SSCs who are subjected to audit under any other law for the time being in force. Are you getting the point? If the SSC is subjected to any other law for time being in force, to the same SSC, tax audit report has to be given in form 3CA format. If the SSC is not having audit under any other law, the only audit requirement is under income tax law, then 3CB. Now tell me, insurance company is liable for audit or not? Liable for audit under which law? Insurance Act. Getting it? Now audit report is already there, financials were audited already. Now once again tax auditor should do entire audit. Just he has to talk about particulars of true and correctness. 3CD particulars will be there. Whether they are correct or not alone, you have to talk. You did not talk about opinion on the financial statement. So which format apply? 3CA only will apply. That's a printing mistake in the book. Or the person who is giving this has misinterpreted the provision. Able to understand. In examination, if it comes, what to write? You write 3CA and also put a note point. But in the institute study material, it is mentioned as 3CB. Yes or no? Getting it? Put a note point, because the person valuing the paper also doesn't know, right? He just look at the suggested answer and look at your answer. That's it. What if suggested answer gave correct answer? That's why we should be sometimes two answers we should have. Alternative answer also we should write. Huh? Sorry? MCQ. Yeah. Correct, 3CB only. Okay. So you see, we don't know, because while writing suggested answer, they'll copy paste this. If the person while copy pasting has a brain, little brain, a sparrow brain, getting it, he will check this, whether the suggested answer is correct or not. At the time when he checked, oh no, this is wrong, printing mistake, he will give 3CA. But now, institute, in suggested answer, they gave 3CA. And you selected 3CB answer. And in the corrigendum, getting it, they rectified later on. You will give full mark, you will get full mark, whatever the answer you write. So institute will award marks, because there is a mistake in the book itself. Are you getting the point? Next. Write about audit of insurance company and automated, and obviously today it's entirely automated insurance company business, correct? Next. Audit of life insurance business. Inside that, see, life insurance contracts of various types: term plan, endowment plan, money back, whole life insurance, ULIP, pension plans, annuities. I think now ULIP is taxable in income tax also, right? Yeah, earlier they were exempted. 10D section is there, no? That criteria we apply. 10% of sum assured, maturity amount, all that. But now ULIP plans were taxable, because in ULIP, majorly you are getting bonus in the form of profits on investments. Getting it? That's why they exempted, because ULIP is a commercial policy, not a non-commercial policy. Next. In this, I'm not discussing all the points, only key terms I will discuss, okay, which are important from exam point of view. See, logically speaking, everything is important. Anything can be tested, okay. They may ask you a question like this. Write about contingent liabilities disclosure requirement for life insurance companies. They may ask you a question on this. Why I mentioned this is in November 22 attempt only, I think so. They asked a question on, not November, May 22 or November 22, some attempt, okay. They asked a question on, write about presentation of contingent liabilities in case of a bank. They asked that question. Getting it? Audit procedure for contingent liabilities they asked. Inside that suggested answer, they gave contingent liability list and audit procedure. Both. Now, what are contents of management report? This is also important. What are contents of management report? Any 4 points you can read. Any 4 points you can just read. See simple points. Management report. It is something like board of directors report. Getting it? For insurance companies, we call them as what? Management report. We need management has to confirm whether solvency margin has been maintained. What are contents of management report? Suggested answer will have all these points. But they will be expecting only you to write 4 or 5 points. So in that list of points, any 4 points matching, you'll get full marks. So select easy points and write. So management report shall contain a confirmation from management regarding maintenance of solvency margin. and mention that certification that no part of the insurance fund has been applied in contravention of the provisions. In case of general insurance, management report, here we just mention instead of life, we use just general, same word only it will come. And the management has to disclose overall risk exposure and strategy adopted to mitigate the risk. And management has to report in the management report operations that are there in other countries. A separate statement shall be given regarding country risk and exposure risk, all that, and what hedging strategy they adopted. Now, how the valuation of investments were carried out. So the management has to talk about valuation of investment. And management report shall contain a responsibility statement, something like DRS, director responsibility statement. Same only covered, accounting standards followed, accounting policies followed, proper records maintained, going concern followed or not, yes or no, and whether internal audit is, working correctly or not. Management has to talk. These are the contents of management audit report. Sorry, management report. Whether you read management report for life insurance or general insurance, only one you read. You write the same answer, whatever the question it comes. But when life insurance comes, instead of writing general, you should substitute with life. Only that change you made. That's enough. Are you getting it? So, management report of life insurance business, management report of general insurance business, common points were there. For around 6 or 7 common points were there. You write the common points only. Answer is done. Are you clear? Maximum weightage is 6 marks only, but for which you have to write 6 or 7 points. That's it. Are you confident? They'll ask you one more question like this. Write about actuarial process in the context of life insurance business. They'll ask you a question like this. Write about actuarial process in the context of life insurance. Or they may ask you, what is the role of auditor in the actuarial process? They'll ask you, what is the role of auditor in the actuarial process of the insurance company? Very simple. Auditor has to certify whether the liabilities of the insurance company are actuarially valued. Getting it? Whether the actuarial valuation of liabilities is duly certified by appointed actuary and effect of the assumptions are according with the guidelines issued by authority. In insurance company, authority means IRDA. In NBFC bank means RBA. Able to understand? In NBFC bank means what? RBA. In a normal bank audit, bank means the respective bank. Getting it? Next. Hence, auditors rely on certificates issued by actuaries for calculating policy-related liabilities. You can also discuss with actuaries what process they followed, assumptions they followed while certifying the policy liabilities. This is the role of auditor in actuarial process. Very simple. In insurance business, life insurance or general insurance, actuaries are the one who are designed in the model, insurance model development, product development, valuations and reserves, solvency margin and all. Who will calculate? Actuary. Getting it? So, unexpired risk reserve. There is a concept called unexpired risk reserve. Who will calculate that? Actuary will calculate. We don't understand that. Next. How do, there is something called claims incurred but not reported, claims incurred but not enough reported. There is something called claims incurred but not reported, claims incurred but not enough reported. This is something similar to warranties. Provision for warranties in Companies Act, Provision for warranties as per accounting standard. Like, why do we create a provision for warranty? We have sold a product. Customer has incurred that warranty claim. Customer has incurred that event which is mentioned in the warranty, but the customer has not reported that warranty to the company. That will be reported in the next year or that next year. But that event has already occurred as on the balance sheet date. As on the balance sheet date, that warranty event, whatever we promised, occurred, but not reported to us. Getting the point? Now obligation exists as on the balance sheet date, but how much amount we have to pay at the future, we don't know exactly. That's why we create a provision. Same way, I sold an insurance policy to one customer. Getting it? To a car insurance. Exactly on 30th March, car met with an accident. Getting the point? As on 31st March, I should compensate the loss, right? If at all the customer comes from the same day, I should compensate the loss. When the event of loss arises on 30th March in the same financial year, but customer came and reported me within the 60 days time, whatever the due date is available. 30 days or 60 days, some time will be given. 30 days is normal. From the date of loss, 30 days you have to report. So customer has time to report up to April or May also. Now tell me, as on 31st March, customer incurred loss, company has an obligation to pay, but company doesn't know that there is a loss. Now tell me, claim is incurred by the company. Claim is incurred by the company. Claim means what? I took a policy from company. I suffered loss. When I suffered loss, what I will do? I will claim from the company because I purchased a policy from them. So claim incurred by the customer, but not reported to the insurance company. Are you getting the point? Now tell me, can the insurance company ignore these kind of liabilities? They need to create provision, matching concept, periodicity concept, yes or no? So they need to create a provision for claims incurred but not reported. Now how much provision do you create? You don't know how much is the loss. How will you create a provision? Actuary will come in place. Actuary will use all statistical accidentals, reports across the India, whatever Ministry of Roads, Infrastructure, whatever they publish reports will be there. Rural Development, Urban Development Ministries, Infrastructure Ministries will be there. They'll publish so many reports every year. COG reports will be there. They evaluate all this. They evaluate market. They evaluate life expectancy, everything. And they evaluate, okay, in India, these many accidents will happen every year. Okay, car accidents will be this many. Our company sold car policies this many. So there will be a probability of unreported claims will be this much. Like this, actuary will come a statistical valuation, and then give it to you. So actuary will play this kind of role. Are you getting the point? In an insurance company. So audit, we don't know how much provision to be made. We stat auditors don't know. We just have to check whether actuarial valuation is correctly made or not. For actuaries also, IRDA gave guidelines. How to calculate IBNR provision, how to calculate that liability, policy related liabilities provision. There are some rules given to him. There are some guidelines given to him. So actuaries will follow those guidelines and calculate the liabilities, and that liabilities will be shown in the balance sheet. Now as an auditor, what is our responsibility? Whether the liability is calculated by appointed actuary, whether the actuary followed correct assumptions, whether the liability workings are as per the IRDA calculations, we just have to cross check. Are you getting the point? SA 620, nothing but SA 620. But here appointed actuary by the insurance company, so management expert SA 500. Are you getting the point? Suppose in this insurance company actuary report somewhere I felt doubtful. What I will do? I will appoint my own actuary and I will reimburse from the company for the fee which I am paying to him. Here SA 620 will come. Are you getting the point? What happened? Fine. So they may ask you a question on underwriting. Underwriting means what? Where risk in the new proposed policy, getting it, where we verify the level of risk, where we calculate the risk that insurance company is taking. Suppose if a person aged less than 30, if at all he comes and asks for a medical policy, insurance company has a fixed price. Okay, this is a price, this is a sum assured. But if a person having 45 years of age is coming and asking for medical policy, insurance company will not have a fixed price product. So what is that person condition? What is the health condition? Do he has a smoking habit, alcohol habit? All that they will check, medical test and all they will be doing. After that, they will design a code separately for him. That is called underwriting. What is that process is called as? Underwriting. So underwriter, he will assess the risk and determines the premium to be charged. Now what is the role of auditor? See the process of underwriting. The objective of audit should be review the process of acceptance of risk through underwriting process. What is the process insurance companies following for accepting the risk? And see that they are issuing the insurance policy which is accurate, where the premium is collected correctly, and where they are adhering to IRDA rules and regulations made thereunder with respect to underwriting. Are you clear? Now reinsurance, we'll discuss reinsurance, important topic in general insurance context. Next, we are right about free look cancellation. This is important in insurance. Free look cancellation. What is free look cancellation? Suppose today insurance policies are sold by insurance agents by telling so much of grabber, like they will give lies. They tell all the lies and then somehow make you purchase the insurance policies. Why? Because insurance agent will get 35% commission on the premium amount you pay, first year premium. And every time you renew, right, he will get 5% of your annual renewal premium. Suppose if I make 100 people join in insurance policy and lifetime they are renewing the policy, I will get lifetime income. From each policy 5% every year I will get, first year policy I will get 35% income. Because that is a commission or brokerage, getting it? So somehow to sell you the policy, they will tell all sorts of lies that you get that benefit, you get this benefit. Only after you get the policy document in hand, only after you read the terms and conditions, you will understand what exactly you get and what exactly you will not get. Now, but you paid before the policy document reached your hand, you paid premium. You purchased the policy. So IRDA has mentioned free look cancellation provision. What is that? Once a policy holder gets a policy document in hand, from that date, 30 days time will be given. 30 days time must be given. Getting it? IRDA shall give, sorry, 15 days, huh? 15 days, or maybe if the insurance company is giving higher time, that higher time. Every insurance company must provide some number of days compulsory where customer can look at his free time, the policy, terms and conditions. If at all he is not satisfied, he can cancel the policy. Now, while cancelling the policy, suppose you cancelled after 10 days. Now for these 10 days, whatever you premium paid, 10 by 365, they will calculate, they will retain minus for medical examination and all, they spent some amount, right? They will reduce that from the gross premium you paid minus premium attributable for the 10 days minus medical expenses, balance premium will be the refund amount. So that is what given here. Are you getting the point? What is the refund I will give in FLC? Free look closure. If a customer filed a free look closure application, what refund? What is the original premium paid? Minus what is the proportionate risk? Minus medical charges if any. So the balance amount will be the refund amount. Are you getting the point? What auditor has to check? Whether whenever a policy is sold, whether the minimum 15 days time is allowed to the customer or not. And at the same time, see that if any FLC requests were received, whether they were processed within the turnaround time as defined by IRDA and the insurance company. So auditor has to check this. So they may ask you, write about free look closure and what is the role of auditor in the free look closure. This itself can be asked as a 4 marks question. Are you getting it? Next, in the previous attempt, November, this question only asked, write about policy lapse and revival. This question only asked for 4 marks in the previous attempt, November attempt. Are you getting the point? Just 2 minutes. Yes, continue. So first of all, what do you mean by policy lapse? What happens if the policy has been lapsed? Once the policy has been lapsed, the risk is discontinued. The risk coverage is discontinued. When a policy will lapse, if you do not pay the renewal premium within the grace period, if you do not pay the renewal premium within the grace period, what is grace period? Suppose today I purchased an insurance policy. Today is 29th March. Getting it? 2023. Again, my next premium will be payable on 29th March 2024. 1 year gap. Renewal. Now, they will give 15 to 30 days grace period. Now, which means 29th March I am supposed to pay. But grace period is there where I can pay up to 28th April. If I do not pay within the grace period, my policy will lapse. My policy will lapse. Getting it? What happens if the policy has been lapsed? Your policy is cancelled. Getting the point? Now again, if you want to revive, what is it called as? Revive the policy. It means reactivate the policy. You have to pay the pending premium plus certain additional charges will be there for revival. Some policies cannot be revived after certain period of time. For revival also there is a time limit. Within what time you can revive a policy? There is a time limit. So that concept is called as policy lapse and revive. When a policy is lapsed, no, agent commission he will not get. Insurance company cannot get the income and the policy holder risk coverage will also stop. So lapsation affects all the stakeholders. Getting it? So what auditor has to check? See that whether policy is marked as lapse because of non-receipt of premium. Are they marked as lapse within the due date or grace period? You need to check. If at all they are marked as lapse within grace period, that is wrong. After grace period only, insurance company can mark it as lapsed. In case of revival request, see that adequate checks are in place for receiving the outstanding amount and documents shall also be obtained for reviving the policy. Suppose no, if my car insurance time limit expired, within the grace period, if I pay the premium, no, they don't ask my car images and all. Directly they'll renew. After grace period, if I want to buy once again insurance policy, no, they will come and inspect the car every condition and then only they will sell the car. Then only they will sell the policy. Are you getting the point? Now, what is policy surrender? Surrender means waiving the right in the insurance policy. Simply speaking, I am closing the policy. I am closing the policy, not on maturity date, before maturity date. Then only we can call the word surrender. So there will be a surrender value. There will be a surrender value. See that surrender value is calculated as per the rules mentioned inside that. Remember, surrender can be done only during the person is alive. One more thing, policy surrender concept is there only in life insurance, not in general insurance. Getting it? Now, how premium collection will happen, how accounting should be done, how recognition should be done, they have given. What auditors have to check regarding premium collected, what auditor has to check for premium calculation, what auditor has to check regarding recognition of premium income, and what auditor has to check regarding advance premium, and insurance companies has to report premium figures to IRDA. Getting it? So regarding that also auditor has to check certain things. Then there is something called claims. See, more about this, no, from here onwards, more about this we'll discuss in general insurance directly. Because more or less they are similar. General insurance is a little comprehensive. In general insurance, the topics are discussed in a comprehensive manner. So we'll discuss that directly. If at all you understood general insurance, you will understand all these points. Now auditor has to, how premium has to be verified. Verification of, they may ask you a question on this 4 marks. Write about verification of premiums in case of general insurance. Verification of premium, the auditor should verify the following. Okay, whether premium is received from direct business or reinsurance or is it a co-insurance premium. So auditor has to check the internal controls regarding collection and accounting of premiums. Auditor should verify how underwriting and issuing of the policy is happening. Auditor has to check the IT systems and how IT systems and controls were implemented in the company. Serial numbering, internal check, sampling not required. And auditor has to check that whether premium in respect of risk has been accounted as premium of the income only based on the revenue recognition principle. Revenue recognition principle is given in IRDA Schedule C for general insurance companies. And see that premium received during the year, it pertains to risk commencing in the following year. In such a case, we should classify it as premium received in advance, or it may be classified as unearned premium. Getting it? So, insurance company has to maintain something called premium register, electronic only. Inside that, whenever a premium is collected, when the risk is going to commence, risk coverage period should also be mentioned. So in the premium register, commencement of risk column shall be indicated. The auditor should verify that policy document is not issued. This question was asked in May 22. They asked in May 22 this question. What are the circumstances when policy document is not issued? What auditor has to verify in this regard? When we don't issue policy document, when we did not receive renewal premium, or when the renewal premium is received but not in full, or the payment is issued by check and check was dishonored. In case of co-insurance, my share of co-insurance premium is not received. Are you getting it? So, premium had not been collected at all, or checks have been dishonored. Premium is not immediately collected because of a bank guarantee or something, and the premium has not collected due to risk is increased. Getting it? Or installment of premium has not been collected in time, especially like marine policies where the facility was granted and premium is paid in installment. So installment is not paid, premium collected, but policies are not issued for long periods of time. These are all the things auditor has to specifically look at. Whenever insurance company is not issued policy, what could be the reasons? Auditor has to check. Suppose premium is collected, but policy is not issued. That also auditor has to focus and inform to the management. See, your company has collected premium, but policy document is issued for substantial period of time. So this question was asked in May 22. Then co-insurance. See, what is a co-insurance and reinsurance, all that. See, there is something called, first let me tell you about reinsurance. Premium shall be accounted on net basis only. This is what one of the lines is. One of the points says premium shall be accounted in revenue account on a net basis. What is that? Premium collected from direct business is equal to some amount plus premium from reinsurance, reinsurance accepted, we have to add, minus premium from reinsurance ceded. This we need to reduce. So we get net premium. Are you getting it? On this net premium only we apply unexpired risk reserve percentage. Unexpired risk reserve percentage is applied on the net premium. Getting it? Now, what do you mean by reinsurance accepted? What do you mean by reinsurance ceded? This is also called as reinsurance inward. This is called as reinsurance outward. In exam, you will get a question, how to do audit of reinsurance outward or how to do audit of reinsurance inward. Anyway, they can ask the question. Now, what is reinsurance inward? Suppose my company is SBI General Insurance Limited. Okay, SBI General Insurance business. I sold, one infrastructure related policy, one infrastructure project related, one big policy I sold to one customer, where I am collecting 100 crore annual premium. What is the annual premium that I am collecting for that particular miscellaneous policy? 100 crore. One infrastructure related, project related policy, 100 crore premium I have collected. Now, this entire risk is bared by whom? SBI General Insurance. Risk coverage is given by whom? SBI. Now the customer name is, let us assume, L&T. So if tomorrow, if something happened to that project, who has to compensate the entire loss? SBI only has to compensate the entire loss to the L&T. Correct? Now, if at all, now here, SBI, they will take some hedging. You see, reinsurance is like a hedging tool. It's a hedging tool for the insurance company. What SBI do is, see, I have taken so much premium for covering this much risk. Let me also take insurance from another company. So like that, SBI took insurance from General Insurance Corporation of India. SBI took insurance from General Insurance Corporation of India in respect of this project. Only on this project, they took reinsurance from GIC. So where some 40% risk is transferred to GIC. How much risk is transferred by SBI to GIC? 40% risk, for which they are paying 20 crore to GIC. Now, SBI is ceding the risk to GIC. Ceding means what? Transferring the risk. Now, who accepted the risk here? GIC accepted the risk. Now, for whom it is income on reinsurance? GIC, it is income. For SBI, it is expenditure. Are you getting the point? All of you. Now they paid 20 crore on to the GIC. Now for SBI, this is outward insurance. Are you getting the point? For GIC, inward insurance. Insurance means risk. A risk outward means risk is moving out. Are you getting the point? Tomorrow, if customer L&T suffered any loss, can L&T go and claim from GIC? No. L&T has taken policy from SBI. Sir, reinsurance is that's a contract between SBI and GIC, not between L&T and GIC. So in case of reinsurance, the policyholder will not assume any right against reinsurance company. Remember, the policyholder has a right to claim only from the original insurance company from whom he purchased the policy. From whom this company purchased the insurance policy doesn't matter. Getting the point? So this is a reinsurance contract. What is this called as? Reinsurance contract. These reinsurance contracts of various types. Facultative reinsurance. What is it? Facultative reinsurance. From treaty reinsurance. Treaty reinsurance. Again in treaty we have proportionate treaty reinsurance, non-proportional treaty reinsurance. In proportional treaty we have quota reinsurance, excess reinsurance. Like that there are so many reinsurance contracts. Now reinsurance treaty means what? Arrangement, agreement between two parties. That is called treaty. Now how SBI has entered into GIC? They may enter into reinsurance contract policy wise. SBI went and proposed, sir, I have sold a policy for L&T, this much premium I received. So if you want, can you provide reinsurance to us? I asked general insurance company. General insurance company did entire study and they decided accepted. They may not accept. If based on each contract, if the reinsurance contract is based on each insurance policy, then that is called facultative reinsurance. What is it called as? Facultative reinsurance. So SBI has entered into GIC for some types of policy facultative insurance, for some types of policy proportional treaty insurance. Are you getting it? Like SBI will sell medical policies to various customers also. I enter into GIC reinsurance contract. Look GIC, with all my customers I am selling medical policies, right? 30% risk I'll transfer it to you. This is a treaty. What is this? Treaty. Inside this, no. Whether I sell 100 policies, 1000 policies, 1 lakh policies, doesn't matter. How many ever policies I sell, as per the treaty, you have to buy. You have to, accept the risk. I will pay the premium this much, you have to accept this much risk. This is as per the treaty. Are you getting the point? In this treaty, it may be proportional treaty or non-proportional. Non-proportional means ad hoc amount I will pay. Look General Insurance Corporation, in the entire region of Kerala, southern Kerala region, whatever medical policy I will sell, getting it, I will transfer 30% risk to you. For this, I'll pay ad hoc this much amount. Are you okay? That is non-proportional treaty. Getting the point? Now, big projects will be there, no? Like infrastructure projects, big projects will be there. For that, when I provide insurance, no, that will not come under treaty. Treaty is not suitable. There, no, reinsurance company and the original insurance will sit on the contract and check everything and accordingly design the premium. So, there, case-to-case basis, reinsurance will be conducted. That is facultative reinsurance. All that is given in the book only. Are you getting the point? You need to understand. You need to have patience to read. That's it. So this is about, reinsurance. Now what is co-insurance? Co-insurance means sale of insurance by 2 or more than 2 insurance companies to a single customer on a single item. Are you getting it? In respect of one project, in respect of one particular contract. Getting it with one customer. Multiple insurance companies are undertaking the risk cover. That is called co-insurance companies. In co-insurance companies, one insurance company will take entire lead. That company is called as lead insurance company, remaining called as member insurance companies or other insurance companies. What are they called as? Other insurance companies. Now, in a co-insurance, the original lead insurance company, the main company, will collect the entire premium from the customer. Now, this entire premium belonging to the lead insurer? No. Insurance policy is sold by all of 4 or 5 insurance companies put together. So, though I collect 100% from one customer, I need to distribute this amount to their share. Out of the premium collected, I should only account in my books my share of premium. The share of other insurance companies shall be transferred to them. If I do not transfer, in my books of accounts, how it should appear? Liability. In co-insurance companies' books of accounts, how it should appear? Asset, receivable from the lead insurance company. Now, whenever co-insurance contract is there, whenever lead insurance is collecting premium from customer, will they collect each premium every time? No, they will settle periodically between them. Are you getting the point? They will settle once in 15 days or once in a month, once in a quarter. They will settle. They will have statement of accounts. Auditor has to verify the statement of accounts between the lead insurance, core insurance companies and check whether each insurance company in a co-insurance contract accounted premium only for the risk share which they accepted. Are you getting the point? Only for the share of risk I accepted, I should account premium. And we need to see the insurance contract to ascertain what is my share of risk and what is my premium and how much is I received, how much I have accounted. Getting the point? So that is regarding reinsurance and co-insurance concept. Are you clear? All of you. Now based on that, if you read that provision, you will understand. If I now read and explain, you feel like reading only. You don't understand anything. First you need to digest this, read slowly each and every line, you understand very easily. This understanding, overview understanding is only important. In audit, what people lack is this overview. What exactly in this chapter we are learning, that overview is what lacking in students. So if that is there, you can easily crack. Are you clear, all of you? Next. So that is regarding co-insurance. Entire, almost all the points I have discussed. Now concept of claims. Concept of claims. A claim means it's a benefit payment. It's a benefit that we are paying to the customer because of the uncertain event, insured event. When an insured event comes, customer will demand payment for the policy benefit which he purchased. Generally, in a general insurance, it is an indemnity nature. Yes or no? Now, what will be the components of claims? In a claim cost, what are the components? In claim cost, two costs will be there. One is settlement cost, how much we settled to customer. Now, in order to settle that much amount, who fixed that amount? Surveyor. Surveyor charges all that. That is called claims. Claims under policy means claim amount settled to the customer. Settlement cost means administrative expenses. Settlement cost means what? Administrative expenses like surveyor fee, legal expenses, all that. Now, a liability for outstanding claims, it should be accounted in books of accounts in respect of direct insurance, in respect of reinsurance accepted, in respect of co-insurance business. So, liability shall be created. And remember, whenever you are creating outstanding liability for claims, you should also create provision for claims incurred but not reported. You see here, this is concept of claims. Now, there is a question called, how do you audit claims provision? There is another question called, how do you audit claims paid? Claims paid means already paid. Claims provision means as on 31st March, claim amount is decided but outstanding, which is not yet paid to customer. Both are different. Are you getting it? So, they may ask you here this question. Write about claims incurred but not reported or claims incurred but not enough reported. Both are interchangeable. Getting it? In certain circumstances, there may be a claim which is incurred by the insurance company. Insured event happened already, but it is not reported at balance sheet date. These claims are known as claims, but which are incurred by the company, but not reported to the company. The auditor has to check whether subsequent periods, whether any claims were reported regarding the claims which are occurred on or before 31st March. So look at the registers of the subsequent cutoff procedure we have to do. Getting it? Now, see whether calculation of IBNR and IBNER is done with actuary. Actuary has to create provision for these claims. Actuarial provision has to be created. And remember, provision for claims shall be made only for the policies where company is legally liable. Only when the risk was covered by the policy. And it is not in the exclusion clause of the policy document. And it is not a loss. Of course, it's covered. And the person who incurred the loss is policy holder. Are you clear? Recently, one case happened. A car tire was blasted on road. Tire blast happened. And insurance that fellow, because of the tire blast, suddenly the car was almost it didn't go well. Like some damage happened. It went and hit the divider suddenly. Nothing happened to the people. The person went and claimed a case against the insurance company, where the insurance company rejected the claim, saying that it's nature of act of God. Where the court has declared that tire burst is not an act of God, it's a negligence. Negligence is covered under insurance. Getting the point? Criminal breach is not covered. Negligence is covered. Generally, tire burst happens not only because of the tire was wear and tear. Sometimes it happens because of the road condition. Sometimes it happens because of the heat on the road. So many reasons. Sometimes it happens based on the speed the customer is going. Because for each tire which the tire company is manufacturing, tire pressure sensitivity will be there. At what speed the tire can generally go? What is the speed of the car at which it can go maximum? And how much pressure the tire can tolerate? All that factors will play. So this is not an act of God. Insurance company is wrong. They have to pay the claim. So this is what court declared. Next. Next. See, there is something called average clause. There is something called average clause. When you are settling the claim, when you are creating provision for claim, no, you need to apply average clause. What is average clause? Suppose my asset value is 100 crore, but I took insurance only for 50 crore portion. Now, when I incur loss for the asset, no, how much loss insurance company shall settle? 50% only. So that is called average clause. If the sum assured is less than the value of the item I am insuring, then average clause will apply at the time of settlement. Are you clear? Next. Now, in case of co-insurance, no, every insurance company account for provision for how much portion, their own portion of risk. Able to understand? People know, like they ask me, sir, special audits provisions please cover in marathon. That's what I'm covering. Getting it? But for these special audits, you need to read once at least and come, so that you understand better. Are you getting the point? If you without reading this, you cannot understand. That's why I'm focusing mainly on concept explanations, where I am giving you the knowledge on the terminology used in this chapter. Getting it? I didn't discuss in-depth audit procedures again. In-depth audit procedure, if I discuss, you don't understand anything, first of all. Okay, so first understand the terminology used in this. For insurance audit, we give 1.5 hour introduction only to explain the terminology to the student. 1.5 hour. Now within the 1.5 hour, I need to cover entire revision here for you. Getting it? Don't expect like a regular class. It's a revision class. Please remember the fact. Okay. Then how to do audit of claims paid? How to do audit of claims paid? Always we should check, in case of a co-insurance contract, only our portion of claim is paid to the policy holder. We should not pay the remaining amount. Remaining co-insurance companies, they will pay their own share. Sometimes, no, lead insurance company will compensate the entire amount to the customer, and the lead insurance company will collect from remaining insurance companies the claims cost. Are you getting it? So you see, in case of co-insurance arrangement, claims paid have been booked only in respect of company share, and balance amount of company paid, they will be debited to other insurance. Debited means what? In my books, I will debit other insurance companies. Only for eligible policies the claim is paid. And there is something called salvage and subrogation. Letter of subrogation has to be obtained by insurance companies. What is subrogation? See, suppose a customer car has got damaged. Insurance company has compensated with a new car. They sold a new car where some customer has to pay some additional road tax only has to pay, but original car value, whatever is insurance company paid, customer has got a new car. Whatever old car is there, right? That will be sold in scrap. The proceeds insurance company will take. That is called letter of subrogation. There I will take a customer, I will take a declaration from the customer that tomorrow you should not go to the person who committed the damage. You cannot go and blame him again and recover from him. I paid you, already compensated you. From that person I will try to recover something, and whatever scrap is there I will recover. Getting the point? So for this customer, from the customer I will get a declaration that you don't have any link with this loss now onwards, because I compensated loss, that's it, end. You have to go off. That's it. So this is called subrogation. Are you getting the point? And I should also get a unqualified discharge note from the customer. This is like, tomorrow you should not file a case against me again. Are you satisfied with the claim? Yes, customer said satisfied. Sign the document that you are discharged with the claim amount. You cannot again make me liable in the court of law tomorrow. So like this, I will get a 2 signatures. One is subrogation letter, another one unqualified discharge note. Are you getting it? And every insurance company must pay claim within 30 days of the lodging of the claim, unless there is a reasonable justification for the delay. Generally, within 30 days only, they have to pay the claim. And whenever the claim is paid, reinsurance share shall be received from the reinsurance company. That's it. So this is about claims paid and claims provision audit. Next, how to do audit of commission. Here you can directly come here. Any 4 points, it's easy point. See, IRDA has prescribed what is the maximum rate of commission that an insurance company can pay to brokers. See that the insurance company is paying commission only as per IRDA regulations. Before that, first of all, every insurance company has to develop their own policy for commission, where the policy must be as per IRDA rules. So, how much maximum commission an insurance company can pay to a broker? Maximum as per the policy, subject to within the limits prescribed by IRDA. So, see that, ensure that commission paid is as per the rates agreed with the agent. Not only rates agreed with the agent, you should also see that it is not paid in excess of IRDA limits. Getting it? And commission shall be paid only to the broker who solicited the business. Moreover, the agent must not be blacklisted by IRDA. The agent must be a registered agent with IRDA. And see the disbursement and entries and see whether TDS is income tax TDS is deducted 184H TDS is deducted or not. You have to check and see the correctness of the commission allowed and see whether commission outgo has been properly accounted in the revenue account or not. You have to check. Any 4 points, right? Audit of commission paid to brokers, whether life insurance or general insurance, it's same. The answer is same. Next, operating expenses. You know, here no, in 2 or 3 points only we will see. You know, in general insurance, operating expenses are classified under 13 heads. In life insurance, operating expenses are classified as 14 heads. In life insurance, operating expenses are classified as 14 heads. It is 14 heads. Okay, it is 14 heads. Here it is 13 heads. Getting it? Like its name. And further, any major expenditure, what do you mean by major expenditure? 5 lakhs or 1% of the net premium, whichever is higher, shall be shown separately. Minimum 14-13 heads has to come. If it is 1% of the net premium, again, number of heads will kept on increasing. Are you getting it? That's it. Remaining all are general points of audit. No specific link with insurance law. Getting it? Investments also here. How to value investments? Investments held by branches, investments held by third parties, pledged or hypothetical investment, matured investments, investments held for maturity, investments held for trading. All the general investments point. If you understand accounting standard, you will understand by simple reading. Okay. Cash and bank balances, how to do audit, just like for any other entity. This can be important. Outstanding premium and agents balances. Sometimes no premium is collected by agent and he has to remit to the company. Whenever premium is collected by the agent, he should inform the insurance company that he has collected the payment. Insurance company will debit the agent balance. To the agent, the insurance company has to pay the commission, right? It will be crediting. Getting the point? So, insurance company's agent balance should be debited for any outstanding premium which is already collected by the agent. He has to be remitted to the insurance company regarding that. See that there is a proper controls for that. And if any inoperative balances were there, what company has to do? Suppose if suddenly agent has died and in his account some balance is there, what is the company rule regarding that? What is the reason for retaining old balances with agents? And do an aging analysis, sector-wise analysis. Whether outstanding premiums as indicated in agent account is collected ultimately or not. That all you have to check. This basic point again. Provision for tax, again normal point. Unexpired risk reserve. Unexpired risk reserve. See, whenever we sell policies, sometimes the risk in the policy may not assume in the same year. The risk in the policy will continue in the next year. As on 31st March, insurance policy did not expire. Many policies will not. Suppose I sold a policy on 1st March. I sold a policy on 1st March. As on 31st March, risk is not expired. Anyhow, I account it on accrual basis only, time basis or risk matching basis only. I will account only 1 month premium. In spite of it, overall net premium will be there, no. Some percentage you should always create provision for unexpired risk. Some percentage you should always keep provision for unexpired risk, and that reserve is called as unexpired risk. They're not even calling it as provision, they're calling it as a reserve. It's a prudence, getting it? This is like a prudential norm for the insurance company. So every insurance company should create a reserve for unexpired risk as a prudential norm for the insurance company. How much unexpired risk I can create? I have to create 50% of the premium amount. How much? 50% of the premium amount to create it as unexpired risk reserve, or follow 1/365 method. Most of the insurance companies follow in reality first approach, 1/365 method only they follow. 50% method they don't follow. But in income tax, no. For unexpired risk, no, there is a deduction available. In income tax, there is a deduction available under section 44 for insurance companies towards unexpired risk. How much? In respect of fire and miscellaneous business, 50% of net premium. In case of marine business, 100% of the net premium is allowed as a deduction straight away. Are you getting it? So this is treated as unexpired risk reserve. Next. I spoke all about reinsurance, facultative reinsurance. They may ask in exam, if at all they want to ask a tough question, no. They may ask you this question. What are the circumstances where facultative reinsurance cannot be used? Or what are the circumstances, what are the drawbacks in facultative insurance they will use? Getting it? If the risk is excluded from the treaty means there is no treaty on the type of insurance policy. So which means that insurance policy, reinsurance will be done or not, case to case they need to decide. That's what facultative insurance. So they may ask you this question directly. Insurer does not want his reinsurance treaties overburdened. In such case also, facultative insurance only they will go and adopt. The insurer has no automatic cover at his disclosure in a particular branch where he issues policies. See, automatic cover means, suppose, very simple, if I take an insurance policy from a from a company for one of my car, example. See, car prices will increase. Car prices will increase. That is called price increase protection. What is it called as? Price increase protection. Getting it? Suppose I purchased a car in 2015, example, and met with an accident in 2020. Similar car model company would have been launched as a facelift. Getting it? Now in 2021, that car price is very high. This car price is low when I purchased 5 years back. Inflation, all that will play. Insurance company will give me price fluctuation protection like that. Some protection will be there. So whenever price increase, insurance sum assured will automatically cover that. That is called automatic cover. So wherever automatic cover option is not there, getting the point, facultative insurance is only coming into picture. Automatic cover, if it is not possible in some cases, facultative insurance only they'll go. So in facultative insurance, generally do not cover automatic covers. Whatever originally agreed, only that will be there. Generally, facultative insurance and all will be done for infrastructure projects, big companies, like I told, right, atomic energy, defense companies. For them, if a company sold any insurance policy to one defense manufacturing company, now the same insurance company want to buy reinsurance, they don't go on a treaty mode. They will come and evaluate the case once again completely and then only accept reinsurance. So that's it. Types of reinsurance, all that is given. How to do audit of reinsurance inward? This can be asked as a question. How to do audit of reinsurance outward? This can be asked as a question. This and all you can understand only if you read. Getting it? If I keep on explaining this, we don't have time for other chapters. I am giving a basic idea. Please read on your own later on. Next, co-insurance I already spoke. Solvency margin I told. How much solvency margin? Minimum 50% of the minimum capital. The excess of value of assets over liability should be minimum 50% of the amount of minimum capital as stated in so and so. If non-maintenance of solvency margin, they'll ask a question. What are the consequences if solvency margin is not maintained? They'll ask a question. The insurer has to submit plan of action. If IRDA finds that this plan of action is not feasible, they will ask them to modify. If insurance company is unable to convince the IRDA about their future financial plan of action, IRDA will treat them as deemed to be insolvent and insolvency proceedings will be initiated against the insurance company. And there is another thing called trade credit insurance. Trade credit insurance means here supplier of the goods, seller of the goods, only seller of the goods and services. Getting it? He can only take a trade credit insurance. Suppose I am exporting goods or I am exporting service to a buyer who is there in outside India. Getting the point? Now I am having the risk of non-payment from the buyer. I will take a trade credit insurance. Trade credit insurance cannot be taken by a banker. Trade credit insurance cannot be taken by a loan finance companies. Trade credit insurance means trade. There is a trade, means selling of goods and services. Something goods and services must involve. Now here the insurance person is who? Supplier. What is the contractor? Amount of consideration receivable from the buyer. Now what is the risk? Non-payment for the buyer, non-payment from the buyer or importer, whoever it is. So this is called trade credit insurance. Getting it? And in trade credit insurance, generally political risk cover is not available for buyers within India. Political risk cover is available only for the buyers outside India. There is something called political risk cover. Suppose if the buyer is unable to pay because of sudden changes in geopolitical factors, Ukraine war is happening. Suppose you sold goods to Ukraine. A customer who is there in Ukraine, because of the war, suddenly his all cash, everything was freezed. So against that only, now I can sell political risk cover trade credit insurance only when the buyer is in the other country. Within the local country, political risk coverage will not be covered. That's what they say. Getting it? Political risk coverage cannot be given within the country. If the buyer is situated within the country, because of the political reasons, if at all is suffering to pay, we will not cover that risk. That is what insurance company. But of course, it's after all a contract. Terms and conditions can be changed. So what are the requirements of a trade credit insurance product? This can be asked as a straight 4 marks question. What are the basic requirements of a trade credit? First of all, policy holder is what? Non-receipt of trade receivable against goods or services that is sold. Who is a policy holder? Supplier of goods or services. And trade receivable is something that does not arise out of factoring arrangement or reverse factoring arrangement. I hope you know factoring, reverse factoring. Yes. Policy holder has a customer who is liable to pay. Yes or no? And policy holder is undertaking to pay the premium for the policy and any other requirement as may be prescribed. These are the requirements in order to sell trade credit insurance product. Are you clear? Then what are the contents of the audit report? This is a very easy thing, ma. This is similar to bank. When I am discussing about bank audit, I will discuss there. And what are the signatures to the financial statements? These two are very simple concepts. Okay. With this, predominantly insurance topic, key terms we discussed. All the terminology we discussed. Terminology wise, entire terminology has been discussed. Are you getting it? It's a 8 hours chapter. It's 8 to 9 hours chapter. So we try to cover more than, I can say, 1 hour 45 minutes. 1.5 hours, it's recording shows. And previously I gave an introductions of 10 minutes, I think something. So 1 hour 40 minutes we covered. Getting it? That's it. So take care. Then immediately after this, I will give standards introduction. Are you clear? Okay. Yes, we'll start. So audit of consolidated financial statements. First of all, 129 subsection 3 of Companies Act is talking about consolidated financial statements. As per that, every company which has a subsidiary or associate shall prepare consolidated financial statements. And in Companies Act, associate company definition includes joint venture. That's why specifically joint venture word is not used in the Companies Act, because joint venture is also part of the associate company definition. But the method of consolidation, for associates and joint ventures is different. I think, right? The method of consolidation for associates and joint ventures is different, or joint ventures are also accounted on equity method. Proportionate consolidation method, same only, right? Yes. So the joint ventures are accounted on proportionate consolidation method, whereas associate company investment made is accounted on equity method, where I show it as investment in my balance sheet. Consolidated balance sheet, we show it as investment. That's it. Whereas subsidiary company is also accounted on 100% line by line consolidation method. And you see, in a subsidiary company, we consolidate 100% of the assets and liabilities. but I am having 60% ownership only. But while adding the assets, I added 100%. While adding liabilities, I added 100%. 40% does not belong to me. For that 40%, what we do? Minorities interest. We call it as non-controlling interest. What is it called as? Non-controlling interest or controlling interest. In DIS, it is called non-controlling interest or controlling interest. Whereas in accounting standard, minorities interest. Getting it? So, we create non-controlling interest as a liability in the consolidated financials. I hope everyone aware of it. Basic idea about consolidation, I hope everyone are having. Okay, now. So, overview of consolidated, format of CFS, audit of CFS. This is important. So, very simple. We have to do audit of consolidated financial statements as per guidance note on audit of consolidated financials. There is a guidance note which is released by the institute for guidance note on audit of consolidated financials. So, as per that guidance note, we will have to use. Okay. Next. Applicability of CFS. Applicability for which company's applicability? Consolidation applies. 129.3 clarifies where a company has one or more subsidiaries and including an associate company and joint venture, it shall, in addition to its own financial statements, prepare consolidated financials. In NDAS, they are called as sometimes separate financial statements or standalone financials. Both are same. And consolidation means consolidated financials. See, consolidated financials will give a better picture about the company. Getting it? Why? Because you are having children, who are suffering losses. It is like a marriage. Getting it? When you are investing in a person, no, you need to see not only the person but the entire family. The same process, the same logic applies for consolidation. Tata Motors is best example. Tata Motors individually standalone is having very limited loss, whereas consolidated loss of Tata Motors is huge. Getting the point? So if you want to invest in Tata Motors with the name that tomorrow in next year Tata Motors turns into profit based on standalone financials, in reality it is not so. Because most of the profits of Tata Motors are taken by Jaguar Land Rover. Because they are loss-making, huge, big loss-making companies. Able to understand? So people want to know in your group, in your company profits are not only enjoyed by you, your company profits are taken away by the loss-making subsidiary companies that you are having. You see, in standalone financial statements, we create provision for subsidiary companies. Do we? In standalone, as per accounting standard 21, I think, we create provision for losses of subsidiary companies. Something we create a provision. NDAS or something, is it there? Huh? Okay, fine. Why should I confuse you? Okay. Now, whatever provisions that apply for standalone financial statements like audit provisions, all that, they equally apply for consolidated financials. Consolidated financials shall also be approved by the board of directors. Consolidated financials shall also be sent to the shareholders for calling for general meeting. Consolidated financials shall also be given in the annual report. Whatever provisions that equally apply to standalone, they say the same provisions equally apply for consolidated financials. That is what this point. It shall also be approved by board of directors and members of the company, and the consolidated financials shall present important features of financial statements of subsidiaries, subsidiary related financial information. What is the capital involved in each subsidiary? How much is the turnover? How much is the profit? Like that, some 9 or 10 points were there. With respect to each subsidiary, you must mention important features of each subsidiary. Nothing but see, I saw consolidated picture, but I want to know each subsidiary related basic information. I don't want full-fledged information. See, suppose Reliance company has consolidated 466 companies. Getting it? Now, I want to know individually each company's performance. Should I see all 466 separate financial statements of these companies? It's impossible. So, in the consolidated financials notes to accounts itself, with respect to each company, give basic information. Basic information means what? What is a capital? What is a reserves and surplus? What is a current assets? What are current liabilities? What are non-current assets? What are non-current liabilities? What is the gross profit? What is the net profit? What is the provision for tax? What is deferred tax? Basic information in respect of each subsidiary you provide in the consolidated financials. We call them as silent features of standalone financial statements of each subsidiary company. Are you getting it? Hey, okay. For all chapters, same expression. Next. Now, how consolidated financials? What is the format of consolidated financials? Same Schedule 3 format. In case of a bank, banking regulation format will apply. For insurance, insurance format will apply. For normal companies, Companies Act Schedule 3 format will apply. Now, there are some companies which are exempted from consolidated financials. This exemption I'll discuss later. Again, we have a separate question on this. Inside that I will discuss. Audit points were there. What are the points that auditor has to verify? Their auditor has to verify about exemption from consolidation. So there the provision is discussed little bit in depth. So there I will cover. Are you getting it? Now tell me, whose responsibility to prepare consolidated financials? Obviously, the parent company, nothing but the holding company. Yes or no? The parent company has to identify what are the components, nothing but what are the subsidiaries, associate, joint ventures that are to be included in consolidated financials. Here, our SA 550 study will help. How to identify related party relationships and the transactions made with them. Getting it? That procedure will help. Getting it? Where appropriate, identify reportable segments of, segmental reporting, identify related parties and transactions, get accurate, complete financial information from components, making consolidation adjustments like permanent adjustments, current adjustments, and accounting policies must be harmonized, gap conversions must be done. Able to understand? These are all responsibilities of the parent. So preparation of consolidated financial statements is responsibility of the parent company. What these responsibilities include? 4 marks question. Able to understand? This can be asked as a 4 marks question. Now, what is auditor responsibility? One of the provision of Companies Act says whatever provisions that are applicable for holding company standalone financials, they equally apply for consolidated financials, which means consolidated financials shall also be audited and audit report shall also be given on the consolidated financials, and giving audit report on consolidated financial statements shall be considered as a separate assignment. No, it's normal assignment. Now, here there is a point. See, when I'm doing consolidated financial statements, I will take help of other auditors, no? Like subsidiary company auditors and joint venture auditors, associate company auditors, no? Now I gave them certain instructions. As part of my consolidated financials audit, I gave instructions to subsidiary company auditors, joint venture auditors. Now, joint venture auditors, in addition to giving audit report on standalone financials, they are also giving some additional information to the parent company auditor for assisting him in consolidated financial statements audit. Now, in that case, these subsidiary company auditors were helping in addition to their audit report, right? For them, it is treated as separate assignment. For them, it is treated as a separate assignment. Normally, as an auditor of a company, what is my responsibility? Giving opinion on the financials. For me, I am an auditor of a company which is liable to prepare consolidated financials. So, it is part of my liability. It is part of my responsibility. Because this company is preparing 2 sets of financials, all the provisions applicable for SFS apply equally to CFS, which means I have to give opinion on CFS. It is not a separate assignment. But look at from subsidiary company point of view. I am the auditor for a subsidiary company. What is my responsibility? Basically to give opinion on the financials. I give opinion. Now suddenly parent company auditor is coming and asking me to give some information to assist him while preparing consolidated financials. Now I am assisting him in addition to my audit opinion. This is an additional assignment for me. Are you getting the point? So, what is the auditor objective when he is auditing consolidated financials? When you're auditing consolidated financials, what is the objective of the auditor? First, he has to satisfy whether the consolidated financials are prepared as per applicable framework. Very basic point. Second, he should express opinion whether the consolidated financials are giving true and fair view. Then he should inquire into the matters given under 143 subsection 1. He should talk about checklist items 143 subsection 3. Yes or no, in the audit report given on consolidated. CARO do not apply, remember. Only 21st clause of the CARO will apply on consolidated financial statements audit report. The auditor shall also validate requirement of preparation of consolidated as per. You should only check whether company is liable for consolidation. If liable but company not prepared, getting it, you mention that in audit report. Where you are giving on standalone financials, no, you mentioned in the audit report emphasis of matter paragraph, the company has not prepared, or you will do one thing. You do one thing. You give a separate audit report. Audit report on consolidated financials. Directly below, disclaimer of opinion. We do not provide opinion on the financial statement because they were not prepared. Able to understand? So, standards on auditing, guidance notes, okay, all these apply in the same manner. When you are doing audit of standalone financials, how standards apply, all that in the same manner, they also apply for audit of consolidated financials. Like you have to plan your work, obtain an understanding of accounting and internal control systems regarding consolidation tool used by the management. You should apply professional judgment regarding risk. Design your audit procedures so that the audit risk opinion that you express on consolidated financial statements will not go wrong. That risk shall be reduced to an acceptable level. What are the audit considerations while auditing consolidated financial statements? First of all, consolidated financial statements are prepared on the basis of separate financial statements of the parent and its components. Now we use a consolidation procedure as given by accounting standard as per applicable framework, and consolidation will be done. Getting it? The auditor may use work of other auditor as per the requirement of standard unless he himself is the auditor for the other components also. Suppose in Reliance, no? Reliance Industries Limited auditor himself is the auditor for 24 group companies, 24 subsidiaries. But for some 280 or 290 or some 300 plus subsidiary companies, he is not the auditor. Getting it? The consolidated financial statements are prepared using separate financial statements of the parent and the components, and also financial information which might not be covered by separate financial statements. There are some points which are not given in consolidated financials but are given exclusively in separate financial statements. In one of the exam they asked this, I think in the last attempt only. What are the points that are informed, that are to be presented in standalone financial statements only, but not in consolidated financial statements? Some question has been asked. I think that is given in here. Certain points to be mentioned in SFS only, but not in CFS. I think current period adjustments, no. In that it is given. 503, what? 103. Disclosures in CFS. Not that, this one 13. Getting it? Disclosures in SFS but not in CFS. This question was asked in last attempt, I think November 22 attempt only this was asked. So this question only was asked, exactly the same question. Getting it? So I think 4 marks. This is asked for some 4 marks. Correct? Anyhow, I'll come back. Next, when an auditor accepts the audit of consolidated financials, the auditor should assess whether he is able to express opinion on true and fairness of consolidated financials. If the auditor is of the view that his own participation may not be enough, he would be considering the use of other auditors. Sometimes auditors may take help of other auditors so that it will assist him for better audit of consolidated financials. In such a case, such other auditors, who are they? They are the stat auditors of components and are specifically appointed, or the auditors appointed specifically for assisting consolidated financials audit, where stat auditors of one or more components are requested to assist principal auditor. The work to be performed by those stat auditors to the principal auditors would constitute an assignment separate from the stat audit assignment. That's what I told. I'm a subsidiary company auditor. My responsibility is to give opinion on the financials and leave the company. That's it. But principal auditor of parent company is coming and asking me, please assist me in preparing in audit of consolidated financials. So I am assisting. This is an additional audit assignment for me beyond my audit, for which I will charge a separate fee. That's what this point means. Getting it? Now, materiality determination. Now, when you are deciding about materiality, you decide from consolidation perspective. Suppose Reliance company standalone financial statements turnover is 4 lakh crore, but consolidated turnover is 7.5 lakh crore. What is the consolidated turnover? 7.5 lakh or 7.2 or 7.9, something is there. Consolidated turnover is 4.5 lakh crore. Same way banks also. So standalone turnover is different, consolidated turnover is different. Now, when at branch level, sorry, at individual company level, for this company, 10 crores may be material, but as a whole, 466 companies put together, 25 crore may be material. Are you getting it? So materiality will vary for consolidated financials when compared to standalone financials. So they may ask you here, write about materiality determination while auditing the consolidated financial statements. What points auditor should consider while determining materiality while conducting audit of CFS? They will ask you a question on this exclusively for 4 marks. Are you getting it? So what auditor has to check? Auditor has to compute materiality for the group as a whole. The materiality should be used to assess appropriateness of consolidated adjustments. If any adjustment went wrong, is it material misstatement or immaterial? We need to assess. That's why I need to fix materiality. The parent auditor can also use materiality computed on group level to determine whether component financials are material to the group or not. Generally, in India, 20% criteria is given in order to determine whether a component is a material component or not. The principal auditor computes materiality for each component and communicates to the component auditor if he believes is required for true and fairness of consolidated financials. Suppose I am appointed as auditor of Reliance Industries Limited. Immediately, as soon as appointment is taken up by me, immediately I should arrange a meeting with all subsidiary company auditors and I should tell them this is a materiality level that you need to fix for components also, so that if you all of you fix 0.5% of turnover as materiality, for I will also follow with the same percentage, 0.5% of turnover in the consolidated figures. Getting it? So I will tell them so that all of us determine materiality uniformly. Are you clear? We discuss in class United Kingdom Shell Audit Report for materiality. We discussed in class, this concept only exactly. How materiality is determined by, Shell company auditors in United Kingdom. Getting it? This is audit report of Shell company. We almost discuss European audit report. We discuss United States audit report in the class, UK framework audit report, and we compare it with Indian company audit reports for a better understanding. Okay, so United Kingdom, one of the comprehensive audit report where we have seen, there they spoke about materiality. If any of you do not understand materiality standard, you can see this and read the standard again, you understand little bit better. Able to understand? So here they clearly explained what is the materiality, why they have increased the materiality compared to last year. So all that we discuss in our class in SA 320. Getting it? Next. Now suppose here I am consolidating the financial statements, right? 466 companies. Suppose 10 company auditors, they have gave adverse opinion, modified opinion. Now I am the auditor of holding company, right? Should I also give modified opinion is the question. I will consider as per SA 600. So I will consider materiality point. So see, those 10 company auditors have given adverse opinion because they feel it is pervasive according to their company level. But when the company comes to 466 level of companies put together, that may not be even material. So we need to apply SA 600 procedure. Able to understand? Now, so this modified opinion in other auditors report and process of consolidation point, different reporting scenarios. This is important in consolidation chapter, which generally people don't understand. So this we'll discuss in the next class. Okay. So now we have only covered the basic aspects. Little advanced aspects we'll be discussing in the next class. Getting it? That's it. Yes. So process of consolidation. So how do we audit? What is the audit process of consolidation? So just like any other audit, we have to plan the audit of consolidated financials. So what is the audit process involved in this? First, you have to get list of all the components. See here, components mean what? Subsidiary, associate and joint ventures. Getting it? And verify that all these components have been included in consolidated financial statements. Check out. You can find this in the consolidation software. What are the companies that were included in this consolidated financial statements? Now, they'll ask you this question itself specifically for 4 marks. Write about completeness of inclusion of components. They may ask you a question. Write about completeness of inclusion of components while preparing consolidated financial statements. What as an auditor you review to ensure the completeness of components? So I review previous year working papers for whatever the noun components, whatever the components that we know, and we also look at the parents procedures, how the company is identifying the components. We inquire management to identify any new components which are or at the same time components that were out of the company group. And we also look at the investment pattern of the parent. We look at the joint venture arrangements. We look at any other arrangements and agreements entered into by the company with various other companies, so to look at whether it satisfies joint venture or associate company definition. We review various records maintained by the company with respect to related party relationships and transactions. And we also look at shareholding pattern of the company. By looking at all this, can we identify what are all the companies with which the company is having financial dealings? And by looking at these, by understanding the financial dealings between these companies, we also understand that whether it constitutes a parent or subsidiary or associate or joint venture, we understand. So how do you identify? You know, these are similar points that we do review for identifying related party relationships and transactions as per SA 550. As per SA 550, in order to identify related party relationships and the transactions made with them, these are the similar points were there in that also. Able to understand? There also, we also look at investment pattern of the entity. We look at where and all the company has invested, and we look at the shareholding pattern, who has invested in these companies. Getting it? What are the new companies company acquired, the group has acquired, and what are the companies the group has sold? Getting it? Like we see all these points even in related party relationship identification. Next. Now the auditor should document all this procedure. So this itself can be asked as a 4 marks question in this entire thing. There are various means where a control, a joint control or a significant influence, control results in subsidiary, joint control results in joint venture, and this is associate. Getting it? There are various means. One is composition of board of directors, controlling the composition of board of directors. One of the factor to determine control subsidiary company status is what? If the company board of directors composition is decided by another company, then the other company is said to be the parent company of the first mentioned company. Yes or no? So that point only have given. Now you should also check what are the companies that are excluded from consolidation. What are the companies that are exempted? I can say exempted from consolidation. First of all, there is a topic under Companies Act, under old accounting standard. If an entity is treated as investment entity, that entity is exempted from preparing consolidated financial statements. An investment entity is exempted from preparing consolidated financials. That is one exemption given in the accounting standard. I don't think in the Ind AS 110 it's there. It's not there. There is no specific exemption given for investment entity. Getting it? Even in the accounting standard, we have like what? Sorry, Ind AS 110 investment entity is exempted, right? Yeah. Temporary control is not exempt. I think earlier in accounting standard, no, at the time of acquisition itself, if the control is temporary in nature, at the time of acquisition itself, the company knows that the company is acquiring and selling it in the next year or immediate next year. We are buying it for temporary sake. The company knows very well. If the control or significant influence is of temporary in nature, then that component is exempted from consolidation because it's a temporary. Such a kind of exemption is not available in Ind AS. Even if the component is acquired, even if the subsidiary company got acquired, for 6 months in a financial year, we have to consolidate up to the date it becomes ceases. Up to the date it ceases as a subsidiary. Up to the date it ceases to be an associate. Until then we have to consolidate the figures. Are you getting the point? Now, under Companies Act, there are some other companies which are exempted from consolidated financials, which satisfy 3 conditions. There are 3 conditions A company which satisfies these three conditions is exempted from preparing consolidated financials. Like what are they? First of all, it's a wholly owned subsidiary, or it may be a partially owned subsidiary. Simply, it's a subsidiary of another company. Wholly owned subsidiary means nothing but 100% share capital will be held by one company. Getting it? Typically speaking, 100% share capital is not possible legally. Why? Because minimum for a private limited company 2 members and for public limited 7 members was required. Wholly owned subsidiary company means we look at the beneficial ownership, not the legal ownership. We look at what? Beneficial ownership, but not the legal ownership. Example, you look at APPDCL, AP Power Distribution Corporation Limited, Telangana Power Distribution Corporation Limited, all the state-owned government enterprises, state-owned electricity distribution companies. Let specifically, these companies are called as DISCOMs, distribution companies. We call them as. All of them, 99.9999% of the paid up capital is held by government of the state. Only some 0.0001%, some 10 to 20 shares. Number of shares for how many? 10 to 20 shares will be allocated in the name of the directors who are treated as nominees of the company. Nominee means what? On behalf of me somebody is holding. That is nothing but a nominee. Beneficial ownership is with whom? Company. And that's how a 100% subsidiary can be formed in reality. So anyhow in law, we look at substance over form. Beneficial ownership is only recognized in law compared to legal ownership. So beneficially, are you a wholly owned subsidiary or not? We have to see. And normal subsidiary. And all the members, getting it, including those not otherwise entitled to vote, in nothing but we can call them as preference shareholders. Getting it? Including preference, they have intimated in writing and that for which proof of delivery is available, do not object the company for not presenting. If the company members, including preference shareholders, they were all informed that our company is not going to prepare consolidation, financial statements, and they all agreed for it. None of them objected. 100% approval is required. So that is condition number 1. Second condition, this company should not be listed on any stock exchange. This company should not be listed on any stock exchange. And moreover, it has a holding company, right? It has a holding company. The company which is liable originally to prepare consolidated financials, it's actually an intermediary company. In a group, in a big chain of companies, like example, Tata, you take Tata Sons is there, below the Tata Motors is there, below Tata Motors there's a Tata Passenger Vehicle Division is there, company. It's a 3. Suppose if Tata Motors is not a listed company, Tata Motors ultimate holding company, Tata Sons is preparing consolidated financials, Tata Motors is not a listed company. Are you getting the point? Then this is exempted from consolidation. But why Tata Motors has prepared consolidation? Because it is a listed entity. Are you getting the point? So, if an intermediary holding company, is it liable for preparing consolidated financials? Normally, yes. If they want to claim exemption, first point, get approval from all the members of the company, inform them in writing, get NOC from them. Second condition, you must not be a listed entity. Third condition, your parent, which is ultimate parent, is there, or your next immediate intermediary holding will be there, right? Some other holding company, it is preparing consolidated financials. Only you are exempted, not your group is exempted. Are you getting the point? That's it. And even in the India AS 110, they prescribe certain criteria where consolidation is not required. So the auditor has to verify. See here, no, actually, the auditor should satisfy himself that exclusion falls within the categories. Example, in case of an entity which is excluded from consolidation on the ground of that relationship of parent with other entities a subsidiary, because it is temporary, the auditor should verify the intention of that parent to dispose of the subsidiary that existed at the time of the acquisition itself. See, I'm not exactly sure. I've seen the India's also, normal plain text I've seen. Investment, temporary control. I have not seen specifically that it is exempted anywhere. Maybe substance over form. Sometimes we need to achieve true and fairness, fair presentation framework. Getting the point? Substance over form. Temporary control means a temporary control. At the time of acquisition itself, we know that it's a temporary company going to be part of our group for temporary, for few reasons. Suppose we gave a loan to a company and the company could not pay the loan. The other company has, in return they allotted total securities, convertible debt, convertible preference. Now, because of the default made by the other company, we converted the debt into equity, through which we acquired ownership in that company. And we don't want to retain this ownership at all. We want to sell it immediately also, because we don't want to transact in that company business. Are you getting the point? So the control is very much temporary in nature. In order to achieve true and fair view, I may ignore that company in my consolidation process, which may be a deviation from Ind AS. Why am I ignoring that? To achieve true and fair presentation. If at all achieving true and fair presentation is objective, and for which you are deviated from Ind AS, nothing is wrong. Are you getting it? No lawmaker can punish. Next. Any other reason, suppose if at all any component is excluded, or if at all the company has not prepared consolidated financials for any reason other than listed in the law, then obviously auditor has to give a modified opinion. And when you are examining the consolidation process, you should also check the status of these companies. What are the components? See, last year I have 100 subsidiaries. Not all 100 of them will continue in this year. There will be a change in number of subsidiaries. Second one, not every company which is a subsidiary in the last year is also a subsidiary in the current year. For some companies, we would have sold some ownership percentage where it resulted in losing of control, but we can still influence them. So last year it was a subsidiary, now it became an associate. So change in status of the company also you should keep in mind. And auditor should also check what? Method of consolidation. Now we all know for subsidiaries it's a line by line consolidation. Associates it's an equity method where we show it as investment. Whereas in case of jointly controlled, we use proportionate consolidation method. Yes or no? We just have to check whether these methods are followed in accordance with applicable accounting standard. Next. Now this is under accounting standard, even which is similar under Ind AS also. The method of consolidation is similar even in Ind AS. The next one, what are various consolidation adjustments? This is purely an FR accounting related topic. So this I am not covering. Okay. This I am not covering. I don't even cover this in my regular class because this is completely what this is not audit aspects. What are the adjustments that are there in the consolidated financial statements? Permanent adjustments or what? Current period adjustments or what? Permanent adjustment means what? Capital and goodwill, capital reserve. This is permanent adjustment. Every year you do that. Step 1 or step 2 you do that. Yes or no? Any of this, see, in these adjustments, any of that can be, they may ask you if parents reporting date and component reporting date are different, what are the points that auditor has to keep in mind? They just ask an accounting question only. So you just have to write this one, 4 marks question. How will the impairment loss of goodwill be treated in consolidated financial statements? They may ask you this also because this is there in the books, so the last possibility is there. Then they may ask you about subsequent events because that is there as part of the book. Then what are the disclosures that are to be made in standalone only but not in consolidated financials? In standalone some additional disclosures will come, but it will not come in consolidation. Why they were given in standalone is because these issues are company specific, not group specific. They don't have impact on the group. Example, from where the bonus shares were issued, source from where the bonus shares were issued. Are you getting it? It doesn't affect the group, no? Yes or no? And disclosure of unutilized monies out of the issue proceeds. Disclosure required under MSMED. A statement of investments, like what are the trade investments or other investments, and showing the names and body corporates. Value of imports imported on CIF basis. Value of all imported materials, spare parts material. The amount remitted during the year on foreign currencies. Foreign exchange, earnings in foreign exchange. These are all company specific, not group specific. For every company individually, this information we need to give. So individually for every company we should give means in which financials we should give this? Standalone financials. So there is no point of these information in the consolidated. Why? See, if you are giving this information in consolidated, consolidation is 460 companies in Reliance. For which company you will give this? So in consolidation, this kind of information is not required. Are you clear? I think this question only asked in the last attempt. Next. Now, once you did the audit procedure, once you understood, yes, company has consolidated the financial statements of all the components, and you verified the components also, you got reasonable assurance that whatever components that are to be included, were included, you got reasonable assurance like that. Now, you take a management representation. What you will consider, what you will get a management representation, you get a representation that all the components that are liable for consolidation were consolidated. If any component is not consolidated, then it is only as per the law. Getting the point? Like that we get a declaration from the management. Remember, this is only in addition to all the audit process that we do. The declaration that we need to get from the management is not a substitute for the audit. First you have to verify, you go through everything, then at last get a confirmation from the management also explicitly. Are you getting it? Next. So we get representation regarding completeness, we get representation regarding segmental reporting, we get representation regarding related parties, we get representation regarding adjustments related to consolidation. They may ask you this question. As part of audit of consolidated financial statements, after finishing the audit process, you are looking for representation from the management. Give the examples of representations that you get from the management. Then you, in such a case, you have to write the first 2 points, and these examples you have to write, because in exam the weightage will be given for the examples. Are you getting it? Anyway they can ask. Then how audit reporting happens in consolidation. How reporting happens in consolidation. Here they classified it into 5 cases. Getting it? Suppose Reliance have consolidated 466 companies, right? Out of them, let us assume some 30 companies were not audited at all. They were not audited. I need to disclose that fact. Where should I disclose? Other matter paragraph. I need to disclose that these many subsidiaries, these many associates which are included in consolidated financial statements were not audited. Getting it? So this is based on unaudited figures. Now you need to consider what is its impact on the overall materiality of the financials. Suppose if it is material but not pervasive and audit report is not there, which means absence of evidence, which means you have to give modified opinion. Are you getting the point? And the fact has to be mentioned in other matter paragraph anyhow. In other matter paragraph you mention the fact that components were not audited. What is the impact of not audited? Are they together altogether important overall consolidation point of view? Yes, they are material. For a material item, you are saying not audited. What do you mean by not audited? You don't know about that numbers. When you don't know about the numbers which are included in the consolidated financials, and you know that it is important number, material number, what you have to do? Modified opinion. That's what. The financial statements of all components should be audited and subjected to audit procedure in the context of multi-location group audit. Such audits can be performed by auditor reporting on the consolidated financials, or maybe the respective company auditor. The holding company auditor may be doing the audit of the component, or somebody else may be doing the audit of the component, where one or more components remain unaudited. The auditor who is reporting on consolidated financial statements should consider the unaudited components in evaluating modification to his report. This evaluation is necessary because the auditor is not able to obtain sufficient appropriate evidence. In these cases, look at qualitative and quantitative factors. What is the possible effect of these amounts which are unaudited? Accordingly, take an opinion as per SA 705. Very simple. See, generally, suppose 466 companies were consolidated. Now, whether the 465 companies related financial statements are true and fair, I look at their audit report. They are saying true and fair, so I will also conclude true and fair. What if there is no audit report? Are they true and fair or are they not true and fair? How do I know? So are they right or wrong? I don't know. When they are right or not, I don't have any evidence. Now I cannot sit and do audit of them. So some components which are unaudited were included in consolidation, out of which these amounts worth of components were not audited. So that amount is material. What should I do? Modified opinion. Are you getting the point? All of you? Sometimes it may result in disclaimer. Suppose if a material subsidiary is not audited, I may give disclaimer of opinion. Are you getting the point? Material subsidiary not audited. Not audited means what? I don't have audit report. In respect of a material subsidiary which is included in the consolidation, the amounts and disclosures related to that subsidiary, are they right or wrong? We don't have evidence. When I don't have evidence, how can I comment and say they are true and fair? I don't know they're true and fair or not. How can you tell me that they're true and fair? I cannot. So, disclaimer of opinion will come. If it is material and pervasive. If it is not material, if it is material but not pervasive, just qualified opinion will come. Able to understand. Next. Suppose no. Components audit report has been audited under a framework that is different that of parent. The auditing framework is different. Here what is different? Auditing framework. How the parent company audit is conducted, how the subsidiary company. Generally, when audit framework will be different if the subsidiary company is registered in another zone, another country. Are you getting the point? Where they follow different auditing principles. In such a case, what we need to tell is, we need to tell the component, please audit them. Please audit them once again as per Indian GAAP. Are you getting it? Indian GAAP means here, GAAP means auditing principles. That's it. So normally audit of financial statements include consolidation statements which are performed under auditing standards which are accepted in India. In order to maintain consistency of auditing framework and to enable the parent auditor to rely upon the other auditors' report, in their audit report, the component's financial statement should also be audited under same framework that is corresponding to the parent's GAAP or parent's gas, generally accepted auditing standards. Are you clear? It's a very simple point, this one, not a big deal. Next, the crux is in the C point. I'll come to the C point later. Okay. Now, suppose no. Components were audited by different auditors. This we have seen in Reliance company also. When components were audited by different auditors, what is the reporting requirement? We just have to mention the fact in the other matter paragraph that the so and so components were audited by other auditors. Not only mentioning number of components, you should also mention the quantification. Like whose turnover is some 4 lakh crore, whose total profit is this much worth of quantified components were audited by other auditors, and our opinion on the consolidation is based upon audit reports of these component auditors. You should mention that fact in other matter paragraph. That's what they mentioned here. In a case where parent's auditor is not the auditor of the component, but this component is included in the consolidated financials, the auditor of the consolidated financials should consider requirement of SA 600. So, if auditor considers it necessary, he can make reference to the audit of other auditors in the auditor's report, disclose clearly magnitude of the portion of the financial statements audited by other auditor. Reliance, you see other matter paragraph, 400 and so and so, 200 and subsidiaries were audited by other auditor. Whose turnover, whose total revenue from operations is 2 lakh crore, whose profit or net profit or loss is 2000 crore, like that they gave a disclosure. Are you getting it? Magnitude, quantification we call it as. This is called quantification. This may be done. How do you mention, how do you highlight the magnitude of these components? This can be done by stating aggregate rupee amounts or percentages of total assets, percentages of total revenue, percentage of total cash flow that are included in consolidated financials not audited by parent auditor. In State Bank of India, they mentioned very clearly 9,000 branches were audited by other auditors. 9,000 branches were audited by other auditors. And whose total interest income is 30% of the total income of the bank. Whose total interest expenditure is 20%. Whose total advances is this percentage. Whose total liabilities is this percentage. Like that they clearly mention. Even when you are giving unaudited information, suppose if the consolidated financials includes unaudited components, you should mention what are the unaudited components, what is the quantification also you should mention. 30% of the revenue belongs to unaudited components. This is not audited by us. Are you getting the point? Like that you need to quantify. Further, total assets. By the way, when unaudited branches are included in consolidated financials and if they are material, we directly qualify. In the basis for modified opinion paragraph, we mention the quantification. Able to understand? And what are the total assets, total revenue, total cash flow? You need to mention these three. Reliance auditors have exactly done that. Getting it? Which are not audited by you, but audited by other auditor. And mention a statement. See, you are giving only a disclosure. Remember, in other matter paragraph, you are only disclosing these many components were not audited by us, but were audited by somebody. And this is a percentage of assets, this is a percentage of revenue, this is a percentage of cash flow, or this is the amount of revenue, amount of cash flow, amount of profit. You need to mention that clearly and mention that you are giving just an information. Are you objecting anything? You have to mention a statement that our opinion is not modified in respect of the above para. Other matter paragraph requirement only. It's a presentation requirement. Whenever we present an emphasis of matter para, other matter para, or material uncertainty related to going concern para, at the end we have to mention one statement. Our opinion is not modified in respect of the above matter. Getting it? Suppose you are only auditor of all the components. You only audited the parent and you only audited. Suppose you take Reliance. The Reliance Industries Limited auditor himself audited 24 subsidiaries. He himself audited 24 subsidiaries. Now here, you just have to simply give your opinion. That's it, nothing else. Getting it? They don't talk anything about components because you are the one who audited the components. When I should talk about components in my audit report on the consolidated financials, 1. When component is not audited, I should give modified opinion. 2. When component is audited by another auditor, I should give that fact in other matter paragraph and I should quantify the information and I should mention that my opinion is not modified. And if the parent's audit process, parent's audit framework is different from component audit framework, we should recommend that, we should follow that. Component audit is also conducted in accordance with the parent's gap. Are you clear? What if components accounting framework is different from parent accounting framework? The question is, what if component accounting framework is different from parent's accounting framework? In such a case, consolidation is not possible. Because the framework in which they prepared financials are different from the framework in which I prepared financials. Are you getting it? Or the component has prepared financial statements using accounting standards, whereas the parent prepared financial statements using Ind AS. What we need to do? You might have learned this. If component accounting policy is different from parent accounting policy, first we need to convert the component financial statements so as to align with the parent's accounting policy. Yes or no? Same answer. If accounting framework is different for the component, then we should make sure the component financial statements are converted into that financial statements which is in line with the parent's accounting framework. Are you getting the point? Now, if at all component financial statements are in some other language other than parent, then when we are translating, we should ensure that the translation has done in the exact correct manner. We should have a reasonable assurance. Language experts should be used. Now, the parent company may have components which are located in multiple geographies outside India that is different than parent. So, no, foreign components prepare financials under their frameworks, which may be well-known framework like US GAAP or IFRS, whatever. Now, local components auditor may be unable to report on financials using Indian GAAP, yes or no? Their auditors cannot give audit report on financials which are prepared using Indian GAAP because they are familiar only with that US GAAP. Next, when a component's financial statements are prepared under accounting framework that is different than that of framework, this is what important point in this. Okay, the parent's management perform a conversion of the component's financials from the framework used by component to consolidated financial statements. The conversion adjustments are audited by principal auditor to ensure that financial information is appropriate. So parent has to convert and principal auditor of the parent company has to do audit procedures to confirm whether conversion happened correctly or not. Or another way, what is no? A component may prepare financial statements on the basis of parent accounting policies. Getting is as outlined in the group accounting manual. Big group companies, no, they will have group accounting manual. Whenever they acquire another subsidiary company, immediately on the acquisition date itself, accounting policies, everything they will modify so that they will be in line with the parent. Whenever a new company joined in our group, what accounting policies and systems they need to implement, we will have an accounting manual. It is a standard operating practice. What is it called as? A standard operating practice in accounting field, nothing but. Are you getting it? So we call it as group accounting manual. So one option is convert the financial statements of the component into parents format. Another option is have a group accounting manual, tell the component to prepare one more set of financials as per the group accounting manual and use that for consolidation after auditing that. That's it. When applying the approach of using group accounting policies, the principal auditor should perform procedures necessary to determine compliance with group accounting policies with a gap applicable to the parent. This ensures information prepared using group accounting policies will be usable and relevant for consolidation. The differences between the basis used in component and the consolidation, all that principal auditor has to identify. The principal auditor can decide whether to rely on the components auditor report or not. Very simple. First option, convert the component financials into parents financials format. Second option, component can prepare their own financials. In addition to that, prepare one more set of financial statements using group accounting policies, group accounting manual. Then now they prepared freshly the financials, right? That is not audited. So principal auditor has to verify whether whether the component prepared financials using correctly as per group accounting manual or not. And finally use it. That's it. So this is the third audit reporting requirement. So with this, consolidation chapter is done. Got an idea? That's it. Yes, let's start audit under fiscal laws. Right now we are having only one fiscal law audit, that is income tax. We don't have any audit under GST law because audit under GST law was removed in 2021 itself. In the Finance Act 21 itself, audit under GST law was removed. Okay, there is no statutory requirement at all. Getting it? Next. Under income tax law, we have various audits. We have various audits under income tax law. Getting it? One is charitable trust audit under section 12, and another one is business entities audit section 44AB. Then we are having special audits like political party 13A, electoral trust audit 13B, says special economic zone entities audit 10A, 10AA, and we are having 80IA, 80IAB, 80IAC, all these sections audit under income tax law. So these are all special audits. Now among that, what we have in tax audit in this particular audit is how to do audit of a trust. Only basic element is covered. Then how to do audit of a business entity under 44AB. Expertise level is covered. Getting it? Now in this entire trust audit, one important question is only this. What are the points that you check in an audit of a trust? What are the routine check elements that you do in case audit of a trust? Very simple. We check books of accounts and other records. We identify whether controls are effective or not. And when we are checking the transactions of the trust, know whether they are in the scope of the trust. Is it authorized by trustee or any other delegated person? Are all incomes which are accrued to the trust, know, are they properly accounted? All expenses of the trust, know, are they recorded on the basis of method of accounting followed by the trust? And amounts shown, whatever amounts shown as applied towards objects of the trust, no, are they covered within the trust deed scope of objective? Because no, a trust will get exemption only when they apply minimum 85% of the funds received for the objects for which the trust was constituted. Only then the trust will get exemption. If the trust could not spend 85% of the amount, they need to get a special permission and invest in specified deposits, all that as per income tax law. Yes or no? Section 11. Are you clear? So only this question is important. What auditor will scrutinize? What auditor will scrutinize? Especially with respect to true and fairness of the financial statements, auditor will scrutinize all assets whether all assets of the trust are verified, all assets of the trust are properly valued, all liabilities are properly accounted, investments are properly classified and indicated, outstandings are made clearly, provisions are made for irrecoverable items or not. Generalized discussion. Getting it? Then the actual main discussion in the law is 44AB section. Now, 44AB section, if it is in my regular class, I would have told different issues that were there. But I'll give you a brief idea clearly. See, 44AB is having 5 clauses. 44AB is having 5 clauses. If at all the SSC is carrying on business, if the turnover exceeds 1 crore from all the businesses put together, he is liable for tax audit. He is liable for tax audit. Now, if the business turnover is exceeding from all the businesses, this is criteria, remember. This is criteria for applicability of audit. That doesn't mean all businesses we need to do audit. Suppose if the SSA is having few businesses where he just want to go with presumptive taxation. If the SSC want to go with presumptive taxation for that business, he can go. Getting the point? He can go for presumptive taxation. But if the total turnover is crossing 1 crore for that business, once the aggregate turnover from all businesses put together crosses 1 crore, audit is compulsory. But if the SSC is having aggregate turnover not exceeding 2 crore, he has an option to declare his income. In fact, it's not option, it's compulsory. It is compulsory for you to declare an income which is minimum of 8% of the turnover or 6% of the turnover if the turnover is a non-cash basis. Getting the point? It's compulsory. If at all you want to argue that my turnover is less than that, audit is compulsory. Able to understand. But right now that provision is silent. Getting it? Now 44 AD subsection 4 is introduced in clause number E. As per 44 AB clause number E, when clause number E audit applies, a business entity which had chosen presumptive taxation under 44 AD compulsorily has to declare income for continuous 5 years. If in between in any of the 1 year they break that condition, for that year the total income is exceeding basic exemption limit, they are liable for audit for that year and subsequent years. 44 AD section knowledge is required for this. 44 AD has totally 5 subsections again. 44 AD. 44 AD says, it starts with this, notwithstanding anything contained in 28 to 43C. Getting it? An SSE who is doing a business shall declare a minimum income of 6% of the turnover as income under the head PGBP. He has to declare 6% of the turnover or 8% of the turnover as income under the head PGBP. Getting it? That is minimum. And the SSA shall declare this income continuously for a period of 5 years. If the SSA is breaking this section, if at all SSA is breaking this section, minimum, if you want to declare higher income, happy, go and file ITR 3. If you want to declare exactly 6%, 8% or little higher income, you can happily come and file ITR 4. In that, if you want to show higher profits also, ITR 4 you can file. But if you want to declare ITR 3, if you want to show ITR 3, 44 AD subsection 4 will attract. What is it? 44 AD subsection 4 will attract. If you want to show income less than presumptive income. Intention of the section I'm telling. How this section has been drafted, why this has been drafted like this I'm telling. See, like what happening is, in many businesses, actually the business is having 20% profit. But since presumptive taxation says up to 2 crores how much I can declare, happily I can declare 6 or 8% and happily without maintaining books of accounts I can escape. If you do like this for 5 years, then I'm okay with it. Income tax department is saying do continuously for 5 years. If at all, no, in one of the year you really got loss. At that time, you don't want to file ITR 4 and declare 6% income because I have a loss, man. I don't have profit. If I have profit, I will declare at least 6%. I have a loss. How come I show profit when I'm having loss? Like that, on this argument, SSE break this section. The condition of 5 years SSE, breaks. Now what department is saying, okay, in business you are having loss. Totally, you are having overall total income, right? And it is more than basic exemption limit, right? 44 AD subsection 4 says audit applicable. Subsection E says audit is applicable in this scenario. Are you getting the point? It's okay. Don't think too much. That much level it will not be asked, but I'm just telling you. Now, here in business, normally when tax audit applies, if the turnover exceeds 1 crore, provided if 95% of the receipts, 95% of the payments, they are in other than cash, then the turnover limit is 10 crore. Very soon, I'm telling you, in the next 5 years, this will be revised to 20 crore. Getting it? This will be revised to 20 crore. In the next 3-4 years, it will be revised to 20 crore. How come I can tell you this? 2 years before it was 5 crore. It was doubled. Getting the point? Because entire money is coming into the banking system nowadays. So since it is coming into the banking system, the possibility of escaping tax reduces. Getting the point? So obviously when the possibility of tax escapism, getting it, is reducing, naturally what happens? Department confidence will increase and they increase turnovers also. Moreover, 10 crore is a very big amount 2 years ago, but not now. Able to understand? So economy's dynamics are changing. That's it. Next, 44AB clause number B. This is for professions where gross receipts exceed 50 lakhs. Section will apply. Clause number C. If at all SSE is declaring presumptive income under 44AE and 44B, 44BB, like that, these sections were there. Under these sections, if you are declaring income less than the presumptive income under those sections, if you want to show your income under the head PGBP less than whatever that section says, you want to show lesser income, prove me. Audit is compulsory. Suppose if the SSE is coming under 44ADA, specified professions, how much income you should declare? Flat 50%. What is a flat? How much income? Flat 50%. Suppose, sir, I'm a chartered accountant, gross receipts are 70 lakhs, but I'm having less than 35 lakhs income. I don't have 35 lakhs, less than 50. Do audit and show me. So that's what section D says. 44AD subsection D, nothing but clause D. It says that if an SSE carrying on specified profession want to declare less than 50% of the gross receipts as required under 44ADA. Getting the point? You must come for tax audit. Able to understand. All of you? Yes. Anyhow, right now 44ADA limit is 50 lakhs. What is the 44ADA limit right now? 50 lakhs only. So this is 44AB section. Actually, this itself will discuss more than 45 minutes, this section, because there's so many issues involved in this, not required in a revision class. Clear? All of you? Next. Now, so okay, fine. I am liable for tax audit. Understood. What is tax audit? I need to give tax audit report. If an individual client appointed me, I need to give tax audit report. Now you see here, now there is a provision given here. How to calculate turnover? GAAP principles only. Turnover is calculated based on accounting principles. Suppose the SSE, the company is expecting how much turnover? 10 crore. Before adjusting the following, which means these items were not adjusted. Discount allowed in the sale invoice. Okay, 10 crore minus this 8.2 we will reduce, no? Because net turnover only we should calculate. Cash discount we will not, because cash discount is given after sale is completed. This we will not reduce. Cash trade discount again we will reduce. Commission on sale is debited to P&L. This is not affecting the sale invoices. Sale return again will be reduced in calculating turnover. Investment sale is a capital receipt, not a revenue receipt. So how much is the turnover? 10.13 crore minus how much we will reduce? 8.2 lakh minus again trade discount is how much? 2.9 lakh. Sale return is how much? 1.6 lakh. Even after reducing all this, 8 plus 2, 10, 9, 11 plus 1 lakh 10,000, 12 lakh 10,000, 12 lakh almost 12 lakh 70. Still there is 10 lakh 3,000. How much is there? 10 lakh 3,000, which means, sorry, 10 crore 3,000, which means 10 crore 30,000 or 10 crore 3,000. Okay, if since it is exceeding still 10 crore, getting it, even though the company is receiving 95%, actually here, whether the company is receiving 95% in other than cash, they didn't mention. But by mentioning 10 crore, we assume that this company is receiving predominantly in other than cash, other than bank, sorry, other than payments are received in other than cash. Receipts are also in other than cash. Company made payments in other than cash, 95%. So we assume that predominant operations are 95% is other than cash. Therefore, company limit is 10 crore. Since here turnover exceeds 10 crore, no discussion, straight away tax audit is applicable. Are you clear? So that's what they have mentioned here. Okay, 10 crore 30,000. What is it? 10 crore 30,000. So thus tax audit would be applicable for the company. Are you clear? Now, who is a tax auditor? Now there is a disqualification for tax auditors as well. Getting it? In case of SSE, which is a company, the person is not eligible for appointment as an auditor as per 141. Like who cannot be a tax auditor of a company? If the person is attracting any disqualification for stat auditor, no, the same person is disqualified for tax audit as well. So qualifications, disqualifications of tax auditor for a company same as company auditor. Sir, mine is not a company. A partnership firm is coming and asking me for tax audit. What disqualifications? In such a case, there are disqualifications given. You cannot do audit of yourself. Suppose my firm is having, my company is having turnover, my business is having turnover more than 1 crore. Can I audit my company or my firm? No. In case of an SSE, if it is a partnership firm or AOP or HUF, a partner of the firm cannot do tax audit of the same firm. A member of the AOP cannot do audit of the same AOP. A family member of the HUF cannot do audit of the HUF. In case if it is a trust or institution, trustee and his related persons cannot do audit of the same trust. In case of a person other than persons referred to in above, who are like suppose in ITR, 140 section is there, verifying return of income. Who can verify the return of income? There is a person's list given. Can the same person be appointed as auditor for the same entity, same SSE? No. For an SSE is filing IT return. His IT return can be authorized by somebody, no? That somebody can be appointed as an auditor for the same SSE? No. Next, relative of an SSE cannot be appointed as an auditor. Officer or employee of the SSE cannot be appointed. An individual who is a partner or who is in employment of an officer or employee of the SSE, officer and employee, their employees also disqualified. This is there in Companies Act. An individual who or his relative or partner is holding security or interest in the SSE disqualified. Provided the relative may hold security not exceeding 1 lakh. This is company audit provision similar. But for tax audit, this is good. This is a disqualification given in the guidance note of tax audit, which is similar to Companies Act. If anybody is indebted to the SSE, if the proposed auditor is indebted to the SSE for exceeding, relative can have indebtedness. Up to how much? 100,000. If at all the proposed auditor is having indebtedness, even 1 rupee disqualified. Able to understand? By the way, I am discussing disqualifications for company or for partnership firm, AOP or HUF. For partnership, AOP, HUF, for them I am discussing disqualifications of tax auditors. Or if a person has given guarantee or provided any security for indebtedness, provided the relative can give guarantee up to 1 lakh. But the auditor cannot give guarantee to the SSE. Auditor cannot be indebted to the SSE. Auditor cannot have ownership in the SSE. If so, disqualified. Are you getting it? Even in C Act, we have a corresponding provision. If you are having substantial interest in an entity, you cannot do audit of that entity. Forget about substantial interest. Tax audit provision says you should not have any interest at all. Relative can have up to 1 lakh. Able to understand? Even C Act says relative can have up to 1 lakh. Able to understand? If at all a person is having business relationship with the SSE, then that person having business relationship cannot be appointed as a tax auditor. A person who has been convicted by court and 10 years punishment, 10 years has not been lapsed from the date of conviction. Until 10 years he is disqualified. Able to understand? Next. Can a tax auditor appointed be removed by the SSE? Yes, if there is a reasonable cause. The SSE can remove tax auditor. Who can appoint tax auditor, by the way? We understood qualification, disqualification. Qualification, he must be a chartered accountant having COP. Disqualification, we understood. If the SSE do not like the tax auditor, can he remove? Yes, by giving a valid reason, he can remove very easily. There is no problem. Tax auditor shall also give engagement letter to the SSE. SA 210, all standards on auditing apply for tax audit also, remember. All standards on auditing apply for tax audit, because in tax audit, what is the scope of the audit? What is the objective of tax audit? To give opinion whether financial statements are true and fair. Now, I'll show you here. What is the objective of tax audit? See, when we are giving tax audit, no, there is a tax audit report. The report says, you have to give opinion on, financial statements of SSE, correct? Now, in addition to this, SSE is furnishing so many particulars in form 3CD. There is a form called 3CD. Inside that there are 44 clauses. There are 44 clauses inside this form, 3CD form. Getting it? Whether the particulars given in this form 3CD, are they true and correct? Are they true and correct? This also the tax auditor has to give. So the tax auditor has to give opinion on true and fairness of financial statements. The tax auditor shall give opinion on true and correctness of form 3CD particulars. Some students ask me, sir, in generally we give true and fair view, no. But in tax audit, why true and correct view? The question itself is wrong. Why? Because in tax audit, we are not giving true and correct opinion on financials. We are giving true and correct opinion on what? Particulars given in 3CD. We are not giving true and correctness of financial statements. Even in tax audit report, we are giving opinion on financial statements. There the words used is true and fair only. Only when we are giving opinion on the particulars of 3CD. In tax audit, we have to give opinion on two aspects, remember. Simply. One is on the financials, where you need to talk about true and fairness. Whereas with respect to particulars given by the client, you need to talk about true and correctness of the particulars given in the 44 clauses. Able to understand? Got this clarity difference? Getting it? That's it. Now, what is the form of audit report for tax audit? From here, little observations were there. MCQs, it is important. What is the format of audit report for tax audit? Suppose there are two formats are given. There are two formats are given for tax audit. One is 3CA audit report format. Another one is 3CB. See, for these two audit reports, there is an annexure which will contain 44 clauses. That is an annexure. On that annexure also, you have to give opinion about true and correctness. Whether it is 3CA format report you follow, 3CB format report you follow, this is audit report. For audit report, there is annexure. For that annexure, only true and correctness you should talk about. But 3CA audit report, 3CB audit report, primary objective is what? Giving opinion on financial statements. Tax auditor's primary objective is to give opinion on financial statements. Please understand that. Primary objective of tax auditor is also to give opinion on true and fairness of books of accounts and financial statements. Secondary objective is what? To give opinion on true and correctness of the particulars furnished in form 3CD, which is an annexure to form 3CA, which is an annexure to form 3CB. That's why we call 3CA 3CD, 3CB 3CD. Able to understand. So 3CD will contain 44 clauses information which is annexure to these formats of audit reports. So primary audit report format can be seen in where? 3CA. Primary audit report format is in 3CB. Now if you look at 3CA, it will have three parts. 1, 2, 3. If you look at 3CB, it is having 5 parts. 1, 2, 3, 4 and 5. Able to understand. If you look at 3CB, this is having, 3CB is having 5 parts, 3CA is having 3 parts. Getting it? In 3CA, sorry, in 3, by the way, for whom 3CA is applicable, 3CB is applicable. Suppose if the SSE is subjected to audit already under some other law, audit report on the financials is already available. Again, income tax law is asking me true and fairness of the financials, which is already made, which is already done by another auditor. Why should I again have to do audit of financials when it is already committed by another auditor? And moreover, I am the one who did that audit also. Company appointed me as stat auditor. Company appointed me as a company auditor. The same company asked me to do tax audit also, which is permitted. Which is permitted, not prohibited. Able to understand? Sir, I already finished audit of financials and it is true and fair. Okay, mention that fact here. Mention that fact here. And mention whether books of accounts, everything is true and fair, all that. 3. Do you have any objections in 3CD? Please list out. Do you have any objections in 3CD? Please list out. You see, I'll show you here the format. So first point, 3CA format. 3CA format is having how many? 3 only. Getting it? 3CA format is having only 3 points in the audit report. First point is saying what? Sir, we report that stat audit of this SSE was already conducted either by me or either by our firm or by some other firm. Getting the point? And we are annexing here their audit report, which says that profit and loss account is true and fair, balance sheet is true and fair, documents declared by the act so and so true and fair, all that. Also, please note that we are giving statement of particulars is annexed in form 3CD to this form only. We are annexing 3CD also, and in our opinion, the 3CD particulars are true and correct. We are giving attachment to the particulars are true and correct, subject to the following observations. I will give that. Whereas if you look at 3CB format, it has 5 parts. 3CB format is what you know. The SSE is not having audit under other law, which means tax auditor only has to do audit of financial statements. Tax auditor only has to do audit of books of accounts. So tax auditor has to give opinion freshly on the financials and also on the 3CD particulars. That's why you see here 4 and 5 is nothing but 2 and 3 of 3CA. Now 3CA first point is there, no? For that here 1, 2, 3 were there. Getting the point? Here you only did the audit of books of accounts, you only did the audit of financials under income tax law freshly. Here audit you perform not under some other law. You performed audit of books, audit of financials under income tax law, where you did audit as per standards and auditing freshly. So you have to clearly mention, we examined the financial statements of so and so, we certify that they are in agreement with books of accounts, we give that they are true and fair, we obtained all the information, explanation, and we certify that the balance sheet is true and fair, P&L is true and fair. First paragraph, in the 3CB format you are talking, we have done the audit. Second paragraph you are saying books of accounts, everything is matching. Third paragraph you are saying you got all the information, explanation, everything, and in the same third paragraph you are mentioning that the financial statements are true and fair or not, balance sheet is true and fair or not, P&L true and fair or not, you are specifically mentioning. So 1, 2, 3 paragraphs in the 3CB format you are indirectly talking about financial statements audit, financial statements agreement with books, affirmations and opinion. Are you clear? Then fourth point you are saying for this 3CD form is attached. What is 3CD form? Are they true and correct? That is given by me in the 5th point. See, 3CD particulars are true and correct. Look at, except this, everything else is correct. If you want more detailed information, go to the 3CD format. 3CD form. Are you clear? Got an idea? So, now here there are observations. Suppose, no, there is a question in main MCQ book of ICI. There is a question in main MCQ book of ICI which where 90% do wrong. 90% I can say they do wrong answer. Suppose, no, a company was incorporated on 10th January 2022. The company got incorporated on 10th January 2022. By Companies Act, this company can close books of accounts on 31st March 2023. Getting it? Where they are having more than 12 months as a financial year for the first year only. Only for the First year only it is permitted, not for other years. Now, for this, what is this financial year? Financial year 22-23. This can be expressed like this, nothing wrong, because it is 22-23, correct only, no? So 22-23 is the financial year. For this company, remember financial year definition of a company. A financial year cannot exceed 15 months. It's not 12, it is 15 months. And that possibility is there only for 1 year. Only for the first year it is possible. That too only when the company is incorporated during the months of Jan, Feb, March. Remaining months, if the company got incorporated, it is always less than 12 months first year. And second year, third year onwards, it is always 12 months. It is rule. Now, the options. This is the case given. Option A. This is a company subjected to audit. For this year, audit is also completed by stat auditor. Now, this company is having more than 10 crore turnover. Tax audit is applicable. What is the format of audit report applicable for this company? This is the question. And 4 MCQs options were given. 3CA format for 22-23, 23-24. Sorry, 21-22, 22-23. 3CB format for 21-22, 22-23. 3CA for 3CB for 21-22, 3CA for 22-23, D, 3CA for 21-22, 3CB for 22-23. This is a question which is asked. Some of you would have read this chapter, no? You should answer. Huh? Answer means reason also important. Okay. Now the answer is B. The answer is what? B. For this company, 3CB report format will apply. Why, sir? 3CA format heading is saying if the entity is subjected to audit under some other law, 3CA is applicable, no? Company is already subjected to audit under Companies Act, no? 3CA is only applicable, no? But below 3CA, there is a clarification given. Below 3CA, there is a clarification given. I think below 3CB, I think there is a clarification. Just a minute. Here they have given clarification. In case of the person having their accounting year, see, I think, yeah, correct on. In case of a person having accounting year, which is different from the financial year for the accounts prepared and audited, the audit report shall be in Form 3CB. Under income tax, financial year means April to March only. There is no question of Jan to March. I mean, Jan of current year to March of next year. Getting it? There is no such question. Now you see in our example, company has used which financial year? 10th January to 31st March of 23. But under income tax, for these 2 years, you need to file separate tax audit report. For 21-22, we need to file separate tax audit report. 22-23 year, we need to file separate tax audit report in the respective assessment years. Logically. Now, we want to give opinion on 21-22 financial year books of accounts and financials. But did the company prepare? Did the company prepare 21-22 financial statements exclusively? No. Or did the company prepare April to March 23 financial statements exclusively? No. Company has combined January 21-22 financial year and 22-23 financial year. They combined and used as per Companies Act and prepared financial statements. Which means whatever financial statements that we want in income tax is not prepared. So what auditor has to insist here? Please prepare 31st March 2022 balance sheet, 31st March 2023 balance sheet separately. But company did not prepare like that. So we ask a company to manually prepare and we manually audit. Able to understand. And that's why 3CB format is applicable for both the years. Got clarity? Everyone. Next. See, this point is tested in MCQ. Only 1 mark question. Say how we lose. Like this, there are many observations I have here. There are many observations, but one of the key observation which we don't notice is this. Next. So that's basically about 3CA and 3CB. By the way, if I do multiple branches tax audit, it will be considered as one SSE only. For the purpose of counting 60, all branches are treated as one. Even if I do one branch also, it is treated as one. Able to understand? In case of branch tax auditor will prepare a report manually and send to the main auditor, tax auditor. The tax auditor will use SA 600 procedure for preparing overall tax audit report on the company. The last attempt they asked a question, can a tax audit report be revised? Yes. That is there in the last part of this chapter. Tax audit report can be revised in various circumstances when revision of books of accounts have happened, or when mistake is discovered in the books of accounts or filing of the returns. The tax audit report can be revised like that. They have given some circumstances. That is there in the last page of this question, this chapter. Are you getting it? Now, what are the clauses? What are the clauses in tax audit report? See, they will not be asking clauses directly, but they will be asking inside the clause, is it reportable or not? I will insist on studying only up to 28 clauses or 29 clauses. Thereafter, studying after 10th clause onwards require extensive income tax knowledge. Until now, whatever we read will not be covered in income tax also. Until now, whatever I explained will not be covered in income tax also. But from now on, whatever I'm going to cover will be these you can understand only if you understand income tax law. Getting it? Just I will directly go to the now clause number 15 onwards you see. Here SSE has to give particulars regarding capital assets converted into stock in trade. We all know, you all learned in CA inter taxation. It is treated as transform. Fair market value as on the date of conversion will be treated as full value of consideration for the purpose of capital gains, and that will be treated as cost of acquisition in the PGBP. And the ultimate sale price minus FMV is equal to business profit or loss. And in capital gains, FMV will be the consideration, and minus cost of acquisition, all that provision, previous owner provision, all that you have to follow. Now, what auditor has to check? Auditor has to ask whether SSE has converted any capital assets, whether SSE has sold any capital assets which are converted into stock in trade. If yes, obtain the details of the capital asset, when the date it was acquired, when the date it was converted, what is the cost of the asset, all that auditor has to acquire and report in e-filing utility. See, it is e-filing utility again. This entire tax audit is filed in e-filing. Online utility will be there. Now there is another clause number 17. What you have to report is, so this is regarding if you deal in any immovable property. If you are a trader in immovable property, 43 CA section will apply. If at all the immovable property is a capital set for you, 50C section will apply. In both the cases, what are they saying? The consideration will be actual amount or stamp duty value adopted, assessed or assessable. Getting the point, whatever it is in the circumstance. So whichever is higher. Now stamp duty value should be taken on the date of registration or on the date of agreement. Again, it depends upon the advance. When the advance is given, in which mode advance is given. Accordingly, stamp duty value on agreement or stamp duty value on registration will prevail. And remember, here agreement stamp duty value and registration stamp duty value will not change very frequently. It's not that easy. Very rare cases it happens. Now this is regarding depreciation schedule, block of asset schedule. Getting it? In income tax, if you look at IT return now closely, you understand one fact. There is no such thing called computers block. There is no such thing called cars block. There is only a block called plant and machinery. Plant and machinery 15% block, plant and machinery 40% block, plant and machinery 80% block, plant and machinery 100% block. In income tax, assets are identified not based on their name, but based on their category. Getting the point? In income tax, the all depreciable assets are broadly divided into three categories: buildings, furniture, plant and machinery. That's it. There is no other. Intangibles. Intangibles, building, furniture, and residuary categories, plant and machinery. You have to give a single reading to all this. Only then you can score. Otherwise, it's impossible to score in this chapter. Don't think you can write something on your own, because here what they test is provisions of income tax. What the test is provisions of income tax. Now, SSA has to report under clause number 19. See, this 32AC is not operational now. 32AD is there or not, I'm not remembering exactly right now. 32AD is like, if the SSC has invested in a notified backward area, plant and machinery for an amount exceeding so and so, he will get a 15% flat deduction. 33AB is regarding tea development, coffee, rubber development, all that. 33AB is regarding site restoration. 35 subsection 1, clause 1, clause 2, clause 2A, all these are scientific research. 35 2AB, until this scientific research association, scientific research company, donations to them, all that deduction. You might have paid 100 rupees and debited to P&L 100, but deduction under income tax is 125. Deduction under income tax is 75. Deduction under income tax is allowed in 5 installments. 35D preliminary expenditure is 5 installments. So like this, how much you debited in P&L you should mention. How much is deductible in income tax you need to mention here. It is just a reporting requirement about deduction under these specified sections. Able to understand? Next, for that, what audit checklist? In exam, in tax audit, they will be asking you audit checklist only. Write about audit checklist for various clauses. They'll be asking you. From here, it is again going in deep into the income tax law, because this requires discussion of income tax provision. Here they are asking you. Format is not required. Format is not required. See logically, in one of the MTP or RTP I saw, they are asking what to be reported. What to be reported means they are asking you indirectly the format. Of course, you don't mention like a format, you mention like a points. That is what given in the suggested answer also. But it is not possible, no? The person setting the paper do not have brain. They do not have brain. Getting it? Sometimes what to be tested here, you should test the analytical thing. If at all tested, he should test on 3CA, 3CB, disqualifications, qualifications, applicability of tax audit provision, that point. He cannot test clauses. Clauses are something who has to fill. SSC has to fill. And we have to talk about true and correctness of it. If you expect me to remember all the clauses in 44AB, nobody. Because in 44AB, though you say 44 clauses, actual clauses are more than 60. Because 29A, 29B, 29C, 8A, 8B. Like this, there are so many clauses which are not counted. The serial number is 44, but actual number of clauses are many. Are you getting it? And inside that each clause, they are referring multiple sections. Example, you see here, details of contribution received from employees for various funds. 36 subsection 1, clause 5A. What is that provision, you know? It's not just that. When we are contributing to provident fund, employer contribution is there, employee contribution is there. Employee contribution, while paying salary to him, I will deduct that and pay to the income tax department. Yes or no? Now it is neither income to me nor expenditure to me. Now where is the question of deduction? My question you got. The law is, the point is, 2 subsection 24 income definition says, any provident fund contribution deducted from the salary payable to employee collected by the employer shall be treated as income at first. And you pay to the concerned department, right? Claim it as deduction. But in reality, what we do? In reality, We pay salary 100 rupees. And out of that, when we are transferring money, we debit to 100 rupees to P&L. But when bank account, how much we credit in our books of accounts? 88 rupees. 12 rupees, I will keep it separate. Liability account, I will transfer. And my contribution is there. 12 rupee, I'll debit to P&L. Again, 12 rupee, I'll add it to liability. In liability account, how much is there? 24 rupee. I have to pay 24 to the department. Adjusted in books of accounts, no need of specific adjustment in income tax law again. But in income tax law, what it says, first you have to treat it as income. See, in income tax, it is inclusive accounting, not exclusive accounting. Example, we'll talk about turnover itself. There is a reconciliation sheet which you have to present here. I'll tell you later, that will be there somewhere here below, some clause which is talking about input tax credit. They didn't change the word, they still use SENVAT. But actually, what is it? Input tax credit reconciliation. Generally, as per generally accepted accounting principles, I'll tell you one provision, you understand how much depth is required again in this chapter. You see, that's why in the beginning chapter I told second priority chapters all this. Okay. Why? Because it requires you to have income tax knowledge. For me, earlier I used to teach tax. That's the reason why I'm having all this command. Otherwise, I would have not. No matter how much I read, I'll not have command. Getting it? Because reading for learning is different. For the sake of teaching, reading is different. Because when we teach, it's a complete different dimension. The way we think all that. Now, I'll tell you one that provision. You will understand whether you will decide whether you read this chapter or not later. 43B section. 43B. What is 43B section? Certain expenses are allowed as deduction only if they were paid. Among that, first point is taxes. One example of the tax is GST. Agreed, all of you? My question is, first of all, in accounting, let us look at, I sold goods for 100 rupees. 18% GST collected, 18 rupees. Total invoice value 118. What is journal entry in books of accounts? Bank account debtor 118. To sales account 100. To GST payable, which is a liability account, 18. Next month, the 20th, I will file GSTR 1 and GSTR 3B, I'll pay 18. GST payable account debtor to bank account gone. So, netted off. In income tax, what are they saying? 43B. Certain expenses are allowed as deduction only if they were paid. 43B, first item is tax. First of all, in my books of accounts, that 18 rupees I didn't debit to P&L at all. I did not debit to P&L at all. And moreover, it is not my expenditure. It is not expenditure. When I collect, I am collecting from customer GST and paying to the department. How come you call it as expenditure? Correct, huh? How come you call it as expenditure? Then 43B provision is wrong, no? Section 28, charging section. More predominantly, section 145, method of accounting. The method of accounting, getting it? Guidance note says, in income tax, we have to recognize, best example, ICDS, Income Computation Disclosure Standard on Revenue Recognition. It says, any tax collected while selling the product, tax collected amount should be treated as income. So now in income tax, as per my books, how much is my sale value? 100. Start, as per books, 100. Add tax collected 80. Now what is your revised income under PGBP? 118. Now 18 rupees have you paid within due date for filing IT return as per 43B? Check it out. Yes, it is paid. Then minus 18. Net effect is 100 only. But what if SSC do not pay? On 118 he has to pay tax. Sir, SSC paid this 18 in the next year. Okay, in the next year again deduct. Claim deduction. Are you getting it? Fine. You see here, on that I'll show you this line. So crux. Only if you understand this provision thoroughly right now, whatever I told the story, only then you can understand that line. I'll show you that directly. This clause number 26. Right now, whatever I told is regarding clause number 26. What are they saying? I'll read the sentence. And you see, in respect of any sum referred in 43B, okay, like they are having 7 clauses. Okay, that's a different thing. In that first clause is about taxes. Okay, one clause is about interest on banks and financial institutions. One clause about provident fund contribution, all that. Another clause about bonus or commission. Like that, multiple clauses were there. What is the reporting? What auditor has to report in respect of any sum referred to in these clause? The liability for which pre-existed on first day of the previous year but was not allowed in the assessment of any preceding previous year and was paid during the year, not paid during the year. Getting it? Was incurred in the previous year and was paid on or before the due date, not paid on or before the due date. This is a question. This is the reporting requirement. Auditor has to report like this specifically. Now, if you want to report like this, now first you should understand what is this provision. 43B says what? Suppose provident fund contribution, let us take. Employer contribution. Employer contribution, what is it? Employer contribution, PF employer contribution, 12 rupees I debited to P&L. And my profit is some 100. My profit is actually what? 100 ultimately. Now I started profit as per books of accounts in PGBP 100. Getting it? Now 43B provision I should apply. You know, in P&L I debited 12, no? While calculating this profit I reduced it, no? Which means if I tax 100 in PGBP, after reducing that expenditure only I am taxing, no? But by the time I file IT return, no, I did not pay this 12. As per income tax, since I did not pay this 12 rupee, but you already debited to P&L, while calculating the profit, already you claimed it as deduction. Getting it? But you did not pay by the time IT filing. So what you have to do? Add back. So in that year, I paid PGBP return. Year 1, I paid tax on 112. Because I did not pay 12 rupees. Which means in the balance sheet, this is there in the liability side 12, no? For year 2. Now year 2 I am checking. In year 2 at the beginning this 12 rupee is pre-existing. Yes or no? But I need to pay this at any point of time? No. In this year I paid 12 rupee. From the liability side it became 0. But in the year 2 P&L account will it appear? Obviously we debited already. That's why it came in the liability side. That's why it came in now. And we already paid, liability went off. Now can I claim deduction in year 2 previous year return? Yes. You see now the checklist. Any liability pre-existed on the first day, getting it, and was not allowed as deduction in the preceding year. In our example, correctly, no? Paid during the year, yes. Actual liability is 24. We paid only 12 during the year. Another 12 still pending. So that 12 has to come here. Now same way, in year 2 related provident fund is there. That is debited to P&L, but that is paid within the due date. That is incurred in current year, no? Current year liability, no? That is paid within 90 return due date. Yes, it is paid. How much is not paid within the current year due date? Then it is another 10. Let's assume. This 10 is current. See, B is talking about current year liability paid in the current year due date or not. And how much current year liability not paid within current year relevant due date. Next year it will become what? Pre-existed liability from next year point of view. So in current year liability will come under B. In the next year, current year liability will come under A. This you understand. 44AB provision, if you see exactly, no. All these expenses will be allowed as deduction only if they were paid by the time of filing IT return or due date. For the filing IT return, if the SSC paid them on or before these dates, only allowed as deduction. Suppose if the SSC do not pay, no deduction for that year, it is added back. Now again, when SSC can claim, in the year actually he will pay, no, in that year he will get deduction. This is the provision. Able to understand? So, which means you understand, reading tax audit means you must have knowledge of the provision. Almost every section here I'm telling. Every section, suppose you see any amount of profit chargeable under 41. 41 is having 5 subsections. Recovery of bad debts, taxability, recovery of trade liability. Getting it? Conversion of, transfer of a depreciable asset used for scientific research into normal business or sold to outsiders. 45, 41 subsection 3. Getting it? Like this they're having.
41 subsection 5 deemed profits. You must have income tax knowledge of every section that is referred. Again, example you see, that is 30. This is again 32 AD deduction related. Okay. This is again you see here 48 2B. This is for 48 2B. This is for expenditure in respect of relatives. Where I paid any payment to relative, unreasonable portion at the interest of the assessing officer is disallowed. And this is again something in our actual class, no, we discuss all these provisions. In our regular class, we discuss all these provisions. So, but I'm just telling you, this is not just reading line by line, report that, report this. This if I tell like this, no, you will feel like I'm reading. So what I do in my real class, I read that provision. I explain that provision at first, at briefly, neatly. Then I read what is to be reported. That too we do like this for how many clauses, 30 to 32 clauses only. Thereafter, transfer pricing provisions. Another 7-8 clause, but transfer pricing provisions, which are extremely tough to understand. You must have thorough knowledge of tax. If I have to discuss this entire subject, tax audit, fiscal laws, with clear clarity of every section referred, half income tax syllabus is over. You need not attend direct tax coaching. Imagine whatever sections referred in this law, these sections will be taken in direct tax class for you at CA final for approximately 70 hours. Maybe I can say 50 hours plus. Is this chapter that much worth it to spend that many hours? 5 marks portion. Understood? That's why I cleverly kept in my list second priority chapter. Be clever when you're doing working. Know why you're ignoring, know why you're considering both. When I take a decision, I know why I take this decision, why I ignored other decisions. I know reason for both. Getting it? Don't be half knowledgeable. Have complete knowledge. Getting it? When I say ignore means there is a clear amount of research behind this, and I'm telling you. Because you don't understand these provisions, especially if at all you have not even started DT coaching. Those of you sitting here completed group 2 already or have completed DT coaching at least can relate to whatever I'm saying. For rest of the people it is abstract. Nothing. Something. Okay, some words I'm listening. That's it. Don't understand anything. Are you getting it? That's why these chapters, whatever I gave in May, in the beginning chapter, in the beginning class I told, what are the chapters that you need to keep it in second priority? Ignore them. First priority chapters which are within your scope of learning, possibility of learning, learn them and go and exam right. That's it. I'm telling you, last attempt, whatever second priority chapters I told, maximum weightage 25 only, not even 40. Maximum second priority weightage, whatever chapters I tell, is only 40 marks. Still you are having in your hand 70 plus 80 marks. As long as you are attempting 70 to 80 marks with perfection, exemption is very easy. Perfection is what aiming is important. Aim for perfection, not for 100 marks. What is important is attempting for 100 marks. No, attempting with perfection for 70 to 80 marks is important. Able to understand? That's it. So can I wind up the session? Okay, fine. I hope you have got good insights on entire overall audit subject. At least compared to earlier 5 days before, what is your status, and now I think you're having, more importantly, I can confidently tell you, you now understood what syllabus is there. Right? Yes, that's it. Okay. Now you go and see any past examination papers of any 4 attempts, you will understand what I'm telling. Everywhere I told how a question can come. This is how you need to read. Don't look at question bank and identify how a question can come. By reading, you should figure out how a question can come. That should be the art of learning. If you learn like that, damn sure you will write well. If you only dependent on question banks like that, no. If you can write to some extent if that same question comes. If a new question is drafted, you cannot. That's a disadvantage of question bank. You see, I never promote question bank anywhere. And moreover, my question bank is very minimum. Only past 6 attempts I'll give. That's it. In fact, one question bank which is there on my application is only covering only 3 attempts. I have made another question bank covering 4 more attempts. I'll release it mostly tomorrow or day after. I'll verify it and then publish it on our website and put a video on the YouTube also. Getting it? But don't learn based on question banks. Never. Learn based on main material. Don't think reading main material is tough.
You never tried. You never tried. You try, you understand, it is easy. Getting it? You see, almost I can say some 5 to 6 hours I revised only from main material. But you saw how I'm filtering the information and I'm explaining. You can also do. Only thing is you just have to read once. What you're doing is without even reading once, you are judgmental. You're forming judgments and decisions in your mind. Reading from main material is lengthy task. You never tried. It's easy task. Compared to short notes. See, in short notes if you read, you will have many open ends. You don't get clarity. But when you read main material, open ends will close. You'll have concrete clarity. Getting it? And next time when you're revising from the same material, you know how to filter. Your mind has that ability. Believe in that. Okay, that's it. Take care. All the best. So we still have in our discussion this chapter, audit of banks and risk assessment. Okay, SQC and SA 220. First we'll finish them, these items, and then we'll proceed to SQC and 220. Now with respect to audit of banks, in this chapter, there are many topics, especially when you are looking at the topic of verification of assets and verification of liabilities. Major discussion, they are referring to CA inter books. But that content is also given. That we will directly read from ICA study material, verification of assets and verification of liabilities. More importantly, verification of assets in that NPA norms is there. That is something you will feel little difficult to understand. Rest mostly you can understand by a plain reading. Like how to do audit of assets and how to do audit of liabilities in case of bank, you can understand by a plain reading. But some NPA norms were there, like agriculture advances affected by natural calamities, erosion in value of security, accounts regularized near balance sheet date. Likewise, there are certain norms. So that we need to discuss. Getting it? Even drawing power calculation, that thing also we will have to discuss. Now, so audit of bank, first concept is regarding what are the features of banks. So the banks have large number of transactions, wide use of information technology, wide geographical spread, and transactions may be initiated at one location but executed at another location. Likewise, general points, but they're not at all relevant for exam point of view. This is a general introduction. Now, special audit consideration. This is an important question. Okay, what are the special audit consideration that arise in case of a bank? Because the nature of risk associated with the transactions undertaken are something different. Compared to a normal company, the nature of risk in banking is completely different. Here the product is money only. In any other entity, the product is different. Here the product itself is money. And the scale of operations there is a significant exposure. And within a short period of time, huge number of transactions might happen. In fact, the number of transactions that happen in India are in billion number. A billion number of transactions. I'm not talking about the value of the transaction. I'm talking about billion, the number of transactions. Especially with UPI invention, UPI method of invention, and many net banking. After demonetization, especially, the scale of operations have like shooted up like anything in banks. Next. And IT, most dependence of the bank is on IT. And remember, in this chapter, predominant focus is given from the context of statutory central auditor. Statutory central auditor point of view, this chapter mainly was given. But rarely we get an opportunity to do central audit. And moreover, it is not that easy also to understand central audit. Because of the number of formalities, number of compliances that we need to check is extremely high. It is not something that I read LFAR report and do. It's not as simple as we discuss. And statutory and regulatory requirements are too many. So these are all the special consideration which auditor has to focus on. And banks continuously will have some new products and services. Getting it? And moreover, simultaneously accounting principles might not be developed related to the new products. Getting it? Every day. See, reverse factoring is something that nobody is aware of 10 years before. Getting it? Every day, a sort of new financial instrument is evolving. A new type of financial instrument, a new form of business itself is evolving. Getting it? Next. And that's it. And what is the form and content of financial statement? So Banking Regulation Act is there. As per that, third schedule discusses about the format of balance sheet and P&L. And they need to comply with disclosure requirements as per accounting standards. But in the AS do not apply, because RBI has deferred for all the banks applicability of Ind AS. So Ind AS right now do not apply for banks. So preparation of banks, involves both preparation of standalone and consolidated financials. Now, standalone financial involve what? Consolidation of branch accounts and incorporation of various departments of the banks in case of especially nationalized banks. And in private banks, accounts are centralized. So there is no concept of branch audit in private banks. Generally in private banks, branch audit concept will not be there. Only in nationalized banks, the branch audit concept is there. Joint audit concept is there in every bank, because if a bank asset size is 15,000 crore and above, if a bank is having asset size of 15,000 crore and above, compulsory joint audit, compulsory minimum 4 joint audits must be there. And moreover, banks which are listed on stock exchange have to comply with SEBI regulations. First of all, how do banks incorporate? First of all, it is incorporated as a company. First of all, it's a company. Bank is a license. Banking is a business. The nature of business followed by the company is a bank. In order to do that business, Banking Regulation Act applies. And it obtains license from RBI. Prima facie, bank is nothing but a company. Insurance is nothing but a company. NBFC is nothing but a company. Most of them go with Companies Act. Most of them register under Companies Act. Next. Now, how appointment of auditors will happen, like in case of banks? Actually, in case of banks, the auditor of State Bank of India will be appointed by CNDG in consultation with RBI. Even remaining nationalized banks also, CNDG only will appoint. With respect to other banks, nothing but private banks, the auditor will be appointed at AGM only. However, the auditor whom they are going to appoint, prior approval of RBI is required. But CNDG will not involve in case of private banks. Getting the point? So this appointment authority related thing is given in CA interbook, not in the final book. Getting it? Now, and moreover, most of the banks appoint 4 or more form of chartered accountants depending upon the size and as per the board of directors decision. Now, whenever bank is sending or whenever bank is appointing central statutory auditor or statutory central auditor, they should give appointment letter, right? What should be the contents of the appointment letter? Statutory central auditors are generally what? Joint auditors. In case of banks, statutory auditors are joint auditors. So we should first mention for what period they were appointed, who are other joint auditors, nothing but central auditors, and who are the previous auditors, because they need to communicate to previous auditors, all the central auditors, and what are the requirements to be complied while accepting this assignment, and a statement of division of work and review and reporting responsibilities. The division of work, generally what we thought, division of work is decided by joint auditors mutually. But here in the appointment letter itself, division of work will be given by the bank's audit committee. However, they will discuss with all the joint auditors before they send an appointment letter. First, they'll have an informal discussions. Appointment letter is only a formal document. Yes or no? After everything is informally discussed, then appointment letter formally takes place. Correct? Next. And the scope of assignment of statutory central auditor, they have to do various other certificates. There are many certificates which statutory central auditors have to give along with normal audit report as per SA 700. Along with that, statutory central auditors have to give various certificates. They need to give long form audit report. They need to talk about IFC. They need to talk about SLR certificate. They need to give a certificate report on treasury operations. Are they conducted as per RBI? They need to give a certificate on reconciliation of securities held by the bank, like in its own account as well as PMS bank account. Like PMS means portfolio management system. Getting it? Next, compliance by the bank in key areas guidelines and compliance with IRAC, income recognition, asset classification, prudential norms. Whether any serious irregularities were noticed in the working of a bank, auditor has to give a report on that. Nothing but it's a report on frauds. Next, auditor has to give a certificate in respect of custody of unused bank receipt forms and their utilization. What is bank receipt? And I think in scam 1992 they'll show. When I'm explaining this in my actual class, I have entirely taken scam 1992. What exactly happened? You might have watched that web series, no? Scam 1992. You just open my YouTube channel, just type caramharsha scam 1992, my name and that one. You will find 1 hour video how banks will do audit of, how we have to do audit of SLR, CRR. First of all, what is SLR? What is CRR? Because that is what money market operations means. Money market operations means, see, banks, in order to maintain SLR, CRR, especially SLR, in what form banks will maintain SLR? Securities, liquid securities, government securities. So how these government securities are obtained by these banks? From RBI Public Debt Office. So that entire structure I explained in that. What exactly happened in that scam 1992, Harsha Mehta scam, I clearly explained that. Then I linked it with SLR, CRR here. Okay, yes. Next. So these are various certificates. Reports on adverse credit deposit ratio. Report, auditor has to give a report on compliance with implementation of Ghosh committee recommendations, Jilani committee recommendations on internal controls. So there are various reports auditor has to give. The question can come. The statutory central auditors has to give various other reports and certificates along with statutory auditor's report. Give any 6 reports. Give any 6 reports or certificates which statutory auditor will give. It will be asked for 4 marks. You have to rate 6 points, but it will be asked for 4 marks. Getting it? Next. Now, branch auditor's appointment letter will not contain the above requirements. Branch auditor appointment letter contains only a requirement that for what period they were appointed as an auditor and what is their duty. What are additional reports that they need to give. That's it. Now, authority to appoint. The auditor of a banking company is to be appointed at AGM by shareholders, whereas in respect of nationalized bank, the bank itself directly appoints with the board of directors. However, RBI approval they will take. In either of the case, approval of the RBI is required, whereas RRBs, the appointment will be made by the concerned bank with the approval of central government. Wherever central government approval is there RBI will take up the responsibility. And here, this is a note given for in the institute book as well. Please refer CA Inter concept, so and so chapter with respect to learning appointment process of bank auditors. Getting it? That's what in CA Inter book what they say. In case of auditor of SBI, the CNDG will appoint with the approval of RBI. In case of other nationalized banks, the banks itself directly appoint. Board of directors is enough. Now the appointment of auditor, the power is with board of directors. However, once auditor is elected by them, whoever meet the eligibility criteria, they need to take the approval of RBI, then recommend to members, they will appoint, then they will only appoint. In case of private sector banks, members will appoint. Board will recommend, members will appoint. Before board recommends, who will approve that? RBI will approve. In every appointment of bank, RBI approval is required. Prior approval of RBI is required. Getting it? Now, what is the process of conducting bank audit? First, you have to, initial considerations. This itself can be asked as a question. What are the initial considerations while conducting audit of a bank? What are the initial considerations while conducting audit of a bank? First, auditor has to do engagement risk analysis. What is it called as? Engagement risk analysis. This is explained in SA 220. In SA 220, while acceptance, like this is there is a paragraph in SA 220. Acceptance or continuation of new client. Acceptance or continuation of an engagement. Regarding that, acceptance of a new engagement from new client, continuation of existing engagement from existing client, acceptance of new engagement from existing client. 220. It is discussed under 220. Getting it? So, what points that you should check when you're accepting a new client, when you're accepting a new work, or when you deciding about continuing an existing work, what points you should consider? You should consider relevant ethical requirements. You should consider integrity of the management. You should consider prior experience in case of existing engagement. Getting it? And you should consider your competency, availability of resources. After checking all that, you need to give your consent for the conducting of audit. So auditor has to do that kind of engagement risk analysis. That is called as what? engagement risk analysis. Engagement risk means, should I accept this client or not? Okay, what kind of risk I will face if I accept this client? Suppose if the management is not good, management is not ethical, I will not accept because engagement risk is high. Once I accept the audit, then I will have audit risk. Audit risk is different, engagement risk is different. Engagement risk is the risk which you consider before you accept the audit. Audit risk means it will be there for every type of audit. After once you accepted the audit, audit risk will be there for every type of audit. Then the auditors have to give a declaration of in debt, and credit facilities, if any, availed from any other bank or financial institution by auditor, firm, partner, staff, family members have not become NPA. You should give a declaration. If at all your relative, your partner, your firm, if at all you have taken from any other bank, not only branches of this bank, even other banks, if at all it become NPA, you are generally disqualified to become an auditor. You can't be appointed as an auditor. You need to give a declaration like this. So RBI has advised that banks before appointing should obtain a declaration of indebtedness, a written confirmation that credit facilities, if any, availed from any other bank or FI by this auditor or the firm or partner or staff have not become NPA. If at all they have become NPA, you cannot give this declaration. If you give a declaration mentioning false information, ethics, giving false information to others while procuring the work, Schedule 1 offense. Correct? That's it. Same way, the internal assignments in a bank, the audit firm shall not accept. Internal assignments, nothing but prohibited works. Next. Terms of engagement. Of course, once you accept the audit, you need to establish the terms of engagement, letter of engagement, you need to create. Then you need to communicate as with previous auditor. Then you need to plan the audit, establish the team. Actually, first we establish the team, then plan the audit. Getting it? See, actually planning involved 3 phases: strategy, planning, programming. In strategy, we decide about number of people we want. Then we plan based on them. Then we execute as per the program. Able to understand? There is a chapter, you have a chapter, audit strategy, planning and program. So 3 terms, what are they? Audit strategy means generally we will not have any documented strategy. Strategy is a thought process, generally. So we look at this organization, what should my strategy? So this is completely IT driven. So most of the controls are IT embedded. Getting it? Now my strategy should be around the computer. My strategy should be throughout these controls, processes. My audit strategy is purely control based audit strategy rather than transaction based audit strategy. And how many team I require? All that you will fix in strategy. Then you will plan the audit, how many days you want, how many members you want, all that you will plan. Then you will fix a program. Program is like a guide to all your members. Then, okay, first you accepted, you want to develop the plan. Then you need to understand the bank. This is called risk assessment process. What is this actually called as? Risk assessment process. First, you need to understand the bank and its environment. So what is this risk assessment process? We are going to discuss in a separate chapter. Getting it? So first you need to do risk assessment, understand the bank and its environment, understand how the accounting process is happening, understand the risk management process, how the bank is identifying the risk and how are they mitigating the risk. And an effective risk management system in a bank generally require the following. This itself can be asked as a separate question. As part of understanding of the bank, the auditor shall understand the bank risk management process. What all are covered as part of risk management process? See how far top management is involved and how are they identifying and measuring and monitoring the risk. What control activities they are taking up, how they are monitoring, how reliable their information systems are. This is actually COSO framework. Nothing but. Getting it? Internal control has 5 components. Yes or no? First one, control environment. That is nothing but oversight by top management. Yes or no? We will discuss that in risk assessment chapter. COSO framework model. 5 components model is nothing but COSO framework. Getting it? Next. Risk assessment. Actually, step number 2, step number 3, both are 1 and 6. In fact, planning came in step number 1, right? Logically speaking, we will not do it planning before doing risk assessment. First we do risk assessment, then we plan. Getting it? So risk assessment. So identify where and all risk is possible. Identify fraud, risk factors, including where money laundering can happen. And assess specific risk, like at at assertion level and at a financial statement level. Financial statement level, assertion level. There are two levels. The risk that you will classify, whatever the risk that you identify, you will classify at two levels the risk. Once you identify a risk, is it an assertion level risk or is it a financial statement level risk? Suppose NPA account of a customer, an account of a customer, the account of a customer, even though crossed due date for a particular type of loan, though 90 days was crossed, logically it should be classified by the system as NPA, but system failed to classify. System failed to classify. When we investigate, we discover that there is an error in the software. Now this is not a assertion level risk. This is a financial statement level risk. Why I am saying financial statement level risk means NPS will be so many, loans and advances will be so many, Since so many were there, it is pervasive. It's not just material. So it is, financial statement level risk. Or I'll simply another simple example. Financial statement level risk. Suppose if there is a risk of going concern, it's a financial statement level risk. If at all risk is only in respect of some loan account or some balance, one or two items, then it is assertion level risk. Getting it? Assertion level risk can be addressed by substantive procedure. Financial statement level risk is something which is difficult to address. And auditor should also check what are the risks that are associated with the outsourced activities. Like where they will be using, service organization, that time you need to perform SA 402 procedures, all that. Then execute. So before you execute, discuss with your team member how you are planning your audit, response to assessed risk, SA 330. See, actually SA 315 risk assessment procedure, SA 330 further audit procedure. SA 330 is actually talking about further audit procedure. How do I respond to the risk? By planning further audit procedure. What are further audit procedure? Test of controls, test of details, substantive analytical procedure. Correct? Test of controls and substantive procedure. Substantive procedure two types. Details, analytical procedure. Then establish overall strategy. Then audit planning memorandum. Then determine materiality. Consider going concern. They only gave a brief idea of conducting audit, but this is not how we actually do. Getting it? Then finally, reporting. After obtaining sufficient appropriate evidence about all items of financials, then we will give opinion. Actually, how we do audit, we will go and take branch balance sheet. So balance sheet will have so many assets, they will have so many liabilities. Yes or no? Now, I will take one asset, I will open the breakup and I will get evidence for sample items of this. Likewise, I will cover all the assets. Likewise, I will cover all the liabilities. That's how we will do audit. That is best way. Getting the point. Suppose loans and advances were there in a bank. What are various loans and advances? Secured, unsecured. Secured, how many categories were there? Housing loans, agriculture loans, term loan, personal loans, or any other various types, vehicle loans, all that. How vehicle loans banks will give? What is the policy? How they will give? What is the process? Like once a customer application is received, the credit team will look into all the details, documents presented by the customer. The bank is having certain predefined norms to whom we can give approval of the loan. So, and how much loan can be given, how much margin should be kept, how much customer should pay as a down payment minimum, and how much maximum bank will pay. All these points you should check. See whether that kind of norms were established or not. Getting it? So like that we will check. Then we will see how controls are. Then we will see how these controls are working. Look at documentation. Then take some loan applications actually processed and see whether entire these controls are followed or not. That is called substantive procedure. Likewise, we do for all types of loans and advances, all types of investments, all liabilities. Able to understand? So, special consideration in IT environment. So the banks know before you start the audit, you must obtain complete information about the IT environment, like what is the information technology policy, what is the structure and environment of the bank IT system. So how they are doing data processing, data interface, How are they ensuring data integrity, data security? What BCPs they have? Accounting manual and critical accounting entries. What important entries that banks management has passed during the audit period? What are the controls over key aspects like creation of account heads, creation of ledgers, okay, expense booking, all that, and recording of various e-banking, internet banking products and channels. How far bank is ensuring through internet banking errors, frauds and all will not happen. So all these points you have to check, and auditor shall be given important MIS reports. These are all auditors should obtain. And what are the key security control aspects that auditor needs to address when undertaking audit in a computerized bank? What are the important computer controls that you need to address? See that all the transactions are authorized by a authorized personnel and they are processed accurately. Complete data is made available for processing. And interruption due to power, mechanical failure, system will restart without distorting the completion of entries and records. If at all in between, if any power failure was there, it will restart the entire transaction rather than passing that. Getting it? Next. System prevents unauthorized amendments. See, for all these, controls will be there. Like, have you worked in any SAP environment? If you worked in SAP environment, see, you can't modify the amount. Even the company head also cannot modify the amount. They can only pass rectification entry if there is an error. They can't modify the amount. That's a control. Like, see, in Excel sheet, we have something called data validation. We have something called data validation feature. Getting it? Where you can enter in that particular cell. If you create a data validation, only the characteristics of that data cell. Whatever characteristics you give, that can only be entered. Best example, suppose when you're creating password in internet banking, your password should contain minimum these many capital letters, these many small letters, alphabet, or these many special characters. If you're typing password other than that, it will not accept. Your password not meeting with our password policy. So through that password cell, they would have given a data validation criteria. The password should contain minimum 8 letters. The password should contain minimum 1 capital letter. The password should contain minimum 1 special characters among some 5. Selections will be there. So like this, they will define the data validation. And if you try to enter something else, it will not accept. Likewise, in SAP, when they're developing that software, when they're implementing that software, so many data validations they will lock. You can't unlock them. Only the developer can unlock. Able to understand. And we will not have information about the developer. We will not have access to developer. So these are all IT controls. These are all IT controls. Only from the top management, only from the top CEO, CFO, or maybe below his subordinates. Only they will have access to change these controls. Rest of the organization will not have any access. You go to any billing system in Reliance Digital, Reliance Store, D-Mart, or anywhere, Big Bazaar, or wherever you go. Once they can't manipulate the price. Once they scan, the price is fixed. They can't manipulate. You ask them to give discount, tell them to modify the amount. They can't manipulate. So the system restricts accessibility of certain data. These controls are called as IT controls. If the control is part of information, if the control is exercised by information technology, then that is called as IT control. Getting it? Then internal audit and inspection of the bank. See, in banks, internal audit will be there, concurrent audit will be there. Both are different. Internal auditors mainly focuses on not on the transactions, but on the processes. Internal auditors mainly focus on processes, whereas concurrent auditors will focus on both process and transactions. Concurrent auditors' main duty is to verify huge number of transactions. And remember, concurrent audit is not compulsory for all the banks. It is banks' their own discretion. Currently, only nationalized banks are doing concurrent audits. Only nationalized banks have concurrent audit. Remaining banks, they only go with internal audit approach. Getting the point? Private banks, they will only have internal audit department. Whereas in case of nationalized bank, concurrent auditors, every month, 17 working days or 20 working days, they need to compulsorily attend. Concurrent auditors. Concurrent auditors were nothing but CA firms. Yes or no?
Many CA firms will be appointed as concurrent auditor. They will have to work some 18 to 20 days for sure. They need to visit. Concurrent audit means, concurrent means what? Simultaneous. While transaction is taking place, the audit is conducted simultaneously. So that's called concurrent audit. Internal audit need not be regular. It may be quarterly, it may be half yearly, or it may be once in 15 days. Able to understand? Now, in every bank, there is something called audit and inspection department. There is something called audit and inspection department, or simply we can call it as internal audit department. Internal audit department. Okay, so it will be headed by chief audit executive, nothing but chief internal auditor. Now they are responsible to undertake risk-based internal audit. What is risk-based audit approach? We have a question in risk assessment chapter. We have a question in risk assessment chapter called what is a risk-based audit. So that we'll discuss there. Now the primary function is what? To ensure that the entire function is handled smoothly, effectively, efficiently. This internal audit function should, see, complete bank should work smoothly, without any sort of delays, without system failures, without process failures. The primary function of this internal audit function is, the primary objective of them is to make sure everything works smoothly. Now, risk-based internal audit is conducted based upon risk assessment of business and control risk. By the way, I don't know how many of you are following materials based on 2020 ICS study material. This is 2021 ICS study material based material. Getting it? Earlier in origin, see, every year institute will give in the November month around, or December month or October month, new materials applicable for that next May or November. Now for this November, the material was released when? Last November. Getting it? Yeah, October 21 or November 21. During these months only they will be releasing. Now, this matter is there only in 2021 material. If at all you are following 2020 October material, this and all was not there. Internal audit hardly 4-5 lines only was there, old material. Getting it? So this is latest, newly added material. Then, stress testing and Basel III framework. Stress testing and Basel III framework. Most of these questions they will not ask. In this bank audit, what is important is reporting question we saw, right? That is important. What are the additional reports statutory auditors should give, right? That is important. What is risk management process and what are the components in that? That question is important. Then later we have concurrent audit question. That might be important. Only few important questions were there. Then audit, verification of assets and verification of liabilities. Inside that some concepts were there which is important. Last attempt, contingent liabilities, how do you verify in case of a bank? That is a question which is asked. How do you verify contingent liabilities in case of bank? Now, stress testing and Basel III framework. See, a Basel III framework is a framework which is developed by, like there is this BSBC something, banking supervision. I mean, a committee for banking supervision. Banking committee for banking supervision. Getting it? Sorry. Basel committee for banking supervision. BCBS. Basel committee for banking supervision. This Basel is a city in, I think, Switzerland. It's a city name in Switzerland. Getting it? In that city, a committee has been formed. Basel committee, we call it as. That committee was formulated, and in that committee, who are all the members? Across the world, from many countries, representatives were there. Representative of RBI is also there. Now, what this committee will do? This committee will study where and all improvements can be brought, where and all governance can be brought, and they will recommend all prudential norms, everything. Getting it? This Basel committee for banking supervision, effective banking supervision, they will develop all the norms, all the accounting principles. Getting it? So that's called Basel Committee for Banking Supervision. And among various frameworks they released, Basel III framework is very, very popular. And that is what our Indian RBI is also adopting it. Getting it? Now, stress testing. What is stress testing? You will find a stress testing related discussion in 2021 financial year related audit reports, annual reports. Because in COVID, what happened? Moratoriums were announced. What happened? Moratoriums were announced. Yes or no? Like almost from 1st March, till 30th September, 6 months approximately, 7 months approximately, most of the banks voluntarily gave moratorium facility. What is EMI moratorium? If you are having a housing loan, vehicle loan, personal loan, any other loan, you can apply to the bank that next 6 months I will not pay EMI. Please hold it. Don't treat my account as NPA. Moratorium period, if you are not paying installments, your account is not treated as NPA. That moratorium period is like a holiday, bank holiday. Getting it? You are not liable to pay. Now imagine amount of stress the bank assets went through. Stress means what here? Getting it? The liabilities. See, but customers, are they stopping to withdraw the deposits which they have? No, they are withdrawing. Now imagine the amount of stress the assets are facing. Not only this, now these loans and advances, many businesses underwent massive failures in COVID, after COVID. Now imagine how many stressed assets would have been there. Able to understand? Now every bank, every year, they shall do a stress testing. For that, every bank must have their own stress testing frameworks. Getting it? It is something like disaster recovery planning. It is something like a disaster recovery planning. In IT companies, suddenly a natural calamity or catastrophe comes. They do this business continuity, BCP testing, disaster recovery planning. They do this testing. Similarly, banks should have their own internal stress testing frameworks. So that is called stress testing. And what RBI has required, all commercial banks, excluding RRBs and local area banks, shall put a it's actually a broad. Sorry, board approved. No, actually it's a prod or something, it will come. Approved stress testing framework to see their individual requirement, which is part of the risk management system. What is risk management? Every time we are coming across the word risk management. Business is continuously a risky task. Every day, every minute, every month, every fortnight, you will be facing new types of risk. Cash shortage risk. Yes or no? So, risk management committee, their objective is what? Continuously, they need to find, is our business going well? Is our business going well? Why there is a decline in customers? Why there is a decline in sales this month? Why there is a decline in sales on particular day? Why there is a decline on a particular week? They need to continuously assess the reasons. They need to continuously assess the risk, and they need to mitigate the plans. That is what risk management committee do. Able to understand? Stress testing is designed to understand whether a bank has enough capital to survive plausible adverse economic conditions and maintain enough buffer to stay afloat under extreme scenarios. That's why banks cannot give. See, that's why they need to maintain deposit credit ratio. Banks required to maintain deposit credit ratio, statutory liquidity ratio. Why SLR has to be maintained? If you see SLR, CRR and other reserves which bank maintain, approximately out of 100 rupees deposit, 40 rupees I'll go for reserves itself. Only 60 rupees I can lend as a loan. Have you seen it? So this 40 is nothing but a buffer. Getting it? Now Basel III. Basel III is giving norms about capital adequacy. Basel III is also giving norms related to prudential norms, all that. So Basel III norms related to capital adequacy requirement compliance with the bank, which bank has to achieve. Basel capital adequacy norms are meant for protection of depositors and shareholders by prescribing rules for measuring capital adequacy, thereby determining regulatory capital, ensuring efficient use of capital, nothing but capital adequacy norms. Not only that, Basel III talks about asset classification norms, income recognition norms, nothing but they are called as IRAC norms. They are called as what? IRAC norms. Now what Basel III aims at? This is important. Improving banking sector ability to absorb stock arising from financial and economic risk. This is called market risk. Improving risk management and governance practices. This is governance risk. Transparency and disclosure. This is reporting related risk. Getting it? So Basel aims at marketing risk, governance risk and reporting related risk. All these were covered in Basel frameworks. Next. This is a very clerical discussion here. What are the controls in a bank? General controls, special controls,
Clearing means what? If a check, no, if a bank received check, suppose I gave a check and then gave somebody, they went and deposited the check to their bank account. How the check will be processed? Everything is cleared here. Nowadays, no check truncation system is implemented. What is check truncation system? Whatever check I am giving, that will be scanned, image processing, we call it as, and that will be displayed on the other bank, where I am actually the account holder. The other bank will approve it electronically. Then the bank, wherever you deposited my check, you will get the credit. Getting it? That is called CTS system. As per RBI, every branch is required to either call the customer or email him for any check received for the amount of 5 lakhs and above in respect of inward clearing. What is inward clearing? There are two types of clearing. Outward clearing, inward clearing. Actually, we are not writing bank exams. Okay. So, but what is outward clearing, inward clearing? Check inward clearing. See, for which, see, check inward and outward for original bank, where suppose I'm a bank, ICICI bank. I'm a ICICI bank. You are my bank customer. Means I will give you ICICI check booklet. Now you have money in my bank account. You can issue the check to somebody. Getting it? Same way, somebody will issue. Somebody will issue the check, right? Getting it? Inward clearing means if I receive any check here for clearing to the customer account, that's called inward clearing. If my customer bank account related check went outside, that's called outward clearing. Getting the point? Actually, they have not defined in the book. Okay, or else if you don't want to have all this confusion and all, leave it. Better. So the signature of the drawer is being verified by the staff. That we need to check. Unpaid check received in outward clearing should be either sent to the customer at the recorded address, or customer be informed to collect the same from the branch. Unpaid checks means what? Dishonored checks. What is it called as? Dishonored checks. More clearly, very simple. In banks, checkbox will be there, drop box. Have you seen it? Very simple. It's a best example. Suppose I'm an ICICI bank. You received some ICICI bank check. You received some ICICI bank check and you are my deposit holder. Best example, okay? Now that check you came and put it in the drop box and left. Now this is inward clearing. ICICI and all, my bank only can clear. Whether it is a receipt for you or it's a payment. Generally payment you won't deposit. Payment you will issue to somebody. They will deposit. Outward clearing means what? You deposited in the box. But that is not ICICI bank related check. That is some other bank related check. Then it is outward clearing. Outward clearing means check will not go out. Some other bank. Probably you can say if the issuing bank is some other bank, then that is called outward clearing checks. Inward, simple. If it stays within the same branch or bank network, I can say inward clearing. Otherwise, outward clearing. Getting it? Simple. Next, bills for collection. Nowadays, you don't find the concept of bills in banks. Rarely you find. The bills were like exhausted long back. Earlier, we used to draw bills and all. Yes or no? So, bills purchased, how to do audit? Bills discount, bills sent for collection. There is a difference between bills purchased and bills sent for collection. See, once you receive a bill, there will be drawer, there will be drawee. The person who will draw the bill is the supplier. The buyer is the drawee. He will accept the bill. The moment he accepts the bill, whoever, the bill is accepted by buyer, right? His bank we will go. To his bank we will go. I am a supplier. See, your customer has accepted my bill. You have given some approved credit limit to him. No, take this bill. Bill means nothing but actually it's not a separate document. Sale bill. I will sell, no. That I have bill, no. Sale invoice. I will submit this. Customer acknowledgement I will submit. I want money right now. The customer will pay me. Promise to pay me that after 6 days. You take after 6 days but pay me now. No, bank will retain some interest. and pay you the balance money. Since they are reducing and paying you, we are calling it as discount. Discount is not actually discount, it's actually interest. Now, how the discount bank will account? Generally, discount is recognized as income in the same year. However, if the discounting is done as on 31st March or before 31st March, but the bill maturity date is later, then the question will come. The interest shall be apportioned between 2 years. The interest shall be apportioned between 2 years. Because suppose I discounted bill on 20th March, but the bill will mature only on April 30. For these 40 days, banker collected discount. Yes or no? So the interest income shall be recognized over a period of 40 days. So 10 days interest will come this year, 30 days interest will go to the next year. Are you getting it? The moment I give the bill to the banker, he will ask me 2 questions. Do you want discounting or do you want collection? I ask a discount, this is the procedure. Suppose I ask him, no, just collect it and give me. He will wait up to maturity. And he will go to the customer and collect it. And he will pay me. For which he will collect a commission. Collection charges. Collection charges are treated as income only on the day when he collected actually the money. Which means that will become next year income. Getting the point? So all that points you have to verify here. All the points you have to verify. The account of customer should be credited only when the bills have been collected. Getting it? Same way, loans and advances. This is normal answer, normal question. Security value of the goods you have to check. Loan has been given only after proper credit worthiness analysis. All that. DD, demand draft. Nowadays, people are using a very less, no? Earlier, when we are taking ICI registration only through DD. You also have taken like this only, yeah? Madras University, still the same method, Oh, fine. So, earlier, no, we take DD in favor of secretary ICI. And we need to keep that in the application along with that envelope we will send. If the DD is lost, that's it. Credit card operations is another important aspect because it is latest development. Getting it? Credit card operations is another important. See, like any paper setter, whatever he feels important, he will ask. But in one of the recent 3 or 4 attempts, some bills question I saw, in CA Inter I saw. I was very furious after looking at that question. Probably the person who set the paper, no. In CA Inter also we have. That's what. Probably he might be a super senior citizen who retired and still excited about setting up the paper. And he is setting up the paper with the bills question. Because that fellow doesn't know about credit card. Correct? Only senior citizens, super senior citizens will ask this kind of question. Remaining will not ask. Why will I ask about that? I ask about modern instruments like credit card, virtual cards. Correct? By looking at the question, I can tell, is it set by a 40-year below or person more than 40 year? Now, credit card operations. See how the credit card application was screening. Look at the control over issue of the cards. And unutilized limit of a credit card holder. No, it should always, you will always get a message. What is the balance credit available? See whether controls were there for that. See, you know what, like how credit cards work. If at all you don't have an idea, very simple. It will have a billing period. It will have a billing period. First day to 30th date. First day to 30th date. Now they will give you, period within first to 30, whatever you swipe and get the benefit. Purchased anything, goods and services. On next month first, bill will generate. From that particular date, 15 to 20 days credit period they will give you. Time period to repay the bill. So that's how, which means it's an interest fee, interest free, literally speaking interest free. Only if you default, the bank will levy penalty. Getting the point? Now everyone will have a doubt. In credit card, what income banks will get? Merchant commission. What is the bank will get income? Merchant commission. The only benefit through credit card is merchant commission. Why banks are excited about giving credit cards? 1.5 to 2% merchant commission they'll get. Whenever you are swiping credit card, suppose I went to Reliance Trends, I swiped the card. Some 1,000 rupees transaction I did. The bank will get 20 rupees. Bank will get 15 to 20 rupees income. 2% income where you will get? That too, I'm not giving any, I'm giving loan, 2% bank is getting for 50 days. That too 50 days credit when you will get? Only when you swipe on the first day. If you swipe on the last 30th day, you will get only 20 days credit. Average cycle is 30 days only. Are you getting the point? So 2% return, 24% per annum interest they are getting. In from which product of the bank they will get 24% interest. Housing loan 7% interest, 7.5 or 8. Car loan maximum 9. Personal loan 16, 17, 18. Only through credit cards. Fast credit, express credits. Only there they will get more than 20% credit. And that's why banks run behind customer to, take a credit card. That's it. ஆமா ஆமா நம்ம நம்பர் எல்லாம் எங்க வேணா அங்க நம்ம கொடுத்துட்டே இருக்கோம் வெப்சைட்ஸ்ல ஏதோ சும்மா ஒரு ட்ரெஸ் மாடல் பிடிச்சிருக்கு அங்க ட்ரெஸ் அவன் ஜஸ்ட் ஓபன் பண்ணும்போது கிவ் யுவர் நம்பர் அப்படி கேட்கும் நம்ம அது கொடுக்குறோம் அவன் எல்லாம் அவன் அந்த டேட்டா எல்லாம் சேல் பண்ணிப்பான் getting it mostly that's why we have data privacy laws and all are coming soon. And reimbursement to merchants should be made only after verification of validity of the merchant acceptance of the card. Idella ipo every merchant mission, whatever mission, it is accepting every card. Just that the points, if you read them, you will understand. If at all you are transacting with cards or phone pay, Google Pay, you will understand all these points. Okay, can I proceed further? Next. Sorry? The one who is? Who is losing? No, actually merchant no. When he is calculating the product cost, product selling price, he will consider all this. He will not lose. He will not lose. Literally, if I tell you the garments segment, no, garments business, no. Literally, they will sell it for 4 to 5 times higher price. For them, the cost is 200. They will sell it for 1,000. That 2,000 rupees is after discount price. I'm not telling MRP. Getting it? Garments are so cheap. Literally, you go Tirupur side, that side and all. The linen cloth per meter will be 75 rupees. But nearby Tirupur only, they will do that branding, Shiaram Raymond branding. That branding they'll put. If just that branding has been put, they'll take 10 rupees extra for every 1 meter. And that particular cloth in the showroom, they'll sell it for 1155 rupees per meter MRP. And 20% Dasara discount. You might have understood. You might have understood how cheap the material was. Amma. Exactly. That's what. And we people so stupidly think, hey, today I bought Nike shoes. Evlo comfortable irukku. Enna onnume irukadu. Ellame adu 200 rupees, 300 rupees shoes da. Getting it? Amma, correct. That's nothing but rejected piece. Amma, teri. Rejected piece. Amma, not even half, beyond less than that. Yeah. Next. Then coming to compliance with CRR and SLR requirements. Compliance with CRR and SLR. Regarding this, I made a full detailed video in YouTube also. If you want, you can watch that. Otherwise, simply, here you can see what auditor has to verify. First, this one. This is the audit approach which they will ask. First, understand the circulars or instructions issued by RBI regarding CRR SLR calculation. CRR SLR, the percentages will be maintained as a percentage of demand and time liabilities. How it is maintained? Demand and time liabilities. Time liability means what? Time deposit, nothing but. Means it may be recurring deposit or fixed deposit. So, the CRR, cash reserve ratio is a percentage which the company has to, which the bank has to maintain directly with RBI. SLR is something which the bank has to maintain internally in the form of securities or cash. Getting it? Now, auditors know, we need to request branch auditors to send their weekly trial balance as on Friday. Beside detail position for every reporting Friday,
The statutory auditor should request the branch auditor to verify correctness of the trial balances on specified date samples selected by him. And the branch auditor should specifically request to examine cash balance at the branch on these selected dates. Actually, physically you can't verify because there is past data you are examining. But physical cash verification documents will be there. DTL documents will be there. That documents we will see. And examine on test basis consolidations regarding DTL positions prepared by bank. Consolidation means here what? All branch details we will total it. Getting it? So we will have to sample. On a sample basis we will verify. And while examining the computation of demand and tax liabilities, demand and time liabilities, there are so many things that you will exclude. In that, few examples are given. Some of these, you see the word, some of the exclusions. While calculating demand and time liabilities, there are some exclusions. See, actually, this point was not there in 2020 book, but was there in 2021 book. People think it's an amendment. It's not. Getting it? You look RPI, detailed computation, that one, it will be some 5 to 7 pages. But we are looking at how many? 5 points here, 5 points, 4 points below. Only few examples of what are all excluded in detailed computation, what are all included in detailed computation. Able to understand? So what are excluded? Capital, reserves, these are all not treated as demand and time liability. That is not a savings deposit balance. That is not a customer money. Yes or no? The bank have to maintain reserve in respect of whose money? Shareholders' money. Yeah? In whose money the banks have to maintain liquidity? For customers' money. Understand the simple logic. Bank is maintaining CRR, SLR in order to maintain liquidity. Why liquidity has to be maintained? Tomorrow suddenly a customer came and want his money back. I have to pay? No. I have to honor him. Correct? That's why. Say this paid up capital, share capital was whose money it is? Shareholders' money. Obviously common sense. It will not be considered in DTL liability. Part amount recoveries from borrowers in respect of debt considered as bad and doubtful debts. Any recoveries made in NPA. Getting it? That will not be considered as demand and time liability. Amount received in Indian currency against import bills and held in sundry deposit pending receipts of final dates. Import related. This is collection service. Getting it? Next, unadjusted deposits balances lying in branches. Example, dividend warrants, interest warrants, application money. These are all again shareholders' money, not customers' money. Margins held, kept in sundry deposits for funded facilities. Margin means what? This is not a real money. This is only a margin. Getting it? This is just a small list. Actually, detailed computation is having big list. But in exam, you should write only these examples, not other examples. Because this only will be covered in the suggested answer. And some of the liabilities, auditor should examine following liabilities are included in detail. These items must be considered. If at all they were not covered, these must be considered. Actually, this and all completely computer automatic. We don't see all this. This is completely automatic. In Tally, how do we create a ledger account? If you remember, how do we create a ledger account? Can we create a ledger account without assigning group category? Exactly. Getting it? Whenever a bank is creating a deposit account or customer account or something, will it come under demand liability? Will it come under time liability? They will classify. Grouping will be done. Directly, DTL, if you take a list in the CBS software, it will come straight away. Getting the point? Next. So, the following items must be included. Net credit balance in branch adjustments account, including foreign branches. Interest on deposits at the end of the first half year, reversal in the beginning of the next half year. This is actually added. This people think this is amendment. This is removed in 2021 material, but actually that is covered. In the actual original list of RBI, this will be there. But removed in the ICI study material. Just that they just changed the examples. Borrowings from abroad by banks in India they have to be considered as liabilities to others. Because this is public money again. And nostro accounts, nostro mirror accounts needs to be scrutinized carefully. Able to understand, get an idea at least. Next. Now the seventh one. The auditor at central level should apply audit procedures listed above for overall consolidation prepared for bank as a whole. Central auditor should adequately describe the same in the report. While reporting on compliance with SLR requirements, specify number of unaudited branches and state that he relied on returns received from the unaudited branches. If at all some branches were not audited, see, you have to give a report on SLR. In the report, you have to mention clearly that the SLR calculation is based on consolidated DTL figure. This DTL consolidated figure is arrived by consolidation of all the branch periodical DTLs. Statutory auditor has verified on a sample basis certain DTLs on so and so dates. And while calculating the consolidated DTL, this consolidated DTL amount includes some amount which is not audited. However, we have received returns from them, and based on that, we have computed all this. They were not, see, some branches are not audited. In State Bank of India, 16,000 branches were not audited at all. They were not liable for audit. As per RBI norms, those branches are not liable for audit because individually, each branch do not have significant business. To reduce the expenditure, compliance cost, audit was not mandatory for them. Getting it? So you need to talk about how much of the SLR percentage based on DTL calculation is not audited. You need to mention in SLR audit report. Getting it? Now you see, last they gave an add point. Recently, introduction of automated data flow for CRR SLR. The auditor should develop necessary audit procedure around this. We just have to check whether the software which is computing DTL, does it keyed in entire what are all to be considered, what are all to be excluded. Is it covering already? You have to check. Then directly rely on the amounts. That's enough. Next. Now finally, issuance of audit report by central statutory auditors and branch auditors. In case of a nationalized bank, the auditor is required to make a report to the central government in which he will mention whether balance sheet is containing true and fair and necessary all particulars and giving true and fair or not, whether whatever information explanation called was given to the auditor and is it satisfactory, whether or not the transactions that you verified in the bank are they within the powers of the bank, check it out, whether returns received from the offices and branches of the bank found adequate, are they enough, the returns whatever you received from branches not visited by you or not audited, and any other matter which auditor considers necessary. So these are the points. So this can be asked as a 4 marks question. For nationalized bank, auditor shall give audit report which will consist of where auditor has to comment on certain points. What are they? They'll ask you this 4 marks question. This is something similar to 143.3 checklist. Suppose no, if at all you didn't remember what auditor has to report, if at all that kind of questions came, you write 143.3 checklist without mentioning 143.3. Mostly any 4 points will commonly meet here. Getting it? Format of audit report, same SES 700 format, whether central auditor or state auditor. Disclosure about unaudited branches. We have to give a disclosure about unaudited branches, not only disclosure about unaudited, but quantification of advances, quantification of deposit, quantification of interest expenditure. You have seen, no? In State Bank of India, other matter paragraph, we mentioned 16,000 branches were not audited, 25% of advances, 23% of deposits, 18% of incomes, 17% of expenses of the total bank were not audited. Getting it? So it is not just 16,000 branches not audited. If you just mention 16,000 branches not audited, people may not understand. What do you mean by 16,000 branches? In total deposits, how much percentage of deposits were owned by 16,000 branches? In total loans and advances, how much percentage belongs to these 16,000 branches? In total income of the bank, how much percentage belongs to them? In total interest expenditure, how much percentage belongs to them? Percentage you have to quantify. Have you seen it in the audit report that I showed this? In SBI, I have showed this clearly. And auditor shall also give additional reports on 143 matters, and CARO do not apply to a bank. This question is asked in December attempt, I think. So no, CA Inter. CA Inter, there is a question asked. They gave about a bank. What auditor has to report as per CARO on the following items they asked. You should say CARO not applicable. Next. Now, rule number 11, 143.3, impact of pending litigations. Remember this Hawala transactions. This is actually Hawala transactions. Money laundering transactions. We discussed, no, intermediary, funding party, ultimate beneficiary. That point is applicable for banks as well. In Companies Act, we use it as company. Here we use it as bank. That's the only difference. The point is completely same.
Then in addition to the normal audit report, the central auditor as well as branch auditor is required to furnish a long form audit report. The contents of long form audit report are prescribed by RBA. The contents of long form audit report are prescribed by RBA. And branch auditor shall submit the LFAR to central auditors. The consolidation is done at head office level. LFAR for the bank is submitted by statutory central auditor to the management ultimately. Now, after everything is done, it should be placed before ACB of the bank. ACB means Audit Committee and Board of Directors, not Anti-Corruption Bureau. Okay, next. And a copy of LFAR shall be submitted to RBI within 60 days of submission of LFAR by statutory auditor. Once stat auditor submitted LFAR, it should be submitted within next 60 days. LFAR due date is 30th June. By 30th June, LFAR shall be submitted. After this, within next 60 days, it should be filed with RBA. Bank staff should give explanation on that. Bank's board of directors should give explanation on every qualification given by auditor in LFAR. And other reporting requirements, reporting about fraud. RBI has given a circular, okay, where it makes mandatory for all the auditors, internal auditor, external auditor, concurrent auditor, whenever they find something suspicious, they should report to RBI immediately. Even 143 subsection 12 fraud identified by auditor more than 1 crore shall be filed, informed to central government. ADT 4 form shall be filed, and the same matter shall be reported to RBI also, in addition to top management of the bank. Then concurrent audit of bank. So concurrent audit means what? It's audit or verification of transactions concurrently as and when transaction takes place. The main objective of concurrent audit is to verify authenticity of the transaction or activity within the shortest possible time. This is similar to internal audit but not internal audit. So what is the need? There must be a system of someone other than the person involved in the operation that verifying the authenticity. You know who can do concurrent audit in banks? Not necessarily CS. Bank can do inter-branch concurrent operations. Like what? One branch staff I will send to another branch at another zone. They will do concurrent audit. And some other branch will come and do concurrent audit of this branch. Concurrent auditors need not be chartered accountants. In some banks, this task is given to internal inspection staff who are not actually engaged in operational activity. Operational activity means what? Cashier, manager, deputy manager, like that. In other banks, the work is allotted to outside form of chartered accountants. So RBI has issued certain guidelines for conducting concurrent audit. What is the scope of concurrent audit? They will verify everything. Just because they mentioned here, few things, but everything is covered except financial statements. Financial statements are not covered by concurrent auditors. First of all, who will fix the concurrent audit? It is fixed by Bank's Audit Committee and Board of Directors. Bank's Audit Committee and Board of Directors of each bank shall fix what shall be covered as part of concurrent audit. Now, while determining scope, the importance will be given for high risk transaction having large financial impact. So mainly what are all the high risk transactions that will be taken. The detailed scope of concurrent audit may be approved by ACB. Nothing but Audit Committee or Board of Directors. RBI guidelines covers all key areas. Broadly, the following are the areas covered by concurrent: cash, deposits, advance, investment. What else is there in bank? Everything is covered, no? Concurrent audit system in commercial banks. It is something called as early warning system for timely detection. It is something like whistleblower mechanism. Concurrent audit is something like whistleblower mechanism. Remember, banks will have separate whistle mechanism. That is different. Getting it? The bank should once in a year review the effectiveness of systems and take necessary measures. This is done by internal auditors. This is done by whom? Internal auditors. Next, coverage of branches. Which branches are liable for concurrent audit? Which branches of the bank are not liable for concurrent audit? That is also decided by Audit Committee and Board of Directors. So it is a discretion of the head of the internal audit of the bank. However, prior approval of Audit Committee and Board of Directors is required. All risk sensitive areas are covered under concurrent audit. The broad areas of coverage under concurrent audit shall be based on risk and must include random transactions, testing sufficiently large sample. All same points, no? Direct speech, indirect speech. Next. These all points, no?
Institute no will not sit and develop all this. I don't know who is there in the BOS material preparation department. They just take a copy and paste it here. IRDA, I will show you. I showed in class also insurance. IRDA regulations, so financial statements in auditor report regulation, exact copy paste. 2002 regulation is there, no? Exact, even ABCD point, anga ABCD irundha inga ABCD da irukku. Exact copy paste. Just right now I'll show you. See, you will understand how far institute is serious on students. இது நமக்கு insurance auditing amma. This is insurance audit CA final booklet. I will show IRDA statement here. Exactly. This is part 3, schedule A, no. This is completely copy pasted in from IRDA document. Requirement of schedule A. I will show you schedule A. This is IRDA financial statements regulations. In this some 40 page onwards it is there. You see, this is IRDA, you know this one, no? What is this IRDA? Preparation of financial statements. In that schedule A, you see schedule A. பாருங்க, part 1, applicability of accounting standard. இங்க என்ன இருக்கு? Applicability of accounting standard. கீழ போங்க. Second point premium. இங்க பாருங்க, second point premium. Acquisition cost. அப்புறம் பாருங்க claim cost. Actual valuation liability. இங்க பாருங்க, அப்படியே இருக்கும். Procedure to determine value of investment. கீழ பாருங்க. Real estate investment property. கலர் மட்டும் மாத்திட்டா. ஓகேவா? Entire points பாருங்க. 7th point loan. இது IRDA. 7th point என்ன இருக்கு? Loan. சரி, அது விடுங்க. இது பாருங்க, disclosure forming part of financials 1. அதுல என்ன இருக்கு? A to G points இருக்குல்ல, தெரியுதா? அதுல பாருங்க, அப்படியே இருக்கும். A to G. ஜஸ்ட் கலர்ஸ் மட்டும் மாத்தியாச்சவன். இதுக்கா அவன் மெட்டீரியல் ப்ரிப்பேர் பண்ணணும். இதெல்லாம் நம்ம தலை மேல வெட்டி இதெல்லாம் படியாங்க, இது படிங்க, இது மேல கேஸ் ஸ்டடி பேஸ்ட் क्वेश्चन டெவலப் பண்றான். Entire schedule B is exact copy paste. And audit procedures are there, no? They were copy pasted from guidance note and insurance audit. அதான் வரணும். ஓபன் புக் வந்தாதான் நல்லா இருக்கும் சில இடத்துல. Next. Now, appointment of concurrent audit. This is important question, ma. Appointment of concurrent audit. This is important question. Now, who will bank discretion? Whether concurrent audit should be done by bank own staff or external auditors is left to individual banks. Banks can engage its own officials, provided they are experienced, well-trained and sufficiently senior. Logically, compared to chartered accountants, banks own staff is better choice for doing concurrent audit. What do we know? Honestly tell, how many of us have properly studied bank audit chapter? Do you know bill discounted bill? In the bill mechanism தெரியுமா? அதுல ஏதோ இருக்கு, இது டேர்ம் இருக்கும். சீத ஸ்டார்ட் ஆகப்பா. பில்ஸ் கான்செப்ட்ல வரும் அது. I'm not getting exact name. அது சி ஆல்பபெட் சீத வரும். கன்சார்டியமா லைக் ஏதோ பேர் வரும் அது. ஓகேவா? சோ அந்த மாதிரி நேம் கேட்டா யாருக்கு சிஏக்கு தெரியாது. And we fight for all rights for concurrent audits. Have you visited to concurrent audit, any of you? Have you done concurrent audit? நீங்க போனா ஒண்ணுமே பண்ண மாட்டான். Even if you go there also, you won't do anything. Daily morning they'll go, have tea on time, have coffee. சில உட்காந்துட்டு பேங்க் மேனேஜர் கிட்ட பேசுறது for some time. And ஏதோ ஹவுசிங் லோன்ஸ் போயிருப்பா. That month some 10 or 15 housing loans would have been gone. This fellow takes that and look at the document. Amount match ஆகுது. அவ்வளவுதான். Just tick பண்ணிட்டு வந்துருவா. அவ்வளவுதான். They do concurrent audit this. And you know, concurrent audit, actually CAs have to go. As per the requirement, 16 days or 15 days, there is a requirement that CA should present. But இவன் யார் அனுப்போ தெரியுமா? ஆர்டிகல். இவன் போயிட்டு ரிஜிஸ்டர் சிக்னேச்சர் பண்ணிட்டு வந்துவா. தெரியுமா? See, the reason why auditors are also not so serious about concurrent audit is because of the fees. In metropolitan cities, if it is huge branch, having huge number of transactions, they will only pay 50,000 per month fee. Getting it? For that, they will ask 3 articles. Sir, 3 staff persons varno. CA also varno. Enna nee kudutha 50,000 rupees. Adula 10% TDS 3-way. Next. And maximum tenure of external concurrent. If a bank is appointing outside concurrent auditor, the maximum tenure is maximum 5 years on continuous basis. With a particular branch, they should not be carried for more than 3 years. If external firms are appointed and any serious acts of omissions commission noticed in their working, their appointment will be cancelled. Remuneration of concurrent auditor. It is also fixed by audit committee and board of directors. Reporting system. There should be a proper reporting system should be established by bank for concurrent auditors to report all the incidents. And there should be zone-wise reporting of findings of the concurrent auditor to audit committee and banks. And annual appraisal of report of audit systems should be placed before ACV. Before submission of the report of the auditor, he should discuss with the respective branch manager and concerned officers. Obviously, whenever I find some loophole, first I should discuss with the respective branch manager. Serious irregularity should be reported to control officers or head office for immediate action. Whenever frauds are detected, it must be immediately reported to inspection and audit department. Wherever RPA reporting requirement is there also you have to report. And follow-up action on concurrent audit report should be given high priority by all the controlling officers, inspection department, audit department, even branch managers. They should immediately follow up. Now, what is audit committee in the context of branch? Sorry, in the context of bank. Same LODR regulations will apply. Audit committee means same. Minimum at least 2/3 of the members of the audit committee must be independent directors. All of them must have the ability to read and understand the financial statements, financial interest. One must be accounting or financial management expertise. Same. Here they have given a general matter. So, what is audit committee? The function of audit committee is to provide direction, oversee operations of audit function. Audit committee is concerned with functioning of systems of concurrent audit, the method of appointment of auditor, the remuneration, quality of work, everything. Whatever role of audit committee we have seen in LODR, same role they will have in banks also. Breathe. We'll take break and come back and discuss audit of assets and liabilities. Okay, audit of assets and liabilities. That is important question. For exams, that is important. In audit of assets and audit of liabilities, in audit of assets, we have totally some 3 or 4 categories. One is cash and bank balances. How to verify cash at bank? How to verify money at call and short notice? How to verify money held with RBI? Those are easy points you can understand. Getting it? Then, how to verify investments made by the bank? Again, easy points. Advances is something very important, bit technical. The next one is how to verify fixed assets. It is same like for any other company. For bank also fixed asset, how to verify? They will maintain register. Same pattern. Now you see here in banks, first of all, advances is something which is the major item of the asset in the banks. Yes or no? In advances, what is the most important thing? Provisions. Getting it? Asset classification of the advance and provision is the major thing. How the loans and advances given by the bank are classified: standard, substandard, doubtful, provision. And here the norms are again different from NBFC norms. For NBFC it is expressed in months, different months. For banks it is 90 days. And remember, for overdraft and cash credit it is not 90 days. If it is out of order, it is treated as NPA. So verify whether bank has system of identification and classification of advances through core banking without manual intervention, and see its accuracy in crystallizing the date of NPA. When the bank actually recognizes a loan as NPA, see whether is it matching with RBI guidelines or not. Whether classification made by the branch is appropriate, particularly classification of advances where there are threats to recovery. Actually, this is what repeated in the first point. But this is newly added. This was old point. The old point, instead of deleting, they continued. In 2020, this first point is not there. This first point is added in 2021 material of ICA. In old material, this is first point, old material. This they should delete and then put the first one. But they didn't delete. Understood?
Then verify secured and unsecured portion advances were segregated correctly and provision has been made. And review and compare date of NPA of the loan in the current year with that of the previous year. Reasons why there are any changes. Like this is nothing but analytical procedures. So this point is actually simple. The point is here. Accounts which are regularized near balance sheet date. What is meant by assets regularized at balance sheet date? This is CA inter concept. But still it is covered at final. See, actually now it cannot be done, but we do mainly focus NPA provisions all that as on 31st March. Getting it? Suppose an account actually become NPA. An account actually become NPA because it was overdue for more than 90 days. Getting it? But before 31st March, the customer made payment, or in the loan account there is a credit entry. In the loan account there is a credit entry. With the special authority or power given to the branch, that account was removed from NPA to regular. By the time balance sheet date comes, account became regularized. If you find inherent weakness in that account, if you think it is an intentionally removed from NPA and then kept as regular account, if you think there is some problem with that account, auditor will have to recommend the bank. The auditor will have to instruct the bank to treat that account as NPA. Accordingly, asset classification and provisioning norm will apply. So auditor should carefully assess whether repayment was genuine source or not. Whenever there is a customer account credit is there, actually it is NPA, but suddenly repayment was there and become from NPA to regular account. Where account indicate inherent weakness, the account should be treated as NPA. Suppose it is genuine case, bank must give satisfactory evidence to the auditor about manner of regularization, how they regularized, how they removed from NPA to regular. Generally, if an account become NPA, banks what they will do is, they will start recovery proceedings. And they will mention that account, while reporting to CIBIL, they will mention the account as settled. Getting it? They will mention it as settled. Once if the word settled appears, the customer will not get loan in future from any other institution. Because the customer went for settlement of a loan. That's how it appears. Getting it? So, if an asset become NPA, how to migrate it from NPA to another account? It's a very tricky process. So, you need to call them. See, the bank only should file revised CIBIL report with CIBIL authorities. So that CIBIL authority will change in the back end. It is not NPA, it is a normal account. Getting it? Now, drawing power calculation. There are two words. One is sanction limit, another one is drawing power. There are two terms. One is sanction limit and drawing power. Last time in CA Inter, on drawing power, they gave a problem in auditing. How to calculate drawing power, they gave a problem actually. Getting it? Now, so what is sanction limit? What is drawing power? You will be given sanctioned. You will be given a loan sanction limit based on your repayment capacity, especially working capital loans or any other term loans. Based on your repayment capacity, you will be given, let us assume 5 crore sanction loan. Let us assume you are given 5 crore sanction. However, you gave the banker stock statement. And the stock statement has a value of 6 crore worth of stock. Now, banker has a policy to maintain 30% margin. The banker has a policy of maintaining 30% margin. Banker decided to give you only 4 crore drawing power. What is drawing power? How much you can withdraw? Drawing power means what? How much you can withdraw from the loan sanctioned to you. That is called drawing power. How drawing power will be calculated? Banker will give you drawing power only based on not stock available in your godown. Out of that stock, how much is your own stock? Able to understand? Suppose in my godown I have 10 crore stock, but related to this I have 4 crores credit or outstanding amount. I will remove this. Then paid stock value is how much? 6 crore. Now what is the margin as per bank policy? Since you have 6 crore worth of stock, I will not release 6 crore fund. I have some margin to be kept because of fluctuations in the price of the stock. So bank is having some 30%, 40% margin. So 3.8 or 4.2 crore, something is only bank can
allow you to draw. Auditor should check whether the drawing power limit is calculated as per bank norms and see that the outstanding balance of a loan account in a customer account is always less than drawing power, always less than sanction limit. If at all you find any amount, any outstanding loan is more than drawing power, any outstanding amount is more than sanction limit, the account is to be treated as out of order. Out of order means NPA. If a overdraft account or cash credit account, nothing but working capital loan accounts these are. If at all they exceeded drawing power, exceeded sanction limit, it is to be treated as out of order. And when an overdraft account and cash credit account is treated as out of order, it is to be treated as NPA. Overdraft means in the same account, beyond your available balance, you can draw more. That is called over and above your balance, you can withdraw. That's called overdraft. What is cash credit? It's a separate credit facility to meet your temporary working capital needs. And that's called cash credit. So the bank should ensure, the bank software should have controls that the customer cannot withdraw more than drawing power, more than sanction limit. Auditor should verify all that. Getting it? Special consideration will be given for creditors, stocks covered under LC. They should be considered while calculating drawing power. It is to be ensured that the stock shall not cover liability outstanding from creditors and all. It should be reduced. Getting it? The drawing power needs to be calculated carefully in case of working capital advances. The valuation of work in progress should be ensured consistent and proper, especially where funded exposure is more than stipulated limit is 5 crore. See, again, no, loans and advances are two types: funded loans, non-funded loans. Funded means where there is an outflow from the bank. Where there is outflow, I gave you loan to you, cash outflow. Non-funded means I gave guarantee on behalf of you. Is there any outflow? That's a non-funded loan and advance. Now in respect of non-funded loan and advance also, if customer went to default, I should pay the amount. Provision has to be created for that. But the further provisioning norms are different. Getting it? Funded loan. Suppose if funded advance, funded loan is more than 5 crore. Funded loan means what? Where there is an outflow. If at all bank has given more than 5 crore funded loan to any customer, that too which is based on stock, stock audit must be conducted. The statutory auditor has to check whether stock audit is conducted by the branch or by the bank in respect of loans where funded exposure is more than 5 crore. So that is what drawing power. Now you read this answer, you understand better. Getting it? Next, accounts with temporary deficiencies. This is newly added point. Bank should not classify a loan merely due to existence of some deficiency which are temporary in nature, such as non-availability of drawing power based on latest available stock statement, balance outstanding exceeding limit temporarily, non-renewal of limit on due date. However, the stock statement should not be older than 3 months. Getting it? The outstanding in the account based on drawing power calculated from stock statement should not be older than 3 months. If at all, the stock statement based on which you give drawing power allocation to customer, if it is based on old stock statement, again it is treated as irregular account, NPA. Getting it? Same way, banks know, whenever they gave you sanction limit and drawing power, they should be regularly reviewed. What is regularly reviewed? Stock statement should be seen regularly. If at all they were not reviewed within 180 days, it is considered as NPA. This can be asked as an MCQ or true or false question or case-based MCQ. These points can be tested in case-based MCQ. Getting it? They'll give you a story. So-and-so customer has got a loan on so-and-so date. Stock statement is submitted on so-and-so date. Bank has not reviewed the customer account on on this date. Till that date, bank has not reviewed. Immediately you should remember, if the gap is more than 180 days, it should be treated as NPA. Below they will frame questions accordingly. Getting it? And remember, once an account of a customer, a loan account of a customer is treated as NPA, all other his loan accounts that are there in the same bank shall also be treated as NPA. NPA classification is not advance or loan wise. NPA classification is customer wise. Very simple. Suppose you have taken from my bank housing loan, car loan, personal loan. You are repaying personal loan, housing loan correctly. Car loan you defaulted. Car loan I treated as NPA. Remaining 2 loans also shall be treated as NPA. You are having some other loan in some other bank. That is their choice. If you are repaying them properly, they will not treat it as NPA.
bank, whenever a bank is giving multiple loans and advances to a same customer, if one of the loan become NPA, all other loans will also be treated as NPA within the same bank. Getting it? So that is what asset classification will be borrower wise, not facility wise. Now, government guaranteed advances. Government guaranteed advances are two types: central government guaranteed advances, state government guaranteed advances. Central government guaranteed advances, state government guaranteed advances. Now, suppose state government guaranteed advance, NPA classification and all is same like any other loan. No change. However, if the loan taken by me from State Bank of India, for which central government gave a guarantee, then what is the NPA norm? I repaid to the bank regularly, but in the past 3 months I did not pay EMI. 90 days crossed. Now my account generally treated as NPA, but because central government gave guarantee, my account by State Bank of India will not be treated as NPA, even though 90 days overdue period crossed. Able to understand? Even though the overdue amount crossed for 90 days, because central government guarantee is there, my account is not treated as NPA. Now, my account not treated as NPA means, will my account be classified under substandard doubtful category? No. Will provision be created on my account? No. Standard asset provision 0.4% or 0.25, that is only will be applicable. Understood or not? All of you. Now tell me, you might have learned this point in bank accounts chapter. When an account is treated as NPA, interest on that loan account shall be recognized only on cash basis. Correct? Means only if I recover the money, recognize. Otherwise don't recognize, because it's a non-performing asset. On a non-performing asset, how can you recognize the interest income when there is uncertainty about the recoverability? Accounting standard principle. Yes or no? Now tell me, here central government guarantee given, no. I did not pay EMI, no. Bank is not treating it as NPA, correct? They are not treating. Now can this bank recognize my interest income on accrual basis? Principal is not recognized as NPA, however interest is treated as NPA. However, interest is treated as NPA. What is meant by that? Very simple. Only the principal will be treated as regular. Suppose I have taken a loan guaranteed by central government. Now I defaulted for more than 90 days. Will NPA norm apply? No. Now what is the treatment? Principal amount, what is the treatment? No provision, NPA. What about interest? However, interest recognition point of view, we will apply NPA classification principle. We will not recognize. Interest on loan given with a central government guarantee, actually it's NPA, but we are not reading it as NPA because government guarantee is there. What about interest? Can I recognize it on accrual basis? No. Recognized only on cash basis. Interest point of view alone, apply NPA norms only. Getting it? Because government gave guarantee for principal, not for the interest. Now, sometimes I will get loan from bank. I will give security. What security I gave? Term deposit, Kisan Vikas Patra, Indra Vikas Patra, National Saving Certificates. These items which are highly liquid, equal to cash, easily convertible to cash. These assets I gave as a security to bank and I got a loan. I gave as a security to the bank and I got a loan and I defaulted. More than 90 days. Will my account treated as NPA? No. Will my account is treated as NPA? No. If at all I am obtaining loan by keeping these items as a security, my loan account will not be treated as NPA. Okay, principal is not treated as NPA, no provision. What about interest? Interest can be recognized on accrual basis. Interest can be recognized on accrual basis so long sufficient margin is available. My cash is with the bank. First of all, understand. My cash is with the bank. I kept 5 lakhs term deposit in the bank, got 3 lakhs credit card facility. I used 3 lakhs credit card. 90 days over, did not pay. Will it be treated as NPA? No. Getting it? Now, every month 10,000 interest is accruing. Now this 10,000 should bank recognize on accrual? Yes, because still 2 lakhs credit is there. Margin is there. Customer cash is with me. Saving certificates are with me. Vikas Patras are with me. It's just one click I can convert them into cash. Getting the point? Since customer cash is with me, in these cases, security I will consider. Generally, suppose I took a car loan. Car is hypothecated to bank. I defaulted for more than 90 days. Is car convertible asset easily? No. Existence of security, ignore. Existence of security, ignore. Treat it as NPA. Create provision. Stop recognizing interest. Government guarantee is there. Principal, treat it as regular asset. Don't create provision. Interest, don't recognize. Security with the bank is term deposit, Indra Vikas Patra, Kisan Vikas Patra, National Saving Certificate. Don't treat it as NPA. Interest also don't treat it as NPA. Recognize as long as margin is available. Once margin is about to expire, bank will set off. Bank will set off the loan account and deposit account, transfer balance money to the customer. Able to understand? All of you. Next. So that's about the NPA norm CO. You can read that later. Entire matter I have covered. Understood or not? All of you. Next, agriculture advances. Agriculture advances. Agriculture advances are again 2 types. Agricultural advances are again 2 types. Agricultural advances, normal. Agricultural advances affected by natural calamities. Agricultural advances, normal agricultural loans. I gave loans to you. What is NPA norm? For that it is different. I gave loan to you, you harvested, exactly that time natural calamity affected, you defaulted. How to do the NPA treatment for this? This is completely different. I will discuss that later. Now generally, what is the NPA treatment for agriculture loans? 90 days criteria we will not apply. For agricultural loans, we look at crop season. We look at crop season. Agricultural loans are broadly divided into 2 types. Short duration crop loan, long duration crop loan. What is it? Short duration crop loan, long duration crop loan. What is a long duration crop? If the crop season is more than 1 year, if the crop season, what is crop season? Right from tilting the land, planting the seed, till the harvest of the product which is coming for commercial sale. Getting it? If the gap time gestation period is more than 1 year, then the crop is said to be long duration crop. Tobacco, best example. This long duration crop. Getting it? Now, if a loan is given for this long duration crop, it is treated as which loan? Long duration crop loan. Now, what is short duration crop? Other than long duration crop is a short duration crop. Now, what is the NPA treatment? For long duration crop loan, what is the NPA treatment? For short duration crop loan, what is the NPA treatment? For long duration crop loan, if the installment or the amount is overdue for more than 1 crop season, overdue more than 1 crop season, farmer harvested, still did not paid money. I waited for 14 months crop season. His crop season is 14 months. I waited for 14 months. Even after that, he didn't pay. Actually, due date came. After due date, I waited for 14 months, crop season. Still, he didn't pay. After 14 months, after crossing the due date, then the bank will treat it as NPA. Suppose if it is short duration crops, if the loan is overdue for more than 2 crop seasons, it is to be treated as NPA. Here, crop season is suppose 11 months. Then bank will wait 22 months after due date. Then it will be treated as NPA. For agricultural loans, you see how much time bank is waiting in order to treat it as NPA. Because of considering difficulties of sale of produce of agricultural commodities, banks have given this much additional criteria. Are you clear? Then, what about agricultural advances affected by natural calamities? It is bank's discretion. No specific NPA norm given by RBI, bank's discretion. If an agricultural loan is affected by natural calamity and the farmer is unable to pay the loan, do you want to treat it as NPA directly? Okay, treat it as. Do you want to give additional credit period to farmer? Give him. Do you want to give him fresh loan and so that he will repay the old loan? Give it. Whatever decision you take, follow as per that. Suppose you want to treat it as straight away NPA, treat it. Suppose you give additional credit period, then don't apply NPA norm now. After credit period, if you defaulted, then apply NPA norm.
Able to understand. So in case agricultural advances affected by natural calamities, the bank shall follow the rescheduled terms. Able to understand. You see, that is what given in the next page, reschedulement. Provisioning, sorry, that is restructured advances. What is the restructure? In which a lender, for economic or legal reasons relating to borrower difficulty, grant concession to the borrower. Like how he will grant concession, terms of advances, including amount of installment, repayment period, rate of interest, sanction, all these will be, modified, helping him to cure the default. Banks may restructure the account classified under standard, substandard. Bank cannot restructure account with retrospective effect, only with the prospective effect. On restructuring, account will be downgraded from standard to substandard. NPA will remain in the same category. But agricultural advances, it is different. Getting it? Now, upgradation. What is upgradation? Doubtful to substandard, substandard to standard. That is called upgradation. There can be possibility of incorrect upgradation of account on the basis of partial recovery made in account, and overdue portion might not have wiped out completely. Customer did not pay fully. Without paying fully, how can you upgrade the account? So auditor there is a possibility of recovering being made in account after cutoff date, account being upgraded as on the date of balance sheet. Actual recovery was done after 31st March, but as on 31st March itself upgraded, because now bank managers will have huge pressure. As on 31st March, they want to minimize as much as possible NPA flow. Next, sale or purchase of NPA. This is called bad bank concept, asset reconstruction company concept. Banks can sell NPAs to recovery companies, asset reconstruction companies. They will revolve around the customer. Getting it? Bank will get some lump sum amount settlement. So regarding that, so the entire risk associated with NPA should be transferred to the purchasing bank. The purchasing bank is actually technically called as bad bank. The bank which is buying bad debts. The bank which is buying bad debts. You see in news and all, how the ignorance. Bank have written off some loans given. Bank written off is not waiver. Banks will write off because of the RBI norms. That is not waiver. Correct? So when the bank write off, that is an accounting adjustment. That particular write off, if at all a newspaper if a newspaper knows, so and so big headline, RBI, State Bank of India write offs 70,000 crore loan, and that post is circulated on Instagram saying banks are waiving. Waiving is different, write off is different. Banks will never waive. The recovery agents, bad banks and all will be revolving around them. Even still today, bank is trying to recover money from Vijay Mallya. Because of the legal issues only, we are unable to bring him to India. Able to understand? Under no circumstances, NPA can be sold to another bank at a contingent price. No, you should not sell at contingent price. Important for MCQ or correct or incorrect question. The entire sale consideration has to be received on upfront basis. In my customer, book value is 10 crore, I need to recover from customer. I will sell this for 5 crores to that bank. They will recover whatever they want. Are you getting the point? Upfront, I should receive immediately. In case of sale of NPA, if the sale price is below book value, the shortfall should be debited to P&L in the same year. If the sale value is higher than net book value, excess provision shall not be reversed but will be utilized to meet the shortfall on account of other NPA financial assets. If at all in one of the customer NPA sale, I got profit, I will not transfer to P&L. I will use it for some other NPS. Next, same way, purchase of NPS also, there is a provision. This is the special point, tricky point which people can't understand. In the bank audit, remaining audit of investments, audit of fixed assets, same points. Long term investments value at cost price, unless there is a permanent decline in the value. Short term investments value at market price. Investments shall be classified into various parts. That is plain reading, anybody can understand. If I tell the same, no, you will feel like I'm reading. This is only requires explanation, understood or not. So in audit of assets, advances is critical part, and remember, read it only from study material. Don't read from other books. Remaining audit of advances is very simple. Remaining audit of assets, fixed assets, you see how to do audit of fixed assets, how to do audit of first general controls, premises means buildings, other fixed assets, how to verify, sale of fixed assets, how to verify, leased assets, how to verify, impairment, how to verify, in simple points. Then other assets, inter-office adjustments, how to verify, interest accrued, how to verify, tax paid in advance of TDS, how to verify, stationery stamps, how to verify. Understood all of you? These are all simple points. Next, others. Non-interest bearing staff advances means employee loans. Loans and advances to officials and relatives. For all these, banks will have internal powers. These are not customer loans. Remember, when a bank employee is getting a loan from the bank, how he is getting the loan? Is he getting it in the capacity of employee or is he getting in the capacity of a customer? If at all the bank is giving loan to employee as a banker, not as an employer, then NPA norm we will apply. Suppose NPA norm we will apply. Because I am giving as a bank, he is taking housing loan as a customer. We saw credit worthiness, everything we saw, documentation we gave. Same employee took 2 months salary advance. Next 2 months salary, give me now itself, they asked. I gave. That is as part of employment relationship I have, that I gave. Now whenever I am giving any loan to employee, because of the employer-employee relationship, that's another other asset, not loans and advances. When I give to same employee a housing loan, car loan, treating him as a customer, that's a loans and advances. Understood or not? Security deposits, how to verify? Prepaid expenses, how to verify? Miscellaneous balances, how to verify? Ellame simple da. Okay. Next, capital adequacy means what? They have given some like G10 nations, Basel committee. In Basel committee, 10 countries will participate. 10 country representatives. Stress testing means what? Basel 3 means what? This and all we have just done in our book. Now they may ask you a question on this. Write about capital adequacy measures in India. Write about capital adequacy measures in India. There is a possibility, because that is tempting to ask. What is tier 1 capital, tier 2 capital? Exactly, internet. The moment you test Google, no, it will support starting 2 lines, it will show definition. That definition is copy pasted here. Next, how to do audit of reserves and surplus. General reserves and surplus, how to do audit, same points were covered. Now how to do audit of deposits. This is little, not complicated. This is something specific to banking industry. Now deposits are what? How many types? Current account deposits, savings account deposits. Now verify on a sample basis current account and savings account which are opened during the year. Are they complying with all the KYC norms? And verify savings accounts are opened in the name of individual HUF and some approved institution like Trust Education Institute. Remember, savings accounts are not opened for business or professional concern. See, like generally when a customer is opening savings account, he will say that non-business or non-profession, but he will use it for commercial purpose. But tea kadai irukku veliya, phone pay. Actually the savings account, it's not current account. They don't open. Small tea businesses and all, they don't open. Though they have good number of transactions, they don't open. And inoperative accounts, called dormant accounts, they are high risky area of frauds in the banks. Inoperative accounts are used for money laundering transactions. Like what? If at all, some political parties, how do they convert their black money? How do they convert their black money? They create a dummy company. They create a dummy company and they create a dummy contract to that company. And the entire money will be collected in the form of cash by the company. That entire money will be distributed as salaries to various employees. Those employees, Aadhaar cards will be there, PAN cards will be there, bank accounts will be there. One time 100 crore transaction they will do. And the account will become inoperative. That 100 crores become white to all the employees. Now some 1,000 employees they will create. 1,000 bank accounts they will create. From all these banks, cash withdrawal will happen. That entire cash will go and sit in somewhere. This is how it happens. Getting it? So these are all was done at the time of demonetization. Of course, this is a popular method. So inoperative accounts is a high risky area, possibility of fraud. A savings or current account should be treated as inoperative. There are no transactions over a period of 2 years. Earlier it is 6 months. Later it was revised to 2 years. Verify on a sample basis some inoperative accounts which are revived or closed during the year. Ensure that inoperative accounts are revived only with proper authority. The moment 2 years over, it should be stopped functioning. Bank can revive only with again proper KYC. What is KYC norm? You must clearly identify who has opened this bank. Only a proper person having proper identification who is alive. Only for him bank account should be given. That's why KYC norms. In this regard, where there is a significant reduction in balances of such account as compared to previous year, examine authorization for withdrawals. Suppose in these inoperative accounts, last year there is a huge balance. Now suddenly balances have came down and the account stopped functioning. Auditor has to investigate. See, these and all bank system have exception reports feature. Bank's system will give exception reports. That exception reports is enough to study all this. Term deposit. Verify in case of bulk deposit where and all 2 crore and above. See whether correct rate of interest has been offered as per the bank policy at that particular time. In case of closure, test check whether required foreclosure penalty has been deducted from applicable rate of interest. Foreclosures. Verify on sample basis some recurring deposit accounts which are opened. Correctness of rate of interest. How to verify term deposits? Very simple. Check with term deposit certificates. And what is the rate of interest given? What is the approved rate as per the bank internal committee? Banks, what is approved rate by management of the bank? Some deposits may be designated in foreign currencies. Verify some FCNR accounts opened during the year on sample basis. Ensure these conform to RBI. Like FCNR probably might be foreign currency notes to accounts something, or maybe these might be like in foreign accounts. In foreign we have two types, NRO or NRE. Some accounts these accounts, getting it, non-resident accounts. That's it. And here also they have given NRE, NRO accounts. Verify on a sample basis credits and debits as per RBI guidelines and see the repatriability feature. In NRO we can't repatriate except for current income subject to generation. NRO is operated in Indian currency. NRE is operated in foreign currency. Actually, this is another big subject that is relevant for bank exams, IBPS, not for CA exams. Getting it? Next. See that deposits are not inflated for balance sheet purpose. Some customers might be given overdraft near balance sheet date and the resultant overdrawn amount may be placed as deposit with banks. Some ODs and all will be shown as deposits. Actually, nowadays these frauds cannot be done because it is completely system and the bank management or staff cannot change that information. That's it. And borrowings. Borrowings all are general points. Auditor should get external confirmation from the borrower and see that borrowings, that's a general point, no specific point discovered. And balances, bills payable, inter-office adjustments, interest accrued and other provision. In the last exam, what is the audit approach for contingent liability they asked? Last exam. May 22, the question asked is, write about audit approach for contingent. The auditor is primarily concerned with getting reasonable assurance that all contingent liabilities are properly valued. Of the balance sheet transactions have been accounted in books of accounts, letter of credits and all. All of the balance sheet items have been entered into after following the procedures. Swift software will be there. Getting it? All international financial transactions, everything will be entered in Swift software. PNB scam happened because the transactions were not entered in Swift software. Getting it? And all the off the balance sheet transactions are supported by underline. See, off balance sheet items means those transactions which will not come in the balance sheet. They are called as off balance sheet. Those transactions where and all we have to disclose it in the notes to accounts. They are called as off the balance sheet transactions. See that off the balance sheet transactions are accounted in books of accounts in Swift software or something, some other. See that off the balance sheet transactions are entered after following the laid down the procedure. And see that they were supported by documents. All year-end liabilities are disclosed. All the disclosed liabilities do not include any crystallized liability. Crystallized means what? Actual liability. When I show something as contingent, it should be contingent. It should not be something materialized one. And what is the effect of contingent liability? Financial effect. It should be estimated as per AS 29. And remember, for banks, Ind AS do not apply. In case of guarantees issued on behalf of banks directors, the bank has taken appropriate steps to ensure that effective arrangements have been made so that commitments would be met out of the party's own resources, that the bank will not be called upon to grant any loan or advance. Any 4 points if you write, that's enough. Audit approach in this. Any 4 points. It is asked for 4 or 5 marks. 5 marks means 5 points you have to write. That's it. So write about audit approach for contingent liabilities. They ask. This is the question. Now, what are all contingent liabilities? Claims against bank, but not acknowledged as debt by the bank. Liability for partly paid investment. Liability on account of forward exchange contracts. Guarantees given on behalf of constituents. Acceptances, endorsements and other obligations. Other items which bank is contingently liable. So, contingent liabilities. So, how to do audit of contingent liability? This question has been asked in the last exam. So suggested audit approach. So what is the audit procedure? This is actually getting a representation. I think representation or audit approach, something is asked. Just to look at the question in the previous exam, I think is it audit approach or which one asked? Audit approach only, yeah. Nationalized bank. So here you see which question was asked. And audit firm intends to obtain representation from the management. Highlight points or checklists that are to be covered in representation, not audit approach. Representation only asked. So the auditor has to get a representation that all the off the balance sheet transactions are accounted, all the off the balance sheet items are entered with proper procedure, all the off the balance sheet transactions were having supporting documents, all contingent liabilities are disclosed, they do not include crystallized liabilities. These are all representations management should give. So the question clearly asked. See, I'm telling you, you should observe what is what. Getting it? Here they are asking representations from management you should get, right? What points are covered in the representation? That is a question. What is the audit approach for contingent liability? They didn't ask. Audit approach means what? Auditor should verify letter of credit. Auditor should verify, ensure that there exists a system whereby non-fund based facilities or ad hoc facilities extended only to regular customers. Constituents means customers, nothing but. Now verify letter of credits. The payment to overseas supplier is made based on shipping documents. Whether accounting system of the bank provides for maintenance of records in respect of obligations, internal controls, are they properly recording all the contingent liabilities? See the completeness of the recorded obligations. So like this is audit approach. There are some claims against the banks which are not acknowledged as debt. Like somebody has lodged a claim, but bank has not yet decided as a debt that bank has to pay or not. Until then it will be showing it as a contingent liability. Liability on account of forward exchange contract, what is the audit approach? Guarantees given on behalf of the constituent, what is the audit approach? Acceptances and endorsements and obligations, what is the audit approach? Any of this can be asked. How to do audit of bills for collection, they may ask. I think that all of you observe, when you are observing what you are reading. So what is that? How a question can be framed on that? If you have to check. You have to check at a particular concept how a question can be framed. Getting it? So if you observe that, you can recognize later and you will not confuse. You will not write a wrong answer. Getting it? If you plainly read without processing the information, if at all a question was slightly twisted, you will make a wrong answer. Getting it? So with this, bank audit is completed.